And we're back. Thursday. Big Thursday.
Huge. Some say the biggest.
I'm feeling it. June 26th.
Something in the air today.
Almost said 36. There's no 36 of any month,
Not
turns out.
No, but man, June's flying by.
June has flown by. It's pretty much over. Although this is a classic. We get paid on the 15th and the last day of the month. And they dropped the last day on a Monday.
God, that is... I didn't even think about that.
Brutal.
That sucks.
But that's fine. We don't do it for the money.
Correct.
We do it for... What do we do it for?
Love of the game.
The fame? How many people recognized you at the Chicago Fire game last night?
From this?
Did your girlfriend recognize you?
She did.
Okay.
Even her cousin.
Her relatives?
Yeah.
Oh, her cousin who plays
No.
for the Fire. He doesn't play for the Fire.
Well, he does, but
Okay.
he didn't recognize me.
That guy didn't recognize you.
Yeah.
Okay.
Didn't get seats close enough to get recognized by him.
Well, okay. So you went to the Chicago Fire game.
Yes.
Which they don't play in Bridgeview anymore.
Bridge Anywhere. They play
I
in,
always get messed up because Bridgeport is just south of the city, but Bridgeview is like south and west, and I think they used to play in Bridgeview, but they play at the United Center, or not the United Center. Jeez, Soldier Field.
Soldier Field.
Okay.
Yes. Great night to be at Soldier Field.
Playing at the United Center would be pretty.
That would be so
How would
rowdy.
they get a soccer game in there? That'd be wild. They'd have to take out like the first 50 rows.
I don't know. I went to Dave Chappelle, and it looked at the United Center, and his stage looked bigger than a basketball court.
Dang.
I don't know how they did it.
He's just one guy.
I know.
What are we talking about? So, Chicago Fire. You went. Soldier Field. Nice night.
It was great, but my girlfriend had a great cost-effective idea to bike there. I bike everywhere.
Pretty warm.
So hot.
Yeah.
Got there just sweating.
Not really trying to bike to social events.
And Soldier Field is so much farther south than I ever think of. You think oh, I'm in West Loop. It's just across the loop, but it's like good
It's a
2
journey.
miles. Yeah.
Well, yeah. Well, in the West Loop, you're like 4 blocks north of Madison, and Soldier Field, I'm pretty sure, is like 16 blocks south of Madison. So doing the math, you're traveling a
more
pretty
than
good
10.
distance. So what? You were just like hot by the time you got to Soldier Field. Wait,
but
so
it's-
cost effective. Okay. Did she also have to get tickets? Her cousin is like on the team,
No,
right?
yeah, she got tickets. That was fine, but she wanted to go to this game because, her family's going to tailgate or whatever. We get there 15 minutes late to the game because we biked, and her only family there, it was just one of her girl cousins and her boyfriend. I was I thought...
Did they tailgate? What
No.
was that like? They drank some Michelobes in the lot? Like, what?
We'll never know because I wasn't there.
Okay.
But yeah.
So her parents aren't there.
No,
like,
yeah.
no
and
one's
so
there.
I was so this is just a random Wednesday that you elected, and it was yeah. So I thought it was going to be a botched operation when we got there. Ended up being nice night, sitting down.
I'm sure.
Cooled off.
Sank
Or-
50 Michelobes.
Her cousin
I don't
played
know why I'm
well.
not calling them ultras,
Yeah.
but Michelob's funnier.
You played tennis with our mutual friend.
I do want
Got the sport in the Roland Garros cap.
I do want to just hit on this. And listen, the last thing I want to do is come off as being sexist or anything like that.
This will be good.
But how many times I've been in your position of early to mid 20s, girlfriend's oh, I'm gonna plan something, and it's just this was the worst plan it could have possibly been.
But I hear you, but I'll say that when
She's
you
not
agree,
watching right now.
I hope not.
Okay.
But when you agree to things like this, you're writing it all off.
Well, because you're in a lose-lose situation.
Yeah.
Because you either do what I do now, which is I agree and then I plan it, and she's mad because it's oh, you don't trust me to do these things, and it's yes. Or yeah, you're okay, let's see what she cooked up this time. And it's okay, hear me out. It's 82 degrees. You just finished working for 10 hours. We're gonna bike 4 miles, and then we're gonna miss the tailgate, all of it, show up late to this game that is timed. It's only 90 minutes. They don't stop it.
And if I have my way, leave early. But no. That was a good time.
And it's Wednesday. It's not even Thursday.
And then we were talking to our cousin. She's like, "Yeah, there's a game on Saturday we might go to." She's like, "Oh, there's a game on Saturday? That would have been much better."
How many divvy bikes are there? Divvy bikes available? Can I reserve them for Saturday?
Yeah, just rent the whole rack.
Oh man, that's great. Yeah, I went and played tennis with Peter and his wife Diane.
Oh, nice. How is she better than him?
It was, yes, I would say by the time there was a warm up period, the first 20 minutes was kind of rough. And I think they just invite me because like I chase the balls, and they're like, this is cheaper than getting like a trainer or something.
I think that would be like an actual conversation out loud where they admit that.
Yeah, like, oh, we invite Frankie. He's so fast. He loves to pick up the balls. And so I did that thing for the first 20 minutes, got very tired, and then they were warmed up. And so then they start whipping out their, like, I comment at one point, because it's three of us, so we would play King of the Court. And so, like, it would be like me and Diane versus Peter, or like me and Peter versus Diane. And then, like, obviously I'd be king sometimes, but that's not as interesting as when they would go against each other, because it would be like, okay, like, here we go. Like, we're going to play a point. Like, send it to the king sends it back, and the point starts. Great. And immediately they would just drop shot the other person. And, like, they're great people. They are a little older than us.
Those aren't the ones they want to hit.
They're not moving as fast. But yeah, after
really
like
funny.
10 minutes, I'm like, man, you guys really just like are going after each other with these drop shots. And Diane's like, well, yeah, we're older, so like this is pretty much all we do.
But that's especially funny because when you and I play with just Clink and we do it, he makes it seem like it's the most ageist thing to do is a drop shot. And
the context matters for sure.
So it's just funnier that they do it to each other.
Well, you open up an interesting concept, and it's one that we have explored in the past, which is if you're a certain person and you say a certain word to another certain person, it's okay. The context changes. And in this scenario, if it was two olds drop shotting each other,
cancels out.
I think it's fine.
Okay.
But if it was a young drop shotting an old,
especially 2-on-1, yeah.
Not so nice.
Fair point.
But yeah, it was a nice night. We went to sushi. The funniest part of it is you and me go play tennis with Peter like every week in the summer times pretty much. He takes us out and buys us dinner, and it's like we never try to opt for like really nice place. It's not like, oh yeah, let's go to Nobu. Like you're gonna pay $500 tonight. It's like, let's go to Billy Goat and like get like 2 Chicago dogs, whatever. Right. The last couple times I've been like, Peter, like I feel bad. Let me buy. Like we can trade off whatever you want to do. And he's like, okay, you get the next one. And then today he's like. Well, actually, Diane's going, and I think we should get sushi. Like, okay. God. And like we're looking at places. He's like, what about that place? It actually wasn't that expensive, but it was markedly more expensive than Billy Goat.
That's too funny.
Yeah, it was pretty good though. It was a nice night, but it's turning into yet another interesting morning. A bloodbath in the U.S. dollar market continues here, Glenn. It is unrelenting. The dollar selling. Euro dollar 117 they just printed. Pound 137. Dollar yen continues to be the underperformer of all these currencies against USD. Only back below 145, but that's something. But among those major three, Glenn, 2 of them at multi-year extremes.
Yeah, 3 of them. I mean, you've got
Swiss franc. I'm saying like the big 3. Like right. Swiss franc is kind of like who was that guy on the Heat? It was like
Ray Allen,
LeBron. I wouldn't even call Swiss franc Ray Allen.
Dude, I think it's Ray Allen.
No, he's like Birdman. Who was the white guy with all the tattoos?
Yeah, Birdman.
Yeah, he's that guy. I wouldn't call him in the top 3. I would try to put Aussie in there. You love Swiss franc. It's your favorite currency to talk about.
Well, it just continues to surprise me. I mean, we got below 80 today, and that really is the decade low.
Leading the show with Swiss franc.
I mean, all the way back. This is pretty historic. I mean, Euro 117, sure, haven't seen it in 4 years, but I mean, we've seen 150, we've seen 160.
Okay.
Boring. No, a lot of crazy moves, and it's especially important to note the backdrop against all financial markets. I mean, yesterday we had S&P. Its most boring day since 2017. So everyone mad yesterday. Mikey Butler mad. Nick Batista mad. Nothing to do. We're having a pretty notable dollar skid
FX.
here.
Look at all these extremes.
Yeah. What jumps out to you? Are you on this?
The 117.
This pound?
The 117 is interesting to me.
Oh wow. It's got up there.
Yeah, 137 here in the pound. These are lows for USD going back to the 2021, 2022 range. You brought up the chef pair with Swiss franc, and that's obviously a low going back to, what was it, 2015.
Mm-hmm.
I mean, I wonder when it turns. This stuff, people always shout out the mean reverting qualities of these currency pairs. And it has turned. I mean, if you go back to the daily in any of these for the last couple of years, obviously this is an extreme. We get more data in there. More. Okay. Every time, I mean, when we got back up to 130 there in July of 2024, no, even before that, we got to 130 there. Huge reversal back to 126, 127. We got then up to 132 and 200 points of reversal back to 130. We get up to 134, massive reversal all the way back down to, I mean, I would say the reversal pretty much ends at 130, and then it starts to become a different story of like, okay, now the US dollar is on the run again to the upside. Get down to 122, and then there's a reversal back to the mid 120s. So you talk about these mean reverting qualities with these currencies, and right now we are kind of in, I think a lot of us, myself included, thought 134 here or like 115 in euro dollar was going to be the like, okay, like we get it, we got up here, good for you, everybody, like time for a little bit more mean reversion. And this is definitely one of those moves. Our mutual friend Peter would say, like, everybody's on the wrong side of. You had the Israel-Iran stuff going on, U.S. entering that story, and I think a lot of people going into this week thinking, oh, here it is, here's that U.S. dollar ripper that everybody's been. It's a perfect setup.
Yep.
For they didn't end up cutting rates at all. And now the U.S. is going to enter this war. They're going to put all this money into defense spending and everything else. And I think a lot of people probably loaded up long USD there, and it just didn't happen. And now, you've got Trump calling Powell the dumbest guy he's ever met.
Objectively mean.
And
saying now he's gonna name the replacement in the next few months here. He's trying to lame duck Jerome Powell in a position that doesn't often get lame ducked.
He's being pretty effective in what he set out to do, which was crush this U.S. dollar, and it's working. I mean, this U.S. dollar is the weakest it's been against a handful
to the
of
tune
currencies.
Of 12% here since he took office. Yeah, it seems markets pricing in now that Trump actually could bully rate cuts from the Fed in the way of going to appoint the new Fed chair for next year. And who wants it? Who's going to cut? I'll name names. So definitely a surprise to me. The main surprise to me, we talk about this sometimes, is that, we have news and we have data and how much of a miss from expectations it is or a deviation from what's expected. For me, and putting that on the backdrop of what the price action is, for me, it's very surprising that even something like, the next Fed chair will likely be more of Trump's guy and more rate cuts. Sure, that's a headline that could weaken U.S. dollar, but at these levels, it's surprising that it still is taking the kind of pressure that it is to the U.S. dollar, to these new extremes, when, stuff like the Iran-Israel conflict, the stock market at least, able to brush off near all-time highs. And so that kind of market stress at price extremes is surprising to me as we enter today. We've got GDP.
Got GDP, yeah.
This is the final estimate, so their third go of it. But maybe this quarter more than other quarters, these revisions price in more of the tariff impact, which so far has been pretty minimal. So maybe we get something surprising here, expecting negative growth to the tune of 0.2%.
Doesn't look like a good chart with that expectation. Looks like down to the right. So
yeah,
we'll see.
But maybe we flatten out here. I mean, even the first estimate, market shrugged off, even being down a big dip below 2.4%. Other than that, we're gearing up for, we got durable goods as well, jobless. Don't know if that's interesting, but we've got a Lagarde speech. That's your favorite.
Yep. Her and Kashkari. I don't know what Kashkari, I don't know what he or she looks like, but that name, I always think of, what's that cereal, Kashi? You ever heard of that cereal? Isn't that a cereal? I think it's like a healthy cereal.
Yeah.
That like was
glaze
popular.
right over it. Where are my Cocoa Puffs?
Yeah, I think
out
my
the
mom
way.
was doing like Weight Watchers or something, and so we had like a lot of Kashi.
Nice.
I have no clue. I think he's dovish, or
Well,
she's dovish. I shouldn't even say it. I don't know.
Yeah, one of our peers calls him Crash Kari.
Crash Kari. That's
So.
hilarious.
Pretty good name. But gearing up for what we expected to be the data headline of the week, core PCE coming in tomorrow. So that's your latest inflation gauge. And
Man, the data keeps coming. Okay, we
yes,
got
it does.
GDP and then PCE.
Yep.
We have
Durable
the
goods.
Israel-Iran war has kind of subsided, and now it's Trump-Powell war. And
We like that one better. More peaceful.
the Trump-Powell one.
Yes.
Oh, 100%. And also, I'm not going to pretend to know who's right. Like I don't have a dog in the race. But yeah, it is funny. Like, if it was a roast, Trump is beating the hell out of this guy. Like, he's way funnier. That's for sure.
But that sucks so bad if you're Jay Powell.
Yeah.
I mean, there's nothing you can do.
I mean, he's a grown man. Clink yesterday tried to do this whole thing where it was like, well, like, what about like his kids? Like, his kids are probably there, and they're like, oh, like my dad's getting, like, the president saying this stuff about my dad, whatever. And I'm like, I mean, his kids can't, there's no way he's got like a 5-year-old running around, right? Unless he's got some like kind of
Hugh Hefner type. I don't
so
know. I
like
wouldn't put it
everybody's
past him.
adults. But yeah, it's got to be pretty rough. Like, if you have like a down quarter as like an employee, and like your manager's just like, dude, like, I tell you the same thing every week. You're not getting it. But like, let alone it's like, oh, the most powerful person in the world is
I'm gonna tell everybody.
calling me an idiot on his social media and wherever else. It's got to be pretty rough. Yeah, it's I don't know. It's funny. What am I gonna do? Last
market to look at here this morning, interesting to me, is this Australian dollar, US dollar. This is the hourly chart here.
Holy smokes!
This has been a crazy ride. I mean, we've called out the Japanese yen pair this week for being a huge mover. This one up there as well, bouncing very aggressively from below 64 cents and now getting up to its high for the past.
the point where we all get excited and then it lets us down again.
Exactly. Let us down here.
Every single time.
And so more historic, backdrop is that this this pair in contrast to something like a euro dollar or pound dollar, has been beat up more aggressively than its historic average.
Nowhere near
and
highs.
And is still coming back off of historic lows. And so this run-up from April that we saw mimicked across equities and other asset classes, strong as the others, and really hit some resistance here.
But man, if you stepped in front of this market every time at 64 cents, you got your 100-point bounce every single time. Which I listen, I have no clue what's going to happen next.
Right.
Because on the flip side, if you stepped in front of this thing, it's like, man, euro's taking off, pound's taking off, Aussie is finally set to shoot the moon. And it's like every single time it gets above 65 cents and then comes off again. It just,
so yeah, I mean, early this morning we've seen a trend recently of extremes near around 6 a.m. and kind of some reversals on the U.S. market open. What we're getting set up for early this morning is across the board seeing that dollar weakness test extremes around the European Open, coming off of it a little. We're seeing this across the board. So we'll see if the U.S. session, we can pick that up, momentum kick back in, dollar weakness, dollar selling throughout the U.S. session, or if this will be the high for the day. But historically, over the recent weeks, this has been a super interesting level that's gotten rejected.
Well, yeah, look
time
at that
and time again.
Monday. It's the same time period.
That's what I mean. Yeah.
That U.S. Open is so interesting for these markets turning on a dime. Yeah, not only this Monday, but you go back to last Monday, where they put in this same high, 65.40, right on the U.S. Open, and then gave back the ground throughout the rest of the week. Not going to say that's going to happen here, but yeah. Interesting setup. All these markets at local extremes, if not very historic long-term extremes, highs against the U.S. dollar going into this U.S. session. We got 2 sessions left, a bunch of data, and I'm sure plenty of Powell, Trump, or Trump on his own, or anything coming out.
Yeah,
That's
should
it.
be.
That's all I got.
Should be a very interesting trading day, but we're just getting started here in the U.S. trading session, and we're just getting started here on Tasty Live. So stay tuned. We'll be right back. Have a good trading day.
Weirdo.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No, that's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show, Tasty Live. Millennial Takeover continues, baby.
Yeah. We're holding it down this week. Also, we'll be back again tomorrow.
Yeah.
Yeah.
It is can't get sick of us yet. Got another 8 hours with it. Yeah. Perfect.
Well, no, you had a nice tweet. I retweeted it for you, Mikey, on social. Someone was like, Mike Butler's the hardest working man. He's like, he's doing the first show. He's doing options traded today. He's doing the last call. They're like, what can't Mikey do?
Oh, yeah, I was on overtime yesterday.
Yeah, you were on overtime. Yeah.
Yes. Yeah, Chris had an AC issue.
Oh, no.
In New York.
Yeah. My friend also in New York, her power went out, too. She lives on Long Island. But it's stupid hot there.
Yeah.
Too.
Well, they got our...
Yeah, they're the weather. Yeah.
It was like over 100 degrees in his house.
Yeah, but he's got little kids, so that's like that becomes like a dangerous, situation. So you just got to go hang out at the movie theater or something. I don't know.
I don't know. Is that where you'd go? For the
movie theaters, air conditioned, or malls are air. I mean, I just go to the mall anyway.
Yeah.
Did you guys watch the draft last night? Do you care at all? Any surprises?
Were there any? We got some Frenchmen.
We did. We got. It was one of those it was the classic Bulls draft where they draft someone and you're like, who's this guy?
Yeah, I've never heard this name
on the board of people that were considered, but apparently he's legit. He's He's the second youngest guy other than Cooper Flagg. And
wow.
He's a run and gun forward center.
Okay.
Yeah, and he's been playing in Europe since he was 16 or something. I was like, how is that legal? But okay.
I mean, yeah, our whole core is young guys now, so I think if we can just keep building that way.
Yeah.
I mean, OKC just did it. They're the youngest.
Yeah. And they're going viral because none of them knew how to open champagne because they're so young.
Oh my God.
There's actually a video of the other Jalen Williams, and he's sipping on Michelob Ultra or something, and he's like,
oh yeah, he doesn't like beer. I'm like, same, Jalen, same.
Yeah.
But that's fun. Yeah, let's go. Let's have a young team. I didn't know if there was any other surprises or anything, or if it was pretty much how they thought it was gonna go.
Yeah, there were some very minor trades, but nothing too crazy.
So where did Cooper Flagg go? He went to Dallas?
Yep.
Okay.
Yeah, number one.
Yeah, that's great.
Yeah.
So we'll see.
I mean, it's great if you want to play alongside Kyrie Irving and have your mind twisted by his flat Earth prophecy.
Oh no.
He's one of those.
Oh yeah.
Oh no.
Oh yeah.
Awesome.
Oh no.
Yeah, he's got Kyrie Irving and AD to work alongside. So
yeah.
pretty good.
Yeah, that's pretty good. All right. Well, we will see what happens. What else did you guys get up to last night?
Well, I did nothing.
Yeah, I did nothing either.
I was like, you were building it up. I was like,
Oh, I watched the second episode of My Friends and Neighbors.
Oh, what's that?
Oh, I gotta start that one. That's
that the
John
book?
Hamm, right?
It's really good. Yeah, it's John Hamm. It's on Apple TV.
Oh.
And it's basically about his life and how he got to this certain point in life. But he was like a finance person that became this multi-millionaire, and then things happen where things start to change.
Oh,
Starts, like,
interesting.
stealing from his friends or something.
Yeah, but it is very entertaining and well done.
I just heard it too. I love it.
Yeah.
There we go.
Oh, there you go.
It's great.
Beth loves prestige TV. I don't have Apple
No, I
TV.
like John Hamm.
I like
Yeah.
John Hamm too. Right there with you, girl. I don't have Apple TV. Like, I can't pay for like all the streamer. Sometimes they just like will give it to me for 3 months because I'll buy something. But then I was like, I don't sign up for it because it's a trap. Because then you forget to cancel, and they own you for life. So I just never say yes.
You can wait till it's all out and then just do the free 7-day trial and then just smash it in 7 days and then done.
I don't know. What'd you do last night, Nikki?
Nothing.
Nothing.
That was pretty lame, yeah.
I mean, it was nice last night. It wasn't
it was
too bad. It was a little muggy, but
Today's gonna be.
today's already brutal.
I mean, I walked over here at 6 a.m. and it was already like too hot.
Yeah.
Which is crazy.
Yeah. Well, I finished up the second season. I am obsessed with, when I tell you, this show has me in a chokehold. It is America's Sweethearts. It is the Dallas Cowboy Cheerleaders reality show. It is the second season. I watched the show when it was on CMT, when it was on country music television. I was like, I need country music television. I would die for these women. I really would. It's such a good show because you just think it's so surface level. You're like, okay, Vanetta, they're cheerleaders, so what? But it's so much more than that. Like they have to be perfect. They're like the top tier elite dancers. But it was just really interesting, like the struggles that they go through. And this season they're fighting for like wage equality. And you're like, yeah, girls, go. Because they're like, look, we're the biggest thing to happen. Like the Cowboys are bad. Like as a football team. As a football team. They're like, people are there for the cheerleaders.
So, well, that is true. I know that, like, for example, the Lovables.
Yeah.
Story, they get paid like zero.
No, so all these women have to have full-time jobs. They work 9 to 5, and then they go to practice from 6 to 10.
Yeah.
And then you think, oh, well, they just have games, but it's not just games. It's like appearances. It's like nursing homes. It's military bases. It's like F1 races. It's USO, tours, and it takes a toll on their bodies, and they're not getting paid like enough, to sustain this commitment. And it's really interesting, and you should watch it.
What is it on?
Netflix. It's called America's Sweetheart, but you can watch season 1 and season 2. Since it moved to Netflix. But
You don't mind watching cheerleaders. I mean, it's not.
in
It
short
could be
shorts,
worse.
yeah. In short shorts, yeah. Yeah. The gag though is because like a lot of them come from like smaller schools in the South, so a lot of them get married like really early.
Yeah.
All of their boyfriends look like potatoes. Like they're the most beautiful, glamorous women, and they're like, "Oh, this is my husband," and you're like, "My name's Jeff."
It's like the crypto yacht bros that have like all the chicks on the yachts, and they're like,
Yeah.
this guy definitely bought Bitcoin at sub 5K.
Yeah, I don't know.
I'll check it out.
Yeah, there you go. And also for you, Nikki, I was going to recommend go to bars that are streaming Love Island because it is full of feral women.
They do that at Rinaldi's.
See, there you go. Go there.
Well, the problem was they were doing The Bachelor.
Okay, same
Or the
thing.
Bachelorette.
Yeah. Right now it's Love Island.
They put roses on the ground too.
Oh my God, I love
And
it.
I was like, what is happening?
Yeah, I went there to watch like a Kansas basketball game, and I was like, this is my local sports bar. What happened here?
Yeah. But the funniest part about that is that they're 2-hour episodes, right?
Yeah.
So I went there and we're like, oh, we can watch hockey after this. It started probably at 7. It'll be over by 8. 8 comes around. I'm like, isn't this over yet? They're
And
like,
they play
"No,
it with
it's
the
another hour."
sound too.
Yeah, of course. You have to hear what they're crying about. Yeah.
Really.
So we actually turned it into a drinking game, and the bartender actually was on board with it too. She was like, "Oh, I'm joining you guys for this." So we drank anytime someone cried.
Yes.
And anytime someone was like bickering with someone else on the show.
Also a good standard.
We were feeling
Yeah.
good after about 30 minutes.
But look, it's how you diversify revenue streams because like now it's just baseball. There's not a lot of sport, so you stream Love Island, you stream, Bachelor in Paradise, which is going to start soon, and you get the girls and the gays to come to your bar and you make some moolah.
There you go.
There you go.
Yeah.
Easy peasy, lemon squeezy. Anything happening cool in the markets overnight, or are they pretty much just going sideways? Or
Yeah, Micron earnings after the close yesterday was up to about like 135-ish in the overnight session or after the close yesterday for the first like 15 minutes. It's now at 130-ish, so big old nothing burger up like $2 or $3 right now. We'll see if it holds into the open. The market's up 21 right now, NASDAQ up 115. It's been a low volume, low volatility grind since yesterday. So we'll see if that continues here. You got a holiday next week.
Yeah, that's true. I was going to say, what do you attribute that to? That it's just like the summer? Or that it's just,
holiday.
Yeah.
You're at highs.
Sure.
There's nothing to freak out about.
Right. Yeah.
So.
But we will get some insight maybe into some interesting trades today. That'll be on the schedule. But yeah, speaking of the schedule, I guess we got a good show. It's a nice little thrilling Thursday here, Tasty Live. So that means 8:00 trades from the research team. So they have
got
to.
Some new young guns coming.
Yeah.
It's gonna be cool. My man Thomas.
That's what I hear on the schedule. I was like, Thomas did one of the research segments today, so it'll be his research debut.
Oh.
So we'll
Do
get.
you know the story of Thomas?
I do not know the lore of Thomas.
Yes.
Break it down.
So Nick and I went to the driving range, last year?
I think it was it 2 years ago?
Something like that. And it was
a little while ago.
We were just about to post up at the driving range next to each other to hit some balls. And Thomas walks up to us and he's like, "Oh, you guys are the guys from Tasty Live." And we're like, "Yeah."
You got recognized?
Yeah, by Thomas. And he's like, "Oh, I go to DePaul. I'm studying whatever you're studying." And he's like, "Yeah, I would love to check it out or get a job there, an internship." I'm like, "Well, I don't know.
Send us an email.
Maybe they're hiring or something."
Yeah.
Send us an email. So I forwarded it to Dr. Data, and the rest
is history.
I had no idea.
Yeah. Golf is a positive influence in people's lives.
Good for him for taking the initiative.
Yeah.
That
Very
is
cool.
That is pretty good.
He just needs to stop giving me grief for my slice.
Yeah, we didn't actually see him hit any golf balls, so we don't know if he's like a sticker.
The whole thing is he doesn't even play golf. He was just stalking you guys.
I don't think so.
I'm
no.
just
He's
kidding.
too sincere for that. No.
I'm just kidding.
No stalker.
So wait, has he graduated yet, or did he?
I think
or-
it's a good question.
Okay, so he's interning. Then.
Yes.
Okay, gotcha.
Yes.
That's really impressive.
But he's working on a lot of stuff behind the scenes.
Yeah.
Working on a research database. And
Yeah.
and building new little programs for us to use. It's cool. Good.
I like it.
Yeah.
I gotta say, no shade, no snark. I really like our crop of interns this year. They're good kids.
Mhm.
I had to sit down with our social media intern yesterday. His name's Nathan. He's so cute. And but he's doing good. He's just interviewing everyone. He's trying to get a greater sense of what we do here. And he had really good questions for me. I was I was not prepared for this. But it's I think our future is going to be pretty bright then.
Yes.
I'm not mad at it. But trades from the research team. Is he going to have a trade today, Thomas?
Yeah. Oh,
okay.
yeah. He's like, can I shout out the chat? Throw some W's in the chat.
What?
Hell
Throwing
yeah,
dubs
bro.
in the chat.
Throw some W's in the chat. Yeah, he's coming with. It's a typical young gun trade.
Sure.
He's gonna do something.
Just YOLO, Thomas.
Yeah, it's gonna be it's probably gonna be big. I haven't looked at it. I don't know what he's.
Okay.
I told him I wanted, to be, save it for the show.
Right. Trades from the research team featuring Thomas. That's going to be at 8 o'clock. They're going to present their trade ideas to Mike and Nick. And then at 8:40, we got Hear Me Out. We got Victor Jones in the house. Ooh, you guys with Victor.
Yeah.
Do you know what you're going to talk about?
No, but I'm sure he's going to be hot.
Yeah, he's going to be hot for something.
There's a lot of things going on.
Yeah, there's a lot going on. He's got his ear to the ground. Always some fun insight from Victor. That's going to be at 8:40. And then 9 o'clock, market measures. Profit targets for zero DTEs by IVR. So gonna take a look at that, part of our Zero DTE series. And then live from the trade desk, big boy Scott Sheridan. Hopefully his jet lag is doing okay. He's gonna count down the top trending tickers over at Tasty Trade. And that is the run of show for today.
And be on the lookout for a new social video coming out today. When is that going to be coming out?
It's gonna come out after. I gotta edit it. You guys are such good sports. Thank you for doing that.
And just keep in mind, we did this at about 6:50 a.m. Okay, so this is the first thing we did in the morning. So
yeah,
be on the lookout for that.
You guys are good sports because I showed you a video and you were like,
yes.
What the hell? What the hell-eon? And you were like, and I was like, I want to recreate this. And you were like, oh, sweet Jesus, Vanetta.
Sometimes you walk into work and you are pulled into something and you're like, how is this my job?
My job, right?
Like, remember the 80s video?
The Miami Vice.
Oh, yeah, the Miami Vice.
We were like all around like on the rafters and at 19.
Oh.
Like, remember we were like jumping on the table?
Oh, yeah, like the Breakfast Club. Breakfast Club, yeah.
Yeah, that was another one where it was immediately in the morning. Like you walk in, put your backpack down, and all of a sudden you're dancing on the top of the table.
Remember when you had to carry the wooden table down the stairs and Tom was just standing there going, pivot, pivot.
That was short-term disability waiting to happen.
Yeah.
Surprised nobody didn't get.
I really should have just fell.
Yeah.
You're like, oh, my neck and my back.
Maybe that's why I have the back problems now.
It could be.
Could be.
It could be. But yeah, stay tuned and make sure you're following us on socials because we post some fire.
And
content.
when you watch it, just imagine Tom and Tony trying to execute this sort of.
They could never.
Yeah.
They could never. But that's how I know Tom is bored on vacation because he was like liking my social posts yesterday. And he never, I mean, to be fair, it was a video of him, but he like never likes my social. Like your dad is so good. Like your dad will put whatever I post. He's like, I got it. He puts it on his story. He'll retweet it.
Man of the people.
Like he's a man of the people. He's just like, I got you.
Yes.
And he'll put it everything. And Tom's just like, I don't engage with our content.
No.
I'm like, thank you for that, Tom. But no, we got a good show. We have a lot of fun here. But hey, let's get this show on the road. You guys want your daily dose?
Sure.
Yeah. Hit me with my theme music. Let's go.
Our leading story. Breaking news. Across the wire.
This
leading story.
just in.
Top story. Just in. Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's June the 26th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Yeah.
Can you believe June is like, what?
Yes.
What? Slow down, girl.
Months are days now.
I know.
I feel like you get older and it just.
Yeah.
Just like next thing you know.
That's why I grab Thomas every morning and I'm like, you stay here as long as possible, you know? Like,
I know.
Cherish it.
Yeah, cherish it. That's the kind of thing. They don't even know those movies. Those like Adam Sandler classics, like Billy Madison, you know.
We should have like intern like movie Fridays or something where we
stick
just
them
like
in the main.
What would be your movies that you would make interns watch?
Oh man, that's tough.
Like an Adam Sandler? Or is it like Goodfellas? Is it like Animal House?
Well, I remember.
Is it like old school? Like what? Like.
I remember when I was talking to Errol and he had never heard of Zoolander, and I felt
the kid for schools who can't read good.
It was a visceral, like I was like,
you're like, oh, that hurt.
What? Yeah. Like that was such a classic. So I mean, I would think you have to go to the Adam Sandler class.
Sure. Like Billy Madison, Happy Gilmore,
or you go to like the mid 2000s, like old school, super bad. Like you can go to those.
Oh yeah, those are good. Yeah,
because you can't make those anymore. No. Those have been banned forever.
Yeah.
But those.
I agree with the Adam Sandler classics. Super bad. Fast Times at Ridgemont High.
Yeah.
Those types.
I go like more classic, like rom-com, like early 2000s, like rom-coms, like bring it on. 10 Things I Hate About You. She's All That.
Yeah.
Can't Hardly Wait. We should make a list. We should make interns just watch movies instead of doing their work.
Yeah.
But anyway, this is the part of the show we talk about today's financial news and headlines. My name's Vanetta.
Are you ready for the news?
Earnings for today. Are you ready for the news?
Yeah, there you go.
Earnings for today.
Nike after the close.
Ooh, Nike. All right, we'll
Yes.
talk about that. I got a Nike story.
Pig of a stock.
Hey, dollar hits fresh lows as Trump attacks threaten Fed credibility. The dollar eased to fresh 3.5-year lows on the euro as concerns about the future independence of the Fed undermined faith in the soundness of the country's monetary policy. I don't know how true that is, but the dollar is on 3.5-year lows, whatever the reason. Let's talk dollar and currencies.
Yeah, I continue to get long dollars and continue to feel the pain. So I got long a number.
Like I continue to touch a hot stove.
Yeah, I actually used the FX products yesterday with Glenn.
Oh, great!
One of our young guns.
Yeah.
Quite a character he is. So I'm long the USD against the Swiss franc.
Ooh.
I'm long the euro against I'm short the euro against the Japanese yen.
Okay.
Long the dollar, short the shekels, long the Aussie dollar, and then I have a short euro futures position with options, CME futures.
Okay.
So I have as many.
That's a lot. You were in it. Like you were like, I'm going all in. I'm gonna learn this product. I'm gonna learn how to trade it.
Yeah.
Good for you.
Yeah, and now I have to go shake down Glenn for a couple dollars today because he's supposed to put me in good stuff.
You're like, Glenn, help me with my shekels.
Yes, exactly.
I'm also in need of some shekel help.
Yes.
But yeah, that's the nice thing about the Tasty FX suite is you can get long or short a lot of different pairs. That, not your typical pairs. So yeah, I'm long the dollar shekel. I'm long the dollar franc. I'm short the Aussie dollar, and then I just closed a Japanese yen dollar position into this rally, but I also have a Japanese yen futures position. I've got the calendar spread at the 7-2 strike.
Okay.
Along the August 8th, short the July 3rd. So it's actually up $100 today, but
nice. Breakfast is on you.
Yes. So much breakfast.
Yay.
Actually, not so much anymore because now everything at McDonald's is like
$15.
$15, yeah.
What?
Crazy.
Man, I miss like a legit dollar menu. Now we sound so old.
You go ham.
What's
on
the dollar menu?
I know, right, man? Hey, I have a crap ton of crypto stories, so just bear with me here.
Nice.
First out of the gate, Coinbase hit a 52-week high as one analyst called the company a one-stop Amazon of crypto services. That analogy doesn't make a ton of sense, but okay. But the shares were up more than 3% yesterday. Like I said, rallied to that 52-week high. What are you doing in Coinbase?
Marveling at it. Marveling.
Yeah. I mean, it's gone from 160 to 360 in about 2 months. It's tough to.
Bernstein raised their price target to 510 on the stock.
Why not?
Why not? To the moon.
1,000.
YOLO.
Who cares?
I mean, that's in line with E-minis going to 7,000 before the end of the year.
Okay.
Yeah, that's there. I will say Tom bemoaned a broken wing butterfly that I gave him during Johnny trades. Nick took me down. He took me down into this move. That was one of the bigger wins of the year for me that expired at the June monthly expiration
Nice.
a week or two ago.
It's a big fat butterfly.
Yeah, so it was a big fat butterfly. It was if you remember when we were at 300, that was the June expiration. So,
Nice.
yeah, so I gave Tom a couple dollars if he held it, which I doubt he did.
Well, the market giveth and the market taketh away, and it tooketh from Circle. Circle plummeted 25% over 2 days as investors look for other stablecoin plays. Coinbase is gaining, and it seems to be at the expense of Circle. What are you guys seeing in your Circle options?
They have come in significantly volatility wise.
Okay, nice.
So Circle, we haven't really been trading it. It's very hard to trade. You got 2 or 3 point wide spreads. The stock is where it was 300 a couple days ago. It's now 200. But, it's hard to be trading this with 10 or 15 or 20 point wide spreads, width of the spreads, defined risk spreads, when the options are 2 or 3 points wide as well. It's very hard to price spreads here and trade this. So it has, it's not been something that we've been trading. We did highlight the options themselves and just how much volatility has come out. It was an IV rank of like 150 the other day. It's now at like 55.
Oh, wow.
And when you look at the actual options, because a lot of people emailed us like wanting to short it. It's very hard to do that because of how high volatility is. Even if you're buying the puts and you get a 100-point down move, you make like pennies. And that's just because of how high that volatility is. So it's just something that's, it's interesting. If you got a larger sized account and you want to, throw some big time risk on, you're certainly able to do that. But for us little Johnnies, it's a tough one. You just kind of have to sit on the sidelines and watch.
Okay.
Yeah.
It's hard to do anything unless you have static delta in there. Like long stock plus a short call for like a covered call.
Okay.
Something like that. Because like Nick said,
That's a very good way to explain that. Okay.
Yeah. It's just hard to trade the options directly because of the crazy changes in IV and the stock price.
Okay, so looking for static versus dynamic delta in something like Circle. In other crypto news, this is interesting. The Federal Housing Finance Agency is now working to let borrowers use crypto as part of their federal mortgage applications without converting it to cash. Only digital assets held on U.S. regulated centralized exchanges would qualify, but then Fannie and Freddie Mac would be able to look at all of your bundle of, assets or whatever, but they would be able to take crypto into account. Of course, the concerns previously were because of the wild fluctuations. They're like, okay, how can we assess your, credit worthiness in something that, could theoretically, go to zero? I don't know.
Yeah, we were talking about securing loans to our fart coin. And so, I think there's going to be, but hey, come on.
No, yeah.
I mean, it says crypto, so.
Yeah, Doge paid for this house, yeah.
Yeah, I mean, come on.
It makes sense. I mean, if you can literally buy a house with an implied notion of renting it out, and you can use the implied rental income as something that counts towards your ability to get a loan. So if you can do that with money,
that's a little different than fart coin.
No, but it's literally a situation that doesn't exist yet. Like you can say, I'm going to rent this out. Here's what I'm going to rent it out for, and they can use that as an asset that you can use to rent it or buy a house.
I'm sure.
But this is actually something that you can liquidate into cash, so it makes sense.
Yeah.
I think they're going to tighten this up to the crypto word is a little too broad. I think they're going to have to.
Right, but again, and like I said, it is something, held in a regulated, centralized, exchange and things like that. But I mean, hey, it's a new frontier. We will see what happens. Invesco has filed for an ETF tied to the spot price of Solana. That's according to a regulatory filing, as the asset manager pushes to tap opportunities beyond Bitcoin. Mike, you are an IBIT ride or die kind of guy. Do you want a Solana ETF?
Yeah, I think it's just the more ETFs, the better for the space. It just adds more liquidity overall, and it just solidifies the whole notion of everything. But yeah, Solana was one of the early ones that Ryan was talking about a couple months ago, and he was calling for this too. So
yeah, I know it's been in the works. How about you, Nikki? You want a Solana ETF?
Yeah, I think the more the merrier.
Yeah,
I mean, increases liquidity, increases access. I mean, that's what you need for markets. I'm more excited about like the baskets that'll come out of this, like ETFs that'll have
Pick a little from everything.
Yeah, that'll have a little bit of everything. I think those will be interesting as well. So
if you missed my reporting yesterday when I was on with the lovely Liz and Jenny, I mentioned that Polymarket is now valued at $1 billion. They had a funding round of $200 million. Well, now Kalshi has raised $185 million, but they're like, yeah, but we're worth $2 billion. Suck it.
yeah.
We had their CEO, Tariq Mansour, we had him on for our election on special. But what do you think of these prediction markets being basically unicorns?
I think it's really interesting. I mean, it's the new thing that's happening where you can look at anything and there's a prediction market on it.
Yeah.
And
there was for the new popes. There's there was for the New York City election. There's for everything.
I think it's good for kind of flattening out the narratives that traditional media pump out, because it's like
fact checking.
Exactly, fact checking. Because it's like if the market is telling you one thing and something else is telling you another, I'm going to believe the market versus something that someone's saying.
Yeah.
So I think the prediction markets are really interesting, and literally the fact that you can look at a lot of different things that are very niche.
Yeah.
But if there's a market for it, like I want to see what that market is telling me.
Yeah, I do think event-based, markets are going to be something that's going to continue to grow into the, late 2020s and see where it goes.
Yep.
Interesting.
Yeah.
Hey, Micron reported earnings last night. Revenue beat, and they issued a strong forecast. Micron beat on the top and bottom lines, and the stock initially rose in extended trading before paring most of its gains. The company brought in revenue of $9.3 billion versus $8.87 expected. What'd you do in Micron?
Upside calendar.
Oh.
Yeah, that should be okay.
Yeah, it should be good. I did the 135 long August short the one day. Did that for $3.70. I mean, the stock price has doubled from the April lows.
Okay.
I wanted to be bullish, but not have a lot of risk on.
Okay.
So just went with the calendar instead of a diagonal. But yeah, it should be okay. It's up $2. If it opens around 130, it'll be a winner.
Nice.
But yeah, just wanted to keep that risk small there.
I did the crab.
Krabby Patty.
So I have an upside. It's like neutral / bullish. So this is a good spot for me. I'd like it maybe $1 or $2 higher. That would be like a sweet spot, but should be a good opening trade. It'll be interesting to see what happens with the rest of the space. I mean, the SMH, the semiconductor ETF, is at new highs. You had NVIDIA, I think, was up.
Hold on, give me just 2 seconds. Hey, put it on the board. Put this up. NVIDIA shares hit a record. I got you, girl. As the AI chip maker again becomes the world's most valuable company. The stock is up 14% in June. That's up after being 24% in May. Shares continued to rally yesterday and closed at a record. Investors gained confidence that Chinese export controls won't dampen NVIDIA's shine, I guess. What do we do now? You're just continuously proving anytime NVIDIA dips, you just buy it, you'll be okay.
Anything else, too. Why stop at NVIDIA?
Yeah.
Yeah.
I mean, if you look at a chart of NVIDIA, anytime it's dipped under 100, that's been a really bullish. I think that makes sense psychologically, too.
Yeah.
If you can get NVIDIA under 100, like you're probably going to try and do it.
Yeah.
And the rebound, when it goes from below 100 to back above 100 is like 2 days. But yeah, this is crazy.
The company's now worth $3.77 trillion, slightly edging out Microsoft. And to think, Jensen, I think he came up with the idea for this company in like a Denny's.
Oh yeah. He's probably viciously hungover after going to a rave. Got to be something like that.
I don't know, but
let's make these chips.
That's crazy. Speaking of surges, Palantir is likely to leave its imprint on the final reconstitution of the Russell on Friday as that index gets rebalanced. As we know, we saw a little sort of head fake moves in stocks like Robinhood ahead of the S&P rebalance, and then it turned out that Robinhood was not going into the S&P, and that was like a whole thing. But now people are saying, oh, Palantir is going to be a bigger part of like the Russell rebalance. So that happens tomorrow. I don't have any inside information on that, but I just know Palantir just goes straight up. So
yeah, I don't know. I mean, I think it's too big for the Russell at this point. It's almost like a $200 billion company, I believe.
Yeah, we'll go in the Russell 1000, maybe? I don't know.
I would think that this would be Palantir leaving.
Yeah, maybe.
I think it's too big, but I will have.
I have no idea how any of this works.
But the Russell's been an absolute pig forever.
What are you doing in? So the stock is up 460% since last year's Russell reconstitution.
A retail favorite.
It is.
Peeps love it.
What's the IV in there now?
Very high. The skew is off the chart.
Okay, so there's stuff to do in there.
Yes, if you got the stomach.
If you have the cojones.
Yes. I have a call ratio spread, a real wide one, short call spread as well. So I have a little bit of short delta.
How about for you, Mikey?
I mean, come on, the stock's up. It goes up $3 every single day for
Book your winners.
Yeah,
Book your
every
winners.
day. Yeah, this is the pain trade.
I don't have anything just yet in there, but
Okay, well, get in there and lose some money, I guess.
Yeah,
Perfect.
IV rank at 14. I mean, volatility in the market is just. Bleh.
Bleh. Meta on Wednesday prevailed against a group of 13 authors, including Sarah Silverman, in a major copyright case involving the company's Llama AI model. Basically, the judge wrote that it's generally illegal to copy protected works without permission, but the judge said it's not that Meta is just so right and has the moral high ground. He's like, basically, the plaintiffs failed to present a compelling argument. He's basically like, keep trying, people. He's like, but right now, as things stand, he's like, I have to rule in favor of this jagoff.
The Zuck
with the glow up.
Yeah.
What are your thoughts on just now companies can just straight up just jack you for your life's work and they don't have to pay you?
Yeah, it's been happening to me for 10 years. Yeah, no, I mean, this is.
It's the future.
It really is. I mean, the creative space is going to have some interesting headwinds.
Yeah.
Because everything can be just like made, out of thin air.
I know.
You just a couple prompts.
Is there anything to be done in Meta?
It's tough. It's gone all the way back to basically all-time highs. We're $10 or $15 off all-time highs. It's up $4 or $5 pre-market. I mean,
Sure, because the street loves this news. They're like, yes, Meta can operate with impunity.
Yes. I mean, I don't know. It's tough. $700 stock.
Oof. It needs to split again.
Yeah.
Yeah.
Yeah, that would probably be helpful.
They do have earnings.
Volatility is super low, 8 IV rank.
Yeah.
End of next month they have earnings, so I'll probably wait for that. Maybe do like an Iron Condor or something like that.
Okay. Put it on the radar. Tesla's new car sales in Europe fell 27.9% year on year in May. The U.S. EV maker has sustained brand and reputational damage, but also Chinese manufacturers are getting in there. They're getting into the EU. Tesla had popped a lot earlier this week on their robotaxi news. Their U.S. delivery numbers are set to come out shortly. I don't have the exact date, but that could sort of dull some of Tesla's shine. Tesla, I think, was down yesterday, but it had a really great start to this week. So some fluctuations. What are you doing in Tesla?
327 right now. It's trading. It's basically unchanged. It did have pretty decent move over the last two sessions, 360 to 325-ish, kind of pulling back a little bit. It did bounce from like the mid 200s. I just have a little bit of long delta here as part of an Iron Condor. I closed out the call spread. I'm just leaning a little bit long, the 305, 295 put spread in the July monthly expiration. It is one that's interesting right now because volatility relative to the other Mag 7s is certainly a little bit elevated. So, if you don't
but just be careful because sometimes their delivery is like a little baby binary event. So just
Tesla goes wherever it wants to go.
It sure
doesn't
does.
matter. Deliveries,
Doesn't matter.
It doesn't matter.
But yeah, I have a put spread on there at the 300 290 from yesterday. So just a little 10-point wide put spread in August.
Okay. Oh wow. Okay. In other automotive news, Apple is trying to introduce CarPlay Ultra. It was introduced as a concept 3 years ago, but it finally became a reality. And Aston Martin cars in May, as we know, because we all drive Aston Martins now.
Yeah.
But car manufacturers like Mercedes-Benz, Audi, Volvo, and Renault say that they have no interest in including CarPlay Ultra in their vehicles. The reason is that car producers aren't excited about offering up in-car screen estate to outside companies. They want that revenue. They want that, R&D for themselves. I remember when CarPlay just like dominated, but now car manufacturers are pulling back. This just seems like miss after miss from Apple. I don't know what's going on over at Apple, but it's just every story that I do, I try to spin it positively because I'm an Apple fangirl, but the hits keep coming.
Yeah.
That's tough. I mean, I have CarPlay. I love it.
Yeah, I like it too.
You have the good one that's Bluetooth. My car is a little bit older.
Yeah, mine's you have to plug mine in too.
And the plug doesn't work sometimes.
Yeah.
It makes me so
You gotta blow on it and then plug it back in.
Yeah, you do like the N64 thing.
Yeah.
Very annoying.
It's just like I get like you want to create your own thing, but if you're wasting a ton of money and resources on building your own nav system,
right?
You just input CarPlay.
That's what I'm saying. Is like, and even if you rent a car, you drive someone else's car, at least the CarPlay is consistent. Like you know how to operate it. But then you get into a car that has a different system, and you're like, I don't know how to turn the air conditioner on.
Yeah,
like,
they got to make apps.
Yeah.
Their own specific apps.
Yeah.
Like a Jeep app, Mercedes app.
Yeah. Here's something interesting in the transportation realm. Southwest CEO says, Bob Jordan says the company is open to making even more changes. So now not only do they get rid of the one thing that makes them Southwest, because they're now just straight up charging you for checking bags, they also say airport lounges, routes to Europe, and premium class. I was like, you are Southwest, stay in your lane. Like you had one thing that you were like, but now they're just trying to be like American or Delta or you know what I'm saying? Like, do you think this is the right move for Southwest?
I mean, it's tough. There's a lot of Southwest lifers that love
because it was a culture, like it was a Brit, like it was a lake. That was their differential, whatever.
Well, that's the issue with honestly if you're going public, like you have to bend the knee to shareholders.
Yeah, I get that.
If this is going to create more revenue, then you kind of got to do it. But it is, I agree with you. It's kind of weird that they're completely shifting into basically just any other airline.
Right. Yeah. I was like, you want to fly a long haul transatlantic flight on a Southwest plane?
No. No. Never want to fly on a Southwest plane.
Yeah.
I'm a big hater.
Yeah. You're a big hater?
Yeah.
Of Southwest?
I want my seat. I don't want to.
That's true. That drives me nuts. The cattle call.
Yeah. Like the line situation. Oh, I'm B16. You're B17. I'm in front. Woo.
Yeah, and that's like in the you have to like set the alert on your phone to like to look to check in like the 24 hours before.
Just give me my seat. That's it.
Yeah, I feel that.
No Southwest.
Well, is it affecting Southwest, the stock, LUV?
Stock's gone nowhere for like 5 years. Trades at 61 or at 31 right now. I can literally, I'm going to go back and see where it was trading. In 2023, it was about 32.
Well, your long lost aunt works for Southwest.
Yeah.
Because your dad, as I always point out, so I can't say anything bad about Southwest because your dad's newly found sister works there.
Yes. I mean, I feel bad if she's had her stock for that
Just
whole
have her
time.
throw in 100,000 points in your little account.
Yeah.
Some drink tickets. You come up with the
Endless
drink tickets.
Yeah,
that's the Southwest I remember. Hey, does Nike need to look to the 90s to make a comeback? Wall Street is bracing for potentially painful earnings after the bell today as it's awaiting the stock to bottom out. Nike's fourth quarter results are due today, and analysts say the company's sluggish sales and stock price should reach the bottom soon. Nike's down 19.5% for the year. What's your play? What's the play here?
I love when you read these headlines. It's like the stock to bottom out. The stock's at 60. It was at 100 6 months ago.
Yeah.
Like how much lower are you playing for? And then when moves higher, they'll flip the script.
So are you bullish or bearish in Nike?
I have some bullish delta here.
Okay.
I have a.
Are you going to adjust that? Are you going to keep that?
Oh, I'm going to keep it on this headline. Nah, Gazy. Yeah, no, I'm not. Yeah, I don't know. I sold some puts here. Yeah, sure, it could go lower. What do you? Stock's down 60% in 6 months.
They have a lot of Asian tariff implications.
Yes.
They're gonna have to raise prices.
Right.
They're gonna have a lot of issues.
Yeah.
But what worries me the most, I wrote an earnings preview on this stock.
Yeah.
Okay.
I went and I read the commentary from the executives, and the commentary was like, we're on the right track to turn the ship around, but they're negative on every KPI. And the main thing that I read was like, we're trying to turn this around, but we're still doing stuff in sports. People that we're sponsoring are doing big things, like Scotty Scheffler. And
Oh yeah, sure, yeah.
Oh man, like yes, but that's your.
It's like your company's entire future is based on Scotty Scheffler.
Yeah, like, literally. It's really troublesome. I read that and I was like, ooh, this feels bearish to me. Like the executives are reaching so hard to speak about things that are happening in sports, which I get it, but it's like. So
you're bearish. So are you going to trade it for earnings or?
I think I might stand on the sidelines of this one.
Okay.
I don't know. I need more.
It's not the sexiest underlying
What's the
trade.
expected move?
$5.
Which is like
stock.
8-9%.
Okay, that's not nothing.
Yeah.
All right, we will see. But people are just like, has Nike just like lost its relevance?
Kind of. I mean, that space, the apparel space is a tough one. Like if you look at Lulu, which I think had earnings
they got
2 weeks ago.
Yeah.
I mean, that stock went from 340 to 240. So,
but like, what would you say is like the hottest trend in like that? Is it Aloe? Is it Gymshark? Is it like Define? Like I don't know.
Think it's
there's just so many.
Yeah, there's just so many.
Oh, so fractured.
Yeah, it's just like it's not a big player.
It's not
in the '90s. It was all Nike. It was all Jordan, Nike. Like nobody was wearing
Nike, Adidas, Reebok. Like that's it.
Yeah, maybe Puma. I don't know.
Yeah, nobody was wearing Puma in the '90s. I mean, you had that.
But yeah, now there's like a million different.
Yeah,
sure.
There's ones for running. There's one for basketball.
There's Cuts. There's Viore. There's Lulu. There's
Viore. Yeah, Lulu. Yeah.
And really, it's all like it's very Instagram based. Like Instagram.
That's true.
There's a lot of Instagram clothing companies.
Got the Amazon
really
stuff.
Specific.
Yeah.
I want those shorts with the scrunch in your butt.
Oh,
you got bird dogs. Like
bird dogs.
I don't even know what that. I get literally all of my workout clothes at Costco.
You and Tom, you ever run into Tom there?
Because I don't.
Maxx.
TJ Maxx, Marshalls, low key is like the
TJ Maxx
jam
and
for
Ross.
like work out, because I'm not paying these prices for a top, but
TJ Maxx, you can get Nike, Adidas, Reebok for
same with Costco.
$9.99.
$12 max, $12.99 max. You're right.
Yeah.
You're right.
Cost-based reduction, baby.
We'll see what happens in Nike. Hey, dating apps. I think we've all been on dating apps at one point or another. Like we had to do what you do. But Bumble is laying off 30% of their workforce. That is impacting around 240 positions. Bumble is publicly traded BMBL, I believe. Yes. They are anticipating saving $40 million per year as the result of the workforce reduction. Bumble shares were up around 20% following news of the job cuts.
Wow.
Yeah.
Yeah. I mean, you can only make so many fake accounts. So once that's done.
No, but Bumble had some serious issues. Like there was some people that should have been removed from the platform and they didn't act fast enough. And some women ended up getting in some really bad situations and it was not good at all.
Yeah.
They're
like a dude is in jail, like literally.
Oh, really?
Like for So just be careful.
Yeah.
It's one of those probability things. Like if you create an open platform, bad things are gonna happen. Good things are gonna happen, but bad things are gonna happen too. There's two ends of the bell curve.
Yeah. But I think the apps have had run their course. I think
I don't think Gen Z is really into the apps.
No, they're not. Yeah. I don't know what's gonna happen. But now people are like, oh, you need to join a run club. I'm like, I'm gonna be so for real with you. If I have to run 5 miles to get married, I'm never getting married.
That could be.
I can't. I can't run 5 miles. I don't want to die alone, but also I can't run 5 miles.
Pickleball. Come play pickleball.
There you go. Yeah.
Oh,
Pickleball's that's the new thing.
I hate it here.
Oh.
Anyway, hey, this is crazy. Career Builder and Monster, which once dominated online job boards, have filed for bankruptcy. They are agreeing to sell their software services businesses for federal and state governments to a Canadian software company. But did you guys use Career Builder? I know I used it back in the day, or Monster.
Sure I did. I'm sure I was searching for something back then.
I was just surprised because, one, I hadn't thought of these companies in a while, but I was like, oh, snap, they are filing like bankruptcy. Like,
It is
it's over.
crazy to think of.
Yeah. But the place that we occupy belonged to Glassdoor, and they never came back from the pandemic, and so we just took their offices.
Thank you.
Thank you. Yoink.
It's kind of crazy just to see how things change pretty quickly.
Mm-hmm. LinkedIn just owns that space, I guess.
I was trying to think of, I guess like LinkedIn, or I don't even know. I mean, I'm not actively looking for jobs, so I don't know what the big job sites are, but I mean, I got this job from Craigslist.
That checks out.
Yeah, that's a lot.
I thought I was gonna get murdered in a basement. It was 2000. It was 2010.
Yeah.
Like
everything was on Craigslist.
Right,
You got
yeah.
whatever you wanted on Craigslist.
Yeah, I got this job on Craigslist because the intern, when I was talking to him yesterday, he's like, "Oh, how did you come to work here?" And I was like, "Do you know what Craigslist is?" Because I wasn't trying to be like snarky, but I was like, I didn't know if Gen Z knew what Craigslist was. He's like, "No, I know what it is." I was like, "Okay." I was like, "That's how I got this job."
I love that.
I am so happy to present this story because I was like, I'm so glad that Tom and Bat are still on vacation because on Tuesday, June 24th at 9:30, Austin police were notified that a subject identified as Brian Johnson, aka the Liver King, had made threats against Joe Rogan on his Instagram, and detectives reviewed the post and observed that Johnson would be traveling to Austin. He was continuing to make threatening statements. Detectives contacted Mr. Rogan, who said he'd never had any interaction with the Liver King. And based on this information, detectives obtained an arrest warrant for Johnson on the charge of terroristic threats. Girl.
Don't do steroids, children.
Natty or not. Natty or not.
This actually shocks me. There's some guy that's completely deep into steroids, only eats liver and meat.
Yeah.
This is what happens?
Yeah, that he went
He's
a little
full of
crazy.
rage. But they arrested him. though.
He's been kind of like out of the limelight, though.
So I guess he's been posting videos against Rogan for like 3 days straight. Like I don't know.
They were psychotic.
And he was wearing a wolf skin on his head and holding machine guns shouting, "Joe Rogan, I'm calling you out."
Yes, it's but if this fight did happen, Joe Rogan would whoop his
he'd
ass.
destroy him.
Really? Why do you say
Joe
that?
Rogan's a purple belt in BJJ.
Yeah, Rogan's a badass and will whoop this dude's ass.
Yeah.
No problem.
Rogan would destroy this guy.
Destroy this guy.
Absolutely destroy.
Yes.
No, Rogan's like a legit, like you could put him in a cage and he would be able to beat the majority of people.
Yeah.
He's a legit like MMA.
Who has seen him fight? Like when's the last time he fought? Like when's the last time?
I don't think he actually did do, he talked about this on one of his podcasts recently, but when he was younger, he was doing MMA fights.
Sure.
And then he switched to jiu-jitsu.
Right.
And that's kind of where he excelled. It was in jiu-jitsu. So you can do specific jiu-jitsu tournaments.
Yeah.
I'm sure you can find videos of him doing it, but
Him and Mark Zuckerberg should make a tag team.
Yeah.
Anyway,
that was pre-glow up Zuck. Okay?
Yeah.
That was when Zuck was trying to, he was trying to find his spot to glow up.
Yeah.
And then he started doing the MMA stuff.
Yeah.
Started getting involved in UFC.
Hey, he went with the for real.
Now he's got the for real, and he's got the chains.
Yeah.
So,
if you want to bail out the Liver King, I guess I don't know. I don't know if the penal system has access to organ meat. Maybe not that kind of organ meat. Finally today, for my viral video of the day, because we're old, we're elderly millennials. You guys ever listen to Yacht Rock?
Yacht rock?
Yeah.
What's that?
It's like slower, just like a little Michael McDonald, like a little like Kenny Loggins, maybe. I don't know. Like
I listen to like golf cart classics.
Yeah.
I got a bunch of yacht rock on there.
Yeah. Okay, so sometimes it's nice. Well, I was very impressed by this trio. They are called the Blue Light Bandits. And here is their Metallica cover, but it's nice for elderly millennials because we can't like throsh in a mosh pit. We'll hurt ourselves.
Yeah, herniated
But
disc.
watch this.
That's amazing.
Mikey's into it.
Yeah, that's
it's
good.
Yeah. I want this on Spotify.
It's definitely got that Pink Panther vibe.
That's good. That's like what
translates very well.
Yeah, it really does. I'm so impressed by the talent of people on the internet. Like,
That's what happens when you like get married and move to the suburbs. You have probably like 2, maybe 3 kids, 2 of them, under 2, and you have like your friends around the neighborhood. This is what you do. You get like 1 hour of free time away from the family, and you go just like play in the basement.
I don't hate it.
Looks like what some of my friends are doing.
Being sincere. Hey, what's coming up next, Nikki?
We're going to do a short little confirm and send. If you got questions, you can throw them in the chat here. We'll take some of those. And then we got trades from the research team, followed by the opening bell, and then Victor coming in hot at some point.
Yeah.
It's gonna be awesome. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, we are back, my friend. E-minis up 18 here, NASDAQ up 87, Dow up 108. You got the Russell up 7. Oil kind of flat here. Volatility down 5 cents. We're at 19 on the dot. The VIX itself at 1668. Bonds up by 8 ticks. Gold and silver very muted here. Gold's down $4. Silver down. Silver up 20 cents. Bitcoin basically unchanged here. Spots down 200. Very dull couple days here.
Yeah.
Since the little blast off. I guess yesterday was our couple days that I'm referring to.
Yeah. And you're still seeing some blast off mode in some of these stocks, like Coinbase continuing higher. What else? What isn't?
Micron's not really moving. Micron up $1 and change here.
Yeah.
Pre-market.
Nvidia, a little sympathy, tiny rally.
Yes.
With Micron. AMD, same story. AMD's actually up more than the other ones. AMD's up $3.
Oh, yeah. Continuing to move higher.
Yeah, SMH will open up a couple points because of all those. And I'm just looking to potentially close this Japanese yen trade if we get a continuation in this rally today.
Yes.
But yeah, very light on positions. Looking for some volatility to get infused into this market. See if we can get it.
You might be waiting a little longer. Got the summer, got a holiday next week.
I know, it's really sad when you look at the SPX expected move.
Ooh, for the end of the week, let's see. Through tomorrow, I'm going to say it's 60 points. Not even close.
It's way too high.
45.
40.
Oh. Are you looking at SPX or
SPX?
41. Wow. That's really sad.
It's sad. It's very sad. 35 in the futures, which is even sadder. And yeah, I mean, you had some economic data that is apparently not being even remotely considered.
None of it matters. Come on, dude.
GDP, some stuff came out this morning, but tomorrow you have PCE. But again, 40-point expected move in SPX for tomorrow tells you that the market doesn't care.
Mm-hmm.
Or at least it's not projecting any sort of uncertainty with what's about to be reported. So, yeah, kind of sad.
Can we take a couple questions from the chat? If you got anything, throw it in there. We got a couple minutes till we bring on the boys for trades from the research team.
Yeah. Let's see. Did IonQ see anything good from NVIDIA movement?
Oh.
Sympathy move? I'm not sure. Let's see.
Stocks up $1 pre-market.
Yeah, I mean, they're
50 cents, but it came off
all
yesterday. It's down $3 or $4. So
yeah,
everything's up. Or is at higher prices, most of them.
In the money covered call in NEM.
Ooh.
Tomorrow is roll day. Do I roll as usual, wait, or let assignment happen, or is there a better way to maximize profits? So, what is your strike?
Yeah, if you're at the money, closer at the money, you want to probably consider rolling. If you're deep in the money, you just close the position out.
Yeah. And I think it's important to call out like the 21 day rolling rule. There's nothing that is like magical about exactly 21 days. It's about just making sure that your options position has extrinsic value to reduce gamma risk. So if you had the 55 short call, for example, you should have rolled a couple days ago before it went in the money. If you could have helped it, like into that rally on June 12th, that's when I would have been rolling up and out or out in time. Because if you have an in the money covered call, you basically have a short put.
Yes.
But yeah, I mean, if you're rolling now, you can roll from July to August. If you've got the 60 strike, you're in a better spot because it's not in the money yet. But yeah, you want to, if you're offensively rolling covered calls, you want to avoid rolling when it gets deep in the money. You want to roll when the stock price is near your strike.
Yeah, because that's when you'll have the most extrinsic value. When you're rolling. So you have the most flexibility on where you can go.
Yeah. Thoughts on Enphase? 75 IVR.
It's one of the higher volatilities on the board. It's trading at 39. It looks juicy from a premium perspective, but this thing moves. I mean, we caught the 20% down move
twice.
We caught it on the way down, and then we caught it on the way up, which bailed us out here. But
then we caught it again on the way back down.
You did. I closed.
I did.
I was out. I was done.
So yeah, I've been feeling the pain. But I have a 45.50 strangle in July. I'm going to be looking to roll that to August today.
Yeah. I mean, this would be
another $2.
This is a perfect, what could possibly go wrong. You
Exactly.
sell the 35 strike put at 350 in August. You have a break even at 32, and you think, how could this not be profitable?
Yeah.
And
I'm definitely bullish in end phase. But yeah, I'm going to look to roll from July to August the same strikes for $2 credit or around there once the market opens.
Yes.
Last one here.
Sure.
How would you play the upside in KTOS?
Kratos Defense and Security trades at 42. Stocks had a nice little rally here.
Yeah.
Never seen this one before. 26 IV rank. Options don't look horribly wide.
I would just do a diagonal spread. Long the 40, short the 45 is probably where I'd go.
August, July.
Because this isn't very liquid, so I want to keep risk defined here.
Yeah, you're getting more strikes today.
Yeah. But yeah, this is gonna open below 40. So this will be a cheap diagonal once the market's open.
Oh, it's down $3. Do they have earnings or something?
Yeah. Outside of that, if you want to just like sell a put, if you're comfortable holding 100 shares of stock, that's also possible. But diagonal spread, it's going to be $3 and change, and you can make the same as a short put if you get a rally.
Well said. That's it for us. You want to take a quick little 90-second break, come back with all the boys and girls, Julia, too.
Let's do it.
In there for some trades from the research team. You ready for those?
Yes.
Got some capital ready to throw it at it?
100%.
All right, perfect. We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Mikey, we're back, my friend. E-Mini's up 15 here, but who cares about that? Because we got the team, the research team here for trades from the research team. Let's get into it. You ready?
Ready.
You got some buying power ready to rock?
Got an aggressive amount of buying power.
Oh, that's so. Look at this, man. Gad.
Yeah.
Gad in the house with us today. Good morning, sir. How are you?
Good morning, Nick.
I like this outfit. I like the pink.
Thank you.
Pink was one of my...
Is ideal.
The tie clip.
It's one of my favorite things. It puts the whole thing together.
My special thing, pink shirts. When I sold cars, that was my thing. Pink shirts, purple ties, or the reverse. You go purple shirt, pink tie. You did that.
He's like a flower. That's what he's
like a flower.
Wow. But you look good.
Stand
though.
out. Thank you.
You look good. Yo.
No.
Thank you.
I remember when I first walking in the office, I asked Mike, how can I get to your size? Because I was like, how can I get to your size?
Well, he's got to chug creatine all day.
Yes.
And eat a lot of chicken. A lot of chicken.
Costco. That's where you can go if you need bulk chicken. He's a big Costco guy now.
Yep.
Yeah. Okay, good. Now I'm picking up playing golf. So
okay, there you go. I like this. I saw we know Thomas. We know Shark also is quite the golfer.
Yeah.
We're gonna have to do like a little tasty open.
Should.
Yeah.
Should.
Tasty live open. Screw the tasty treats. We'll do us.
Tasty live open.
Yeah. Very nice. What do you got for us today?
So today I got a cheap trade.
Okay.
For good guys.
All right.
I like it. Wait, why? Why do you need a cheap one for us? Because we're not as
no.
Big we don't have the big pockets like Tom. Is that what you're saying?
I'm saying for good guys.
Oh, for the good guys.
For the good guys.
Okay.
Yeah, for good guys. Yeah. So I choose this trade because it's high IVR, but it has earnings. It will have earnings around July, the end of July. But if you manage at 21 days, you'll be good to go. So, and of course I have to respect the rule of third, of the width.
Yep.
Yeah. So it's a short-term candle in August 15. 5 widespread.
I like it. You're going 125, 120 put spread, 195, 200.
Yeah.
Pretty cookie cutter. Yeah. Markets are a little wide pre-market, but I like it. IV rank at 60.
60.
So you're on the board here.
Mm-hmm.
Basically covers the whole range from May to now.
Yeah.
That's nice. So yeah, I like
if someone like to correct more credit, you can go for 10, not for 5. You can correct more than
Yeah.
It's also possible, yeah.
Yeah, you can scale it based on your risk tolerance, of course.
But, exactly,
yeah. Almost
like
100-point range, 70-point range, yeah.
Okay.
I'm gonna route it and see what happens on the open.
Thank you, guys.
We'll get something in on there.
Yeah.
Good job out of you, Gad.
Thank
That was a good trade. I like that one. Who's up next? Oh, there he is. Those moves. Ooh, the good doctor.
Hey, guys.
Good morning, sir. How are you?
Doing well. Thank you very much.
Yeah.
So I got Pepsi today.
Okay, very nice. Pepsi. I mean,
Look at Pepsi. Pepsi's.
come on, you're. This is a little too much risk for you. This is outside
think so?
the gold or utilities. You know, Pepsi. You're the Buffett of tasty.
My account's doing pretty well.
I know that is props, but you know.
So look at Pepsi, okay? So the nice thing about Pepsi, well, I mean, there's not a lot of nice things about it. I mean, look at the stock price.
Sugar.
Yeah, but you drink the diet ones, right?
Yeah.
I'd rather have sugar someplace else, but you can drink the diet and you can still, make the stock price go up. It's back down to where it was like 6 years ago. You're looking at the rev. So I was like, what's going on here?
RFK killed it.
Yeah, maybe, but I don't think so. It's been hit before then. You look at the revenue; it's still annual revenues still increasing, net income still increasing, but they're having some volume issues. They're having a hard time selling some products out there, not doing as well, not getting that market share that they kind of expected to get from some of these products, right? Dr. Pepper's kicking their butts on some of these soft drinks. Coca-Cola is up like 10% during the same past year, and they're down like 30%. So I think it's kind of an interesting play. I'm going to just do a short put here, 115, do it for $1.11. That's about a 10% return on capital for this one right here. But I mean, if you annualize it, going out over 50 days, we're talking about pretty good returns on it. I think it's an interesting thing. It's got a dividend.
Ooh, spicy.
4.44%.
It is pretty nice.
Ivy rank at 56. I was giving you a little, flack for trade, but I actually kind of like it.
This is a strong pot odds trade.
I think a diagonal spread, a little call diagonal spread in there might be in the cards. Use a little bit less buying power. We're
that's right.
Little Johnnies, so
okay.
Maybe make it a little
Flirting
bit
with
smaller.
multi-year lows.
Yeah.
You've got, like you said, things in the
strong name.
Company's actually doing stuff still. It's not like they're losing money.
Yeah.
They're still printing.
Yeah,
Don't they own Poppy, or is that a different company?
Poppy, I don't know.
Poppy's like the healthy soda. Talking about.
Oh,
I don't know. I remember they just get acquired for like $1 billion.
I get some of these soft drinks at like the no sugar ones at Costco. Some of those things are pretty good.
Yeah,
some are nasty.
That's what I'm talking about.
But they also
Pepsi,
they're Frito
Pepsi
Lay.
owns Poppy.
Okay, Frito Lay.
So if there's a bullish case for that, there you go.
Ooh, Poppy.
Yeah, I think this is a nice pot odds trade where if you're getting a multi-year low, sell premium well below the market. The 115 strike is last time that was hit was COVID. So,
the wife calls me Poppy.
Oh yeah, baby. Thank you for that. I love it.
What an exit.
We'll look at that one on the open too. I think I'm gonna do a little call diagonal. Who's next for me? Who's next? There's a special.
There he is. Yeah. There's the boy.
Tasty Nation, thank you for welcoming me. My name is Thomas. I'm going to be a senior this year studying mathematics at DePaul.
This guy.
I have a scholarship through CME Group. I'm a member of the Securities Trading Association of Chicago. And I'm on the board of the DePaul Investment Group as the captain of the quant team. So that is my
That's my quant. That's my quant.
We got tees off. We
got a team of quants though.
Yeah. He's got a nice right to left movement on the ball.
Yes.
No, I was going to say you have a nice left to right movement on the ball. I have a pretty straight movement on the ball.
That's true.
I'm joking.
Yeah.
What do you got for us? I hear you got something a little spicy.
So I had to come in big for my first trade. It is a bigger buying power reduction trade, but we have Coinbase. I'm very bullish on Coinbase. The daily dose did help bring up this trade, as well as we are seeing cryptocurrency being institutionalized more and more. But the main play here is that geopolitical events, when the frequency of them are high, a lot of investors like to rotate their assets from riskier assets such as cryptocurrency and equities over to the bond market and gold market. Now we're seeing geopolitical events lower down in frequency, and I believe investors are going to go and rotate their money back into the crypto markets, which brings up transaction fees. The more transaction fees, the more money goes towards Coinbase. So we have a short put vertical spread, 50 days out. We have the 300. We're buying a call at the 300 strike. We're selling a put. I'm sorry. We're buying a put at the 300. We're selling a put at the 330. And we are collecting $9.92 in credit with a buying power reduction of 2008. So it's very tasty live approach, very mechanical. We're collecting a third of the spread, and that is what I have to propose as my first trade to Tasty Live.
I love it. Well done. I love it. And you're lucky that Tom isn't here today because he would probably puke at this trade. The stock is up 100% in a month, so he would say
it's breaking out.
You're going to get long, and now he would give you one of those. So, and I don't agree with that. I think this will be an interesting iron condor type trade. I don't know if I could get long at this point, but I like the position. I like that you put some risk on here. You know, a lot of people when they're starting off trading, and I know you trade a little bit more than just starting off, but a lot of people are afraid to put on risk. I like that you got a big position on here, and so I'm with you. I'm
gonna route it.
You're gonna route it?
I'm gonna narrow the wings a little bit.
Yeah.
Bring it to I'll keep the 330, but I'll bring it to either the 320 or 310. But yes,
that's a deal.
Yeah.
I'm in.
Before you go though, what's your favorite part of Tasty? What's your favorite thing so far?
Favorite part about Tasty is the food.
The food.
What do we have? We have Illuminati's today, so I'm excited for a deep dish pizza.
There you go.
And thank you, Tasty.
Thank you, Thomas. Great job out of you. Who do we got next? Oh, it's the shark. I was gonna say that was the wrong music.
Yeah. I was getting confused for a second. You guys forgot.
Good morning, Mr. Shark. Hey, how's
Good morning.
How are the boys at golf? I know you took them out, Thomas and Gad.
Yeah, Thomas is pretty good. Gad, on the other hand, I don't know.
Well, but he's just starting off. But
it's only his first. Yeah, it's only his first 2 games. I mean, to be honest, he got the ball in the air in his first game, and he was actually hitting it straight in his second game, which is I think more than I did when I first started out. So
he might be a diamond in the rough here.
Yeah.
He might be a diamond in the rough, yeah.
I like that.
You know, he told me before that whatever sport he picks up, he just naturally gets good at it, you know? So.
Yes. Classic. Anything he touches turns to gold, of course.
Anything he touches turns to gold, yep. Mm-hmm.
Beautiful.
Yeah, but we'll take you up on that Tasty Trade open offer.
We're going to do that. We're going to do that.
Organize something. Yeah. It'll be fun. Mm-mm.
Beautiful.
What you got for us today? What's your trade?
So I am live from Canada actually right now, which is why I'm remote.
Ooh.
So I thought it would be only fitting to do a company that's based out of there, Shopify. Why not?
Very nice.
It's not a Tom trade because the IV rank is very low. So he would not want to do a strangle in this, but you get a nice credit to BPR ratio anyways if you do the 18 delta strangle. So sometimes if you don't exactly follow the Tasty mechanics, maybe you can find something. So I don't know. What do you guys think?
I like it. I'm on board with the Ivy rank is nice when it's high, but it's not the be-all end-all. The be-all end-all is the actual implied volatility on the right-hand side of the platform. And for August, you're looking at almost 60% in Shopify, which means I don't care what Ivy rank is. You can still sell a strangle in there or put or just a call, and you're going to get a nice return on capital like you're seeing here, almost a 50% return on capital with buying power. So, yeah, I like it. It is in the earnings cycle, so that's one thing to call out. But that also gives you the ability to get further out of the money here. But yeah,
I think earnings is just a bit before the expiration, though. So hopefully you'll be out of it by then. Yeah.
Shop has tormented me many a time, so I'm going to define the risk and buy the 10-point wide wings. But I like the trade. I think it's a good pick. Nice return on capital if you.
Maybe I'm being a little ambitious. I should probably define the risk from my account as well. But
no, sling it, because that's just my past experience. That doesn't have to be your story.
All right. Go big or go home. Yeah.
Yes. Very good. Thank you, Mr. Shark. Who we got next? There he is. The General. Good morning, sir.
Good morning. What's going on, Mike and Nick?
Oh, we're hanging in there. All-time highs in the E-minis. I mean, just another day. Buy the dip, right?
All-time highs. Cannot believe that happened within a month.
Yeah. The pain
Less
trade.
than 2 months. Yeah.
What's going on with you?
All right, so I heard you guys said everything is up except
Yes.
the one I'm presenting. Tim's.
Ooh.
Tim's.
It's down
Okay.
big.
Getting a
I
little
think it's
spicy
rallied
here.
like 20 cents, 40 cents this morning, but it was down big yesterday. Great IVR. When I tried to put it on the trade yesterday morning, the IVR was 30 something, and now it's 41.
Mm-hmm.
Price dropped to 41 and a half also. Huge call skew. So even I put the 30, 60, which is $10 to the side and $20 to the call side, is still, the delta is the larger on the call side. So I don't know if it's bullish or bearish. I just put it in neutral.
Yeah, it's been a mover. I mean, they had the Novo Nordisk kerfuffle the other day, moved the stock from 65 to 40-ish.
Yep.
I mean, it moves. So another retail favorite, but $400 in buying power, $400 in credit. It's a high potential return on capital here.
I haven't seen this kind of potential return of capital for a while. You probably can get it from trading mini futures or something, right?
Yeah.
Yeah, it is definitely nice bang for your buck if you can get it to stay in this range. But yeah, it's definitely not for the faint of heart. It has had big realized moves. But yeah, I think if you have the account for it, I think it's an interesting trade for sure.
Yeah.
Yeah, again, this is only the first wave of this downtrend, so I don't know what's going to happen. So just probably I'm going to manage even faster than 21 DT. Any premium comes in or getting to the sweet spot, I'm taking it off.
I like it.
I like it. We'll add that one to the list.
Beautiful.
Very nice. Thank you, Kai. Who's last for us? What's up, Julia? Good morning.
Hi, how's it going, guys?
Good. How are things?
You know, surviving.
Yeah.
That's good. That's good.
Yeah.
Hey, you're
better than the alternative.
Yeah.
Are you out of your uranium stocks? They've all gone to the moon. I've had some people in our chat shout you out for some of those CCJ and Oklo in there, SMR.
Yeah. The nuclear stocks. There's been some pretty interesting developments with the thorium reactors recently out of China for people in the nuclear space. That's pretty cool. But I'm not trading that because I value my peace of mind.
Good.
Fair enough.
Yeah.
Fair enough.
But yeah, if you've been long, you've been printing.
Yes.
Stuff.
Oh yeah, probably pretty happy.
Yes.
What you got for us today?
Well, on theme with the peace of mind, it's kind of slim pickings out there, but GDXJ, IV rank almost 27, which to me is still tradable, and earnings falls at a very annoying time in the 50-day cycle. So I decided to give this one a shot. It's a real baby trade. Gold gives me some very serious trust issues, and GDXJ is like a very, very highly correlated to GLD, obviously. And the other metals, I think it's like a 0.8 correlation or something like that. So we're sticking with the baby trade. The strikes were also a little uncooperative, so they're a little bit uneven. But I went with the 61, 76 short strikes, and then $56 wide, or I'm sorry, $56 and $80 for the long strike.
I like it.
Yeah, GDX has it's moved with gold, but not the same sort of explosion to the upside as you've seen with gold. Back down to 66 and change.
Yeah, I think
we'll be rounding one.
Yeah,
Some in there.
We'll throw this on for sure.
Yeah.
I've got a free butterfly in the gold futures for the next 32 days to the downside. So that kind of helps in terms of hedging this to the downside a little bit if I'm layering this on top of it. But yeah, I like it.
Yeah.
Cool.
Good job out of you.
On that one. Thank you, guys.
Easy peasy.
Thank you very much. All right, so we got a number of trades coming in for the opening bell, which we've got in just a couple minutes. You want to take a quick little 90-second break and come back, see if we get filled on some of these trades?
Do it.
Perfect. We're going to take a 90-second break. You're listening to Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Mikey, we are back, my friend. E-mini S&P 500 futures going into the open here. Up 18, we're at 61.65. You got the NASDAQ up 93, the Dow up 105, the Russell up 6, oil futures up 57 cents / CL 65.49. You got volatility futures / VX 1896. The VIX itself at 1662. Bonds up 9 ticks. You got gold down $10, silver up 24 cents, and Bitcoin basically unchanged at 107 and change on the spot, down 200 going into the open here. Volatility getting smashed yesterday.
Yep.
Volume super low. Are we in for a grind fest into the end of this week? I mean, there's a nice round number of 6,200. I think SPX is about, and there's the bell. There we go. SPX is just a skosh from highs, about 61.47, the high of the session.
Yeah, I think it's. I think we're in for some snooze fest days here because we've got 40 points through tomorrow in SPX, but going into next week, we've got the 4th of July landing on a Friday. So the last day to trade is Thursday, and looking at the expected move through Thursday of next week, only 87 points plus or minus in SPX, which is
nothing.
Very low.
Nothing.
Very low. But yeah, Micron earnings.
Yeah, stock is
up a little bit, but
totally unchanged.
His calendar's coming in nicely. See if I can get out of it for $100.
Yeah, I've got my crab trade. I got to close out of here. That'll be a nice little winner.
Really get $100 out of here. Let's see. Ooh, selling off a little bit. Can't have that.
Nope.
No.
I mean, markets are moving in there 40, 50 cents wide. We got to look at some of the trades too.
Yes.
Get those on.
Working. All right, I was just filled on Micron. That was a 90-cent winner.
There you go.
Yeah, 90-cent winner in Micron. Flat opening. Just did a calendar in there, so the short option is where the profitability came from. Long option lost a little value, but net, nice trade there. Got to get into Thomas's Coinbase trade here.
Yeah. I mean, that plays into your up only.
Yes.
At the very least.
Just filled on that 342 with a 330, 320 put spread. And then GDXJ, I actually turned into a strangle. So I'm just going to do the 6074 strangle in GDXJ.
Okay.
$2.
Nice, very nice. The other ones we were looking at were First Solar, little Iron Condor there. I think I might just do this as like a naked put.
Yeah.
I mean, the stock's kind of come down from the highs. I guess it's in the middle. It had that little pop to the upside of 200 and change, but now the market's kind of stinking here now. Why are these so bad in August? You see these markets? For solar.
Oh, for solar.
$2, $3, $4 wide on some of these.
Oh, yeah.
Might have to wait for those to tighten up. That's the thing. I don't know. I'm shocked that Tom puts those orders in before the market opens because things are flying around. You got crappy markets.
Yeah.
Pepsi, that's another one. That's another cheapie that I think I can get behind. I'm going to make this a diagonal spread. So I like to go the 40-20. So I go to around a 40-ish delta in the further out option. So I'm going to go to like the 130. I guess it's more of a 50 delta just because of the strike availability here. So I'm going to do the 30 strike in August. In July, I'm going to go sell about a 20 delta. And these markets stink too. I'm going to go 135 here at $3 and change. See if we get filled on something here.
Yeah. I've got it in at 330. I'm just going to leave it there. I don't think we need to pay much more than that. I think that'll fill.
A little cheapy. I like to get about 20 deltas either way, net.
Yeah.
E-minis up 18 here. NASDAQ up 65. I haven't looked at any of the big boys moving around here. Just looking at, all right, I'm filled at 345. I kind of paid up on that Pepsi trade. As for movers in the market, look at, you got Enphase, whoever was in the chat looking to get on a position there. That's working for you. FCX, a little bit of a move in copper here. You got some of the chip stocks, Dell up, Coin up 10 and change for solar, up a couple. Palantir does not go down. That's up $2 and change on the downside. You got TJ Maxx on the downside, CMG, Dollar Tree, Lulu. A big old nothing market. What are the big dogs doing? Nvidia probably moving higher.
Probably.
Tesla.
Yeah, AMD actually was up $3 pre-market. It's given up some of that. Micron is up $1 post earnings. Nvidia up a little bit. Yeah, kind of wild. Kind of a wild day of not much.
Yes.
Nice to see Enphase ripping higher though.
You needed that.
I need that badly. Badly.
Yeah.
Somehow I've been able to just wade through these 20% sell-offs.
Well, it's because there's so much premium in there.
I know.
I mean, volatility is very, very high, so you're getting paid to take that risk.
Yeah. Earnings are coming up here in Enphase 26 days out, but I'm in the 22-day cycle. I might just hold on to this now into this rally because if we get another day like this, it'll be a scratch. I'll be able to just get out. But yeah, working that Pepsi diagonal. I'm leaving it at 330. See if I get filled.
Yeah, I paid up, but I did 10 or 15 cents more.
But yeah, I just posted a couple trades to the follow page.
Okay.
So close out of that Micron calendar for 90-cent winner. Got into Thomas's Coinbase idea. Sold the 333.20 put spread in August. And then I followed Julia's trade idea, converted it to a strangle because I don't care about peace of mind.
Mm-hmm. What about Shop, the other one?
60.74 strangle.
You do the Shop trade?
110. This one, what was the 95-140 strangle idea?
Yeah, and I was saying that I was going to do like an iron condor here, just buy the wings.
Yeah.
I might move it in a strike, like the 135, 145, 95, 85 on the put side. Trade, or it's marked at 278 and change.
Yeah.
You know, it's basically a one standard deviation on either side.
I think it's definitely interesting. I think you got to be weary of the earnings cycle there, but you can also sell in July. There's still plenty of premium in July too. If you go with the strangle, like the 100, 120 for 260, it's also possible.
I'm in at 280 on the $10 wide iron condor. And GDXJ, I'm going to pass because I have a GDX position, very similar position. So
there you go.
All right, sounds good. E-minis up 19. You got the NASDAQ up 59. More of the same from the last couple days. We're going to take a quick little 90-second break and come back with Victor Jones. I'm sure he's fired up.
Oh, yeah.
There's a lot to talk about. We're going to talk about the mayor, I'm sure. We got Trump stuff, all-time highs. It's going to be perfect. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, we're back, my friend. E-mini's up 20. It's more of the same, but who cares about that? Because we got Mr. Victor Jones in the house. Victor Jones, how are you? Good morning, sir.
Oh, yeah. Mikey, Nick, how you, Tasty Nation, how you doing? I didn't even know how to do my intro anymore.
No, I like that.
Good morning, gentlemen.
Doing good. Just staying alive out here, you know what I'm saying?
Yeah. Been tough. It's a grind.
Let's get to it.
It's hard to, get
Mikey?
so excited about markets when you got nothing moving.
I know. What was it like? We're like at 11% SPX at the money vol, bro. It's
Nothing.
like watching paint dry. Everyone was scared as shit at the beginning of April and freaking out. But it's like, okay, maybe you might not like spikes to 60, but I promise you'll hate 11% vol way more.
How about this? Take a guess. What do you think the VIX one day is right now? And that
VIX
includes
one day?
those are options
It can't
for
be single digits.
those are options for today and into tomorrow because it includes one day worth of SPX options. Give me a guess. Have you looked? Don't look.
I just looked.
You just looked?
No, I
Threw
haven't.
up a little bit.
786.
Are you serious?
It's a seven handle, Vic. It's a nothing move. At 10, if VIX one day is at 10, it implies about a 0.5% or a little bit less intraday range. I mean, this is and that's for today and into tomorrow. That's basically into the weekend. It's telling
you
nothing's happening.
Yeah, of course. And that's why I was going to open up the show with asking Mikey, where's the degenerate bet at? I don't care if it's on Polymarket. I don't care if it's on DraftKings. I'll show you mine, Mikey, if you show me yours. I'll talk about whatever I came to talk about here in just a second. But you got to give me the degenerate bet of the day, because at a single digit volatility, bro, we got to find it where we can get it. Where's the money?
He put me in some stuff this morning. He'll give you it right here.
What did I put you
No
in this
market
morning?
stuff either.
Oh.
I want the super degenerate stuff.
Oh, well, first of all, you got to go to the PGA Tour for that. You got to bet on Minwoo Lee to win top 5, top 10. Cam Young win top 5, top 10. Minwoo Lee's in first right now, by the way.
Yes. Well, he started with the 3 or 4 birdies. Something crazy.
But
and
top
Jake
5,
Knapp.
top
You
10.
had Jake Knapp in there, too.
That's true.
He's one of the boys.
Why? What's the payout ratio? Why is that where the money's at? Where's the payout ratio?
It's big. But yeah, I think in the markets, I really like long call leaps and IBIT. Ivy rank at 5.
We've been
IV's
talking
low.
about this with Mr. Ryan Grace.
And the nice thing about these trades is even in IBIT's at 60, you could buy the 100 strike for $700 2 years out. And what are you actually buying? You're buying the idea that IBIT or Bitcoin will have a 20 or 30% rally within a week's time frame, and these options will double when you close it. And we know that implied volatility increases on the way up in Bitcoin products. And right now, with an IV rank of 5, it tells you that implied volatility is extremely low. This idea is very cheap to buy right now.
Yeah.
And you don't even need to move to 100. You can have IBIT go from 60 to 70 in 2 days, and this option will double.
And how do you not play the upside in crypto and Bitcoin specifically now that we can secure our mortgages with Farcoin?
I know.
I have my basket of Farcoin and Doge, a little MAGA in there, a little Trump coin in there, and I'm going to use that to get my next loan.
We're not even trying to pretend like this is a functioning financial system.
No.
It's just, this is all a joke now.
Yeah.
What do you got? You can show up to the window with any type of collateral. Do you have collector sneakers? What do you got?
Yeah.
We'll take it.
Pokemon cards. Come on, dude.
Tamagotchi?
Yeah.
All right. That's subprime collateral, but we'll take it anyway.
Yeah. No, it's incredible, man. It's incredible.
I actually thought about the other day because I've got
welcome to the party. I'm already long some 60s and some 65s, and I bought those when those were dumb out of the money. Yeah. And now they're basic. The 60s are in the money, and the 65s are flirting with it.
Yeah, no.
So now I'm gonna go buy some hundreds along with you, my friend.
You can. I mean, it's a long vol play, and the talk around crypto continues to be more and more in the limelight here. So you don't necessarily play for the doubling in a short period of time, but you get that pop in the price and you get that explosion of upside volatility, and those options have the potential to double, and they don't really move, with the price of if Bitcoin goes down, it doesn't really move all that much because of the skew.
I try not to think about that some portion of my money is going to a BlackRock fund somewhere and that Larry Fink is using that money to, get his foot massaged by, I don't know. I try not to think about that part. I'm just using it as a volatility vehicle at the moment.
It's a means to an end, Victor. This is how you can make enough where then you don't have to worry about BlackRock. You sit on the beach in Thailand, it'll be perfect.
Do you actually think anyone has enough money to not worry about BlackRock?
There's some people out there.
Yeah, well, there's some people. He usually sits in that chair over there, and
I don't know. I don't know.
spouts and throws his rocks from the glass house, the ivory tower that he sits on. He just spews them, throws his like a monkey.
I think Elon Musk felt the heat of Doge, and they started setting his dealerships on fire, and he was like, you know what? I'm out. You guys got it. I'm out. And if he can't do it, I don't know who can. One more sort of quick question. From the most vol to the least vol, I'm guessing none of you guys are looking at bonds as an interesting play at the moment?
Can't say that I am.
I mean, they've had a nice move higher. I mean, you got to think
a couple of points. The reason I'm calling it out is it doesn't matter what point along the curve. If it's the 2 years, the 5 years, the 10 years, or the 30 years, there's call skew in all of them.
Mm-hmm.
So if you look at anything, the long end of the curve, no matter what you look at, there's some pretty decent call skew, which means it seems like the markets are finally getting to the point where, regardless if the narrative's super negative right now, and I get that, but the option market is starting to lean towards upside bets, which I think is sort of interesting, and it's across the entirety of the curve.
Well, you had Morgan Stanley come out with 6 rate cuts next year or something, 7. You're gonna have Trump appoint his next.
I hate those people.
Of course, no, I know,
all they do, bro. All they do is they look at the Fed funds futures markets and they go, "What is the implied curve saying?" And then they just tell you what the implied curve is saying. So if you can just look at the Fed funds futures, or you go to the CME FedWatch tool yourself, you can see how many cuts are priced in from now until the end of 2026, and you don't need to wait for some guy who gets paid a ridiculous amount of money to be an analyst over at Morgan Stanley to put out these bullshit reports. It's like, it's in the curve, bro. It's in the curve, my guy. Thank you. Thank you for reading me a quote.
but that's how they get the headline, Vic. You got to get Morgan Stanley in the front of whatever the fact is that we can all look up. That's how you start moving people to do something. Like Nick Batista says there's 6 cuts coming up next year. Doesn't matter. Nobody gives a shit.
Hey, I give a shit.
I know you give a shit. It's got to be, more top analyst Morgan Stanley says this fact that everybody can watch in markets.
If there's one thing I know about,
that's how you get the sheep to start moving, Victor.
If there's one thing I know about Nick, it's that when he is in the Matrix, seeing the Matrix, you listen, right?
Oh, that's what I'm saying. If I were to see an article that said Mike and Nick from Tasty Live are predicting 0 rate cuts,
or if the headline is Nick is self-proclaimed Neo, this is the trade I did, that's when you know you must listen.
I think the more interesting thing here is that the Federal Reserve just came out with a piece of paper, their projections for the next year, and they said by the end of 2026 they're going to be at 3.6% in the Fed funds rate. Mm-hmm. And the market is telling you, no, they're not. They're going to be between 3 and 3.25. So I like when the market has a spread between where they are and where the Fed is, because at some point you've got to normalize. Either the Fed's got to go to where the market is, the market's got to go to where the Fed is, they got to meet in the middle. So to me, it means there's going to be some fireworks at some point in the short end of the curve in ZT. So I like the idea that you can take a directional bet here and that you're going to get somebody is wrong. We're playing liar's poker, and you got to figure out who's lying. So that's one. All right, you guys want to talk politics for a second?
Yes, please.
I'm just kidding. It's I
thought you were going to come in with like the New York stuff or the war stuff.
No, we can do that.
Are you over that now? Now that volatility's gone, like, is it not interesting anymore? And markets are at highs, and everything's kind of just a show. Is that why?
What, the war thing? That the fact that we're in Cold War 2.0 just built into a semi-functional hot war? No, I think it's very interesting. And I said to you earlier, I said, I wonder if at the beginning of World War I, when Archduke was assassinated, if kind of the people understood just how big of a moment that was. Or if people just kind of went about their day. Because I see a bunch of people. I remember walking down Michigan Avenue when Russia invaded Ukraine and just watching a bunch of people go into like their stores wearing like North Face or Goose. What's the thing?
Goose.
What's the fancy?
Canada Goose.
Canada Goose.
Canadian Goose.
Canada Goose
yeah.
jacket. Like, nobody cared. Everyone on Michigan Avenue was just going into stores buying Garrett's popcorn. And I'm like, you guys have no idea what just happened today, do you? Nobody cares.
I mean,
that's what
part of me.
The market's done the same thing. The market doesn't care either. So why should we care?
All right. Let's go big, beautiful Bill for just a second.
Okay.
Before I ask this question, it's everything to do with AI. I want to know which is your guys' preferred AI, real quick.
You, Mikey?
Our preferred AI platform?
Yeah. Like, what do you?
What do you use? What's your preferred AI bot?
I go with ChatGPT.
Yeah. I've been using Claude a little bit. I like Claude. I think it has. What? You don't like Claude? Come on.
I just think that's like if I were to ask you what's your favorite tablet and you said you said the Fire, I'd give you the same.
Hey, I like Claude. It does, some of my like research stuff, my cherry pick stuff. It's good with it helps me with the Python code. It's good. Come on.
All right.
What's your favorite? Which one's yours? Which one are you plugged into?
Grok.
Grok
for sure.
Grok is good.
Why?
Why Grok?
Are you the Grok reply guy on Twitter? You just say, Grok, what's this?
What does this mean?
Help me, Grok.
Grok, is this true?
Grok, is this true?
Yeah.
I saw that with like a Sydney Sweeney post. Some guy like posted like, Grok, is this factually true?
Yeah.
Oh my God, man. Go outside.
Those are my favorite. Because you can just hit the Grok button on a tweet. You don't need to do that in public.
Yeah.
That's my favorite part.
It's too good.
All right, here's where I want to go. The reason I'm asking, the big, beautiful bill, it has this provision in it, which I'm sort of fascinated with, and I've been fixated on for maybe the last week or so. And the provision in the bill, there's this pool of funds that's been created. It's about $500 million. So, a drop in the bucket of what this thing is spending. But $500 million in federal funds effectively for AI infrastructure build-outs for the states. But there's a condition. So it's conditional, and the condition is in order to receive any part of the $500 million in federal funds for AI infrastructure, you have to temporarily pause enforcement of state laws restricting AI models, systems, or automated decision systems for 10 years, with exceptions for laws facilitating AI deployment under federal or generally applicable law. So effectively what this means is you put the states to a decision point, which says, do I want federal funds to help build out AI infrastructure projects in my state, perhaps help create more economic activity, maybe more jobs, more tax income revenue? If I do that, then for the next 10 years, I've signed up to not implement any laws restricting AI at all. So I'm going to try to steel man both sides of the argument, and then I'm going to ask you just to make a snap decision which side of this aisle that you think you would fall on. So the people on the for side of this, they would say that sort of a national approach versus sort of this patchwork approach by each of the individual states. A national approach would sort of ensure that AI companies, they get to operate more seamlessly. There's going to be less cost from the compliance standpoint, which will enable them to deploy at a faster rate and therefore be more competitive on a global scale. And then technically, you can still develop sort of like this laws at the national level. So federalism, basically. So you can still develop laws. So it's not like there's not going to be any laws restricting it, but they would have to come from the federal level. On the flip side, some people would say it infringes on states' rights. You would say perhaps conditioning funding could force states to choose between either financial support or implementing just regulatory autonomy or listening to their constituents' concerns. And the last thing I would say is like 10 years in an age of AI is a lifetime.
It's forever. It might as well be forever.
It's forever. So you're signing up for 10 years of saying effectively, I'm not going to implement any restrictions on this stuff. And I personally, there's a lot that I have said publicly. I don't like it. I don't like many things about this bill. I think it's not a big, beautiful bill. I think it's a big broken campaign promise. I think it's a big, ugly monstrosity of a broken campaign promise. But this particular provision I'm fascinated with, because it's effectively, it's a big ass incentive. It's a big, do you want some money? If so, no laws for the big AI guys. If not, that's fine, but you got to go on your own, and we're not going to help you with any federal dollars. I'm curious, gentlemen, what say you? What side of the aisle do you fall on?
Like you said, 10 years in AI is a lifetime. So
that's the scariest part of it.
You're either left in the dust and you have no competitive edge at all, and other countries just take this over, or you unify and you build it as a whole and you do whatever we can to stay competitive. I feel like I lean towards staying competitive versus not. Politics aside.
Yeah, I think a lot of this is going to have to be goodwill from the companies operating this to do the right things, because I don't think which is scary.
So well for our society right now.
Hey, listen,
all
that's
those
a scary
privacy agreements you've signed from Mark Zuckerberg at this point.
It's a scary thing to say.
Really helped out society.
It's a scary thing to say, but the government on all levels moves too slow and is always too slow. So I don't know how I feel. I think the 10-year thing is a scary situation, because we're moving 10 years in 1 year. This is way different than, the internet. This is moving faster.
I say this all the time. 20 years ago, they were sending me AOL in the mail, and we were throwing that shit in the trash because we didn't care about the internet. And that's 20 years, and now we're knocking on the door of AGI. Can you imagine 10 years from now? To your point, Mikey, I guess the only thing I would say is, from a party that believes in free markets, if you're a state that implements, let's say, heavy regulation, what are the odds then that AI entrepreneurs and business owners are going to set up shop and create opportunities in your state versus go to other states? I have this issue with, I don't want to go too crazy here, but it's the same party that put Roe versus Wade and threw that back to the states is now saying we don't want any state regulation on AI. Let's bring that up to the federal government. It feels a bit hypocritical when you think about sort of the ethos of the party that's announcing this. But then I just think the free market, in theory, should make a state uncompetitive if they choose to overregulate this relative to other states in the union. And so if we believe in the power of free markets and the idea that capital is going to flow to where it's treated best, and that's the ethos of this party, why exactly would we not allow free markets to work here? Because if all states wouldn't implement some type of regulation and create friction, then it still means we can maintain our competitive edge against other countries. And if all states do want to implement friction, then it probably means we needed some type of regulation at that point. So I guess I'm not a big fan of this thing. Mikey, I can see your point. I can see anyone that would be on the other side. I'm just not a big fan of the coercion of, hey, you want federal dollars to kickstart your AI infrastructure? Then you got to shut your mouth and take whatever we give you for the next 10 years. I'm not a big fan of that, but I don't know. Yeah. What say you?
It's
everyone
just
out
another
there,
big
tell me
man.
What you think in the chat.
You gotta, it's a different big man.
Nobody that signed the bill even read it. So, I mean, who cares?
Except, true. Yeah. That's the greatest thing about AI, is you can throw these 3,000-page bills in a Grok or in a Claude, I guess. That's like the Ask Jeeves of all the AIs at this point.
Yes. It really
Claude is the Ask Jeeves. Is that still around? They should make an AI. Oh my God.
Is Ask Jeeves still around?
You're really dating me here. So. You're making me like
it's there. Jeeves is still there.
I'm just saying, all of us can now throw these things in these AIs and ask for pretty decent, comprehensive summaries. And we can be more informed on some of this stuff than our elected representatives. And this was one of the things that came out of throwing this in Grok. I don't know. I suppose the people in the comments will have a nice, some nice back and forth. Leave us a comment under this video. Tell me what you think. Are you for or against this provision specifically in the bill to effectively incentivize the states for the next 10 years to not listen to their constituents and the needs for any potential regulation that may come up in the next 10 years, just take the money and shut your mouth. Are you for this or against this, people? What say you?
Yeah.
With that, gentlemen, I'm out of here.
Mr. Victor Jones, thank you for joining us. Appreciate you as always. We're going to take a quick little 90-second.
I had to unbutton as many buttons as possible. I knew I had a good looking.
Wear some chains. You got it. Vecchio does it too. He puts his chest hair out. I like it. You got, it's a new age here.
I don't have the Italian chest hair though. I don't got that thing going for me. I'm more of a Craig David type look going on over here.
Thank you, Victor. I appreciate the compliment. We're going to take a quick little 90-second break and come back with our market measure. We're looking at 0 day till expiration profit targets based on IVR. It's going to be a good one. You don't want to miss it. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What do you do to keep emotions and psychology out of trading? Do you have any specific strategies on that front?
Yeah, I coach little kids in baseball. No, really, actually, it's interesting because you can see them get frustrated at things that aren't going their way, especially in a hard sport like baseball. To help coach them through that, it kind of makes me check myself and keep my emotions in check when it comes to trading.
Something I talk about on the road a lot is having a game plan before you actually get filled on the trade. I like having an internal conversation with myself of, okay, if this is what I can make on entry, this is what I can lose on entry. If I'm doing a more static position, like buying a micro future or something like that, I like to use a percentage of the buying power as my profit target. So if like a micro future is like $500 in buying power, I'll say, okay, I need to get out when I'm at like 250 max profit or loss tops, and trying to stick to my guns. That usually works, but that's kind of my typical approach to how I
do. You use stop losses?
I do not.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Mikey, we are back, my friend. Quick little market update because we haven't really been talking much about it. E-minis up 21. We've been chopping around this range for most of the session. We've got about a 30-point intraday range, including the overnight session. NASDAQ up 85. You got the Dow up 154 and the Russell up 10. Oil futures 65.53 up 61 cents. You got volatility futures at 18.85. They've just gotten smacked. You got the VIX itself at 16.50. Bonds up 3 ticks. You got gold and silver both muted. Gold down $8 and change. Silver up 30 cents. Bitcoin spot down 800. Futures down 800 as well. It's been relatively strong over the last couple sessions. Some individual stocks kind of moving. NVIDIA is up another $1 and change. You got Tesla basically unchanged. Apple can't get out of its own way. Some of the solar stocks, your Enphase and First Solar, those are moving. Shout out to Thomas with his incredible timing with Coinbase up another $20 today from the opening bell.
When 400?
Right, probably today. Why not? The next hour.
Yeah, we had some great trades from the research team.
Yes.
We were filled on a bunch of them. But yeah, Micron had earnings, closed that for a nice winner. That was a calendar spread. Got into the Coinbase Thomas trade, short put spread there in August. Got into a strangle in GDXJ in August, and then bought a diagonal spread in Pepsi as opposed to the short put. So yeah, love to see it.
Very good.
Trades are flying.
Very good. Should we get into the market measure, though? This is a favorite of the peeps. We're looking at 0-day profit targets by IVR. It's a market measure sponsored by the CBOE. Thank you to the CBOE.
Let's take a look.
Yeah, let's do it.
Yeah, a lot of people are looking for 0-day content.
Yes.
And this one's a good one for
My guy Jack on Twitter slings them. You're on those. You've seen those.
Yeah.
Yeah, this is the new thing.
It's a new world.
Yeah.
It's a new world that was basically just created out of thin air.
Yeah. What was it, a year ago? 2 years ago? That they started with the actual 0-day.
Well, they had the Monday, Wednesday, Friday. They went to the 1 days.
Yeah.
That's when everything just.
You think they'll have 1 days for 0 days for everything at some point? I would think so.
Maybe
almost becomes
top 10 stocks. Yeah.
Yeah. Becomes like binary almost.
Yeah. But yeah, lots to discuss here and lots of cool insights. So talking about 0 days by IV rank. So the novelty of active liquid 0-day option markets, giving us all a chance to learn how best to trade them together. We were just looking at the VIX 1 day, single digits, craziness. Sometimes it's not like that though. Sometimes it's super volatile, but we're going to take a look at a couple of different trade setups here. But implied volatility and volatility is incredibly central to options trading and a natural metric to look to for determining what to trade and how to trade it. So of course, when credits are higher with higher IV rank or implied volatility, should we be satisfied with keeping smaller portions of them, kind of knocking down our profit targets, which we will see. We'll get that answered in the next slides here. So looking at the study, 2 years of data, which doesn't seem like a lot, but this is 10 minutes.
Every 10
minutes for 2 years. So it is quite an abundance of data.
Yeah.
Looking at 0-day SPX options. So this sort of thing can be, if you're looking at XSP, similar idea. SPX is 10 times higher of a price than XSP, but if you're trying to knock it down in size and extrapolate. But looking at 0-day premium at 9 a.m., plus or minus 5 minutes every day, using $20 wide iron condors with short 40 or 20 delta strikes or $10 wide iron flies. So a bunch of different trade setups here, looking at a bunch of different results, examining closing winners at 10% of credit received, 20% of credit received, and 25% of max profit or credit received. Losers were allowed to expire or held through expiration. Filter the results by SPX IV rank at the market open from 0 to 10, 10 to 15, 15 to 25, and 25 plus. IV rank and SPX and the E-minis doesn't get too crazy unless you have something crazy happen.
Yeah, you kind of have those outlier moves that skew it because, like, an Apple or a Tesla or something, you have binary events and things where volatility can kind of spike in the short term and in the market, ETFs, SPX indexes. You get those couple, tariff tantrum is going to skew volatility for the next year.
Yeah. So like right now, SPX is at a 12 IV rank, but the VIX is at 16. So it gives you an idea. So like if we had a VIX at 25 or 30, SPX IV rank would be significantly higher. But we're kind of hovering in that lower IV range, especially now. All times are Chicago Central Time. All trades are assumed to exercise at mid-price. Results are presented as win percentage and the mean P&L.
Beautiful.
Let's take a look. Okay, so looking at iron flies first, $10 wide wings, looking at taking profits at 10%, 20%, 25%, and then, of course, doing nothing.
Yes.
There's some interesting data points here. I think for me, looking at the second to the highest, the IV rank of 15 to 25, you have very similar win rates, mid-70s for 10%, 60% for 20%, 50% for 25, which makes sense because if you're holding a iron fly and you're trying to get that pristine target of 25%, which is our top end target, you are going to have a lower win rate because you have to hold that significantly further through the day for a 0-day trade. But this is the biggest yield from P&L standpoint. Is this 15 to 25 IVR, which is like...
Which makes sense because like it's not too high.
Yeah, to where you're actually getting big moves.
Yes, it's inflated volatility is like that kind of range. And then you see the IVR below that of 10 to 15 or below 10, that's low volatility. Like we are in a low volatility environment right now.
Yeah.
It makes sense that when you have like the 15 to 25 is a wider range of high to low than the below 15 really is probably, a VIX from 15 to 17 or 18.
Yeah. And the no management makes a lot of sense too, because iron flies with $10 wide wings in SPX, very narrow.
Yes.
Like these are butterfly trades where you're placing them in the morning, and if you're not managing them when a winner is on the table, you are asking for trouble down the road.
Yeah, and the moves at the end of the day relative to how tight this range is, it becomes all or nothing.
Yeah.
These profit targets of 10% on a 10-point wide iron fly, that might be 80 or 70 or 80 cents. You're probably doing this at a $7 or $8 credit on opening. So it's that's
now it's $9.
Yeah, on a $10 wide.
Yeah.
So you're looking for a small amount of profit and you're churning through those positions. Whereas in the no management, a lot of it is probably going to max loss.
Correct.
Yeah.
So in other words, if I threw on an iron fly right now and I did nothing, I would need SPX to be within plus or minus 8 points of where we are right now.
Yeah. And that's
doesn't happen all that often.
Yeah.
So yes, with these trades, especially narrow spread trades where you're covering a narrow range, you want to have some kind of target in there as a GTC order, because as time passes, all you need for that to hit is just a movement through your strikes. And you can get that 10%, 20%, 25% best case scenario. But holding to expiration, doing nothing, you need a lot of things to happen in a very specific way.
Yep.
Next one, looking at 40 delta iron condors, 20-point wide wings. So these ones, if we were to just replicate it in platform right now, very similar setup. Like a 40 delta for a 0 day is still pretty close to the money.
Yeah.
I'm like 10 points out of the money on either side for a 40 delta, and then 10-point wide wings ultimately brings you to a butterfly where it's a butterfly feel, but it's a wider range of outcomes. So with a setup like this, you're basically covering the expected move with break evens. I think is the best way to put it. So you have significantly higher win rates here. 10% target. So this trade right now, $20 wide wings in SPX 0 day, looking at an $8 credit. So similar credit to the first trade we looked at, but you have a way wider break-even range.
Yeah.
Because your plus or minus 8 points starts from your strikes that are out of the money, not at the money.
Yeah.
So much bigger win rate, 90% across the board pretty much. 20% profit target, lower win rate, but you can still see the mean P&L is actually worse than the 10% target. So it's, again, speaks to the idea of if you're collecting premium and you're putting these on, having a GTC order makes a lot of sense. Because if you place this right now at 9 a.m., if the market passes through this range at 11 a.m. or 12 p.m., you're going to hit your profit target of 10%, most likely.
Yes.
Where if you leave it and do nothing, you're just at the mercy of the market. And again, you're waiting for something to happen that has to happen very specifically.
Yeah, I think just looking at both of these, the no management side of this is telling you that, that juicy premium that you see on entry, you should be managing that quickly because a lot of these, if you're holding them and you're doing no management, a lot of these are going to end up going against you, as you can see from the mean P&L values being negative. I mean, that's telling you that a lot of those trades are going to or close to max loss.
Yeah. And of course, the worst performing scenario here is the IVR under 10. And that makes a lot of sense too, because when IV rank is really low, implied volatility is really low, you are right up against the stock price. You're not collecting a lot and anything can happen. We've seen 100-point moves in SPX or the E-minis when the VIX is at 12, 13, 14. So you have to be waiting for these opportunities, and the best performing ones are in the IVR of 25 or higher, and the IVR of 15, 25 still good. But basically, you need some kind of volatility here. Next one, looking at 20 delta iron condors, so getting further out of the money, 20-point wide wings. So in this scenario in SPX right now, you're looking at strikes that are 10 points further away than the previous example. And your strikes are basically at the expected move. So 20 delta strikes, you're basically at the orange bar expected move, plus minus. And 20-point wide wings here would bring you to a credit of about $4 with a risk of $1,600 on a 0-day trade if I were to put it on right now. So these are, through the roof for 10% profit target, because again, if I'm collecting $4 and I put a target in at 40 cents, I literally need the SPX to pass through 6,100 to 6,135 a couple hours from now.
Yeah. And you really remove the outlier risk of holding it to expiration.
Right. Like the worst thing that can happen here is I put this on and something happens in the market and it's just a reversal and it never comes back.
Yeah.
If that doesn't happen, you're probably going to be able to take 10% out of this. But even the 20%, 25%, still strong marks here in terms of win rate. And looking at the mean P&L, higher IV is going to help you a lot, because higher IV means, in this case, not necessarily bigger credit. It means wider distance from the stock, from the market price.
Yeah.
Which gets you a stronger situation for, again, where is this market going to pass through my spreads after a couple hours pass?
Yeah. I think all of these as well show that, you got to be quick with these trades. Like a lot,
And the results from people that do in the YouTube chat, a lot of them are like, I placed this at 8 a.m. I'm out by 10.
Yes, and then I'm done. Yes, and that's that's really the key here is that you can't look at the total credit and expect to capture that day to day. You should be keeping realistic expectations, which we always talk about managing winning trades. This is another perfect example of it.
Totally. So we'll hit you with some takeaways. As we look to refine our 0-day profit taking, we're leaving no stone unturned. Examining trade performance by IVR at open revealed a few things. All the strategies and mechanics were considered did best in moderate IVR regimes and the high IVR too. But longer term studies on longer term options, it seems like very high IVR was a bad sign for 0-day profits. And I think just the fact that like when you're doing a 45-day trade or a standard trade, we'll call it, when you have really high IV rank, now you can get really far out of the money relative to the stock price. And you just need like the market to calm down a little bit and all that tail premium gets collapsed just really, really aggressively. So makes sense.
Yeah.
Picking a profit target means balancing win rates and the size of winners with the relative merits mostly consistently regardless of opening IVR. So when we looked at the first one, the very binary butterfly trade where you're collecting a lot relative to risk, all the results are going to be very similar because you need very little movement. But when you get into the more iron condor feel, it makes sense that you want that mid to high IV rank to get further from the market price. 0-day trading requires learning to act with speed, but there does not appear to be any need to complicate things by changing mechanics in response to volatility. So nice confirmation of what we assume. But yeah, just like anything else, if you have a defined profit and you're leaving it on to get 20 cents out of it with $3.80 on the table of profit, you're doing yourself a disservice because there are going to be scenarios where you lose all that money and then you get into the loss zone.
Beautiful. Great little market measure.
Yeah. Charles in YouTube chat, we post these slides on the tastylive website. So if you want these slides, they are available and let's call it an hour-ish.
Maybe faster than that.
Yeah.
The team's quick. Give them their credit. Come on.
Under promise, over deliver.
Yeah, that's true. That's true. You can always ask for forgiveness. Beautiful. Good stuff out of you. We're going to take a quick little 90-second break, come back with Big Boy Scotty S for trades from the Tasty Trade trade desk. If you want to give us a call, 855-238-2789 or 855-BE-TASTY. Phone lines are open. We're going to take calls as well. I don't know if Scott will stay around for that, but there's also an amazing video that I just watched on Instagram that's coming soon. I cannot wait to get Scott's reaction to this. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Hola! Look at you guys looking like spy versus spy.
I'm in the UK. Vanetta, I got in. They let me in.
So how's the vibe in London? How's the weather? What's the tea?
So Britt and I are getting off the plane. We're like, should we wait for Batista's? And I'm like, she's like, should we wait for the Batistas? It's the right thing to do. And I'm like, all right, yeah. And it's like European vacation. You know, we are traveling with that, with that crew. So I have a little suitcase and a backpack. Britt has a little suitcase and a backpack. The Batistas, 75 bags. It's like coming to America.
We have a rule in the Batista house. the wife has to pay for the vacation when we're on vacation. So she has one suitcase full of shoes. So we need to just
she's paying it forward.
She's paying it forward.
Then why does your son need a suitcase that's bigger than me? So anyway,
Vinny's frosted tips aren't gonna frost themselves. He needs hair products.
against everybody else, because I didn't want to embarrass him in front of his wife. Everybody else knows the rule. If you check bags, we're leaving you.
That's right.
You get left behind.
You get left behind.
You get left behind. You get left behind. That's the rule. An hour later, we're sitting there like, oh my God, they're coming off one bag at a time.
It was about 45 minutes. I will give you that. It really was. And I was embarrassed. You know, my wife is in this train with all these people and everything, you know, like Tom. We're traveling with Tom. We didn't get into the concierge level. We sat in coach. We're sitting on a train.
So anyway, we made it. We took the train. Then I had to walk. Britt made me walk like a mile.
Then it should be nothing. A big, strong man like
You should have carried it. I've never seen it before on a train. There were women getting up for him and saying, will you please sit? Would you like my seat?
I mean
seriously.
To be fair, when he starts lurching, it's jarring if you're not used to it.
Good morning, you knuckleheads, and welcome back to the show, Tasty Live.
That was kind of low energy.
Good morning, knuckleheads.
It sounded like he was going into like a dramatic monologue.
Right?
Yeah, Beth, was that okay?
No.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Mikey, we are back, my friend. E-mini S&P 500 futures, the high of the session, 61.75. Oh, 61.76. Let's get to all-time highs here. NASDAQ up 106. You got the Dow up 213 and the Russell up 19. The Russell, actually the strongest of the group here. Bonds rallying a little bit. Rates coming down. Bonds up 5 ticks. Gold down 23. Oil up 93. 65.87. You have volatility futures down 23 cents, 18.82. The VIX at 16.38 continues to go lower and lower here. Gold down 16 bucks, silver down up 33 cents. Bitcoin basically unchanged, down 500 bucks. E-minis just got up 30. Where are we getting all-time highs today? 61.47 SPX.
It's not
today. Is our high of the session.
What's the catalyst that's going to sell?
61.25. That's 22 points.
Yeah, I think we get it. I think we get it today. 22 points is
easy. Have to get that.
It's the pre-4th of July task that the market has to conquer.
I know somebody else that's waiting for it too.
Yeah,
and he's in the studio with us right now. Dee-dee-dee. From the Tasty Trade World Headquarters, our friend, your friend, my friend, Mr. Scott Sheridan. How are you, sir?
Thank you. I actually said this morning I thought we would hit it before lunch. I said before pizza.
Okay, that's a
It's
good
tracking.
call.
Right.
It's tracking.
They're up 33 now, 61.80.
Oh.
We have to.
You have to. I mean, just for fun. It would be very disappointing to me if we're this close and we can't get to new highs.
What happens? Do we touch it and drop, or do we touch it and explode into next week's 4th of July holiday America?
Again, we were talking about this earlier in the week. With everything that's hanging out there, there's so much uncertainty. I just don't see how there's an explosion. I mean, I'm not saying that they're not going up another 100 points or 200 points. To me, we're not getting, there's nothing in my mind that's going to take us up 5 or 10% from here before another pullback.
I got to look at our data set because we have SPX Guess the Market for the quarterly Guess the Market, which is on Monday, and we've basically gone nowhere.
Nowhere.
So it'll be interesting to see. I think we'll have a lot of people that'll be right on the dance floor right here.
Where are we? Where did we start the year?
We started the year.
We're up a little bit, right?
I think tiny bit. I'll give you the exact number here.
Am I 63.37 across all quarters? I think I might be.
I thought you did that last year. I think you did something.
That's SPX. You do it off SPX.
Yeah. So we started the year SPX. We opened.
Is it where we close?
Oh no, we had a little bit of a we
close on the 31st.
So we opened 59. We were at 5,900 to start the year in SPX.
That's where we closed on the 31st.
That was
31st was 58.81.
There you go.
Yeah,
so it's 58.81.
Yeah, was the close on.
So we're up a little bit.
Yeah, we're up a little bit. I think we'll have a lot of people right in this spot.
Oh,
yeah. Interesting. No callers on the line. We have our phone lines are open, 855-238-2789 or 855-BTASTY. Give us a phone call. You can tell us where SPX is going to close today.
I like it.
Yeah.
Right? I mean, it's just...
It has to happen.
Yeah, it has to happen. Speaking of has to happen.
Yeah.
Anything from your dad?
No. I'm not the favorite child anymore.
He's got the favorite child with him.
Yeah, no, I know. That's why. Why does he need to text me when he?
Well, he could just say we're having a lot of fun. How are you doing? Yeah,
no, I think they're back.
We're having great time. How's work?
Oh, they're back already?
I think so.
Oh, I thought they were staying for the whole week.
Listen, I haven't spoken to him. I think he's a little salty. I think because he didn't get invited to my cousin's wedding on Friday. Because he was removed. He's out.
Your cousin, but I'm...
My mom's on
that side.
Yeah.
Why would he get invited?
It's Barry.
Barry's kid's getting married?
Yeah, Jessica.
Oh, good for her.
I know, right?
Oh, well, then he should have been invited to that.
He's freaking out.
No. Barry is? Or
Yeah. He's already put a cap on how much I can drink. He's like, no, no top shelf for you, nothing.
Wait a minute. I'm with your dad on this one.
Yeah.
If it wasn't Barry.
I know.
But they're.
I know.
Right? I mean, it's two peas in a pot.
You want to come? I get a +1.
No, thank you. No.
Mikey?
Appreciate
I'm already
that.
going to a wedding.
I am actually heading it. So we finished the bar mitzvah circuit 10 years ago.
Yeah.
And our daughter, the youngest, she's the most social. I mean, one year, I think we went to...
Did she have to do the pick between two people?
Maybe a couple.
Was it that many?
Yeah, maybe. But the six and I can say the six because Liz is not here because she's the 10 if they're here, but she's the six. I looked at her at one point, I said, I can't do another Saturday night of one of these. I said, just please be a little more selective. Just can't do it. Well, now we're heading into the wedding cycle.
Yes.
So as we get older, so now our kids getting married, and we've got a bunch of those coming up, and I'm like,
you got to do the Tom thing, just
see, he's got the right approach.
Yeah.
Double the gift if you don't invite me.
Yes.
Right?
Yeah.
Smart.
Yeah, no,
I got to give him credit on that one. It's a good one. So my kids, he started that one on their bar and bat mitzvahs. He's like, if I don't have to go to the service, I double the gift. So they said, done. And what if you don't have to come to the party?
Yeah. They're separate now. It's not, you got to... It's true.
If you don't have to come to the party, is that a 4X?
Yeah.
Right? Make it at least a 3X.
That's fair, yeah.
Make it a destination wedding, and then you could do the welcome dinner.
Do you like destination weddings? See, I'm not.
No,
I think that's putting a lot of pressure.
It's a lot.
It's expensive.
Yeah.
It takes a lot of time, and it takes a lot of time.
Yeah.
Yes.
Right? I mean,
I've got one coming up next year in Hawaii. But my brother lives in Hawaii, and he has the same thing. Like, he's 30, his friends are 30-ish. I think he's 32. But last year or 2 years ago, he went to like 7 or 8 weddings.
In Hawaii or here?
Here. So he was flying back and forth.
That's too much.
It's like nuts.
He has the excuse, though, to not go to him. He's a good friend, though.
I think if you do a destination wedding, it should be no more than like 20 or 30 people.
Yeah.
Like, that's it.
I agree with that.
You just say it's your couple family members, your besties, and let's call it a day.
Yep.
Mm-hmm.
All right, we got that out of the way. So we got good advice. What else should we talk about?
Yeah, Frankie actually knows my dad is home.
He's home.
Yeah, talks to Frankie.
He doesn't talk to me.
He hasn't talked to me.
I actually thought we were friends. Apparently, that's not the case.
I know. Sad.
Mikey, does he talk to you?
He does not. No.
All right. No. So, do you want to give the number? We'll do some phone calls, but I'll get to business. But give the number. I'll get to business. And
Yes,
see if anyone wants
yes.
to talk.
855-238-2789 or 855-BE-TASTY. Phone lines are open. We got a couple people on the line right now, but we got phone lines open.
Okay.
What do you got for me? Give me the business.
We have the new list. It's
new list.
Top 20 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Now, Tom's not home. I hope he's not home. But off chance, in case he's listening, it's probably getting close to dinner time for him. Number 20 is CRWV at an 11. For everybody else, MU at a 14, NVIDIA at a 6, Tesla at a 28, PLTR at a 15, Coin at a 26, AMD at a 13, Apple at a 19, CRCL at a 77, SMCI at a 15, Meta at a 10, GLD at a 22, RKLB at a 29, HIMS at a 40, ENPH at a 95, SoFi at an 8, IBIT at a 4, Microsoft at a 6, FSLR at a 61, TQQQ at an 18, and number 20 for Tom, CRWV at an 11.
That is quite the list. You got HIMS on there. You have Rocket Labs.
What's Rocket Labs doing today?
Up 12%, about $4.
Yeah.
Yeah.
That's your classic everyday.
Everything's going nuts. Coinbase is up, at 375 or 370 right now, up 13 and change. That's this stock. I know Tom has a lot of positions on in here, so Tom is I'm sure. I'm sure this one is a pain in his side.
I haven't seen Circle. I know it's on the list. What's
Circle was up like 25. I was watching it earlier today. Yeah. 20 and change, 220 right now, but vol has just been absolutely smashed in there. What do you think about the stablecoin thing? You're in the biz.
From what side? I'll tell you, because I could come at it from two sides. As a business,
it's going to be great.
Oh my God, flat out amazing, because all you're doing is you're taking cash, you're housing it, so it's put in a T-bill.
Yep.
You issue the coins, so assuming that it's real, that you have all the cash, because I'm sure there'll be some scams out there, but you have dollar for dollar cash. So
you're going to have to pass the rates through, though, for sure. You don't think so?
Not. No. They're taking their 4% or whatever a T-bill is, and they're just saying, you go use the stablecoin whenever you want. I don't think that any of that gets passed through. Brilliant. Absolutely brilliant. Now, I asked Ryan, because he's my go-to.
Yeah.
For all crypto matters, I go to Ryan. I said, please help me to understand. I still don't get just crypto in general, like Bitcoin, ETH, et cetera. I mean, I understand there as a trading vehicle, totally understand it.
Yeah.
Don't see the value right now outside of a trading vehicle, and definitely not a storage of wealth, because anything that can move 5, 10, 15% a day, to me, that's not where I think you want to be putting money if you're looking for safety. But the stable coin, what I said is then, unless you're transacting, what are you doing? And he brought something to my attention, which I wasn't even thinking about. You have a lot of people who want to own USD.
Yeah.
So they're in other countries. Their currency's not worth anything. So they're like, let me go buy USD. And they don't want the basis risk. They don't want the risk of saying, hey, this can move or it cannot move. Obviously, the dollar can go up and down a little bit, but it's not going to move the way that cash will move.
Yep.
So from that standpoint, awesome. But I'm assuming there's stable coins in euro. I'm assuming there's stable coins in, you can do different currencies, right?
Yeah.
So, I mean, great. If people want to do it and they want to hold USD, but on chain, awesome. I just don't, I mean, other than, again, that to me is a storage of wealth, meaning I want to make sure that I'm in an inflationary country, whatever it is. I don't want to hold whatever that currency is. I want my money in dollars. Totally get that.
But it's a huge disruption to the space. I mean, MasterCard, Visa, they were moving on this too, but, it kind of takes some of the middlemen out.
From what? From what? It takes out what? MasterCard and Visa from processing? Are people going to use this instead of credit cards?
I mean, if you're getting 4% on it, you don't get 4% on a checking account.
You're not.
I think
There is no way that
you get yield on it right now.
How much?
It's close to a short-term treasury. It's like 4%.
Okay, well,
It's better than you get on like a.
And that I didn't understand. Well, of course, that's great because checking account you get nothing.
Yeah.
Yeah.
That's what I'm thinking is like.
Well, then where's the money made from Circle? If they're passing it all through,
Well, they're not passing all of it through.
Okay,
So you get like 10 or 15 basis points, some 20 basis points, something like that. But right now, Chase is getting my full percent on my checking account.
Yeah.
You know what I mean? Like they're doing the same exact thing. It just takes that out of the equation. And it's
but you were saying MasterCard and Visa. So banks for sure.
Yeah.
Yeah. For a bank for sure. Again, there will be some issues with these. It's growing pains as people try to figure out, and there's going to be scams. And unfortunately, there will be a lot of big scams that will come through. So if somebody's going to trade it or use it, I would just say do your homework and be careful. With where you're going, because I am sure there will be some very tempting offers out there.
Mm-hmm.
Yeah. And the tempting ones are going to be the ones you go, I'll take a pass. If it looks too good to be true, it probably is.
Yeah.
But anyway, it's great.
Or the Twitter DMs that you get from people that look like Tom that speak like they're from Russia. Don't give them any Bitcoin as well, please.
Or your username or password to any of your secure sites.
Yeah.
Those pop up every day.
Every day.
It's crazy.
I know.
Speaking of popping up, Katz's. Please tell me you've been to Katz's in New York.
Yeah, New York. Yeah.
They're doing a pop up here.
Really?
Yeah.
Where? Like Time Out or something?
Google it. See if it comes up.
I will.
Last time I had Katz's was an Oshaval Katz's combo.
Ooh,
that
is
burger with pastrami
Katz's on top. I waited. It was a Thursday night. I waited 6 hours.
No, you
not
did
there.
not.
But the nice thing about that area is like they put your name on a list and you just go mess around at the bars and then they.
Oh, this was in New York.
No, this was here.
Oh, here
on Randolph.
Oh.
So I put my name in at like 4 o'clock. We ended up eating at like 11 p.m.
How was it?
We had like 10 beers before, but it was amazing. Incredible.
Go ahead. Where?
Club City, July 9th.
Club City, July 9th. See?
Are you going to go?
I may.
You think it'll be as good as the... Yeah, it's never...
If you're going to do a pop-up, and I would think Katz's would
they're
going
gonna
to
bring
they're going to bring it.
Yeah.
I mean, for anybody that hasn't had the experience, it's Katz's. I mean, when you watch them carve, and what I love is you got to tip your carver as he's making
To get the extra pieces and get the good cuts. You got
thick.
Yeah.
Oof.
You got, what do you like, the lean or the fatty cut? Or like a little,
I do.
You're lean.
I am a lean, but I could do a combo.
I like a lean too.
But I could do a combo.
Yeah.
And according to Tom, nobody orders corned beef. It's only pastrami.
Yeah.
But I could do a combo. It's good stuff.
Yeah, I think I'm in the same boat.
Yeah, the fatty pieces, they're good, but too much of it's too much. You got to make sure it's not. You can't go all fatty pieces.
Yeah, totally.
Got to have a good mix. I agree with that. 855-238-2789 or 855-BE-TASTY. We got a couple phone lines open. You want to take a couple calls? You stay in for the calls? It's okay. Talk to our peeps.
Are we on tomorrow?
Do you want to be on?
Oh, well, I'm on. I just didn't know if we're on.
Yeah.
I mean, I keep getting
Are you gonna be
rotation.
in?
I don't come in on Fridays.
Oh, okay.
No,
Summer Fridays.
Summer Fridays. I'll be home.
I like that.
But we'll be on.
Yeah, we'll be on.
Looking forward to it. Let's do calls today. We'll do more calls tomorrow.
All right, perfect. John Paul in Detroit. John Paul, good morning, sir.
Good morning, fellas. How you guys doing this morning, gentlemen?
It's an amazing morning. Markets at all-time highs.
Not yet.
Lou Malnati's for lunch. It's beautiful. What more could I ask for?
You know, it's so funny. I've been in this trading racket now about 5 years, and even though the accounts are at all-time high, it seems like the winnings
I think the pain trade is higher.
Yeah.
I think, and turn your volume off because you got us coming through. But
Pain trade being what?
Like the pain trade, just like the market pain trade. Like where are people not positioned for?
Got it.
Like I think most people have been kind of missing out on this rally.
Yeah.
I think so. Like they have all the data on retail traders have kind of been the ones participating in this market.
You think people were getting out on the way down? I mean, I think people got out if they got hurt, but I think people at positions kept them. Yeah. But there were definitely people that got hurt on the way down. I mean, that was a big move. So I don't know. Listen, that's the great thing about the markets is that nobody knows.
Yeah, and as for the option trade too, it's tough to glean too much information from these big orders because obviously there's another side to it, but you don't know what what they have. Like Correct. if you see a far out of the money, 20,000 contract call buy, you don't know if they're short the stock and they need to hedge it or if it's, some sort of delta hedge for a position. So it's hard to take, that sort of, you got to take that sort of stuff with a grain of salt. Now, if Nancy Pelosi does it, then you got to jump on it. Then you got to get it.
Well, yeah, the SKU index is rising. The SKU index is at 150. It was at lows in early April. So the SKU's coming back. But yeah, if you're trying to place a downside hedge.
A funny statement or question is, what do you guys think of such an options-driven market? And do you think that's eventually going to end? And I hate to say misery, but let's face it, when we look at options volume, when we look at, and all of us are options traders, these markets are heavily moving based on options. And some of these older guys that I know that are, kind of out of the business, they all think that it's going to end in some kind of pain at some point.
I mean, I personally don't think that the increase in option activity is a negative. I don't see it. I've heard a lot of people say, there's too many options out there, based off of the amount of stock that's available, but I don't see it as an issue because you can cover your options at some price. It doesn't have to be that everything's going to convert.
Yeah.
Risk teams like ours, I mean, at least I can speak for our risk team. Our risk team does an amazing job of making sure that we're watching accounts that could end up with stock due to an exercise or an assignment. And, we have guidelines that we follow that if somebody has, a reasonable amount of money, that we allow them to take it. But if the position would be way too big for their account, we'll close it out. So,
right. And I don't mean the independent market making or regulation tier portfolio margin like calls for the independent retail trader. I just mean the broad markets overall, index, underlines. I know Bill Ackman's made a similar statement, but these guys could also be talking their book at times. You know what I mean? So it's a lot of double speak, opaque, statements made at times. But I always love listening to you guys, and I always try to tune in to all these shows. I really enjoy the content. It's a very beneficial thing. I don't know why you guys are so hard on Tom. You guys got the most handsome guy in the room right there, and I hear nothing about all these wisecracks about Tom. You know what I mean?
We just we're always thinking about him. We're just wondering.
Well, this is what I tell when I go to the grocery store to Whole Foods, and I tell the girl at the counter, look it's very different. I'm 5'3", with a balding hairline. I'm 55. I go, look, it's very difficult being tall, dark, and handsome with a full head of hair and a height to weight proportionate. So that's what I tell people. So. Anyway, I try to use some humor, but love you guys.
Thanks for the call.
Appreciate you, John Paul.
Thank you.
Appreciate you.
Thank you. God bless you guys. Have a great day.
You too.
You too. We got Mark in Scranton. Mark in Scranton. Good morning, sir. How are you?
Hi guys. Good morning. How are you?
Good. Hanging in there.
So I got a story for you guys. Quick. I want to tell you how I got in touch with Tasty. If I could share my story.
Sure. Only if it's a good one. The bad ones we filter out.
Mike will appreciate it. Mike will have to make a phone call later to his brother.
Okay. Beautiful.
A little foreshadowing. So when I started off, I started watching Chris Butler with his options, and that's where I really learned most of my option trading. And one night I was sleeping and I heard a familiar voice, and I'm like, wait, that's not Chris. I'm like, he's got a full head of hair.
True.
And it was Mike and his whiteboard.
Mm-hmm. That's right.
And then from there, I just started looking up Tasty, and I remember the first show I watched. I turned on about 3:15 Eastern time, and Tim was on, and he was in a green leotard suit. And I said, "What is going on here?"
I'm sorry you had to see that. It gets better.
Right?
I like the yelling outfit. That's
my
usually
favorite.
My favorite from Tim. Have you seen?
And maybe it was yellow, but it was a solid color outfit, and I didn't know what was going on.
Yeah.
Yeah. When he dressed up like Janet Yellen, that was the best.
Yeah.
But I'm so thankful that I found you guys, and I so appreciate it. I don't watch Chris's videos anymore because they're more introductory videos, but he did a great job, and you guys do an amazing job as well. And boy, I'm just so appreciative to have come across you guys.
We appreciate it, Mark.
Yeah, thank you.
Yeah, glad the content's helpful, and glad you're enjoying the show.
Absolutely. You guys are doing a great job. Tom and Tony Who.
Tom and Tony Who. That's right. That's right.
Guys, you have a great day, okay?
Thank you, Mark.
Bye-bye.
I think Beth has one more coming in. You don't have a name for me, though, Beth, so I don't know who it is. Who is it? Who dat?
Matt from Florida.
Matt in Florida. Matt, you'll be our last caller. Good morning, sir.
Hey, curious. Getting feedback on your side.
Yeah, you might have to mute us. If you got us.
PMC. No, it's muted on my side.
Oh.
PMC, the metals company. I'm kind of curious what you guys think. It's been kind of running.
What's the ticker? It's not TMC. TMC. Actually, it's
Yeah, I mean, the stock has ballooned for sure. For me, I think when it comes down to $7 stocks or stocks that are $10 or less, I would rather just have the shares if I'm playing it to the upside.
Yeah.
So I'm kind of curious, Mike. So I've got couple thousand shares. I've been selling puts and calls.
Okay.
Good job out of you.
So at $4 a share, I had like 5,000 shares. Now I've got like 1,000 shares, and so because I've sold a lot of calls, and I've got like 7 days to expiration, 14, 21, all the way out to like 45.
Mm-hmm.
But I really think that this is like gonna pop to $10. So how do I manage my deltas?
You got to buy back the calls. I mean, the calls are, if you got 7 days to go till expiration, I know it stinks, but if your assumption is that it's going to 10, you got to buy back the calls and just lean long it. If you're not as bullish, if you think it's going to stay around here, close out of the position and sell some puts, and you can wheel into a new stock position into a down move at a better price. But if you think the stock's going up 30%, you can't cap the upside. That's
I mean, if you have 7 day, do you have short calls in the 7 day cycle?
Yeah.
Yeah, so like that's what I'm asking, I guess, is like I've got liquidity and capital to sell more puts. I can do that.
Mm-hmm.
And so I'm trying to watch the IV rank to, when it goes high, to sell more puts. But I've got a lot of deep in the money calls. I'm just going to let them expire, I guess, right? How expensive is that? Is this a bad strategy? I mean, I'm trying to wheel it, so I've got some really deep in the money calls. I've got a lot of stock, and I'm just selling more.
What strike
puts,
are the calls? Like
and
6, 5, 6?
I've got four calls. I've got 4.5 calls. I've got 5 calls.
Then they're done. It's over.
I've got 7 calls. I've got 6 calls. They're all over the list.
Well, those ones you can roll. The 7s are at the money, so you can roll those calls. But the ones that are 4 or 5,
would I just roll everything for a credit? If I just get a credit, roll it. If I don't really get much of a credit, if I don't get $1 a day, I just let it expire. And
I would close the 4s and the 5s. Close with the stock. The 7s you can continue to roll, and if you want to get back into a position there, you sell the at the money puts, and you sell them at 30 or 40 cents. And if you get a little bit of a down move, you take stock at a cheaper price. Long stock with the 5 strike calls, with the stock at 7.5, the position's over with. There's no, you can't.
It's just really frustrating because if I had just held the stock, like the 5,000 shares, I'd be looking at $20,000, $30,000.
Yeah.
But instead, I'm only looking at $8,000. I'm just sitting here trying to be steady.
Yeah, I mean, but were you thinking the stock was going to double in 3 days?
Yeah, I mean,
so why are you selling the calls?
Is crazy. Because I'm trying to be mechanical. I had 5,000 calls. It was a loss by position. I'm trying.
I know you can't have everything though. That's what I'm trying to get at.
So yeah, I think going forward, if you acquire more shares, I think the best thing to focus on if you're trying to maintain the shares and not have them go in the money is you just have to be really diligent about buying back the call before it goes in the money and rolling it out to the next monthly cycle and moving it up. So like if you have the July 7 now, you can buy back the 7 for $1 and you can move it to August and move it to the 9 strike or even the 10 strike. You're going to be paying a debit to do that. But like if your objective is to give your shares room to breathe, then that's what you got to do. Because once they go deep in the money, the trade's done.
Yeah.
Okay. By the way, I feel like these kind of like this is like a border meme stock where it's like it feels like you're a market maker. Like if you go into this stock like early in the morning, there's not enough bid or ask on the options.
Yeah.
So as a holder of the stock, it's great if you're trying to sell because there's some, I don't know, illiquidity.
Yeah.
It's going to be tough to get out if you're trying to sell. All right, we got to go, Mark. Matt, I'm sorry. Appreciate your phone call. Give us an email at support@tastylive. We'll get you if you got any more questions. We're going to take a quick little 90-second break. Come back with Jenny and Glenn replacing Liz for the day. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with a Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the Jen and Glennie show. I almost said the Jenny and Glenn show. Welcome. This is an FX special. Glenn, thank you for joining me.
Thanks for having me. Navy blue. Glad we coordinated.
A Blue Shirt Thursday. That's what I didn't even realize it. Mike Butler just said, "Oh, it's Blue Shirt Thursday." Blue Shirt Thursday.
Glad we both got the memo. And I'm growing my beard out because
getting ready for Movember.
Yeah, comments received on my baby face. And I polled Mike and Nick yesterday. They said facial is the way to go. So
Well, someone asked us on our show. We take questions via Twitter, and but I'm not on Twitter today, so I'm not taking questions today. Sorry, folks. We're just too busy. But we did get a question asking how old you are.
I'm 23.
And that was my guess. Like, yeah.
Birthday coming up, September.
Oh, what day?
The 4th, same as Beyonce.
Oh, my daughter's September 5th.
Oh, there you go.
Which was nice. You were always the oldest in your class.
I was youngest, actually.
Oh, you were?
Yeah, I think like 2 years after me, they changed it back to like end of or beginning of September.
Right.
And it was like we even had like some October birthdays. So I'm on the young end.
So you're the youngest in
Correct.
your class.
Yeah.
Okay.
But now it would have been quite old. But it is nice because you always get Labor Day.
Right.
Do you start class after Labor Day here?
Well, our high schools, well, it depends. I mean, Chicago Public Schools is probably different. I'm in the suburbs. Suburbs start, my daughter starts like August 15th.
Okay, yeah.
But then she always has Labor Day off. It's always her birthday.
Awesome.
Although this year, do you know Labor Day is September 1st? So your birthday weekend's actually the following weekend.
But that's okay. It feels like two weekends.
Yes.
And September 5th, we'll be in San Francisco with Tom and Tony.
Oh, you will?
Oh, yeah.
Oh, John, do you have any artwork for that event?
Yes, 1 minute. Whole group of events.
Let's take a
coming
look.
up. Yeah, you were just on the morning show twice this week. Are you on tomorrow?
That's why I didn't wear red. I didn't know what day of the week it was. Monday, Liz and I did the morning show. Tuesday, we went early to the SIBO for the opening bell.
Oh, yeah, that was cool.
Yeah. And Wednesday, we did the morning show. Here we go. At Work by 11, free event. Sign up if you haven't. These events are great. Doors open at 8 a.m. Show starts at 9. tastylive.com/events. This is the Regency Ballroom, San Francisco. And that's, so September, yeah, you'll be there your birthday weekend.
Yeah. So I'll get a birthday weekend before then, and then.
And then, did you tell them it was your birthday? Did you ask for like double time?
Not yet.
Extra bonus?
Maybe extra per diem.
Extra per diem.
I go nuts in San Francisco. See how that plays out.
Well, everyone should sign up. The shows have been great. We've been getting lots of great feedback. The pictures looked amazing from London and Milan. San Francisco is such a fun city. I know there'll be a big crowd. We have so many tasty traders in San Francisco.
Never been. So,
it's nice. It's nice. It's fun. Good places to eat. One time we were in San Francisco with the group doing a he said, she said tour, and we got in the middle of a big march or demonstration for science, and everyone was in the mix of it. I think Tony Batista was in the mix of the parade, yelling "Science, science."
That's good. That's like one of the least, divisive or problematic.
Yeah, right. A protest for science.
I'll be pro science.
Yeah, it was funny. So it's a great test city. You'll have a good time.
Fantastic.
Liz and I are really not on the road this year. They didn't take us.
That's all right. Are you happy with that? I know Jamal said he enjoys the break. He was going for, I think, 3 years straight.
It was a tough year for us because Liz's son graduated high school, is going to college, and they're very busy just with things going on. Plus, Liz is gone right now. Everyone knows she's gone. She's at the Mayo Clinic. And we also have a Germany show that we're doing in Munich.
No way.
Yes.
All right.
Yes. If anybody wants to go, it's not a tasty event. It's not a tasty event. It's a SIBO event, risk management convention or risk management conference in Munich during Oktoberfest.
Coincidentally.
It actually kicks off Oktoberfest. It's leading up to Oktoberfest, and the last day of the conference is the day Oktoberfest starts.
Perfect.
I know.
Are you excited? Have you been to Oktoberfest before?
I've been to Munich, but I've never been to Oktoberfest. And same with Liz. She's been to Munich, never Oktoberfest.
I bet it's a little different.
We're looking forward to it.
All right.
We're looking forward to it. Okay, we have a lot to do today, Glenn.
Sorry.
No, this is great. But we've got a lot to do. FX, last week when you were on, we put on 3 different positions, and one came off for a nice winner.
Oh, nice.
But let's walk people through. Let's kind of take a step back, walk people through for those newer to FX, which I'm still considering myself newer to FX. But if you haven't started yet, right on our platform is this Tasty FX tab. Let me click right over here, Tasty FX. You just click on that, and if you haven't opened it yet or started it yet, you'll get a little comment here of like, click this.
Yeah. So here on the desktop platform, it'll be a little tab there on the left, and that will pop you to the web platform to where you can sign up for an account.
Okay.
The account opening process is relatively smooth because of the data sharing from Tasty Trade. So all of it should be pre-populated, a couple questions, and then if you're through, you can access this on the web platform or on the desktop platform, and it'll look like this. So 80 currency pairs. This is a spot market, so different than futures. Don't have to worry about any contract specifics. There are no options on them, but everything is
There's so many.
Yeah, and you can get pretty wild with them. There are 20 US dollar pairs, so a lot of ways to get granular US dollar exposure. Or if you're not interested in the US dollar at all, there are then 60 plus non-US dollar crosses.
There's so much. And okay, some of the questions we've had. Do these trade 24/7?
They trade 24/5.
24/5.
So they are similar to the futures market, but they don't close every day, and they open an hour earlier on Sunday.
So what time do they open on Sunday?
4 p.m.
4 p.m.
Eastern.
4 p.m. Eastern.
Is that right?
Okay. Yeah. 4 p.m. Eastern, 3 p.m. our time?
Yeah.
3 p.m. our time. Is that right? I don't know.
Or 1 hour later.
I'm never, Sundays, I'm never really, watching my platform, waiting for everything to open. So I don't even know.
5 p.m. Eastern, they open.
5 p.m. Eastern.
Yes.
So that would be 4 p.m. Central.
Correct.
That makes sense. And then 5 p.m. Okay, got it. So you basically have to wait, because last weekend, when there was so much going on over the weekend, if people wanted to trade something, they would have had to wait until 5 p.m. Eastern time on Sunday to trade this. And were you watching the FX when it opened on Sunday? Did you see, what crazy things did you see? I, on my account, took my USD ILS and closed it for a loss because I thought, I don't think this assumption is going to come to fruition, so I just took my loss.
Yeah, that was an interesting one, and still is. It's Israeli shekel that is still gaining on the U.S. dollar.
Right.
It's like you still have that position open.
I still left it here. I said to Liz, what do you want to do with this? And she said, I don't know, ask Glenn.
So, yeah, it's an interesting market. This isn't what I would have expected, that this Israeli shekel would return to strength that we haven't seen since 2023. So if you want to let it ride to back up to where we were pre-conflict, then you absolutely can. But definitely a surprising market to me. But yeah, on the Sunday night open, we did get a gap in some pairs. Euro dollar opened around 40 points lower.
And we got out of that. So
Yeah.
the euro dollar pair I had on, we took that off for maybe an $80 win.
Awesome.
Yes.
Fantastic.
So I took it's very easy to say, oh, that's a winner, I'm going to close it. It's harder to say that's a loser. Maybe I should take that loss.
Agreed. And I think that is asset class agnostic. But definitely when you're working with undefined risked directional trades, then a lot more of that psychological component tends to eat at you. But what you can do is you could add, if you at any point in your trade, you can add those boundaries on using take profits or stop losses.
That's what I want to learn how to do today because we didn't go through that last time. But before we get into that, I do want to point out this trade, which you can see, we put it on here, 0.05 lots. 0.05 lots. I don't remember exact. Is that what we had on?
Yeah.
So, and it was worth, at the time, $300 and something in buying power, I think.
Sounds right.
Sounds about right. So we put that trade on, you can see it right here, and it's fallen all the way down to this level. And people might ask, well, how much risk is that? How much could I have at risk? And I think we put $350 into the trade, and that trade is down $177, which to me isn't terrible considering the move we've seen.
Right. Yeah. It definitely was a dramatic move.
Yes.
In a short period of time. So if you're comfortable holding on to that, then you absolutely can.
Holding it, or if someone wanted to add to it,
Right.
to maybe help them get out quicker. Like if I just held this to get out for a scratch, I'd have to wait for it to get back up here. But if I added to it, then maybe halfway up I can get out for a scratch.
Exactly. And the nice part about the flexible sizing in these contracts is that when you want to layer into positions, it wouldn't be looking at this like a futures contract where you say, okay, I could absolutely layer into this, but I'd have to double my exposure to do so or triple it. Here you could add, you have 0.05 lots on, you could just add 0.01 lot or
Just a
0.02, 0.03 to get, if you want to kind of dollar cost average into it, but don't want to necessarily double your exposure, you can do that.
So if I shrunk this to 0.01, now,
then hit the buy button or the sell.
oh yeah, okay. Oh, that's right. And see, it's like you forget.
Yeah.
I haven't placed a trade in here since I had you on last week. So now I have to hit right here, buy.
Yeah, either the buy price or the sell price.
And if I want to add to my current position, I would be buying.
Correct. Because you're already long that market. So if you were to hit sell, then you would be liquidating
Some what I have.
some of your existing.
And again, buying it means we think the U.S. dollar will get stronger and the shekel will get weaker, one or the other. They don't both have to move. One would move. I mean,
Exactly.
like
yeah.
if the dollar just gets stronger in general, this would go our way.
Yeah. So with any pairs trade, there are two dynamics at play. And so we're seeing not only Israeli shekel outperformance, but you can validate kind of which of the pair is doing the moving right now by looking just at all the popular U.S. dollar markets to say, this is historic U.S. dollar weakness.
Weakness.
So, yeah.
So if the dollar gets stronger, this could go back into our direction.
Right.
So I don't mind adding to it. So if I add 0.01, and how do you refer to that? One?
Micro lot.
Oh, a micro lot. That sounds a lot better than I'm going to buy 0.01.
Yeah.
I'm going to buy a micro lot.
Because that equates to 1,000 U.S. dollars in this pair.
How do you know that?
So it's a little, with these being two different currencies, all these pairs, depending on if it's the first pair or the second pair, what the platform will show you will depend. So what you see here is the notional, but it's quoted in Israeli shekels.
So
that
3,392 notional is $1,000?
Correct, because the lot size, your position size, is always dictated by the first currency pair.
Okay.
So a micro lot is 1,000 units of the first currency. So here we know that is $1,000.
Oh, so one micro lot is 1,000 shares of USD.
Correct. And so this pair, the second currency in the pair is the quote currency, which means that this will all be quoted in shekels.
But if I know I'm buying one micro lot of the US dollar, and that's $1,000, we're going to go through this with a few pairs and try to see if I can catch on to this. Okay? Is $1,000, then I know $1,000 is 3,392 shekels.
Yep. And you can also validate that with the margin. So this pair is margined at 5%.
Okay, so 5% of 1,000 is 50.
Exactly. And so when those, my kind of trick, it's not the most helpful, but if the margin is a flat rate, then you know that the US dollar is first, and you know exactly what your notional is will be in dollars.
Okay, and so $50 margin, I don't think that's going to do much for my position since I originally got in with 5 micro lots.
So yeah, this is 1/5.
I'm going to add a little bit more because I have $983 available. So I feel like adding to this might be a better place to spend money than just like randomly picking something else.
Sure.
I don't know. I'm hoping to get out of this for less of a loss than I have. And I think the easiest way to do that is to add a little bit. I don't know if that would be, oh no, what did I do? Backspace. I didn't want to hit enter like last time and then it sent it.
Yeah, so then just type a 2.
All right, 2.
Yep, and then click out of it.
2 micro lots, so $100.
Exactly.
So now I have two micro lots, which is $2,000 in notional value.
Correct.
of
that
US
you're
dollar
adding.
that I'm adding
Right. So your total exposure will be $7,000.
because I had 5, now I'm getting 2. I've got $7,000 exposure to the US dollar.
That's math we can do. It's math I can do.
Okay, yeah. That was easy. That was easy. Okay, and I think this is good. I think people are learning from this. This is tricky for someone who's never traded FX. They don't really know what's my risk, what's my notional value. I started with $1,500 and I have 900 available, so I'm really controlling a lot with just a small amount of money.
Exactly.
Okay, I'm gonna ship this, place this trade. Now, if I'm controlling $7,000 with just, $450 in buying power, am I paying interest on margin? Am I borrowing so much money and paying interest on it?
No, because you have those funds.
Okay.
You're not actually borrowing like you would if you have on a Tasty Trade account, like where
Yeah.
you have your funds and your buying power could be more.
Right.
To actually borrow from the brokerage.
Right.
Here you have the funds.
Okay, so I'm not paying any interest. I'm not like daily paying interest on any like.
So that's an interesting point too, because that's where the carry comes in,
Mhm.
those overnight funding charges. So it does depend because here you're holding US dollars and you're
Mhm.
borrowing, you're selling Israeli shekels. And so depending on the interest rate dynamic of those, right now, if you look at the top where it says USD ILS,
Mhm.
that swap ask
Yes,
is what you're paying overnight. That's the indicative rate.
but that's all priced in, right? Or how does that work?
So if you hold this position past, and after you place this, we'll go to the history tab.
Okay.
But that negative 1.26 is pips. So overnight, if you hold this position, you'll be charged that amount of pips. But that presents the opportunity for, in other markets where the interest rate differential is wide and US dollar has a higher interest rate, you're able to collect a premium overnight.
Let's do that. All right, I'm going to place this trade. Deal confirmed.
Yeah.
Deal confirmed. So I'll go to my positions, and now I have 7. So it gives me my total 7, 5 at this price, and 2 at 3.39, and 5 at 3.51.
Exactly.
So I don't have to, this is nice because I can see them individually. Usually in an option, you just see them all collectively and you don't know, these I bought at this price, these I bought at that price. I like this setup so I can choose what to close. It's not like first in, first out.
Exactly. So it is first in, first out. This is interesting to bring it up. It is first in, first out, but because you have positions of unique sizes,
Mhm.
you're able to close those in any order you choose. So
Oh.
if you were to double down,
To do 5.
correct, another 5 micro lots at a time, then you would be subject to close the first one before.
Really? But because I did 2, I can close the 2 micro pips, micro lots.
Yeah.
I can close the 2 micro lots before the 5 if I want to.
Yeah.
Huh.
Yeah.
I like it.
A workaround.
Yeah.
But yeah, if you go to the history tab,
Okay, here we go.
so yeah, there you're seeing what those daily financing adjustments would be. So
And that's over the last 24 hours.
correct.
So if I go, or since we've had this on 7 days, right?
Yeah, I think it's a scroll, so it only shows you.
Oh, okay. Oh, yeah, here we go.
Yeah. If you scroll down, yeah.
Oh, so one day I received money.
Exactly. So that was
The Euro
your-
Great
yeah.
British Pound.
your Euro GBP, because of the direction you took in that market, that direction commanded a positive overnight funding rate.
And I think I still have that on this.
Yeah.
So it's not bad if I'm paying in one and offsetting it, receiving money in another.
Exactly. And that goes directly to your funds. So
Cool.
it's kind of,
So where this says funds, 1,582, how is that when I only put in $1,500 and I'm losing on this?
because you closed positions for a profit, right?
Right.
Yeah. So that means your actual realized funds is up because you're letting this loser ride.
Oh, but once I close it, then it would adjust it?
So you'll look at your equity.
Right,
Your
and I'm
equity
down.
takes into your funds and your open positions.
So this just adjusts after you close positions?
Correct.
But this is like your net lick. If I want to know what's my net lick, it's my equity.
Right.
Okay. Cool.
Yeah.
So let's go back to the history and look at this. So I'm just curious. Okay, 7 cents, 35 cents, 5 cents. Then I got 58 cents, 7 cents, 13 cents. And then I got 20 cents. So right now, it's offsetting each other. But if you had a position on for a long time, just waiting for it to turn around and waiting for it to turn around, it could add up.
Correct.
Or if you've got a bigger position.
Exactly. And yeah, so you'll see those financing adjustments are the overnight funding rate, and then the what is the other one? The daily admin fee is just annualized 0.05%. That's taken for holding, regardless of what pair it is, just for holding it overnight.
And these fees, people will ask, like, are these fees different at different brokerages, or are they set somewhere else? Are they fees that come from some kind of clearing firm, or?
Yeah, so these are pretty standard, the 0.05%, but it is up to the broker to determine that. So the indicative funding rates, the overnight funding rates, are derived from the overnight interest rates themselves, and so that'll be pretty similar. But if you want to get into the weeds, there is a cost and charges document, and each brokerage would have something similar, but they're pretty similar across
the firms,
yeah.
across the different firms.
Yeah.
Okay. All right. So why or how do you know if you're getting into one that might charge a larger daily fee?
Exactly.
Versus pay a fee? And not like I'm looking to put a trade on, because you don't want to have a big position on just to get paid this small fee, but just to be careful so you don't get into one that charges a larger daily fee.
Exactly. So if you go to the watch list, we've actually made this pretty clear.
Okay.
As one of the 7 columns listed.
Okay.
That swap bid and swap ask. Those are your indicative rates. And so anything that's negative, this will be a 1-day roll. But what
So
is it?
21 cents for, like, if I'm in this, 21 cents for overnight?
Yeah, so it's 0.2 pips. So depending on your position size,
Okay.
it would correspond to that dollar amount. But what you're seeing here is these overnight interest rates are around the clock, or 365 days. So unlike theta, that's just during if you're collecting theta, that's only during market days, right? And so you're losing on the weekends. Here, that is all factored
Every day,
in. And
7 days
so-
a week.
Exactly. So these are all 1-day rolls. But if you look at USD CAD,
Yeah, is that Canadian dollar?
yeah, so that since, I don't know how the history is, but since we're so close to Canada, that's one of the only US dollar pairs that operates on a T+1 basis as opposed to T+2. So the weekend roll for the majority of these pairs was Wednesday. So holding a position there overnight would take that weekend roll into account. Whereas today, for that USD CAD, that one is elevated because that is the 3-day roll for that pair.
Now, Glenn, when you were in college, did you think, like, I'm going to go become a Forex expert?
Not at all. I was just trying to make it through.
Yeah.
But no, there are a lot of cool nuances here as to just how this marketplace operates. And I think all that is very interesting just because, the whole industry is just the global exchange of all these currencies. But all of these nuances are just specific to how U.S. regulators set up these markets, what kind of rules there are there. So yeah, it's a lot to unpack, but hopefully pretty easy for people to get into.
So your friends and family, now that you're doing this, and Are they getting into it? Are they trying to get into it? Do they watch you every day? I know my dad still watches me every day. I've been on air for 15 years. He still watches every day.
My mom does watch. Thank you, Mother. And they do watch as well. But
15 years later, you'll still be watching.
All right. But no, I try not to give them any advice because then it's just like, what the hell, Glenn? You
Funny.
told me. Yeah.
I know. Yeah, you'll learn not to, we've talked about this before, like not to ever say you'll manage anyone's money, family or friends, or tell them what to do, because then you feel too bad if it doesn't work out.
Horrible. Yeah.
Yeah.
So I try and help my mother out where I can, but
Yeah.
try and tell her it's her money.
Is she trying to learn FX?
She thinks the space is interesting, but I told her maybe it's best if you just
Learn how to sell puts.
Yeah. Just given where she is in her life. So,
Yeah.
But yeah, if it's something people are interested in learning, there are a lot of markets to get right into, low cost to get into them. So it's a cool space.
Very cool. Okay, so as I'm looking at if we go back into the platform, as we're looking at some of these pairs, I want to place a new trade, and I want you to show me how to set, sell it if it hits here, or close it if it hits this level. But when I look at these, and we have so many, how many did you say there are?
I think 86.
How do I know? How do I know what's at an extreme?
Yeah. Good question. What we've done when we organized this watch list is try and make it so that you don't have to look far. And so what I can tell you is the popular US dollar and the popular non-US dollar are they're going to be the most traded markets, and not a lot of people will look further than that unless they're really looking for something granular or specific, like that Israeli shekel, right? And so from a liquidity perspective and from what's moving perspective, it's easiest to monitor just this list of 8 to 12. And so you can look at the net change percentage to see what's moving on the day. But the historic context I can give you is just going through the popular US dollar pairs. We've got historic US dollar weakness today this week, but continued today. And now we've slid in these European currencies, we've slid to 4-year extremes. So that pound dollar above 137, we haven't seen that since 2021.
And that's going to come with, and I know this from trading, right? And price points, from doing it, from trading it, watching it, doing it. Oh, 137, we haven't seen that. That's an extreme. It's kind of like us when we're trying to get in and out of bonds. Oh, when bonds get down to 113, we'll get back in. When they get over 114, we'll sell them out. Like that's there's not a flashing light here or a star that's triggering, like this is an extreme, maybe a good time to get in. That's just you knowing.
Correct.
And knowing a number and looking and saying, wow, 137, geez.
Yeah, definitely it helps to watch these a lot and know kind of where you've been. But when you're only looking, if you only choose to look through these popular US dollar pairs, it wouldn't take long to pop open the chart of all of these. And we have historic price data dating back to 1990 in some pairs. And so the charting in this platform is actually pretty robust and pretty easy to see what's at an extreme, just not from the watch list per se.
So I clicked on this, ask. Won't that pull up, will that pull up the chart?
Yeah, go back to the watch list.
Click on GBP, Great British Pound USD, right?
Yeah.
Click on this. Click on ask.
Try going to a different one.
Yeah.
And then back to it. That's weird.
Euro USD. Oh, Glenn.
How bizarre. Oh, no.
Oh, Glenn. What are we going to do? 10:35. What are we going to do for the next 25 minutes?
Oh, God.
I'm just I mean, I would say, so whenever we come into any little issue on the platform, if we are having any little issue, what I would say the fix is usually sign out and sign back in. which, or it could just be slow loading here, possible. But maybe I'll do that. Maybe take down the platform, I'll sign out and sign back in, see if that does anything.
Okay. Yeah.
Yeah, so.
See, the positions, it's weird that the watch list is populating and the positions tab.
And my positions are here. So here I do have Euro, Great British Pound, and I click on this. Click on that. Usually the the chart comes up, but does it
Yeah.
come up on the trade page or does it come up on a different page?
No, it should be the trade page.
Trade page. Okay.
See if I can get in on my end.
Well, yeah. So John, pull down the platform, go full screen on Glenn, on 23-year-old Glenn, soon to be 24, over in a couple months, right? That'll be here before you know it.
I know
And
it.
I'm gonna sign out and sign back in, just to see if I can get the charts to come up.
Yeah, just to continue the kind of brief overview, we've got that Euro 117. That's also an extreme dating back to 2021. So that's the highest we've seen there. The US dollar, Japanese yen, not at extremes, but that is down, let's see, on the week, that is down over 2% from its highs. So that's a major mover. We've got.
Now, are you getting them on yours?
Yeah.
Oh, you are?
I'm in the web platform.
Oh, you're in the web platform. And I know you brought this up last time about using the web platform, and Dr. Data brought that up to me as well, saying he prefers the web platform, and maybe that's something that we need to start using here on the show. Okay, but yeah, I logged out, logged back in, I've got it up. So
Awesome.
let's pop back in the platform.
All right.
And that's when at home, I always every time I have a problem on my computer, I call my husband like, help me, come into my office and help me. And he walks in the office and just says, log out and log back in, or like restart your computer, and
God,
that
he's
usually
good.
fixes everything.
Turn it off, turn it on.
Yes, that usually fixes everything. So okay,
Yeah,
here we
so,
see.
So we're looking at a daily chart here. And if you just zoom out, you just scroll out while you're hovering over the chart, that should give you.
Zoom out like this,
Yeah.
and then you see. And you said we're at like a 4-year extreme.
Yep. So you can just keep zooming out, or you can switch to a weekly chart. But this is what I do when I say, oh man, this one's really moving. When's the last time we saw this? And then you just keep scrolling out. And you say, oh man, this is not only year-to-date highs, not only last year's highs. If that's as much as it gives you, you might have to go to the weekly.
I mean, we're back to 1988. Is that right?
No, that's so the very bottom will give you the complete range of data, but right above it will show you the years it's actually showing. So
Oh, okay.
that is July of 2022.
Oh, I see. I was like, geez, 19.
But yeah, if you hit daily up in the top left.
Oh, and change it to like a monthly.
Yeah.
Yeah.
Then it's a lot easier to see that, yes, we have been here before.
Oh,
We've seen-
yeah.
We've seen even an exchange rate of 2 to 1.
So for people to think like, oh my gosh, this is such an extreme.
Mhm.
Well, an extreme recently, this changes the whole view. Then
Yeah.
you're not like, oh, like double down, glow it up. You look at this and you think, we have been here before.
Exactly. And you could contend that, if you zoom in a little bit more, just to see the prices a little bigger. Yeah, zoom in. So you could contend that this 140 level that we're running up to is the high dating back to 2015, 2016. So if that's the trading range you're looking for, then 140 is your extreme. But if you think
But if you think like,
it could be a whole new trading range, a whole new classification or era for the U.S. dollar.
For the dollar.
Right, because maybe Trump is getting his way and wants a weaker dollar, then we could get back to where we were in 2010.
where, geez,
So yeah,
crazy.
very easy to be opinionated about these markets, but also easy to talk yourself both ways.
This is not good for my husband who works for a German company and sells German products to America.
Uh-oh.
Because it's not good for
Right.
him trying to sell German products here in America if our dollar's so weak.
Agreed. So hopefully and that's all part of this price discovery is you have large corporations, you have countries themselves trying to hedge some of that risk.
Right.
I mean, a lot of things globally, a lot of central banks hold U.S. dollars and having to readjust that.
And look at it here in 2007.
Yeah, I don't know what happened there.
2-1.
Did you make your way to London in 2007?
No, I was having my second baby.
Well, that's good. It would have been pretty expensive.
I didn't even know what was going on in the world. Crazy.
Yeah.
How far back can we see?
This goes back to 1990. Yeah.
Well, and this is when I was in Europe in the 90s, 96, living in Europe. And then we were 1.57. So the dollar was weak then.
Correct.
I didn't feel like it. I didn't notice it.
Well, if you look at, the years prior, it was never.
That's why I felt like it was good.
Exactly.
Yeah, I think we felt like we were living like kings over there in Europe compared to how it was before.
All relative.
Yeah, right.
Yeah,
Right.
so regardless of multi-year extreme in this market. And then, if you go to...
So this doesn't, looking at the longer term chart, it doesn't make me want to double down on my current position.
Yeah.
No.
What do you think?
I think, just because it's been in this range since 2016, that doesn't mean anything.
Okay.
I don't know.
But yeah, that also, then you have to take into account what your time horizon is for these markets. Is this something that's a long-term position for you, or is it something that you're kind of just trying to scalp?
Get in and out of quickly.
Yeah.
And then I think that's when I say get in and out of quickly, and if you're trying to get in and out of these very quickly, I think you're looking at the day more. You're looking at the day's movement. Okay, where to go today? If it's at the high of the day, maybe I can get out and hope, or sell it, and then hope to, I guess sell this, and hope to get out by the end of the day.
Yeah, and you can even go, I prefer the hourly chart. That gives you just the 1 hour. 15 minutes is also common, but that's a lot of candles for me. And so, you can see that this for me helps kind of digest when I wake up and start looking through these markets, combing through what happened. This can kind of give me an important look into how the world is digesting things over those trading sessions. So you'll see around 2 to 4 a.m., that's London coming in.
So in here, where we had that move up.
Correct. And then before that, around where it says 20 o'clock in military
Right
time.
here.
Yeah. So that's around the Asia Open. So if something happens overnight, you can kind of derive what participants are driving these markets.
That's cool.
When. Yeah. And so we've seen a lot of strong moves in the European session, and then the U.S. session taking them a slightly different direction, or in this case, we had kind of an up and down in the UK session, and then once U.S. came in, a lot more U.S. dollar selling. So today, this all the way to the right, that 8 a.m. Yeah. So we saw it come all the way up and down, wondering when the U.S. market opened, how that would be digested.
So,
and some renewed dollar selling back to these highs.
Since this is 24.5, this changed, 0.0081 changed for the day. Does that, where do they start that? What time do they start that?
So that's at 4 p.m. Central, 5 p.m. Eastern time. So with the roll, with the carrying positions overnight, it matches that.
So so this change of up 0.008, that's since 5 p.m. Eastern time.
Correct.
Last night.
Yeah.
Got it. And I want to take a look also. So this is Great British Pound US dollar. If I go to the watch list, the Euro US dollar, this is one of the positions we had on that I got out of. Last week, How long ago were you on? Maybe here, this day?
This is still the hourly chart.
Oh, the hour. I was like, geez,
Yeah.
I can't. It doesn't even.
Yeah. But yeah, Mikey Butler was mad at me because he had what, 3 or 4 positions on, some that were dollar long, some that were dollar short. And he said, Glenn, they're all red. How is this possible? But a lot of these have just been real roller coasters. So there was a time to get out, but.
Right. There was a time.
Yeah.
I got out for.
Because you were short this market, correct?
I thought, let me see. How can I find it? Positions?
Yeah. Go to history.
History.
And then go back more than 24 hours. Do that.
Oh, I see.
That.
I'll go like 7 days.
Yeah.
And
then scroll down. Yeah.
Euro USD.
So yeah, you were short 15 micro lots.
15 micro lots.
You were short from 115.25 and closed out 114.72.
So not too much of a change. If I go back to the trade page, short at 115, closed out at 114. Let me go back. Euro USD. Try to get my chart back.
Oh man, what's going on?
Oh geez, this is so. Whenever Liz and I would ever run into any kind of slow or some kind of little bug, Woody was our main developer from the good old days, and we would always joke that we were gonna shake down Woody after the show.
Well, I'll try and find Woody.
I don't know who we have to shake down after the show.
I got a list. I'll shake him down, but just want to answer one of these questions in the chat. Glenn, how can I find a carry trade that benefits me holding it overnight? The bid ask columns. Yeah, so you'll look at those swap bid and swap ask columns
for positive,
and any value that does not have the negative sign.
Oh, like look at this one, negative to positive. That's the Canada one. That's wide, very wide.
Exactly. So that one encompasses the whole 3-day weekend roll.
Okay, so if I'm looking for one that's all positive.
And coming down the pipeline will be sortability.
Okay.
Which will be helpful for all things like net change and to get the biggest movers.
Look at this, negative 10. Oh, that's the Canadian.
Oh, there you go. Yeah. That is the Norwegian kroner.
Oh. And another thing coming down the pipeline.
Mobile. Got to have FX on the go.
Yes, because these move quick.
Exactly. And it's important to monitor those positions. So we do have that coming down the pipeline, hopefully in July. So we're excited about that.
So that's good. Okay, so I want to do something. Now, my positions that I currently have, I adjusted this shekel position. I'm leaving that. Mm-hmm. But I have this Euro Great British Pound. And that, you know what? That's never really moved. That I have not seen any big profit or loss, always very small.
Interesting. Yeah, it's still, I think the market itself is consolidating after trending upward. So you got in at a good price, but also you're getting positive carry from that as well. So
so that one is giving me the positive carry. And so if this is one that doesn't really move, if you're like, hey, I've never seen this more than like down 6, up 6, down 3, up 3. It doesn't really move. So if I have something that doesn't really move and I'm getting positive carry on, then maybe that's a way to offset my negative carry on the other positions.
It could be. And something about these markets, when you think about it, euro dollar and pound dollar very correlated because the euro and the British pound very correlated. So you could see this rationale for this pair moving within a range, but I'd say that could also be one that's subject to slide one way or another, like we've seen a massive appreciation of the euro recently, just kind of as some of those categorically shift in their relationship. So if I agree with your assessment that those are value adds for you, but at the same time, if that's kind of a position that you've lost, conviction, then you could also take that off and redeploy it elsewhere.
Okay, so I'm looking here. If at the Euro USD, I sold it at 115 and bought it back at 114, and now it's 117, I should sell it again, right?
If you were short at
115 and then bought it back at 114.
That's excellent trade management, because if you just opened it and let it ride, like I think our good friend Mikey Butler did, he's not feeling as good as you are right now.
They're probably not feeling good because the day you were on, when we were leaving, I think they were loading up on the shekels too.
Yeah. Yeah, I think Nick just got into your long dollar shekel, so we'll see.
Okay,
You're in it together.
So I'll sell it again. So let me, if I had this Euro USD and I want to sell it, Euro USD, then I would click, well, it doesn't matter what I click here. I have to adjust it on the trade page.
Yeah.
Go to the trade page.
So try clicking on activity or trade, any of the tabs outside of TastyFX, like your positions in your other, and then try clicking back into TastyFX.
Okay, let's see. All right, Euro USD, I want to trade this. Going to, here we go.
Yeah.
Oh yeah, that was good. Just click on one of
Thanks
these other
to
tabs.
Scott S. He said that does
thank
the
you.
trick for him.
Thanks, Scott. Now we know who we need to go to.
Well-
Problem? Here, go shake down Scott S.
No, Scott S. has the solution here for us, but I'll try and get rid of the problem altogether.
You know what? I'll never forget this. Every piece of technology out there in the world has bugs and people working on bug fixes, right? That's just the world of technology.
Yeah.
And our team is amazing. We have so many people who are always there, right, to work on the bugs. I remember being at one meeting and they're like, they fixed, 3,798 bugs, and everyone's clapping like,
oh man.
But that's how the world of technology is,
Yeah.
right? Like if you need the people there working on the bug fixes, because if you've got technology, you're going to have little bugs.
Yeah, I mean, people are finding edge cases all the time. When you think about it, you have tens of hundreds of thousands of people clicking around here.
Yeah.
And all of them are doing unique things. And yeah, sometimes that computer code doesn't do what it's supposed to. But yeah, I'll get my best guys on it.
Yesterday, my son had to do something at work. They brought this old piece of equipment in, and it gave him a floppy disk. And they're like, you have to get the information off this floppy disk and figure it out. So he had to search around the office. He found a computer from 2002.
They had one.
Yeah.
Wow,
So he could put the floppy disk in and get this thing fixed.
It's so funny. That reminds me of did you ever watch White Collar? I think it was
Oh, yeah.
Collar. And they were they had to hack into some computer place, but they had transitioned back only to floppy disk because it was the most secure thing. Nobody could. So maybe we'll see a mass
Reversion back to the floppy disk.
If the blockchain isn't it, then maybe we go analog once again.
Funny. All right. We only have a few minutes, but I want to get this trade back on. So let's pop back into the platform. This will be my final FX trade of the day, and I think I'll still need you on another time, Glenn.
All right.
But you're gonna come on our show every Thursday, right?
Let's do it.
I think so.
Okay.
Right? Every Thursday, not for the full hour, but just for a segment.
Yeah, absolutely.
I think I've got that on the schedule.
I've got it too.
Okay, good, perfect. All right, so here we have it. I want to sell it. If I want to sell I'm guessing I want to sell it because it's at the top here. I want to sell it. I click sell, which means I'm banking on the euro going down and the US dollar going up. If I'm selling it, I'm doing it to the numerator.
Correct.
Okay. And this is, can I assume this is in, what am I going to assume this is in?
So this remembered, the deal ticket remembered your last trade size. So your last trade size was 15 microlots.
Oh, okay.
So that's bigger than your shekel position.
Okay.
But so now you've changed it to 1 microlot.
And one is 23. So if I want to use, 230, then I would change this to 10.
Exactly.
And then that would give me, instead of $23 in buying power, $230 in buying power.
Yep. And so then you're also seeing that it's $1 per pip of movement. So if you're trying to think of what kind of profit targets you're looking at, you're looking here at this daily chart. So yesterday we saw a pretty big range of close to 116 all the way close to 117. So that's 100 pips. So in that day, this position size would give you about $100 if it went in your favor.
Okay.
So that's just how I would contextualize what profit targets look like for this position. So even though you're using $230 of margin, if you had a reversion back to where we started yesterday, that would be over $100 of profit. If you let it ride all the way.
Let's put that in. Let's put in this order and put in an order to close it if we make $100.
Yeah, so scroll down and you can go to that take profit.
Take profit, okay.
Yep, and so this is measured in pips away.
Pips away.
So if you, just type in 100.
So I would need 100 pips.
Correct.
100 pips.
Since your position size is $1 per pip.
100 pips. And it shows you right here. That's easy. I got that. If it tells me, now I've got it.
Yeah.
Otherwise, you're like, how many pips do I need to make?
Exactly.
Got it.
So it tells you what price level that would be and what your profit would be.
And is that looking for too much? I only took $80 out of 50. I had 15 micro. What are the micro what?
Micro lots.
I had 15 micro lots and I took $80. Now I'm looking for 100 out of 10 micro lots. Maybe that's asking too much.
It's bigger, but depending on your time horizon, what we typically see in this market is a 1 standard deviation move of around 60 pips. So I think you'd be asking for an outsized day if you're looking for this to be a 1-day trade.
Okay.
With this profit target. But given where we're looking at the daily chart, if you're looking to hold this for a week, I mean, we've seen a run up of 300 pips in a week.
I lowered it to 80.
Okay, perfect.
I lowered it to 80 just because Liz and I like to get in and out of trades quickly. All right. Otherwise, like you've seen, you can get stuck in. You can miss an opportunity to take a winner. All right. So I'm going to put this in. I don't have any kind of stop loss. I'm selling it 10 micro units. And going to take profit 80 pips away, but $80. So that's easy to set. Margin 234 and place trade. And the cool thing is,
deal confirmed.
These fill immediately. You're not waiting like, oh, well, let's wait and see if we get filled.
Exactly. So when you're using a market order and things are less liquid, the spread will just widen out, but you'll still be filled at the same time.
Okay, cool. All right, we're out of time. Glenn,
there you go.
Fastest hour of the day.
Yeah. Amazing. Thanks for having me again.
Thanks for joining me. Everybody, thanks for tuning in. Glenn will be back every Thursday for like a 20-minute segment or so. I mean,
however long you'll have me.
Okay, good. Great. Well, then you'll be on next Thursday. Thanks for watching. Everyone remember to trade small, trade often, laugh with us, learn with us, and watch the Glenn and Jenny show. I'll be back tomorrow with TP.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mike Butler, and of course, our special guest, Tasty FX, Mr. Glenn Freiberger. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. Get to spend it with my buddies, Mike and Glenn. Glenn, good morning. How are you, sir?
Splendid. Thank you for having me. Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just question for you guys, because I look up to you both so much in many areas of life.
This is the kiss.
How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
All right.
you just don't.
I could put together a pretty gnarly neck beard right now.
Yeah, but that's not the, you got to have kind of a full, it just is, some are blessed with these things.
Whatever. If I have it or don't have it, what percentage of your success?
A lot.
In confidence?
I mean,
is it a confidence thing?
Yes.
Do you feel better doing this?
Yes. I mean, come on. It's it's a manly thing. But
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Okay.
That's
I
way
shaved my
before his
face.
time.
I had the full white makeup on. But yeah, if I shave my face, I look like I'm.
That's aggressive.
Yeah.
We can ask the chat. The chat can give you some advice as well. They can tell us if.
Because my dad has a very nice beard.
I'll see.
So maybe it's coming.
Perfect. Hey, you still got time.
Okay.
Yeah. But yeah, I would say I've had people tell me not to shave my face.
Yeah.
So like the baseline is my face that has stuff on it. If I shave my face, then there's problems. So
Well, my dad can't do the beard either. He used to
really?
say no, he's got like he's kind of got the baby face, but he says I got it from my mother, the hair.
There you go.
And what would he say to you saying you either got it or you don't? Are you saying it's better to have it?
Well, yes, but you can't force it. Like
But you
you
wouldn't tell him
can't,
that.
you just it doesn't seem like you have it.
No, right now. Let's say right now.
Yeah.
I don't have
Try
it right now.
Hey, what you should do. And this will be because you do it for a good cause, but you do a no shave November.
Okay.
You make your Movember profile.
Okay.
You raise money for men's mental health and men's health in general. I did that one year, which was great.
Was that
Raised
your
like $3,000?
impetus of you growing it out, or you?
I had this mustache. It was
strong mustache.
Yeah, it was a '90s porn mustache. It
Let's
was a
go.
Ron Jeremy type.
I've got a poll
Okay.
in the YouTube chat.
Okay.
So we're gonna ask the people.
Yeah.
All right. How is it phrased?
Facial hair, yay or nay?
Okay.
Very simple.
Yeah.
I like it.
Keep it simple. Yeah. Okay.
Yeah, we'll let the people decide.
But yeah, that's
on
all.
your-
That's all
on
I
your
can think
future
about today.
laws.
So
I appreciate that. Thank you.
We'll get an answer for you.
Yes.
thank you. How are you guys?
Great,
All right.
man. Great. E-mini S&P 500 futures chopping around doing nothing. This is boring. This stinks.
Yeah.
I mean,
You guys got strategies for that, though, right?
we try.
Staying agile.
Yeah, we get a little bit of everything.
I did close some stuff today.
Yeah, we had
Which was
that.
fun.
Are you
It was
guys
really fun?
zero DTEing at all?
No.
No, but we do have some research tomorrow that we will be covering on zero DTE strategies. So,
Okay.
'cause we're
That
taking
could
over the
change
morning show.
everything.
Yeah, it could. It just might.
All right.
But yeah, this market is boring today.
Yes.
Not much going on. However,
it's been a rocket ship.
it has been a rocket ship.
So you can't go up every day 50, 100 points.
Correct. Speaking of things not going up, FedEx
Did
had
not go up.
earnings, did not go up. It's down just a little bit. Definitely inside the expected move.
It opened down
more.
216 was the low.
Yeah.
So about 13 points, which I think was around the expected move.
Mm-hmm.
I ended up closing my little butterfly that I had.
There you
Took
go.
$148 out of it.
Perfect.
So
Yeah, I converted my diagonal into a calendar. So I have the 240 calendar now. If we get a reversal of this, it'll be just fine.
we knew one of us was going to make some money.
Correct.
So
Yeah.
it was
Great approach.
Yeah.
One
of us.
It's a hedge.
Yeah. But I'm surprised it hasn't, gone sour. But
well,
one team, one dream. I love it.
Well, the thing is I'm out of my position now. So now Mike,
All in.
yeah,
Rooting
Mike has an
for.
opportunity to get out for some profits. So we could both theoretically. His has a little bit more duration on it. He did diagonal spread, so he's got some time left.
Gotcha.
To be right. Mine was more shorter duration, so I took the money and ran.
Yep.
All right. So we could all win.
So it's all right.
But yeah, closed the crude oil iron condor.
Oh
Came in nicely. So that was a $70 winner
Nice.
after all is said and done, which is kind of crazy considering, if you just fell asleep for a week, you would be like, oh, nothing's happened in crude.
Well, volatility has come in significantly.
Yeah.
That's certainly happened.
Yep.
So that's a nice little.
Yeah, you've been slithering around that one. Do you still have your long contract on? That's all. That's all.
MCL. No,
I
that
don't.
was-
Yeah, unfortunately not.
Yeah,
I
that would've-
converted to an iron condor a few days before the massive rip to the upside.
Yeah. It's tough timing.
But still made
Okay.
money on it. It's fine.
Never lose.
And then IBIT, I rolled from July to August, picked up another $2 in premium. I mean, this is like the best trade. Selling premium in IBIT has been the best trade of my 2025
Yes,
for sure.
I been having some nice movement. Two-sided action.
Yes.
Yes.
Yeah, so I've got the 60-70 strangle now with $2,000 of collected extrinsic value.
There you go.
I mean, you'd love to see
Fantastic.
it. Break evens at 40 and 90.
Yeah, leaning a little long. I like it.
Always long. Never short. I will not accept short delta in IBIT, as I've stated many times. But yeah, that's pretty much it. Micron earnings after the close today.
Yes.
For those that are fiending for some volatility.
Did a little crab trade in there for the Johnny Trader account.
Upside?
Yeah. Yeah. Stock has, I mean, it's gone nowhere but up. So I figure if it goes down, I'll lose a couple bucks, but playing it to the upside. We'll see.
Fair.
Quick little market update.
Please.
And then we could take a look at some other things. E-mini S&P 500 futures, they've gone absolutely nowhere today. We've had a 22-point intraday range. Big old nothing burger. They're down a point right now. It's just been nothing moving. NASDAQ up 22. You got the Dow down 90 and the Russell down 15. So I guess the Russell is really the only thing moving today, down 0.7%. Oil futures catching a little bit of a bid, /CL 65, 64, but they've come down significantly. Volatility in oil, OVX CGI is how you can pull it up at the platform. Significantly lower. It's been halved in the last week or so. Volatility futures themselves down 10 ticks and basically gone nowhere. The VIX itself at 1734, so on the lower end of where we've had it for the last year or so. Bonds down 14 ticks, gold up $7, silver up 22 cents, and Bitcoin, Mr. Always Long, 108 and change on the futures, spot at 107. Nothing really moving, which is why I had Glenn join us today, because maybe something in the FX space is interesting to you, which I have. If you haven't opened your account, you just click the Tasty FX button on the menu bar there. It'll prompt you to open the account. If you have the account, you'll have this screen. It's US only for this product. If you're international, you can use the IG products themselves. But I have had quite a lot of fun trading the FX products. And not recommendation, but the last time you were on, you talked about the Swiss franc with us, which I took a little trade there. These are fun to trade.
Where are you at with that Swiss franc?
I took that one off.
Okay.
Took the money and ran.
Good man, because that one's been it's your only flash of red there on the screen. Got a whole lot of green today.
What happened?
Dollar, bad. Finding its bottom right now, leveling out, but start to the week, got a bid in the morning and then taking all of it out. Now we've got euro dollar back at its highs above 116 in the spot market. British pound, same thing. Dollar Swiss franc back at its 10-year lows. When we were on last, it was hovering around there. Yesterday, just found a new one. But looking, if you look at that daily chart,
which one?
Dollar Swiss franc or dollar chef. You can call it dollar
The
chef.
chef. Yeah. See, I need the description here. I've
We've got our
talked to
best guys on it.
Can I tell you guys something?
Don't you talk back to me. Don't you talk back to me, buddy. Okay. Yeah, I will come over there.
So I'm short the Aussie dollar.
Me too.
That's a loser.
Yes. You stink.
Long the
kidding.
dollar franc. Loser. I'm short the dollar yen. Loser. Somehow.
Impressive.
I'm long and short the dollar in both ways, and I have losing trades on all three of them.
Yeah.
So this is the anti-beginner's luck. I have somehow found a way.
I have the beginner's luck
to get long and short at the wrong times perfectly to where now we're seeing moves in the opposite direction.
And the annoying
So
part.
I'm having fun.
But you're not out of it yet, right?
No. It's very small, which is nice. I can just hold these forever until one of them's a winner, and then the next one's a winner, and then the next one's a winner. I can take it off.
And so, the nice part, or maybe in your case, now much more annoying part, is all of those from the prices you're at right now. You did see some green at some point.
Yeah.
You know, we did have a little dollar comeback. I mean that Australian dollar, U.S. dollar, sank to start the week here. If you just pull up a daily chart or an hourly chart, and that Australian dollar starting the week, we got all the way down below 64 cents there, and now a really strong bounce back. So you had opportunities to get out, but really interesting because the only thing weaker than the U.S. dollar right now, the Japanese yen. That's been, if you're kind of scalping these markets, maybe dollar Swiss franc hasn't given you all you're looking for this week, but that dollar yen this week, we had a significant run up. Go over to the hourly chart just by hitting the daily right there.
1 hour.
Yeah. And then zoom out a little bit. You'll see how this from the Sunday night open went all the way, blasted through 147, touched 148, an immediate bounce off of it, skid almost 2%, I think over 2%, and now it gave back a little bit. So this one, real roller coaster this week. So if you're trading intraday, this has definitely been the mover this week so far.
If I was to buy this, I'd be long U.S. dollar versus the Japanese yen.
Correct. And you can kind of validate that Japanese yen weakness because if we're looking for movers of the day from a net change percentage, we go right back to that popular non-USD. We have the most liquid, the most traded markets that are non-US dollar will be that euro yen and that pound yen. And so that euro yen, pull that chart up, there you're getting some yen exposure, no dollar exposure. That's been a wild ride as well. But if you zoom out to the daily on that one, here you're getting a price extreme that you're not getting in that US dollar Japanese yen. We're at highs all the way back to October. So a lot of European currency strength, but definitely some Japanese yen weakness.
So the nice thing about these trades is that they're
Can I short this?
You can do whatever you want.
I can short this.
These trades are so small that I was able to just double down on the same positions for every single one I'm in. And it's still an extremely small trade, but it's nice that you can get into very small sizes and then just like dollar cost average as they move against you if you want to. But I do like the way that it's organized as well. So you have the one could close for all of their positions. You can see them separated by line item.
Yeah.
It's pretty nice.
So the only, handcuff there is if you're trading positions of the same size, it's subject to the FIFO rule. So first in, first out. So you won't be able to close, that price level one before the other. But the platform will tell you that. And if you use distinct sizes, then you are able to have that kind of granularity or optionality with closing those positions.
Perfect.
But yeah, this is you're getting some action here, and just a reminder that in the FX space, because of the leverage you're getting, when you're looking at that net change percentage column, anything over 0.5%, I'd say is noteworthy. Or a moving market in
because currencies usually the volatility is much lower, so it's a big move.
Yeah, and so we've seen 2% swings already in that dollar franc, dollar yen, and so I'd say it's hard to have an opinion on, or people have very long-term opinions on dollar strength, but you're getting a lot of different markets here to, depending on your time horizon, get in and out. And
what are some fun ways to get long the dollar? I'm gonna be short this. I'm gonna short the euro again, which I already have some short delta in the euro futures on the CME futures side. So this will be sort of a double down here. with my euro short. What would be an interesting way if I want to get long the U.S. dollar in one of these currency pairs?
I mean, it depends what you're looking for. You've got
No. That's you can't give me that.
How about shorting the New Zealand dollar? Because that's up 0.32% today.
That is up, but what I would say is a factor in that one is risk sentiment. And so you see in a completely risk-on environment, you'll see New Zealand dollar get a lot stronger versus the U.S. dollar. So with the backdrop we have right now of maybe still some risk-off tensions, I would say getting long U.S. dollar there wouldn't be kind of your purest dollar bounce back, because if you look at historic levels, New Zealand dollar is still cheap relative to last year, whereas you have those European currencies are completely taking it to the U.S. dollar right now. So if you're talking mean reversion, the European currencies give you a lot more.
So I got the euro. You think like pound is probably the other one to do, or?
I'd say the Swiss franc is an interesting market, just because interesting call out here. You got me on a Wednesday. Good day to do it. Head back to the watch list tab real fast.
Okay.
Because what you'll note is those swap bid and swap asks. Those are pretty elevated for today because we've got a 3-day roll. So what these tell you is your overnight funding charge indicative.
Yeah.
And so right now this swap bid and swap offer is denoted in pips, and it's encompassing the weekend roll. So if you hold a position overnight, or if you hold a position past 5 p.m. Eastern time today, then you're subject to these overnight funding charges. And if you look at that dollar Swiss franc market, if you were to be long US dollar in that market, you're getting almost 3 points there in positive overnight carry. So you hold this past 5 p.m. net, if this market doesn't change, you have no price action risk, and you get out at the exact same level, you're still benefiting from that positive carry. So that's definitely, it's not the biggest deal, because, the price action risk can absolutely wipe all of that, positive theta, if you will. But it's definitely a variable to consider when you're picking markets, because the Swiss interest rates are 0% right now. So here you're getting a 10-year extreme.
Yeah.
Whether that has momentum or if you're betting on a reversion, it's an interesting market nevertheless.
Okay, so I mean, I like 10-year extreme. It sounds nice to me.
And the last time
I like to buy dips, sell.
Last time it was
buy
there.
low, sell high.
Yeah, last time it was there was the Euro DPEG. It had a name. That event had a name.
Okay.
For the last time. What are we calling it now? Just dollar no good?
Yeah.
Yeah.
I don't know.
Sounds good. Dollar no good. No dollar, no holler.
Okay.
You have a back of the hand just for, because I admittedly do not watch all the currencies all the time. But, and I know these are very, very leveraged. When you look at the leverage, do you have like a back of the hand, like pain relative to the leverage? Like if I put this on $150 in margin, what do you think's like my pain, my max pain?
It's a good question. I'd say
I know anything can happen. These are not exact, but like when I look at here, I'll put it into context. Like I sell a naked put in whatever stock. It uses $1,000 in buying power. I usually look at that and I say $1,000 is realistically, what I'm comfortable risking. That's kind of like a worst case scenario, so to speak. Of course, it can get worse than that. When you look at a margin requirement of $150, like $1,000.
Yeah.
Is that a realistic pain on this in a volatile event?
Yeah, because
we're talking about 2 times of the volatility, let's say.
Yeah, because how I interpret it is when you have your position size here, you can see in this market, francs per pip.
Yes.
And so if you have an expected move in a day of 50, 60 pips, then you're talking about, what is it? It's like
I'm 50 cents per pip, so
right, so
$25.
Yeah,
On a 50 pip move.
Exactly. And so if that's tolerable for you, it depends on your time horizon.
Yeah.
But yeah, the expected.
I got gray hair. I don't have that long of a time horizon. Okay.
Exactly. Yeah, I mean, it would take. I'd contextualize it with like around your margin, but the daily moves in this market would be like 50, 60 pips.
Yeah.
In a normal one standard deviation. So you take that out, maybe 90, and we've definitely seen that. And so it's not ridiculous, but that's how I think about it, is that movement per pip.
Okay. Thank you for that. I'm in.
And just like that, I'm in.
Just like that. I mean, they're small. They're little fun little things to have on. I just don't want to wake up. I got Rob, calling me.
Yeah, you don't want that.
Hey, Johnny, you're blowing things up here.
Yeah, I agree.
Yeah. Thank you.
One interesting market to watch that I don't have answers on really, but you go all the way down to back to that U.S. dollar Israeli shekel.
Ooh,
that one will surprise you.
Shekels. All right, so where is this? Other?
Yeah, I think it's under emerging all the way down.
Scandinavian, emerging.
Yeah, there you go. USDILS.
Okay, the shekels. Let's see what we got here.
Shekel so strong.
They're strong? Yeah.
Look at that. Extremes back to 2023. So not only if you zoom in there a little bit.
Do you want to do like a daily?
Yeah. We had a big pop in the U.S. dollar's favor on the onset of the conflict over there.
Yeah.
And now not only are we back to where we were, we're through that. I mean, a full another 100 pips. So, no, another 1,000 pips. So a big move in the Israeli shekel's favor. Not sure really where this market will settle, but I don't know. What do you guys think? What would the fundamental analysis be around?
I'm trying to get long the U.S. dollar across the board.
Okay.
I mean, it's at lows. It seems like the consensus trade is to be short the dollar, which means that I got to be long the dollar.
So yeah,
that's
you could either do that in one of the most popular traded markets, like a euro dollar, or you could get.
I got the euro dollar already. I mean, like I want something funky like this.
That would be this. Just note that these are slightly less liquid. Doesn't mean you can't get in or out of it with the same trading hours. But that spread there, here a 30-point spread. So when you put on the position, immediately a little more in the hole. Need some more price action to go in your favor.
I'm in the hole, or I'm in the hole. $1.80. 0.02. That's my size. 0.02.
All right.
So maybe sometimes
Micro lots.
0.03 if I'm feeling crazy.
If you're layering.
Yeah. I'm layering
we're
in
doing
the
like
0.02s. Little micros.
lot.
Yeah.
What do they continue? Is it 0.1 to be a micro lot?
0.01 is micro. 0.1 you could say mini.
Mini.
And then 1 would be a standard lot.
So I'm like between a mini and a micro.
Yeah.
I like that. All right, beautiful. So we got a couple trades on.
Yeah. I've doubled
There
my
you go.
exposure and everything, and then I got long the dollar shekel.
Yeah. I mean, his motto is trade once, trade huge.
Yeah.
All in.
All or nothing. That's how we do it.
Yeah,
That's how we do it. I had a question real quick for you, because you're an insider.
Uh-oh.
Mobile. FX on the mobile.
Yep.
Coming sometime soon?
It's coming soon. Yeah.
I like that.
We've it initially was scoped to be a much bigger project. We found some tech efficiencies. So we're trying to get that out. That's priority number 1 for phase 2 of this integration.
Beautiful, beautiful.
Because you gotta get FX on the go.
Yeah, you gotta keep going. You gotta keep
be able to
innovating,
check.
making new stuff, doing, get to work, as Tom would say. Is there anything that's coming in the near future that you're excited about or that you can talk about in relation to FX?
In relation to FX,
The platform, features, anything like that, new pairs, anything like that? If you say no, you don't get lunch today.
Okay.
That's raw. That's risky.
Yeah, we're working the 2 biggest things, definitely mobile, and then getting more of these columns in there. more data columns.
Good.
Like description.
Yes.
All the things that you guys have been so graciously asking for.
Awesome.
Getting a lot of good feedback, so we've got a lot on the plate. And yeah, I mean, it's nice that this integration's been so smooth. I think people are liking it. People actually like the one-click close, I hear.
It's the best.
Okay.
I really
Less
like
is
it.
more.
Nice.
Yeah.
Less is more.
That's when we were worried that people would accidentally close. But I think calling it one-click close.
It's pretty clear.
Yeah, it's pretty
Very
clear.
good. All right,
If
awesome.
you're misclicking that, I mean, I don't know what to tell you.
I thought there was another click.
Oh, it's easy.
One click.
One click.
Thank you, boys.
Yes, thank you for coming and hanging with us, Glenn. It's always a pleasure.
60-40 for facial hair.
Okay.
Got some good some good tidbits.
All right.
I think you give it a try.
Okay.
Beards are like the sweatpants for the face that mask any imperfections.
Yes.
Okay.
So
is someone saying I have imperfections?
No, you are
Indirectly, yes.
perfect.
Yeah.
As your mommy will tell you, you are perfect, Glenn.
All right. Well, I think let's aim for November.
Okay.
Because then I think I'll have probably at least 3 more. I don't know what the growth rate is. 3 more hair follicles, maybe.
Yeah.
A better shot of getting it all in there.
Yeah.
All right, but I appreciate your input.
Clock is ticking.
Check out Glenn in the mornings before the main show starts.
6:30.
6:30
Me and
a.m.
Frank tomorrow.
Bright and early.
A-team.
The A-team. You can check out tastytrade.com/forex to learn more about the Forex products. You guys do a newsletter, right?
Yep. That'll be hosted from the Tasty FX site. Just
Okay.
head over there.
Sign up for that for free.
Yeah.
Get it once a week. When does it
Once
come
a
out?
week. Yep. On Sundays.
Sundays.
A little week recap, week ahead.
Very nice. Well, thank you for joining us, Glenn.
Thank you, guys.
Please go enjoy lunch while we continue to work. Okay.
Thank you, Mr. Batista.
Thank you.
Your kindness.
Save some for us, please.
Yes.
Please.
Everybody in the chat, if you got some trade ideas or something you want to talk about, please send it in the chat for Mike and I. E-minis have gone absolutely nowhere. We got a couple trades on in the FX product, so had something new. I am long the U.S. dollar versus shekels. I'm long U.S. dollars versus the Swiss franc. I am long euro versus the Japanese yen. I'm short euro versus the Japanese yen. I'm short Aussie dollar versus the U.S. dollar. So, got a couple trades in the FX space. Hopefully, I don't get my face ripped off.
Yep.
They're all losing right now, but small.
Yeah.
But I've made some money in the FX space, so I'm enjoying it.
Perfect.
Trades for today, I want to go through a couple of those too because I didn't mention them this morning. Had a couple trade ideas for Johnny Trades this morning with the ladies, which was really, really fun. I sold a put in Delta Airlines. You might like this one. I sold the 50 strike put. It's a synthetic covered call. Delta has earnings coming up. Volatility is relatively high. Stock's kind of mid-range to where it's been trading over the last year or so. Pretty high amount of premium, only used about $900 in buying power. Sold it at $271. You could probably do it better now because the stock's down about 80-90 cents from there. Got a little long Delta in Apple, and then I did my crab trade in MU, closed out of my FedEx trade, butterfly that we had, and in Robinhood, I had to roll up puts because that stock does not go down. The hood.
The hood. Yeah, I think there's definitely some movers underneath the surface. So yeah, if you got any trade ideas, you can throw them in the YouTube chat. We're streaming live there.
Yes.
Pop over to Tasty Live. But yeah, I like the trade ideas.
Google catching a bid. You got a lot of the semiconductor stocks are moving today. You got obviously Micron earnings after the close today. That's a big one there. SMH basically at highs or past highs. Yes, we busted through highs today.
Busting through highs.
Yep, every day.
Yeah, it's crazy. It's crazy until something crazy happens.
Yes.
But yeah, let's see some volatility here. This dollar range, 1 point range isn't working for me. Brandon's looking at AMD.
Okay.
Straddle at the 125 strike in July. Rolled a bunch, taken in $4.80 in credit.
The 125 strike.
125.
Ooh, that's a tough one. I mean, you could roll it
up to the 130.
Yeah. Or you go like the 135, 130. It's a tough one. You got earnings coming up in at the end of July here.
Mm-hmm.
Volatility is relatively low. You got to imagine that it has some sort of sympathy move with Micron after the close today. So maybe you take that shot. But in the next couple days, I would consider rolling out to August if you intend to stay in this position, because you're really just short the stock. You know, your put is a nothing put. Like maybe you do the kind of conservative middle ground here and you roll up your put to, you know, the 135, and you play for Micron to have a little bit of a downside move. Maybe you see the space as a whole kind of sell off a little bit, given that they've had such a nice run, and then you roll out tomorrow. The roll up isn't going to hurt you really, unless there's like a 20-point down move. If you get a $5 or $6 down move, the intrinsic value you make back relative to the 50 cents or $1 that you lose on this option, this roll up, you're not going to worry about it.
Yeah. And the nice thing is, if you're rolling from July to August, there's so much premium there that you can keep the same straddle and pick up a good value, or you can go to the 125, 130 inversion, 125, 135 inversion. Like you can make a 10-point inversion, pick up $8 in credit, which will bring you to $12 in premium overall, $13.
In half.
Yeah. You'll still have the ability to make a profit if AMD kind of trickles back down as you get closer to expiration in August. But yeah, plenty of premium there to adjust the trade if you would like to. But yeah, don't mind going inverted, rolling out to August, or if you're keeping in July, I think you'd go inverted and just play for a lesser loss.
Yep. Tough one.
Yeah. FedEx 200-250 strangled worked, took 50% profit. I will heed your guidance regarding defined risk around earnings moving forward. Beautiful. Yeah, I think it makes sense. I mean, you still would have gotten paid on an Iron Condor, but I have run into some steamrollers with undefined risk earnings. It will happen. If you're selling strangles on everything for earnings, eventually you're going to get a big loser. So I would rather reserve those for big market events like the tariff stuff, if I'm going to have a big loser on my hand.
Yeah.
But that's just me.
Yeah, I think over time we've tried to avoid the binary risk of earnings.
Yeah.
Or at least lessen it.
Yeah.
It's just like,
even with diagonal spreads that are very directional, your risk is defined.
Yes.
So like even my FedEx call diagonal is a loser right now, but it can become a winner pretty easily here. Yeah. If we rally to 230 or 235, like this will be a winning trade.
Mm-hmm.
So plenty of time for it to work too. Theta traders looking at URA and NLR, little uranium nuclear play.
NLR, I haven't seen this one.
These are just stonking.
Yeah. Sarah. Julia favorite.
Mm-hmm.
This one doesn't, the NLR doesn't look all that liquid. Yeah, when you see bid ask spread, I mean, obviously when you look at the options, and we're in August here, you look at volume and open interest, it's basically zero across the board. But when you're seeing bid ask spreads where it's $1 at $4, you're just better off not messing around with these. It's going to be a tough in and out. URA does have weekly options, which is usually a good sign. I mean, liquidity is not great. I imagine you probably can get filled here. But it is, it's certainly not the most liquid ETF. It is trading today, shares though. So if you're trading those, certainly could. I think you probably just go into like CCJ or, some of the other ones like Oklo and, SMR, which is one that we traded, one of the smaller nuclear plays here.
Mm-hmm.
I've got a little crab trade here. Let's see if I can do this in CCJ. All right, you got earnings coming up. So we do the 75. We'll play for like a neutral / up. See, can I sell 77. $1,100 in buying power, kind of expensive. Let's see what a strangle. 65.80. $4. How does that sound to you, Mikey? $700 in buying power. The Ivy rank is relatively low, but got 47% monthly implied volatility. 65 down here, 80 on the upside. Maybe buy the wings. 10 points wide, still the same $700.
Yeah, getting a boost from earnings. But yeah,
65. This
mind it.
thing has gone just straight up.
It's nuts.
I don't know. I don't know if I could do the strangle here. You do like a call ratio spread.
Ooh, that could work. That could work.
Do I do it in July? Let's see what the July looks like. Can't really.
A little tougher.
Yeah. Could do like a cheapy 3 points wide. I think I'm going to go to August. Do the 75.80 at 60 some odd cents.
Yeah.
$860 in buying power.
Yeah. A little fade of the move.
Yeah, and you got a lot of room to the upside relative.
Yeah.
Break even at 85 and change.
I like it. Stewie, looking at
65.
Your Google trade from yesterday.
Sure.
You opened a Google call you paid for. I think you bought back your call yesterday.
Yeah, so I had a call diagonal spread, and we can actually see where the stock was trading at. So I did the diagonal spread when the stock was at 168. We dropped down to 163 when I bought back that short call. So where did that go? There we go. So when I bought back this short call for 68 cents, the stock was trading at 163 yesterday. Into the rally, I sold out the 175. We can look at this one too. So we got a bounce back all the way to 167.5-ish. So back to where I originally started with the trade and sold out that 175. So now I have a call diagonal spread where I'm long the 170 out in August. I'm short the 175 against it. They're two separate transactions because I just sold this call outright in a different transaction, but I've got this on for a net $6.10 debit. So you can see I did the original at $7.89. I sold this one at $1.79. So I've got, small little profit on this trade, 50 cents or so in profit on this trade. $6 for a 5-point wide call diagonal. It's a little bit more than the width, but assuming we don't explode to like 190 or 200 in the next 20 some odd days, there's always going to be a little bit of extrinsic value there. So that was a trade.
There you go. Can you please explain?
I wish I waited.
Yeah.
If I had waited today for the $4 up move to 171.
Great.
Then I could sell this out for $2.90. I wouldn't be losing the $100 on the sale, but I'm making more than that $100 on the long 170 call in August.
Yeah.
Still okay.
I had a similar upside Google trade. I didn't do anything with it yet, but
now might be the time.
Yeah.
With it moving.
So yeah, the nice thing is I can still roll the short option. I have the 170, I have the 175, 190 diagonal, long August, short the 23 day, which is before the earnings announcement. So I can roll the 90. I could buy back the 190 and roll it into the weekly earnings cycle and pick up some premium, but I think for now I'm still going to hold on to it because I'd rather get out for a net profit and then redeploy it for
roll it down
earnings.
to like the 180.
Yeah, you could do that too.
Make it more of like a calendar. You collect $1.
Yeah. My basis on this is 920. So I'd have to roll it. If I did anything, it'd have to be like to the 185-ish. So I'm just not going to do anything with it right now.
All right.
It's fine.
Cool.
Can you explain your Micron crab trade? Still not familiar with the setup, adjustment, etc. What happens if the trade goes against you? Do you just roll the short option component front month into something else?
Yeah, so you can do that. So in this account, I'm long the 130, and then I sold 2 of the 135s against it in the weekly. So I did this it's basically at the same price. I did it at $1.37. It's actually a little bit cheaper with the $1.60-ish down move. But essentially, your risk is a tail sort of upside move. So we flip this over to the Theo. I will take off my existing position. So when you move this out in time, the evaluate day here, you can see if you at expiration, which the shorts expire at the end of this week, and we can even go further, but at expiration, this $4 in extrinsic value is realized. Whether it has intrinsic or not is really the situation. So if the stock were to rally at or above 135, it would have some sort of intrinsic value. That's when you'd have to manage it. Obviously, because I have that 130 long call, that's going to hold a lot of value and buffer me to the upside. If we get to 135, that call is going to be worth at minimum $5 plus whatever extrinsic value it has 23 days out in time, which is going to be something. And so you can see my break even is roughly at like 140-ish. So you have a lot of buffer to the upside. You also have some downside profit potential because you're selling $4 of premium. You've got this long option, which is going to hold some sort of value. So it's not going to go to zero at the end of this week. So your risk and your management, I should say, where you're managing the trade is much higher from where we are. We're talking about like 2 times the expected move. At which point you'd want to roll your short call out because you take profits on the call spread part of the trade. You roll the short call out, and because you're naked a call, you have the opportunity to sell a put. That would be the likely adjustment depending on where the stock is. If the stock's at 135 or 140, you're probably taking profits. The stock's at 145, I'd probably be rolling the 135 call out to August, and then I'd be selling like the 135 or the 140 put against it. I'd turn it into a straddle or maybe an inverted strangle, something like that for this position.
Yeah. So lots of adjustments that you can do for sure.
It's hard to plan it now.
Yeah.
You gotta see what happens.
But yeah, if it's an out of the money downside move, you can easily just convert it to a diagonal if you wanted to.
Yes.
Also.
Yes.
So yeah, manipulation is possible here because it's a smaller price product. Like you can turn this defined risk trade into an undefined risk trade and hold it if you want to. Considering an LLY Iron Condor 30 points wide, July 18th.
Okay, what are we thinking?
30 point wide bullish Iron Condor. So that means you're probably a little bit inside the expected move on the downside.
Mm-hmm.
And then you're at the expected move on the upside, I would say. So maybe something like a 750, 720, 850, 880 for $10. Or maybe a little higher.
Yeah.
But,
they're all going to have very little delta to it, even though it's 30 points wide. There's not a ton of with a $700 or $800 stock, 30 points wide is relatively tight.
Yeah, but collecting $1,000 or so will still get you 60% pop. But yeah, if you're doing this in July, you'll still need to hold this for a couple weeks here, unless you're trying to take it off for like 20% profit, which is still fine, still a sizable monetary value.
I think if you want to lean bullish, you just do the put spread. I think I'm routing the 750, 740 short put spread. We'll see if we get filled here.
There you go.
Markets are not great. 210, I'm in.
Just the put spread.
Just the put spread. Little shot.
Sean's got a straddle on shop at 115 for July.
God, shop is my kryptonite.
115 is good, right at the money. Would you hold on and let decay work, or is there a smarter course of action? $8 of credit so far. So yeah, you're pretty much there. I mean, you could certainly hold on to this. You can absorb
wings.
Yeah, you have $8 in credit, so you can absorb a move down to 107 and up to 123-ish. So you basically cover the expected move. If you roll into August, you're rolling into the earnings cycle. So that is something to consider.
Yeah.
I might just hold on to it if you're trying to squeeze more out of it and you intend to roll into August. If you don't get anything out of it, then I think you can press on the offense here and see if you can get this down to sub $8 and close it for a winner. But also nothing wrong with closing it for a $150 loss if you had been seeing much bigger losers.
Yeah,
it's a tough one. It's a coin flip for me.
Hence the 50-50 probability.
Yeah.
You know, it all works out like that.
But yeah, you have a decent enough room if you want to hold it for a little bit. But I would say you're probably looking at a week or two before you get some value out. And you can see that here. Like if you just throw up the same 115 straddle in the 8-day cycle, that's trading for $6. So with that said, you'd have to hold this for 2 weeks to get the $9 and change down to $6 and change.
Which is why if you've been managing this, you could consider doing a buy the guts, sell the wings. Yeah, you buy your strangle back and sell an out of the money strangle, and you do that for, you do it for $4. You have a $4 strangle on, and you can see in the 16-day, this is trading at 386. So you make back your $100 if you're further out on the curve.
Yeah,
but I think it's not a huge difference.
Yeah,
rolling to an out of the money strangle versus straddle.
Yeah, I think if your intention is to hold it and roll it into August, regardless of what happens, then I think you hold on to your current one, or you make this adjustment and you stay in July. Because you're intending to roll to August anyways. So you have no problem with being aggressive in July to see if you can get out of it prior to earnings. URA, looking at the August 38, slightly in the money short put with a 25 strike to limit buying power. 38, 25. So the 25, I would roll up. You can move that up to the 32.
Yeah.
Because the 25 has a zero bid. The 32 is 30 cents, but you significantly reduce buying power there.
And there's more.
And you can sell out of it in theory. The zero bid, you're not going to be able to sell out of.
Yeah.
So.
And you cut your buying power by $700.
Yeah. So yeah, I think you move it up to the 32 because that's where the bid is, but up to you.
I agree.
Tesla taking on the chin. Maybe throw on a put spread.
I kind of have it on. I can just close out of this call spread for 50 cents. I'm going to do that. Let's see if I can get filled below.
300, 290 is interesting.
Yeah, I have
in
the
July.
305, 295 in that iron condor from 2 days ago.
300, 290. I think I'm going to get that on there. 350. I'll do it in August in the earnings cycle.
There you go.
Filled 350 in premium.
I now have the 305, 290 short put spread. I just lagged out of the call spread part of the iron condor. I have this on for $2.48 and it's marked at 285. So I'm out about $37 net on the position. Now I'm looking for a bounce to the upside or stay here. not go below 300.
When you have an inverted strangle on for a small debit and the stop keeps soaring, would you roll to make the spread wider, increasing the debit? So this is I think we're confusing the credit versus debit here. If you make an inverted strangle more inverted, you're collecting a credit and doing that.
Yeah.
But to answer the question, when do you give up and close this kind of position? If it's got like no extrinsic value and it's just intrinsic value and you don't want to have the short stock position, then
Or the buying power. Or, I mean, sometimes the stock wins.
Yeah. If it has decent amount of extrinsic value, and let's say you have a 10-point inversion and you have $15 in credit, and moving it to a 15-point inversion gives you another $2 or $3, like that's fine. But if we're keeping it on and trying to defend it, we want to make sure the options have extrinsic value. Sometimes we can control that, sometimes we can't. But if it's on a stock that's just like ripping to the moon and you're deep in the money with 90 delta or something like that, then if you're uncomfortable with the short delta risk going forward, then maybe that's when you throw in the towel, unfortunately.
Yeah.
But hopefully it's a large credit you have, or a credit you have versus a debit. If you have a net debit on with undefined risk, there's no way to make money on that. And you're just holding in that cycle.
You'll have to roll.
Yeah. But it's tough.
Yeah.
Palantir, 100, 185 strangle for $5 in credit in August.
Yeah, I have a short call spread right at the money. I'm out about $150. What are they looking at? The 100, 180?
100, 185.
Yeah.
In August.
I mean, look at this call skew. It's just
crazy. So
when these are both 40 points out of the money. The 100 strikes at 9 delta at $1.80. The 180 call is a 21 delta at almost $4. It's wild. You go out to the 200.
Yeah.
And that's a 60-point up move.
Yeah.
Let's see if we can do them. Let's see.
But yeah, the reason this is a big IV boost because you're in the earning cycle. So I like the idea of going further out of the money to get some of that decay. That's more IV based decay. But yeah, you're still gonna have to hold this for quite some time if you're trying to get 50% profit, because the IV boost in the earning cycle is quite substantial. Maybe you just do one side, like a call ratio.
Yeah, that's what I'm looking at, like doing as wide a, like even for a tiny little debit, you can do the, 175, 200, and this gives you a break even at 225. You could sell the put as well, like you do the 100 strike put and you net this out for a small credit, but I gotta think of something to do on the upside here. Even a crab trade.
Yeah.
And it's only got an IV rank of 15.
Yeah.
Crazy.
But that it just goes to show that even with an IV rank of 15, the actual implied volatility is 50% prior to earnings, 70% in earnings. So like you can sell any premium you want here, regardless of IV rank.
160, 175 at $1 in August.
Sure.
Oh man. All right. This is kind of a double down because I already have some. I have some short delta via the call spread. Let's do that. This gives me a break even just under 200.
There you go. For Micron, that has earnings after the close.
127.
Here you go. I wrote an earnings preview on this one. I'll put it in the YouTube chat if you want to check that out. But I'm just going to do something small here. I'm just going to do a little Johnny calendar spread on the upside. Long the August 135, short the weekly 135.
Ooh.
So if you get any kind of rally, even if it's through 135, it'll be a profitable trade because the long option's in August, which will have a lot of extrinsic value still. And the short option, $220, it accounts for a third of the value of the long option in August that has 51 days. So $370 debit, small. Because I don't know. I mean, I think they'll crush numbers, but I don't know how the market's going to react. Because look at this.
It's had a nice
stock.
move.
I mean, it's nuts. That's it for us. Thanks for tuning in. If you got any further questions, you can reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got lots more content coming your way on the YouTube channel as well as tastylive.com. I'll be back for overtime today, 3 o'clock.
Ooh, and we're doing the last call.
And last call. And we're doing the morning show tomorrow and the morning show Friday.
Somebody needs to pay you overtime.
I'll request that on overtime. How about that? 3 o'clock.
Yes.
But yeah, stay tuned the rest of the day. We'll be back same time, same place next week.
Yes.
Because we're doing everything.
But we'll be on. We'll be on tomorrow and Friday for the whole show.
You'll log on. You'll be on.
We're here.
But yeah, enjoy the rest of the trading day. Hopefully we get some volatility here.
Yeah.
Someday. But yeah, time to go eat lunch. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general. So that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We're back. It's Thursday, June 26th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, I see that we didn't plan outfits today.
We did not, but I mean, it's fine. I think it works fine. The people like it. How you doing, Chris? What's going on, man?
We should be wearing green again.
Should
That's
be.
what's going on.
Should be.
Market here today, melting on up. I was listening to the radio earlier, and the theme song for the Jeffersons came on, Moving On Up, and I found myself humming along, melting on up to all-time highs.
You know what's funny about that is I saw a clip this morning of Tropic Thunder, and there's the part where he says that to him. And remember that part? That's hilarious. Oh, God.
That movie is so good.
Oh, so
it's
good.
so funny. And they can't make movies like that anymore, as the kids say. But we are melting on up, right? And part of the reason is, Jamal, something that you and I talked about on Tuesday, it's been a focus here over the past few weeks, is about the shape of the VIX term structure. The front month, back month spread is now over 6 points. That's pretty steep here. And that's what you want to see if this market's going to melt up here into all-time highs, where, by the way, the triple Qs have printed new all-time highs. NDX has printed all-time highs, so NASDAQ futures might be around the corner. But Jamal, volatility is low. There's a steep volatility term structure here. There's no volume in the market. This is kind of classic summer trading.
It is. And the wall of worry is, I guess you could kind of say it's come crumbling down. And that's really what has pushed us to all-time highs here. And again, the technical shape of a lot of these indices were in rough shape a few months ago, and it took some time to carve out, but look where we are.
Is there much more to say about it? Vol is exactly where you want it to be. It creates a difficult environment in the short term if you're trying to sell vol, right, to capture that, although we're not exactly across the curve in a place where you'd say volatility really is low. I think we can just go right into the market here today, which is quite frankly, what we're more interested in. To say that there's not much to talk about in today's spotlight would be an understatement, but that is the backdrop here where you see with this low volatility, an IV rank of 11.3. Oh my goodness. That's an S&P up to 6187 right now, 0.65% gain. The NASDAQ up here by 0.72% right now, 22,621. We got that breakout on Tuesday, Jamal. We saw the continuation yesterday. Today, there's a little bit more. I suppose it's just more of the same here. Are you still nursing? Nursing makes it sound like they're losing positions. Are you still cradling? Are you still gently caressing your long call spreads in the NASDAQ?
Yeah, I am, Chris. It's an interesting, you know what? I always talk about this with people. The thing about trading is learning how to deal with wins and losses. And that's literally where I am right now. This is a win. This is a really nice win, actually. And I do have one, again, just a reminder, I've talked about it a lot. I feel like everybody knows, but I am long so I'm long a July 18th NQ call spread, 23,000, 23,500, right? And then I also have the same position on the July 31st expiration. And I also have a short MNQ future against that. The nice part about that, right, is when you have that type of hedge, if you will, on that short NQ future, is that actually costs nothing to the position because it's essentially like portfolio margining. So that's my situation. I could do a multitude of things at this point. I could take everything off and just call it a day. But that's boring, right? We don't want to do that. I could close one of the call spreads along with one of the other future. That's probably a good idea. And but that's where I am. I'm trying to decide what to do. And a lot of it has to do with what's going on with the current landscape in the market, right? Like, do I feel like there's some volatility around the corner? I mean, because let's take a look at it. We're at the end of a week here. We got core PCE tomorrow. I don't really see that disrupting things. We have next week where we have a holiday shortened week. And theoretically, I would imagine that the market is just going to continue to do what it's doing, maybe a little, ebb and flow in markets here, but generally trending higher, like you said, generally melting up. And that could continue through next week. And then is there something on the other side of July 4th? Well, we've kind of talked about it. It's July 9th, right? And so that's one of the things that is in the back of my head. Is that going to create a volatile situation? Is that a reason to take a position off? And I've definitely in the past have done this and be like, yeah, you know what? Maybe I should just take everything off. And then I feel like a jackass when I just watch markets continue to go higher because that existential date that we thought was going to be so bad ends up not being anything. So I'm enjoying this win, but I am, honestly, as always traders we do, I'm trying to think about what the next thing is. I've even entertained the idea of maybe taking both of them off and rolling further up and out, right? 24,000, 24,500. So in August, like I've thought about that, and I'm not sure if I want to do that yet. Sometimes you can just sort of, you know how this is, sort of take yourself out of a trade, and maybe I just do nothing and leave both positions on, like I said.
Right now, I mean, this market is still running up. We talked about it being a light volume day. S&P is probably our benchmark, and I don't recall seeing a volume day like this where we're still sitting below 600,000 contracts. I suppose last week you had a day like this, but it's exceedingly rare that, at least in recent memory, that volumes have been so low. Nevertheless, that's exactly where we find ourselves in today's session. Low volume, low volatility, positive technical drift, indicators for what it's worth that are really just aligning into a strong momentum setup again. Stochastics did return back to that overbought condition and likewise clear out the cycle highs that you have in stochastics during our period of sideways movement over the past month. So that's a little bit of a good signal here. Likewise, MACD, a buy signal above its signal line. So when you have that sell signal in the technicals, what happens to price in that period when you get the sell signal to the next buy signal? Markets basically chop around. In fact, the market actually went up during that window. So that's one of those, you're examining the characteristics of some of these indicators. This is clearly an uptrend if people didn't get the memo already. Like, this is not just a bounce off the April lows and the resetting of the table, forgetting everything that happened since late February. There's clearly some underlying strength right now. And I think that's demonstrated by when you look across the board, it's ever so slight, but even the equal weighted S&P 500 is moving up. You can go to something like QQEW. It's a little bit lag behind, but both are as well getting ready to go into their own breakout potential territory. You see QQEW here nearing resistance just north of 136. RSP here, you see a little bit of a triangle that's been forming up over the past 6 weeks in recent action. All right, so broad participation. The growth sectors are leading right now. It's the semis, it's consumer discretionary, it's banks. The laggards are healthcare or staples. It's kind of everything that you want if you're going to be a bull who just buys at the money calls or out of the money calls and gives yourself enough time to go fishing.
That's actually an interesting thing you just mentioned, because I just started to decide to pull up as we're sitting here and we're rejoicing in this bullishness. I mean, it is.
Well, that's where I wanted to go next, right? Because it's an 11.3 IVR. So what's next, right?
Yeah, I started. Again, this is a future show, but we always like to look at, as you mentioned, some of the different areas of the market. I am looking at some of the names that are. Again, I always like looking at that names above the 50-day moving average. Right now, I think we're at 69% of S&P 500 names. So I'm like, well, what's in the 31%? And Apple obviously has been really weak, as we know. Berkshire Hathaway is one of them. Walmart, Visa, MasterCard. Again, these names aren't necessarily in bear market per se, but they're just not above their 50-day moving average. They're not participating as much, right? Costco, which I have noticed. Costco hit 1,100 and then has just been in retreat ever since those earnings. That's really fascinating to me. But like you said, some of these defensive names, Costco is one of them. Procter & Gamble is one of them. Johnson & Johnson is sort of defensive, but also healthcare. But you do have some cyclical stuff. I mean, Home Depot is one of them. You have McDonald's is one of them. So, but again, a lot of it is consumer sort of defensive names, and so that's what we're seeing right now. Does that? I don't know. Do you? It's not like earlier this year, right, when we talked about how there was this big outperformance between consumer discretionary and consumer defensive. Consumer staples, if you will, same thing. But it's not like that. I don't feel it's not as stark, I would say. And this is largely a broad-based rally with a few names not necessarily participating, and that happens. I mean, it's not going to be 100% participation on 50-day moving average names in the market. So I think this is a very healthy rally from what I can see, and obviously we've come a long way from what we saw earlier in the year. But what is next? The only thing I can really put a finger on right now would be obviously something related to tariffs. But even then, I don't think it produces a reaction that we saw in April.
No, and I think if you're reading the tea leaves of some of Trump's comments here, I mean, he's riding pretty high right now. Iran's nuclear program is pushed back several months to years, although some of the information coming out suggests they don't really need to rebuild the facilities that were there to make the next steps towards producing the bomb. So we'll see. But he's riding that high right now. He says that the NATO meeting was great. The comments he made about NATO this morning, probably the nicest things he's ever said about NATO, right? And who's in NATO? The allies that were hammering out these trade deals. And it's been discussed that some of the trade deal tariff talk, let's actually loop in the military spending as part of that conversation. If you guys are spending your 5% of GDP on military spending, the tariffs can be held we can have a different conversation around those. So July 9th, right, because of the incongruity with the China timing on August 12th, we're not going to have, it feels like the markets knows that those are being pushed back. And I just hope we don't have another news cycle of people calling Trump a chicken because he pushes back those tariffs. We have a good thing going on here right now in the S&P and the NASDAQ, Jamal, and we don't need that ruined.
No.
So
no, we don't.
You mentioned XLP, XLY, though, and I think you bring up an important point about the market being stressed or seeing when you get like some of these relationships out of whack. I think to remind people, to give you credit, at the start of this year, you were looking at XLP and XLY, the staples versus discretionary, and the ratio at the time was sitting right around 0.34, which if you look back over time, that's really, really low. And in past market episodes, when you see that ratio get to basically staples are right around 1/3 the value of discretionary, it typically means the ratio is hitting an extreme. That's only at 0.37 right now. It's kind of sitting in the midpoint of the yearly range where the ratio climbed to 0.45, a little bit north of that earlier. So I suppose if we think this is a market that's like really, truly stretched at the seams, we could use the XLP, XLY ratio again if it gets down below 0.35, 0.34. to think like, okay, this really is cooked. Everyone really is loaded the boat here. Maybe it's time to think on the other direction, get a little bit more defensive if we're going to stay long stocks. Maybe look at some more ratio trades.
Yeah, I mean that's one of the things that you can do in this type of environment if it presents itself. But I'd say right now, I mean, unless it's really stark, I wouldn't even force it. I think that's one of the things we have to sort of step back and just look at what's going on and not necessarily try to predict what the next thing is coming. The best thing we can do, I think, is having some cash available, because this market has shown to be unpredictable at times throughout this year. Obviously not over the last month or so, but I think as a result of that, that's why one of the reasons why you just want to keep some cash available in case things do get a little crazy.
Let's entertain some protection, perhaps, Mr. Chandler. Let's say that I think this market is at 11.3 IVR, sitting right below all-time highs. It's really complacent. How would you express a bearish view to give yourself enough breathing room here so that if something happens, you're basically not playing for the market to go down. You're saying that these out-of-the-money puts, say with an August or September expiry, they're cheaper than they ought to be. Would you buy an out-of-the-money put spread with enough duration? Would you just buy puts? Would you sell upside calls? How do you handle that?
This is a tough exercise. I really don't believe that the market's going to fall enough to justify buying a put spread. But if I did, honestly, right. and this only happens when you feel like, okay, it's a fever pitch right now and the market's to the upside, right? And I don't feel like that's the case. So, but if I did feel like that, honestly, I would really try to do the very tasty way in trying to buy something that's a 50% probability, right? So a 50% pop, which basically in this case, I don't know, price-wise, it's a little tough, but I mean, I would be buying probably, what does it look like to buy the 6,300 and be short the 61 and a quarter? That's a little wide. Matter of fact, make it 62.50 and 61.50.
Go 100 points, 49%.
Yeah.
Risking 2 to make 3.
That's 50-50. But again, this is one that I would probably do, and that's a lot, right? You're risking, it's 50-50, right? 50-50 shot, 50-50 pop. But your extrinsic is positive, and that's probably some type of way that I would look to do it. And again, this would only happen when I felt like, okay, this is a little fever pitch. We just jumped 200 points in the last 2 days. That might be a little bit much. I feel like we're going to have some negative regression here. Like, that's what I would look to do. I don't feel the need to do it right now because I just feel like we're continually drifting higher. That's not to say we can't pull back, but I feel like when you're drifting higher, pullback kind of happens. And it's slow, and then we just continue to bounce back higher, much like what we've seen with gold throughout the year. So that's why I don't really want the idea of buying puts. If I really felt like there was a short-term pullback coming, then I'd just get short, an MES contract, honestly, which I have entertained the idea of. But again, then I keep thinking like, for myself, my biggest position is that NQ, and so I'm just going to try to keep everything in NQ and keep it simple.
One indicator that we've looked at in the past is when the S&P 500 gets too far away from its 1 month moving average as a potential sign that the market's getting cooked, right? It's about 3% or so. We're not there yet, but as we start to get into this territory where, okay, another 0.5%, another percent, start to look a little frothy. And then I can't help but think of these headlines, Jamal. I just want to do a quick sentiment check here. I shared this yesterday in the chat. This comes from Bloomberg. Footwear startup is teaming up with 2 space companies to design a shoe in orbit as part of a mission to make artificial intelligence and blockchain less expensive and more eco-friendly than it is on Earth. Orbit's Edge, a company that supports AI and blockchain applications, and Copernic Space, which offers digital marketplaces for space assets, plans to send a solar battery-powered satellite to space equipped with a computer that will use AI automation to produce a shoe design for the Scintilla brand. The mission is expected to launch on a SpaceX Falcon 9 rocket in early 2026. Do you have any idea what I just said? I have no idea what any of those words mean.
None at all. If only there were signs. What the hell does that mean?
Are there signs that maybe we're getting frothy again? Sending the blockchain to space to design shoes. I don't know, Jamal. This is not quite Long Island iced tea. That was it, the Long Island Blockchain Company.
Oh yeah,
Although,
that's right. I forgot about that. Yeah.
but
I don't know
pretty
what the hell
dang
that is. That sounds like somebody manufacturing a way to make money, and good on them if somebody actually is buying it.
Like, I need to design a SPAC that the all-in guys, the all-in podcast guys will invest in. Give me as many buzzwords as possible. So Chamath is willing to take the flag for me. Come on. Which is a friendly reminder. Check out the Luckbox issue from a few years back about SPACs. They are absolutely terrible. They're bad for your health, both mentally and financially. Don't invest in SPACs. I need to get off that horse, though. We haven't touched on the Russell here, which is seeing a nice day. And among the performers, I think it's worth noting, while the Russell is leading to the upside, it's in part because of the regional banks again, which on a day when bond yields are trading only in a little bit now, bonds were a bit weaker earlier, I will say the Russell's performance kind of sticks out, and in a very good way, right? This is a nice set of performance right now. We haven't quite broken out yet, but in KRE, you can see if we push through 60, you really have a nice little setup here where it feels like you put in a major bottom. And if regional banks are bottoming out, that's really good news for the broader market. We've seen in recent years, particularly since the March 2023 episode when Silicon Valley Bank and Signature Bank go under, that regional banks have been the tail that wags the dog of the Russell. So nice movement here. And I think, Jamal, one thing that we've learned this week too, this movement off of that 1 month moving average, it's really holding up right now. You got to see a concerted effort below there if you want to get bared up at this point in time. It just hasn't accumulated or transpired. So I'm still leaning long deltas here. I'm leaning long deltas in the NASDAQ. I think you are too. I think you and I are both in the same headspace, though, that after a run up, how do you manage your position? Do you take profit? Do you hedge it off? Do you maybe look a little bit longer term and use the dip in volatility to put some protection in your pocket, right? Don't get complacent right now. There's never time for complacency, even if we like to say that with low volatility and technical drift, you can just kind of set your positions and go fishing. You still have to manage them, right? So I'm just not going to see like, okay, 38 days to expiration, Jarrell, see you at 21.
Right.
But it's like, okay, if those conditions, if I can check my checklist every day, is volume low? Is volatility staying low? Are we still above our 1 week and 1 month? Okay, I'm not going to overthink this. I'm just going to sit and wait.
I think that's the trade, Chris, now that you mentioned. So Russell 2000, I was just looking today, compared to the other three, obviously is still the underperformer. It's down 5% year to date, but maybe that's what I do. Maybe I get out of one of my call spreads and I parlay that into a Russell call spread, the underperformer.
Hasn't that been like a story, though, in recent months? Gold ran up in the first quarter and then silver and platinum took off in the second quarter.
Absolutely. Yeah,
right?
Absolutely.
People are looking for like, oh, this thing feels stretched. Where can I put on a similar trade?
Yeah, for sure.
And,
I mean, that's typical, right? Like, we see that a lot, and that might be the move, honestly.
It feels like the move.
I'm not sure whether I do a 2,200 to 2,300, or if I do just shoot for the moon and go 2,300, 2,400.
Join me on this rocket ship. We're going to go print some shoes in space with the 2,300. I will say, though, okay, and this is part of that maintenance. When I'm buying out of the money calls, I like to adjust more a little bit sooner than 21 days. So depending on how this market, I'm gonna kick this out probably tomorrow, because at 28, I just don't see us covering 125 Russell points between now and next Friday, when would be ideally the roll window. So just take advantage of it now.
Right.
Volume's low, right? It's cheaper to do it. Maybe we squeeze up the rest of the session.
And I'm closing out my July 18. I still have that July 31, but I'm trying to close out this July 18.
Doing the same position at the 2,300, 2,350. It's still a 5-to-1 for the August 15th expiry.
Yeah, I did. Which one did I do? I ended up going to the end of the month. There's something about end of the month. You know what I mean? Like, so I did end of the month, and I did 2,300, 2,400.
Okay. End of the month, 2,300, 2,400. That could work too. So much to play with. Isn't it so much easier when the market's going up and there's no volume and there's no volatility?
It's easy to operate. I mean, particularly I think for those, when we pay attention to things from a technical standpoint, it makes it a little easier to come up with things to do, for sure.
Well, and also as like a momentum monkey, the fact that we have some directional trend right now, I just don't need to overthink things. When the trends get messy, I kind of step back and then I tend to overtrade. And I will admit that, April for a little bit, I felt like a deer in headlights not trading some things. I got worked out because I avoided a lot of the pain in equities on the way down. But the trends have reasserted themselves. And so we've been riding it for the past few weeks and it's working out. Bonds, I saw them down earlier. Maybe my eyes aren't working and I got to go back to the doctor here, but it looked like they were a little bit weaker. Notes have rallied up. They're sitting pretty close to session highs, 111 and 30 ticks. ZB is up by 0.19%. And okay, I'm not losing my mind. There is a lower wick there, so they were a touch softer earlier. But it's 114 and 25 ticks. From when you and I last spoke on Tuesday, we're effectively at the same levels, which is to say that this triangle that may be gathering pace here on the outside of this bullish falling wedge breakout is still viable. So I, for what it's worth, still think long deltas are the appropriate course of action. Although the 13.1 IVR laying out new capital here, I don't know if this is the most appealing trade setup right now because we haven't broken through resistance yet. Volatility is low. And so if you were approaching this from like a let's sell some put spreads perspective, you're effectively getting long at resistance. That's not what you're supposed to do. You're going to trade for this as a breakout. You wait for the breakout to occur. Otherwise, you get trapped when the market may still be oscillating within the range. So if anything, Jamal, I see this clustering here. You mentioned the 50-day moving average the other day, and so I slapped it onto this chart. You can see it's now crossing with the 21. I think this may be our floor in the short term. So in the event that bonds don't continue their move higher, I'm willing to stay long into the mid 113s with this long delta position with the short put spread and the long call spread. And at that point, I'd be willing to then lay out capital for new long deltas. But at this point, I either need to see a break or a pullback if I'm thinking about jumping into this trade because a 13.5 IVR in ZB is just not that interesting.
It's not. I mean, it does look like pretty much the only trade is to be bullish in a way because of the way the chart is trending. The hard part is for me is the catalyst. And is the catalyst really only the idea of a possible rate cut sometime in September? Is that really the catalyst? And if so, how far out do you need to go to sort of take part of that, right? Is the real question for me. So I don't know if that's that August 22 expiration. Is there a call spread in order for that? Maybe that's the move. I have trouble with strikes too. Like, is it, do you look at the last time we saw a decent high, which was basically close to 117? Is that kind of your marker? Do you go, with that level and even then, I don't love that trade. Like if I do the 114, 117 way out in August, that is, that's some coin. And yeah, I don't know. I haven't been able to sort of reconcile it. I'll be honest with you. I've tried to figure out what's the best trade. It does seem like upside is the play because again, you've seen the way the chart is formulating, and it does look like bonds want to eventually have a point where they break out, and maybe that's the catalyst, the idea of an actual rate cut coming. Yeah, maybe this is a move. Almost like your trade better, 117, 119. I might go with 117, 120.
117, 120. I mean, that puts you in the neighborhood of.
It's still fair to say these are low pop. This is a lower pop trade, right? Like, I mean, but again, we're 35%. We're going further out. We're and the upside and giving it an opportunity to sort of work, much like we did on the NASDAQ call spread.
Right, and then there are trades, and we've done this here on the show, as it pertains to like the Japanese yen, when you just look at the market and say vol's really understated, and if let's then work through an environment. What would happen here if vol were to go up? What would happen to price, given the scenarios and the narratives that are in play right now? And I would think that if something bad were to happen, right, because the whole concern for the Fed, and as Fed officials are now saying, it doesn't seem like inflation is going to be that big of a deal over the summer months, and maybe a rate cut is becoming more appropriate. They're looking through then as we've done with our little pen here on the show. Fed officials have repeatedly said, particularly if you read their literature, as it pertains to Trump's first tariffs in his first term, okay, they see inflation as a one-off price hike, and then it continues along the aforementioned path. They're more concerned with the decline in real output for the economy on the other end. So if we do get a little bit more dovishness out of the Fed, like we are seeing through the data here today, and today's economic data was not good whatsoever, bonds maybe get a little bit of life and vol starts to come in. I also think of the funny scenario, Jamal, where consistent with the idea that maybe Trump wants to turn the screws with China again in August, because that's outside of the inventory purchasing window for the Christmas buying season, right? Bonds did not have a good time in April for a period of time there. But that wasn't the first move. It was once it really looked like we were just doing silly, kooky stuff with the tariffs. Ultimately, April 9th comes around, Trump takes them off. Okay, we begin to bottom fine. But the initial move after Liberation Day, the market squeezed up here. And I would think that would actually probably be the first reaction too, right? If we push back everyone else and then we start spinning the tires with China in August, bonds probably get a pop. So I think it's worth playing some upside here. I think it's worth holding on to.
I think
got to roll though.
I think so. I think so. And I actually think I almost want to do the 116, 119. I think I want
2.5 to 1.
Yeah.
Not quite 2.5 to 1, but close enough.
Yeah, I think I might want.
But 41%, a little bit better odds.
Yeah, exactly.
And
you know what I mean?
But also think about this: the 116. That's 1.8 ticks from here. That's not a big move. So I think if we're going to take advantage of the low volatility, right? Let's set up some trades where we could take where we would benefit if vol were to expand and price were to move in our direction. And I think that's the trade. And you've mentioned this before to me. I think it was like in 2022 when you and I were talking. What happens when you go to really low environments? Sometimes that's when it's worth finding some high convexity lotto tickets where it's really, it's cost effective to lay out a trade. And if it works out, great. You nailed the 4 or 5 to 1. If it doesn't work out, fine. It was a lotto ticket. But that's what the low volatility affords you to do. And, you have some cash on the side, you have some lotto tickets, you have your normal trades, and you're prepared for any scenario. If the market melts up, you're good. If things break down, your lotto tickets punch, and then you could deploy cash.
That's what I did, and I got filled at that.
Already. Uh-oh. Never want to get filled too quickly there.
I got
Let's
filled
move
immediately. Yeah, whatever.
Let's move on to the metals here, where copper's having a huge day, up 3.24%. Jamal, I was thinking yesterday, today might be the day where I need to call quits on this short copper call spread, or the short call spread in copper, because kind of rounding up, right, catching these moving averages as we move to the top side of the range, and we do punch through the high here at 5.11. So I'm just going to take this off. There's 32 days to expiration. The whole purpose of this trade was that high that we had earlier wouldn't break. So I'm going to have to eat a small loss on this. That's fine. Hopefully this does get filled immediately, although copper tends to be a bit thinner, kind of like silver. In any event, you look at copper today, you look at oil today, you look at regional banks today. Russell leading everything else, equal weighted S&P outperforming the market cap weighted. This is a growth day. This is just a classic people are moving into higher risk growth positive assets. And I would remind people, when the tariffs were getting ratcheted up before they ultimately implemented, what happened? Copper was running higher with that threat looming because we consume more copper than we produce. So I just think the short deltas here are cooked. Today is obviously not working out the way that I hoped to, because this was a trade that was working yesterday and now is a loser today. And I ultimately think that means we need to assess our biases. The midpoint of the range is breaking. We can't rule out another run up north of back to the highs that we had in March. Because if we've taken all the risks off the table that have accumulated since the start of April, we go back to our pre-scheduled programming. And what was the pre-scheduled programming? Copper rallying.
Yeah, I in the For me, it's a little bit different in that, well, I'm short the 530, 540 in copper. And again, it's part of this whole metals complex trade that I have now, which is, by the way, I did get long gold the other day. Same call spread that I was trying to buy for 16. Obviously, just like everything, right? Yeah, yesterday's price is not the same as today's price. And so I was trying to buy for 16 on Tuesday, the 3,400, 3,450 call spread in August. Did not get it, but I just ended up buying it for 17 yesterday. And so now I'm long that. Copper has bounced back, bounced off that level that we talked about, which is nice. I'm sorry, not copper, gold, excuse me, has bounced back off the level that we expected, which is nice. So now I'm long the call spread in gold, 3,400, 3,450. I'm still long the silver call spread after that breakout. Obviously, it's been a little rocky, but I'm still long that. So in my case, I'm still short that upside in copper, which, could not be upside long, but 530, 540. And I'm just, I just would love to see more of a move in silver and maybe to some degree at some point gold probably, but of the proportion, right? Right now, obviously copper is sort of outperforming those two today. It's going to happen from time to time on a trade, but overall, when I look at it, on the day, I'm actually kind of winning. I mean, in total on the day, I am up $22. Despite the fact that, I'm like between those three, right? Between those three. And now I have to look.
Can you just clarify, I paid like $1.80 for this option, or is that like $22 that you keep in your wallet?
$22 I'd keep in the wallet. Yeah. I mean, right now, so I'm just on the day, I'm up $237 in silver. I'm up $35 and gold right now, right?
And so copper's
and so copper I'm down 250, right? So I'm up slightly overall between the three. And that's what I want overall on this trade. I want to slightly be up between those three metals at all point in time.
Silver here is looking really nice. Let's talk about technical resistance and support holding. You're seeing it in both gold and silver today. We talk about those highs that you have here in October and again in March, becoming support here in recent weeks, ever since we broke out. I already hear the people saying, well, Chris, doesn't that look like a head and shoulders pattern up here, left shoulder head? It could be a right shoulder that's forming. It needs to form below 37.34.5. If we clear that, you want a lower right shoulder than a left shoulder if you're going to really do this textbook. But that could be the case. In any event, you have to see that this is a support that's holding for now. You don't trade a pattern until it comes to fruition. Otherwise, you're just speculating rather than following the actual analysis. So the hold of the 1 month again here, that's nice. And you mentioned gold. You called this out 2 days ago. It's why we slapped the 50 on the chart in the first place, because several touches of recent memory, particularly April and May here, we got back to the 50. We spend a few days hanging out around there, and then ultimately we start trading higher again. We were there Tuesday. We had an inside day yesterday. Today we're slightly green. So I think it's holding thus far. I'm with you. I put on that long gold position again on Tuesday because we're at support. And if we break down through 3,300, I'm going to kill it. But for now, it's working. And it's also 20.5 IVR, which I think is the most miraculous part about all this. Net, gold volatility has seen an IVRs, north of 100 in recent weeks. Okay. And volatility has absolutely tanked. And gold has not really lost that much ground. So if you're going to be a long-term bull, I personally think this is a gift, but I'm willing to say that is absolutely wrong about $50 lower from here.
And the other reason I like to trade too, I mean, again, in the past, what I have done was go to MGC, but honestly, it's a little bit cheaper to trade via the options, what I'm doing right now, than it is MGC, just for the contract that I have, the 3,400, 3,450. That cost me, like I said, I bought it for 17, so that's $1,700. MGC right now, your margin is like $2,500. So always trying to find ways to make trades work for you, not only just in direction, but also like cost-wise, right?
Yeah, cost-wise, and that's why sometimes we bounce around between ES and SPY or GLD and GC, right? The goal here is obviously to look for trades within the futures market itself, but at the end of the day, as a trader, if you have an idea about gold, you want to be able to execute it in the most cost-effective, efficient way possible, and that also includes getting out of the market, right? Sometimes when you and I are trading silver and copper, it's really easy to get into the position. People are happy to write those options. But when you and I want to get out, you put in that order, and sometimes you got to wait, and you realize I should have been an SLV instead of SI for what I was trying to accomplish. So Yes, I personally prefer futures because of the clock, as it were, 24/5, but for an hour off during the middle of the day, which is, well, middle of the day, 5 p.m. Eastern. But hey, you need time to go to the gym, don't you, Jamal?
Absolutely.
So go to the gym between 5 and 6, and then you can get back to trading your futures and not have to wait for the bell to ring in New York the following morning. Yeah, the metals complex here across the board, right? It's churning right now, but silver holding up, copper holding up, signs of that growth condition being flipped into the on position today. And now gold's holding support. So you could have been a volatility seller up here for the past few weeks, and it worked out well. I personally don't like selling calls or call spreads in gold or silver because that relationship with volatility, when prices spike, so too tends to go vol. In any event, it being directionally neutral, at least, and selling the vol has worked. At a 20.4 IVR, though, think about previous times we've been at these volatility levels. It's usually near the trough. So I would just caution that, right? Volatility is the key stone to all of this.
Yeah, it is pretty low, isn't it? And again, I mean, things have calmed down to some degree in gold. I would certainly love to see them get crazy again, especially to the upside. But yeah, vol is definitely falling off in here, and it's not going to hold up forever, right? I mean, at some point in time, I mean, implied vols eventually sort of calm down just a little bit, and gold is.
You can see that here on the screen, by the way. GBZ : CGI will bring up gold volatility.
Yeah, and it's one of those where it's calmed down for the time being. I think that doesn't necessarily take away from the trade. And I would love to see vols pick back up, of course, with move to the upside.
That could work. Energy here today, Jamal. It's bouncing back a little bit. Not a surprise. 2 days ago, we were discussing what happens after oil has 2 sessions in a row where it loses more than 10%. And the history called for a one-day bounce of a near 2% and a 1 week bounce of closer to 4%. To that end, yesterday we had a little bit of a bounce. Today we have a little bit of a bounce. We ran up into the 1 month moving average, the yellow line on the chart, which also comes in very neatly close to that 50% mark, the halfway point between the post-Liberation Day swing low and the post-Liberation Day swing high, which of course coincides with the peak crescendo of tensions between the U.S. and Iran over the weekend, coming into Monday. Earlier this week, Jamal, I think you and I, and Ilya as well, perhaps, looked at our short delta positions in crude that looked pretty scary at the open on Sunday and said, you know what, this thing has come down pretty far, pretty fast. If we've reset the table back to where we were prior to this episode flaring up, that puts you right near 64.65. And if you're near 64.65, the risk to reward of still being short isn't that great, all things considered. So I flipped into the CLU5 contract, no longer short deltas, but now just directionally neutral here at 50 days to expiration. Iron Condor short the 54 and 72 guts, as well as, and then I guess long on the outside, the wings would be 76 and 52. I also have one remaining short call spread in here from last week that's still working, obviously. But at this point in time, oil vol here has come off so quickly and so fast. Directionally, it's just not worth selling calls blindly, like it may have seemed last week if you're following the typical tasty volatility ideology. And we're close to that midpoint of the range. So with vol still here somewhat, there are trades to make, effectively betting that we're not going to clear the lows around 54, the highs around 76 in the CLU5 contract. And I think that's just the simplest thing to do if you're going to lay out anything in oil right now. The least stressful, I would say, as it were.
True, least stressful for sure. Speaking of stress, I still had on a Q contract, Iron Condor, that I was able to close today for a small gain, which was nice. I put that on maybe the week prior. And I also still have a Iron Condor like you in the U contract. Mine's a little bit different. Mine's a 61.59, and I was short further upside, but just rolled that today down. So now I'm short the 72.74 versus the 61.59. So that's my Condor situation right now.
That's a nice little setup here. It's close to 50%.
Yeah.
It's a 45% probability of profit, but at these levels with 50 days to expiration, it's max profit of 850 against a max loss of 1150, and the buying power is only $245. You know, those are when you don't want to lay out a trade as you mentioned here, right? Like with gold and the call spreads versus MGC, right? You're effectively placing the same trade out there. There are obviously slight differences because one expires and there's liquidity issue. Okay, forget all that. But the point is that it was more cost effective, right? It's more cost effective for you to express your view by using the gold call spread than trading through MGC right now. And here in crude, this is a pretty cost-effective trade, right? You were just talking about looking at something like a gold position is going to be $1,600 or $2,700 in buying power. This here is offering a very similar, you know, you could double up this position to get the same type of max profit that you're looking for. You're looking for like close to $1,600 in max profit for the trade. That would still only be $500 of buying power relative to the $1,600 or $2,700 in gold. So 36.4 IVR is the point here. It is one of the higher volatility readings that we've seen thus far, going through all the asset classes, through equities, through bonds, through metals. And while we have this continued cooling off in the Middle East, I think that we need to take advantage of what we're seeing right now, which is to say that this is fleeting, the opportunity window is closing, and betting on directionally neutral oil prices outside of episodes of geopolitical risk has been the single best thing that you can do in recent years. And we are outside of geopolitical risk at this point in time.
Yeah, it has. I mean, for the most part, when you've, dare I say, when geopolitical risks have happened, if you've bought, equities there, it has panned out. And again, I mean, like we say in everything in trading, things work until they don't. So don't automatically assume blindly that that's going to happen, but it has happened over the last couple of years.
Things work until they don't is a good expression, right?
Yeah.
I think that's also something that I embrace in my trading, right? Oh, gold's working. I'm going to keep buying it. I don't care what it's been 6 months in a row of gold gains. So what, right? If the trade's treating me well, I'm a loyal guy. I'll treat it well too. And oil, if it's working, I will ride that strategy until it doesn't work. We don't need to get too fancy, too complicated.
Don't need to overthink it.
Which, perhaps I overthought natural gas because a few days ago when we hit 4.2, there was an opportunity to get out of the short put spread at the top side of the range. And did I? No. So we find ourselves back to the bottom side of the range where it's a 43.5 IVR. Let's go out to say 61 days. It's actually a different contract. So let's just double check what the range lows are. But mentioning the volatility being that lantern that we kind of fly to, the range lows here are closer to 338. So if we went out to 61 days and we wanted to play around with these lows going 10 cents wide, it's a 58% probability of profit. It's a 430 gain against a max loss of 570. Again, buying power is less than what you're looking to profit on here.
I hadn't looked
there
at
are still ways to
structure here.
Wow. Yeah, there are ways to address this. And again, it's the IVR, right? You want to go to bonds with their 13, or do you want to go to natural gas and have a little bit more excitement in your life? But that's where we need to ultimately think about placing a bet here. Energy still has the juice. Natural gas, for what it's worth, is probably just seeing a relaxation of the Iran tensions because Iran produces 6% of global global gas supply. And while they consume that domestically, if their infrastructure is going to be bombed into oblivion, then they're going to have to consume the gas off of the global supply otherwise. And so that just adds more demand to the equation. I think when you look at natural gas, right, we're seeing that that's not going to be the outcome right now. So we've returned back to where we were prior to all these bombs and missiles going off. We closed on the 12th of June at 3.586. We're currently at 3.532, sitting near range lows. First stab, sell put spread down here.
I'm going to join you in that, Chris. I'm trying to get one off now. The in August, that same August expiration, I'm doing the 310, 320 though. Keeping it tight, but yeah, I'm going to join you in here. Decent vol in here. Obviously, you look at contract lows here. I mean, I feel like 320 is an area where it's been pretty fairly. Those are some of the lows that we saw going back for this contract, going back to last year. So that's a while ago. But I mean, I like that, and it's a nice little pop. I mean, honestly, when you just look at the trade, like I think it was about a 30% pop or so. I'm sorry, 60% pop. Let me see
57%.
Yeah, 64%.
Risking 4 to make 5.
Yeah.
Yeah.
For yours even. Yeah. I mean, even yours is high, let alone going 310, 320. So yeah, I like this. Oh, and I just got filled. There you go. We're in that gas, baby.
Why not? It's been a boring few weeks. So, of course, we have to trade natural gas to spice things up. It's the kind of sickos we are. We're like, okay, it's been 2 days with no vol and no volume. Time to trade natural gas to get this itch. Let's turn our attention to what's happening in the currency market, which is still risk on. Interestingly enough, there we go. That's the right amount of time, by the way, for a trade to be filled. Put it on, it marinates for a few seconds, right? Gives us a minute, and then it gets filled.
I know, and you feel like you're not going to get it off, and you're kind of annoyed, and then you're like, well, should I step up? And like, no, I shouldn't. It's got to come to me, right? Like it's all the feels of a trade.
Jamal, there's another adjustment that needs to be made here. Being short the euro hasn't worked this week by any stretch of the imagination. Although I suppose in the context of people buying dollars because of war fears, this would be a nice sign coming off. But you know what? Being short the euro right now is not the right time for this. Same thing with anything long dollar. The positioning is stretched. That has not changed. The sentiment is really bad. But you know what? When the market tries to get some lift out of here and it tries to break its 1 month and then it runs into that 50-day, basically what it did at the end of May and in the middle of May and what it did here at the start of March, and it fails to crack through. And then you get that bearish engulfing bar where, technically speaking on the chart, you do set a new high, but you ultimately close below the prior day's low. An engulfing bar falling below the 50-day and the 1 month and the 1 week in one fell swoop was probably not a good signal. And so now we find ourselves with a fresh closing low for the year in the dollar yesterday. So looking for a bottom here, not the right move, did not work out. So we need to reassess. Part of that reassessment means cutting losers. We don't like losers around here, Jamal. So we're going to cut this loser. It's only 43 days to expiration. We want to go right here, click this button. Okay. And the whole reason why this was structured the way it was structured was that if it did break 117, we could get out with a fighter's chance where there's enough value still within the position. So we're not totally cooked. And it's breached the technical levels that I was looking for. Could this thing swing lower and this be the top, the exhaustion point? Yeah, it could be, but I just don't want to be in this position anymore. Not when the technicals look like that. And if we see more signs of dollar bottoming, I'm more than happy to engage. This is, though, what I want to do today, because the past few days we've been looking for a yen rebound here, getting closer to 0070, the James Bond level, in order to go back in and buy the 0068 puts just as a potential, let's have some protection in our pocket. Long the 0068, short the 0067. It's right around a 4-to-1 risk to reward. I'm happy to do this. The yen is still exceptionally crowded. This to me makes no sense. If interest rates are going to stay up and oil's not collapsing, the yen has no business being at these levels. So I will bet against that. I'll be a little bit more tactical with my dollar exposure here, but trying to call the bottom in the euro didn't work. In this case, this is more about the yen positioning is still 2.93 Z-score for speculative positioning over the past 20 years. That's outrageous. It may take some time to work, but that's what you got to bet against.
It is interesting to look at the dollar and to want to try to catch the falling knife. But I just haven't even bothered in this case. I don't know. It's a little bit different for me. And you tell me what do you think about it. It's a little different for me sometimes to try to catch the falling knife in an asset like the dollar versus doing it in some type of stock where, whatever the news came out that pushed it down is sort of, fleeting news. I mean, I feel like in this situation, again, I feel like the dollar could bounce back at some point in time, but I would rather try to go after long deltas and the dollar on the upswing versus like right now. It just feels like a lot of the countries that are across the globe are benefiting so much more from the dollar being where it is right now, and it doesn't necessarily seem to be derailing the U.S. as of right now as well. So I just don't see the sort of I just don't see the clamoring yet. I do find it interesting again that there's a lot of people short the dollar, and that in itself makes me want to try and get long. But I don't know. I haven't seen anything yet that makes me want to try and get long, and so I haven't jumped on this trade yet.
Dollar's not looking good today, but a weaker dollar and gold that's struggling, right? What does that tell you? People are buying things that don't have high rates of return, and they're pouring it into things that do. Things that are related to those items with high rates of return. So if you're buying stocks because you're feeling better about growth, why not sprinkle in some crude oil and some copper there for it, right? Who do regional banks do a lot of business with? American energy companies. So oil's up today. The energy companies are bouncing back, and sure enough, the regional banks here are performing well. Jamal, we're going to keep this show going on because we have Dr. Jim coming up next. What's on the calendar for tomorrow? You mentioned this earlier, the PCE. This is the Fed's preferred gauge of inflation when they release their summary of economic projections 4 times a year, March, June, September, December. Their inflation forecast is about the PCE number. For traders, we don't care much about it, though, in part because it can be imputed, basically 85% of the input, by the month's CPI and PPI data that precedes it. So no surprises expected. Is this a place where the Fed would probably feel comfortable thinking about a rate cut under normal conditions? What's a normal condition? Well, yes, the Fed should probably be thinking about rate cuts. And yes, we'll get those calls that the Fed is late because, of course, that's what the Fed does. They don't ever skate to where the puck's going to be. They're reactionary. Maybe that's where we go with this, Jamal. Maybe that's what tomorrow's report does. It's another piece of evidence that the economy is okay enough. We're not seeing a spike of inflation. We're not seeing a big fall off. Has that ever been a problem? The Fed can kind of keep their hands pat in July, cut in September, maybe even 50 basis points in September, just like last year. Outside of that, though, this day's worth of data, personal income, personal spending, spending figures, that's consumption, that's tariff related. There might be some narrative out of there. Beyond that, though, next week is a holiday shortened week. You mentioned that at the start of the show, non-farm payrolls are on Thursday next week, as well as initial jobless claims. So that condensed week might bring in, well, if non-farm payrolls can't knock us down, then what are we really waiting for? The July 30th Fed meeting? You have engineering the trade up later today, right?
Yes, sir.
So you'll be back in about 45 minutes or so. Between now and then, you're going to take a quick break. We're going to take a quick break here on Tasty Live. Jamal's going to switch spots. Dr. Jim's coming in because you have From Theory to Practice coming up next here on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the My Wife's Birthday edition of what it is that we are trying to do. Man, it is June 26th, and I'm about 80 to 85 Delta that today is my wife's birthday. And so it's amazing. The kids are excited. I'm excited. Lots of fun times happening here at the Schultz household. She turns 44 today, and I'll tell you guys, man, she doesn't look a day under 54. She looks phenomenal. Absolutely beautiful woman. And yeah, she doesn't watch the show, so we're good. I think we're safe on that little B- humor that we just threw out there. But welcome to the show. I'm glad that you guys are here. If you're watching over on the Tasty Live Network, I would pop on over to YouTube. You can pop on over to YouTube. You can troll my humor. You can even troll my trades, which is probably a better troll than the humor. Although I don't know. They might be equal these days. Yeah, it's probably neck and neck. But either way, you can communicate with your brethren who are also watching the show. You can celebrate if you are a boy. You can commiserate if you are a bear, because we have printed another new all-time high. So, John, bring us into the market here, man. What is going on out there? Man, look at this. E-mini S&P is up 41. Whew, man. Risk-free instrument, also known as the NASDAQ futures, up 177. Just for the record, that is an extraordinarily high-risk product, theoretically. But practically on the streets, it's safer than a U.S. T-bill. Boomer's up 354, and the Russell 2000, although legally I think I have to tell you that it's extremely high risk, and so that is my official answer. The Russell up 1950, bonds up 10, notes up 10, oil's up. I mean, everything's up, man. Like, everything's up. I mean, the market's so strong, volatility's barely even down. Like, volatility's only down 15 cents. I mean, you got the British pound is up, you got the euro is up, the Danish kroner is probably up, and you've got gold is up. I mean, everybody's. I mean, what are the Hunt Brothers doing today? Let's take a look at Hunt Brothers. Silver. Yeah, silver up 42 cents. I mean, man, just everybody is excited. And man, what a turn of events, right? I mean, last weekend, like, it looked like, I mean, the end was near. Like, it looked like, all right, the apocalypse has actually arrived, and this does not look good. And here we are. E-mini S&P is knocking on the door of 6,200. That is some pretty wild stuff. If you look at VIX for today, VIX down 36 cents, down to 1640. Man, that's brutal. That is the working definition of brutal. Like, if you hop into the old Google machine and you're like, hey, Google, give me a definition of brutal, boom, it's going to show you a live feed of the VIX. Like, it's going to point you right to a live chart of the VIX. Right, 1640. It's like, man, why did I put pants on today? I mean, in St. Petersburg, Florida, I didn't put any pants on today. But theoretically, why did the Royal U put pants on today? If you look at the chart of the VIX, yeah, that's not good, man. That is not good at all. I mean, I'm no technical bro, and the technical bros have assured me that you're not allowed to do technical analysis on the VIX chart. But, man, look at that. So hopefully, I don't know, is there a little something down there that looks like a little triple bottom? Boom, 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 and then boom? Or is it more like, let's grab the die of strawberry, is it more like boom, 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 boom? VIX down to 10 by, 4th of July, 3rd of July, which is next week, which is pretty crazy stuff. They were already, like, in July of 2025. 2025 is half over. Like, can you guys even believe that 2025 is now half over? Like, I still can't believe that it's not 2019 anymore. Like, I still can't believe that it's not like 2021. No, 2025 is half over. And, I was thinking about this just the other day. And for those of you out there, for my brethren out there that might have small children like I do, I've got Penelope, who's 10. I've got Eli, who's 7. And then, of course, I've got our intern, our assistant for the show, my little Amelia May, who is 5. And she's my youngest child and the younger daughter. I was thinking about her life, and I'm like, all right, she's 5. That means in 15 years, she's going to be 20. Right, which is like, I mean, I know technically you become an adult at 18, but I mean, I'm 44, and I'm not quite sure I'm all the way there yet. And so maybe 20 is a better starting point. But I was like, man, when she turns 20, it's going to be 2040. It's going to be 2040. And so I'm just hoping that I can secure a good Wi-Fi connection up on Mars and still be able to broadcast the show, because that's obviously where I will be. And you will probably be there too, so maybe we can just do it face-to-face in 2040. But anyway, I digress. All right, what I want to do, though, let's go through a couple of things in the portfolio from my fellow, well, I don't even know what I am these days. I mean, I have a bearish bias on the market. I even tweeted about it just the other day, like yesterday or something, talking about like if you're not short up here, like you're doing it wrong. I still 100% feel that way. And I also feel like, if you can't take 400 points of heat in the ES, then you're also doing it wrong. So it goes both ways. Like, if you can't take 400 points of heat in the ES to get your 8-point scalp, like, I don't know what to tell you, man. I can't help you. Like, that is obviously the way that we should be doing things. And so EME S&P is up 43 now on the day. So I want to do a couple things in the portfolio. I've got a couple autumn birthday trades that I would like to put on. So maybe some of her juju can help to turn some things around here in the market, in the portfolio, whatever. But I see you guys already in the chat, man. Look at you guys. I see Rob L's in the, or Rob L. I see Rob Banks, and I see Sam L. And maybe a Rob L will show up later on. I see Andrew Cortado's in the house. Greg Lutton, Theta Traders in the house. Excuse me, Brad Glazier's in the house. Man, Don 721 in the house, man. I appreciate you guys so much. All right, so let's go ahead here. Let's go to, all right, so first and foremost, let's go to oil. So oil's up today, which is, it's just kind of shopping around. It's doing what it does. I mean, oil's, obviously a big mover. The whips in the oil market are quite significant, even when they're not necessarily tied to macro events. Like when you have big macro events, obviously oil can be very responsive to those events, especially if the events happen to be overseas in the Middle East, where a lot of the oil production is kind of concentrated, in the world. It makes a lot of sense that oil is going to be extremely responsive to, what's going on over there. But even under like normal circumstances, right? Even under like normal economic prints, like tomorrow morning, for example, like tomorrow morning, we've got PCE, right? And you think we're out of the woods? Like you think that, all is clear? Au contraire, mon frere, because this PCE print tomorrow morning, I've never seen a more important economic print coming on the shoes. Now, that's 8:30 tomorrow morning. And so, man, if you've got some things that you need to tie off, like some loose ends, some difficult conversations you need to have, like some unforgiveness in your heart, man, you've got about 18 hours to get all that figured out before this PCE print drops and the apocalypse does indeed arrive. But oil could respond to a PCE print, especially the most important one of our lifetimes. I mean, that makes 100% sense to me. And so oil is going to move around quite a bit. But when I look at this strategy, excuse me, you can see that, we've collected a total of 725 on the strategy, which is so nice to be able to look at this on the positions tab and not have to go to the chains. Because again, I understand that 9 times out of 10, 19 times out of 20, 29 times out of 30, you're happy to go to some chains. You're happy to cycle to a rooster. You're happy to cycle to a grind. But sometimes it's like, man, I kind of could just use maybe some Michelle Branch. Like maybe do a little Carly Rae. Like we've talked about this many, many times before on the show. And today kind of feels like a Carly Rae type of day. And so for that reason alone, staying on the positions tab is kind of nice because I've already grouped by the order chain. So it's already there in spirit. I don't even need to go over to the chains to figure out exactly what it is because it's right there staring me in the face. And so the trade price at 725, the mark price at 949. We're only down a couple bucks on the trade. I'm pretty sure I said over the course of the last week or two, while we were in this oil trade and kind of getting hurt, and we rode this thing all the way up to oil at 77, 78, whatever it topped out at. I was like, hey, if we get an exit ramp to get out of this trade for a couple dollar looser, I think I'm going to take that exit ramp. I think I'm going to go ahead and take that off ramp that the market will have so kindly provided me. Well, right now we have that off ramp. And so I'm kind of like, all right, just looking at the situation, I'm already inverted on the strangle. The way that I like to trade, once I go inverted, I don't typically uninvert. I'll do it once in a while, which, by the way, uninverting an inverted strangle, that is buying the guts and selling the wings. Like if you hear Tom or Tony or Mike, Nick, or Katie or whoever else say that, and you're not quite sure what that means, that's what that is. You're buying the guts and then reselling, reestablishing the wings into more of a normal strangle. So there's a little bit of terminology help for you that if you listen to Tom, I know that that's helpful for you because he never explains his thoughts fully. He never even explains his thoughts like in a partial. He never even gives you a partial fill on his thoughts. He just kind of lets them go as if they, don't even, as if they didn't even happen. But with MCL here, I think we're going to go ahead and close down this trade because I got what I wanted. I got my $2.30 loser. And it's like, hey, this is not too bad given how difficult this trade has been. Now, of course, you could also be looking at this and saying, Jim, but it's basically right where you need it to be. I mean, it's not quite there yet, but another couple dollars higher, and it's going to sneak right up above the call strike at 67, and that's where you want it to be. And I might feel differently right now if I wasn't already inverted. Like if I was in like a regular strangle or I was in like a straddle or something that had more adjustment opportunities on the near-term horizon, I might treat this trade differently. But because I'm already kind of at that last stop on the train tracks, I'm like, man, I don't know. This off-ramp looks pretty good. It ends up being just essentially a modest loser, much like many of the other modest losers that we have to take. That's just part of the game. It's absolutely what we're signing up for. It's not going to be something catastrophic because that's the thing that's going to do the most damage. Right. And for those of you that are out there, like, this, if you've been trading a while, that is the thing. If you're trading a while and you're doing it the way that we do it at the Tasty Network, which of course is not the only way to do it, but it's the way that we feel is going to give you the best possible probability and the best possible chance at success. If you do it the way that we do it, then it's going to be the big losers. It's going to be the big outlier moves that are going to do the most damage. It's not going to be the modest losers. It's not going to be like the middle of the road losses that you have to absorb. That's just the cost of doing business. That's just part of what what you're signing up for, in the beginning. It's the big moves that are essentially going to do the most damage and essentially undo a lot of the good work that you've done. So when you have an opportunity to have something that was a pretty big loser and now all of a sudden it's kind of in that modest loss category, man, you've got to really think hard and twice about taking that off and just moving on to the next trade and not getting super greedy. So I think that's what we're going to do here with this MCL trade. Because again, I got what I wanted. I mean, this is 100% what I wanted out of this trade. So let's go for it. So 964 on the mid price, it looks like. We'll see if we get filled. Sometimes MCL is not super liquid. It can be a bit sticky, pun intended. But no takers at 964. Let me do, let's do 969. Just so I can hopefully get filled. Boom. All right, so we got improved at 968. Okay, so beautiful. So we're out at 968. So there you go. MCL, the project is over. It's done. It's almost like it never even happened. Okay, so the next thing I want to do is I want to do two things now. So, and I was scanning through the comments as the show was beginning, and people were commenting about Nike earnings tonight, and I mean, I'm ready. I'm 100% ready. We are going to load the boat on Nike earnings. Not because I have any feelings about Nike, in any way in particular. I'm already long Nike from a busted earnings trade from last earnings cycle, so we have our 100 shares that we have in Nike already. But I'm kind of trying to tap into the autumn birthday juju. Like, can we tap into the autumn birthday juju where we kind of have the Midas touch? Like whatever we touch might turn into gold. And of course, by gold, I mean kind of that fake gold that we had in like 1995 and like 1997 that was, like shiny on the outside, but the inside was basically just a rock. And so if we can just kind of even tap into some of that, man, that might be an uptick over what we could normally do here on the show. So, all right, so let's go into Nike. A couple of things I want to do. So number one, let's go with the tried and true. I don't want to try to reinvent the wheel. Like, let's stick with the Betty Crocker recipe. Expect to move butterfly for tomorrow. That's going to set the foundation of the other things that we're going to do. I think, just to give you a bit of a roadmap through the forest, I think we do expect to move butterfly to the upside, of course. That's going to be for tomorrow. I want to sell a call against the shares that we have because Nike's up. I mean, Nike's up $1.28 or whatever. I want to take advantage of Nike being, on the upswing. Let's sell a call against those shares to give us a little bit of protection against a potential down move. But then I also think, man, I mean, let's double dip George Costanza style on the upside for earnings, and maybe we sell a put too. And so that's kind of where I'm thinking. Short put, bullish. Upside, expect to move butterfly, bullish, and then a short call, which in isolation is bearish, but it's going to get paired up with our long shares, and so that still, maintains our bullish bias in Nike, in a rather significant way. So, all right, so that's what I want to do. So let's go ahead and let's see here. If I go into Nike, wow, I mean, I'm kind of thinking, man, I mean, do we really need to overthink this? I don't think we do. I mean, what if I do a 63, 68, 73 butterfly? Can I do it for under $1? Wow, $1.01. So we're right there, right on the razor's edge of $1 for the butterfly. So if this doesn't work, this is the beautiful thing about expecting move butterflies. I think they're solid strategies for earnings. I think they pair up really well with binary events, especially very short-term cycles, because if you do a butterfly in like 45-day cycle or 50-day cycle, or even 30 or even 20 or even like 10, that's a lot of time. So even if you get the move right, oftentimes you'll be surprised at how little money you make because those options are still going to cling to the extrinsic value that is in the market because there's so much time left. So in my opinion, the best time and the best way to utilize an expected move butterfly, or any butterfly for that matter, really, is in a very short-term time horizon. So I'm typically looking at the front week. So on a Monday, we might do a Friday butterfly. I really like Thursday going into Friday butterflies because if you do indeed get the move right, Friday morning, you can kind of wake up on third base. I mean, not if you're a Red Sox fan, of course, because they haven't seen third base in at least a week and a half. But theoretically, if you were some other fan, then you wake up on third base, you're pretty close to home. Like, you're already pretty close to, driving in that run or walking in that run yourself. And so I kind of like the Thursday and the Friday butterflies. And so I think this is what we're going to do for Nike. And we might even splash around and do this in SPX here in a couple of minutes, because again, it's not every day that you have the most important economic print of our lifetimes. And so you really, you have an opportunity to take advantage of, just the apocalyptic nature of what's going to happen at 8:30 tomorrow morning. So 63, 68, 73, using call options, of course. This is our butterfly for Nike. We're going to pay, it looks like about $1.03 for it. So this is going to be the first part of our earnings strategy. So let's go ahead and let's put this guy on. Let's see, $1.05 maybe. All right, so we got filled at $1.05. Okay, perfect. Okay, so now what I want to do, okay, so that's our butterfly for tomorrow. I want to make sure we sell a call against these 100 shares, because again, this is a nice opportunity, right? This is a nice opportunity to sell calls with the market up, with the stock up. If you want to sell a call, this is the perfect time to do it. It's not typically, the best time to sell a call when the market is already crashing. Like when the market is already, or even going down. I mean, it crashed right now. I mean, if ES fell by 4.5 points, that would basically be a crash at this point. And so for us, though, for Nike, I think let's go out to August, 50 days to go. I mean, let's sell like a 70 call. Because I know that our basis, I know our assignment price on the shares was 69. Now, we've sold a bunch of premium. We've whittled that number down. We worked this out just a few days ago, so I don't want to spend time doing it here again. But I think our basis is like around 66 or 65, somewhere between like 65 and 67, let's say. And so I like selling a 70 call because it still gives us a good amount of room between where the basis is on our position, the assignment price of 69 less whatever we've been able to whittle down over the course of the last few months, and we're able to collect some premium on that 70 call, so that if Nike does rally tonight, obviously the expected move butterfly might, that guy might go live, which would be super nice. But now we'll have a little bit of protection against the shares, and it's a lot longer term of a trade. So 50 days to go. Looks like we can get maybe $1.19. Let's sell this. All right. So we're filled on the short call against the shares. All right, perfect. Okay, so the last thing I want to do, though, let's go in here. And again, this is purely an autumn birthday trade. That's all this is. This is an autumn birthday trade. This is not my analysis. This is not Amelia's analysis. We're just tapping into the birthday juju here today. So if I go into Nike, though, and we're trying to be a little bit strategic about it. Like we're trying to, obviously stay in the kind of a high probability lane and kind of, be a bit strategic about what we're doing. But at the end of the day, we're basically just slanging it into triple coverage, Tony Romo style. But if I go in here, yeah, I mean, we could sell a 60 put. The buying power is only $1,000. So that's really good. I mean, if you wanted to follow a similar trade to this one, I mean, you'd probably want to have a minimum of 10,000 in your account, probably more like 15,000. 15,000 or more, I think, is plenty of capital to do a trade that's similar to this one with maybe similar buying power. And you've got the obviously high probability of the put with it being out of the money. The P50 is 78, which is nice, so we can pretty much round that up to 100 for our mental records. And then you've got, positive theta. You've got your delta. Obviously, that's going to match, this delta right here. And just remember that the deltas that you see on the trade page, for people that are brand new to trading or brand new to the platform, here's a quick little tip for you. The deltas that you see on the trade page, number one, they're always they're always presented as decimals. Whereas the deltas that you see on the trade bar are always presented as a whole number. And so that's a decimal, that's a whole number. That's on a per share basis, that's on a per contract basis. And so what you see on the actual option chain is per share. What you see on the trade bar is per contract. And remember, there's 100 shares per contract. And so that's why you have the multiplication factor of 100. And also remember that when you see the deltas on the chain, and this is actually the case for any Greek that you see on the chain. It could be a delta, it could be a theta, it could be a vega, it could be a rho for all my rho scalpers that might be watching the show. There's a couple of you guys out there that you like to scalp yourselves a little bit of rho, which is, man, that's a power move. I have to be honest. When you see a Greek on the option chain, that Greek is always presented from the long side of the contract. So this is why when you see deltas on the put side, which is over here, if you look at all these deltas, every single one, or just pick any one of those, they're always negative. Now, does that mean if you do that put, you're going to have negative delta? Obviously not, because we just sold this put, and we're going to have positive delta from that. That's because we're not the long side of the contract. We are the short side of the contract. And of course, we know that a short put is a bullish strategy. Or if you're brand new and you didn't know that, let me help you out a little bit. A short put is a bullish strategy. So you're going to build and generate positive delta from that. But if you go to the other side of the option chain, you'll notice that all the calls are positive delta. Well, again, that's because if you buy that call, you will have positive delta. But if you go in and sell that call, you're going to have negative delta. And so whether or not the delta is positive or negative for you, it depends entirely on which side of the contract you're going to be on. But just understand that in the platform, it's always presented from the long side of the contract. In fact, here, let me show you guys one more just real quick thing. Well, hold on. Let's put this on real quick. So I've got my what is it? Shortest 60 put. Looks like we'll get about $1.95 for it. Let's put this guy on. All right, so we got filled. Okay, let me delete all that. Just to really drive this point home, I'm going to change one of my drop-down columns from implied volatility to theta. And you'll notice that, look at the theta column. You look at the call side, it's negative. You look at the put side, it's also negative. So you're like, well, wait a minute, Jim, that doesn't make any sense. Well, actually, though, if you think about it through the lens of, what I just laid out for you, from the long side of the contract, that makes total sense. Because, whether I buy a call or a put, it doesn't matter. Time is working against me if I choose to buy that contract. I mean, this is a big reason why we generally choose to sell the contract and not buy the contract. But if I go in and I buy a call or I buy a put, that's a negative theta position. So once again, in the platform, you see it presented from the long side of the contract. But notice, like if I were to go in here, and I'm not going to do this, of course, but I just wanted to really drive home this illustration, because we don't go over this too often, but I know if you're brand new, man, if you're brand new, this is really, really overwhelming. The derivative space and trading in general, and especially options and futures and strikes and stocks and interest rates and implied volatilities and whatever, it's a lot to grab onto. And so anytime that I can see an obvious breadcrumb on the trail to pick up and give to you so you can put it in your back pocket, I'm going to do that, especially if we're talking about some focaccia bread or, maybe get you like an Olive Garden breadstick or something. Yeah, I'll hand that to you for sure. So if we go in here, if we go and we buy, if I buy the 55 call, let's say, and again, I'm not saying this is a good trade or a bad trade. I just picked one at random to show you. Look at the theta. It's negative. So my theta is negative because, again, I'm buying that call. But look what happens if I just flip over to sell it. So if I sell that call, now my theta is positive. That's exactly what we would expect. Now, I understand this is like a deep in the money call. This is not something that we would sell. But again, I just grabbed this one strike for illustrative purposes only. And so just to really drive home the point of how the information is presented on the platform and how you take that information and put it into kind of a usable format. So, all right, so that is our Nike earnings trade. And wow, we're already halfway done with the show. Man, that's crazy. Man, it goes so fast. You guys have no idea. I was going to do an SPX trade, but I have a feeling that we're already lighting some stacks of cash on fire with this Nike earnings situation. So I am actually going to pass on the SPX trade. But I was going to play SPX to the upside. I was going to do an expecting a bar fight to the upside. That's kind of what we had baked in, because it feels like, we're in a can't stop, won't stop situation. And so it's like, why would I not play this thing to the upside? I mean, of course, the bottom's going to fall out tonight. And of course, going into tomorrow with the PCE print, that is the most critical one of its own lifetime in its own history. But I'm like 45% sure that the bottom's going to fall out basically any minute now. So, all right, where are you guys at? See, Sam L's in the house, man. I appreciate you, Sam L. What's going on there, my friend? So Dr. Jim is in the house. What's going on there, Sam L? Sam L says, Doc, We're out here racking the Versa grips. Oh, that's how you got to do it, man. The Versa grips are the only way. So if you, well, hold on. You said lift in the, like a boss, lift in the market to new all-time highs, 1 rep at a time. Yes. And then Samuel goes on to say Nike earnings after the close. I know you're bearish. You've been Team Adidas slides since day one. I have been Team Adidas slides. So Nike, so I have very, very, very wide feet, like extremely wide feet. Like if you think you have wide feet, you may have wide feet, but I'm about 35 to 45% wider than you. I can assure you of that. Nike across the board, like writ large, sight unseen, everything is super narrow. Everything is incredibly narrow. So I typically can't wear Nike footwear simply because I can't. My little footsies won't fit into the shoes or even the slides or the whatevers. Adidas is a lot better. You still have to be kind of picky and choosy with Adidas, but they're a lot better. So I am Team Adidas. I've been Adidas since day one, of course. And so, but Samuel says, oh, the Versa grips, yes. So for those of you that are into training and fitness and working out and stuff, if you are not aware of Versa grips, they are basically the luxury version of straps. So you typically have like the S strap that's like, and we all have. Like if you train, you've got a pair in your gym bag right now. You may even have a pair on you right now, right? We've all had S straps. Like they've done us all very well. They're super expensive, and Samuel knows this, of course. It's like $70 maybe. Drop the $70. You need to scratch, you need to claw, do the opposite of all my trades to kind of kickstart your pathway to that $70. It'll be the best $70 you've spent in a long, long, long time. It's gonna feel like there's no way these work because of the way that they're set up. It's almost like too simple. It's almost like how is this holding on to the actual dumbbell or barbell or machine or whatever? It's like there's just no way. But man, once you figure it out and you get locked in, and you can watch YouTube videos and whatever, you're gonna be so locked in. Like you are gonna become one with the item. Like you and the item, like you will become one flesh. Like it will become biblical at that point. And so I would 100% go Versa straps, drop the $70, and I'm right there with you there, Samuel. And I appreciate you, my friend. Down 721 says, happy leg day, Dr. J, man. Happy leg day to you. It was actually leg day for me as well. And so I did my little 10 set protocol, and we're doing 10 by 10s now. I did 10 by 10 on the hack squat, and I'm going to be in a whole lot of pain later on, and I'm not looking forward to it, but it is the way you got to play it sometimes. They're down 721, and so I appreciate you, my friend. Hopefully you had similar results in your own leg training in your neck of the world. Theta traders in the house. Dr. Jim, I see that clock front and center on the floor of the live show stage. Whom is the taskmaster who implemented this? Oh, you're talking about the promos that run? Yeah, so, what's funny is, they keep a clock on the stage, and they keep the clock on the stage for Tom. Like, Tom always goes over time. I am always on time. I'm early, man. Like, I'm early. You guys know me. Like, I get to the point. We don't belabor. There's no tangents. It's all business. It's all business start to finish. So, Tom says, I've got 12 minutes. Man, I'm done in 10 and a half. Tom says, I've got 18 minutes. We're out the door in no more than 15. So I don't need the clock. But Tom, it's brutal, man. It's so brutal. He's supposed to have 15 minutes. It's 35, and he's halfway through his slides. And so it's just that's for Tom. And so that's why we have that there. And Brittany, of course, is the taskmaster on that. So Brad Glazier, greetings, Professor. Thanks for all that you do for us. I appreciate you, Brad. Thanks for being here, my friend. I appreciate you very, very much. Brian Dowdy's in the house. Hey, Dr. J. I got in with you on the XLE trade. It's working well. Victory lap for now. Yes. It's a partial fill on the victory lap, I think. We have a graph on when theta picks up, 45 to 21. Do we have a graph on when vol expansion picks up for earnings? Great question. And I don't think we have a graph. It's very possible that the research team has produced one of these. They do so much content every single day. I can't possibly keep up with all the things they've done over the course of the last however many months or however many years. But I know just from experience that usually the volatility expansion associated with earnings picks up around 14 days before earnings. And then it, of course, continues all the way up to the earnings day. Now, is it a situation where it's like a steady climb, where it's like a rather consistent climb, or is it mostly concentrated at the end? I don't know the answer to that question. My intuition tells me it's probably more concentrated at the end from the standpoint of, days 14, 13, 12, and 11 in terms of DTE are not going to give you as much volatility expansion in the stock as days 4, 3, 2, 1 are going to give you in terms of DTE going up to the earnings day. And so I think it's probably highly concentrated, but reliably so. If you're trying to think about like managing positions and you're trying to think about kind of getting out of the way of volatility expansion, I think a pretty safe bet is to get out of your positions or adjust them or whatever at 14 days prior to the earnings day. If you want to be, essentially out of the way of any potential volatility expansion, I think that would be a good thing. Man, look at the S&P 500. Man, look at the it just went down 3 points. Man, I don't know what more you guys want from me. Like, I'm not sure what more I can do. I just gave you guys a 3.5 point crash in EMA S&Ps. And so if you can't make money on that, I can't help you. Like, there's nothing I can do. Like, look at this. We're all the way back down to 61.93.75. And so it's like, man, I'm pretty sure my work here is done. And so Greg Lutton, hey, Doc, I have a covered call in DraftKings, and I want to squeeze as much as possible. Famous last words. The call is 39. In August 15, roll up and out at 21 days to go until the roll doesn't give credit anymore. Yes, that is one thing you could do. So let's bring this up. So DraftKings is at 42. You have a 39 call. Okay. So did you say what cycle it's in? You did not. And so I'm just going to assume. I mean, it's hard to kind of assume what your cycle is here, Greg. But I'll just assume you're in July. So let's say you're in July. You have this 39 call. Right, so you'll be looking to buy back this call. So I'm going to buy back the 39 call. I don't have the 100 shares, of course, that you have, but this is the only part of the analysis we really need to focus on. So if I buy back a 39 call, I go out to August, and, like, for example, if I roll up to the 42, you can see that's still going to be a 53-cent debit. Okay, so how do you kind of work your way around this, and what are the solutions here? Well, if you are dead set on like giving yourself more room for the stock to run, then the way to accomplish that is you're going to have to keep adding time to the cycle that you're rolling to. So if August doesn't give it, then you've got to try September. If September doesn't give it, then you've got to try October, and so on and so forth. So right now, going from the 39 in July to the 42 in August, the 42 in August, that's a 53-cent debit. Now let me just pause here for just one quick second. That's not necessarily the end of the world. Like, this is not necessarily the end of the road. Now, I know Boyz II Men tried to warn us 39 years ago, but this may not be it. Like, I'm not quite sure the water has run dry just yet. It's very hard to say goodbye to yesterday, but we may not have to. Like, if we just keep looking at this, we may be able to go to Motown Philly and just kind of call it a day here. So 53 cents, you've got to think about, like, how much have you collected over the life of the position? Like, what is your basis on this trade? That will help you determine, is it okay for me to pay a debit here? Now, we don't typically like to do that, but if you're in a situation where you've collected, let's say you've collected $4 over the life of this DraftKings position, for you to pay 50 cents and kind of, take your basis collection over time down from $4 to $3.50, is that worthwhile to consider? I think it is. Like, I definitely think it is. And so I wouldn't necessarily completely eliminate paying debits on a covered call roll like this one for one that you want to stay in, which you've kind of alluded to. This is more of an investment for you. This is not kind of a smash and grab, in and out type of scenario. And so because of that, I think paying a debit can be something that is on the table. But still, just in the spirit of completeness here, I can't get a credit if I roll out to August. But what if I roll out to, let's see, what if I go to September? Okay, so there you go. If you go to September, you get a 25-cent credit. Now, this is only rolling to the at-the-money strike. So you might be thinking, Jim, I really like DraftKings. I want to give myself even more runway. I want to actually roll to an out-of-the-money strike. Well, as you can, I'm sure, imagine, that's going to cost you more and more and more. Right, that you're basically wanting to take a short call and move it into a much more favorable position. That's going to cost you something. That's not going to be free. That's not going to pay you. Like, you're going to have to absorb some kind of cost for doing that. And so if you wanted to roll up to like the 45, let's say, that's going to be some kind of debit. Okay, it's $1.21. If I want to roll up from the 39, which you guys can see right down here, to the 45, which is right here, of course, that's going to be a $1.18 debit, $1.16 debit. That's going from a 39 strike in July to a 45 strike in September. Should you do that? I mean, that's going to be your call. This is a little more aggressive than I would typically do. I wouldn't typically chase the stock this aggressively. But, of course, this is 100% going to be your call. I want to try to figure out, how far do I have to extend the duration to maybe turn this roll into a credit? So what if we go to October? Oh, wow, we have to go all the way to November. So they don't even have October options in DraftKings right now. Because, I mean, that makes a little bit of sense because there's like a 30-40 delta that the company's out of business by October. But November, I guess they're assuming a restructuring rather swiftly. And so the 45 strike is a 33-cent credit. So here are a couple of options for you, Greg. I mean, you could, again, you could roll to the at-the-money strike. You could potentially absorb the debit in the August cycle. You could go out further in time if you want to extend the holding period of the trade, and you can finagle yourself some credits, this way. And so hopefully that helps and gives you a couple of things to think about. It's your call ultimately, as it always is, of course, in terms of what you decide to do. And so, thank you, Trey. Happy birthday, Autumn. I provided a successful XLE for Jim to make up trollish commentary. Yes, thank you, my friend. I appreciate you very, very much, and I will pass along your birthday wishes. And so, David Gallimore said, Dr. Jim, when are we getting above all-time highs on the SPX? Yeah, I don't know. Has it not hit it? I mean, because ES obviously has. Let's see. SPX. Let's see. SPX, is it not there yet? I mean, that looks like it's there. Is it not there yet? It's there. There's your all-time high right there. Oh, wow. It's really right there. It's going to happen on the show. It's going to happen in the next 8 minutes, guys. Right? And you can only find this on the Tasty Live Network, by the way. You cannot find this information anywhere else on the internet. And so you're very lucky that you're here. On February 20th, it hit a high of 61. Wait, that's not right. On February 19th, it hit a high of 61.47, and it is currently at 61.42. So, man, we are right there. Oh, my gosh, we are right there. And so once the algorithm goes up and sweeps out all the stops above 61.47, down we go. Right? The algorithm is just looking at all these juicy stops right up here. So, obviously, your next couple ticks are going to be, your 61.42 right now. You're going to be 61.49, then you're going to be 63.03, just to squeeze everybody out, a quick little 150 points. And then, of course, you're 56.18. And again, I don't make the rules, man. This is just the way it has to be. And so good luck to you, David Gallimore. I know you're typically bullish, and you're kind of mega pint bullish a lot of the time. So hopefully that you're getting paid today. So good job out of you, my friend. Joe says, hey, Dr. Jim, I'm finally able to catch the show live. I'm traveling to Chicago today. What's going on, my friend? Do you have any recommendations? Man, yeah, just do the opposite of me. And so you still have plenty of time. I gave you 3 very ripe opportunities to do the opposite of me. And this isn't any old ripe. This is like you're walking up to the avocado aisle in Publix and you actually find the perfectly ripe avocado, which is nearly impossible. They're either hard as a rock or they're super, super squishy. You find that perfectly ripe avocado, it's going to be a good day. All right, I could eat it today or I could eat it 2 days from now. Like I have found the sweet spot in the avocado aisle. You're basically in that position right now if you do the opposite of my Nike trades. And so, Mikos, everything's up except the US dollar and I guess volatility, Mikos. And so, yes, very strong market, incredibly strong market. Oh, I lost my track. Hold on. We might actually get through more than 2.5 comments today. Maybe not, actually, but that's about the expected move. And so let's see. Oh, Sam L says, happy birthday to Doc's Better Have Bonefish tonight. No, actually, no, we're going to I knew Autumn poo-poos on Bonefish a little bit too much. And so that's why I didn't get her anything for her birthday, because, you got to teach her a lesson. And I figured what better way to teach her a lesson than no birthday gifts. Right. And hey, if I just keep trying to teach her and train her up, she's not going to learn. She has to learn the hard way. So no gifts. But no, of course I got her gifts. But tomorrow night, we're actually going to this restaurant called The Library here in St. Pete, which is supposed to be a very nice restaurant. I might not even be able to wear the Adidas slides. I mean, of course, I'll bring them with me, and so I can put them on when I'm in the restaurant and nobody's looking. But it's a very nice restaurant, and so I'm very excited about that, and we haven't been there before. And so we're doing that, and then we're going to a comedy show after that up in Tampa. We're going to see our guy Zoltan, which if you guys haven't checked out Zoltan, He's got a lot of stuff on YouTube and on Instagram and stuff. He's really, really, really good, really funny. He's very, very clean, which we really, really like that. I mean, every once in a while something sneaks out, which is like, okay, I got it, I understand. But he's very, very good, very, very funny. And so he's actually coming to Tampa tonight and tomorrow. So we're going to the show tomorrow night, and so I'm super pumped about that. So we're going to dinner, and then we're going to the comedy show. And we got Nana watching the kids. And so really, really pumped about that. But let's see. Rob Banks now. It's good day, Dr. J. I closed 15 positions this morning. I'm now at about 20% invested and 80% cash. Man, I'll tell you what, it's a lot better than being short. Man, it's a whole lot better than following me through the forest. That's for sure. Mikos in the house. Also, Dr. Jim, I'm glad you're here with us today. Man, I'm glad you're here with me today. I appreciate you, Mikos. Like, it really is only because of you guys that we can do what we do. So thank you guys so much. Without you guys, there would be no From Theory to Practice. Like, without you guys, there would be no B- humor. I mean, I would still be spouting off the B- humor, but nobody would be around to enjoy it and appreciate it. And Autumn, she's heard everything. She's heard all of it. She's like, yeah, it's not even B- anymore. It's degraded. Like, you want to talk about theta decay, it's down to a solid C, I would say. But JDD in the house, lots of things are riskier. Playing with knives, guns, rabid dogs, ex-girlfriends, LOL. Oh, I think you were talking about my comments earlier this show about Autumn. Yes, I think you're correct. Theta Trader says in jarts. A jart. Is that similar to a jort? Like, I've never owned a pair of jorts. Never. Not once in my life have I owned a pair of jorts. Now, that may not be what you're talking about, but I don't know what a jart is. And so I'm just thinking about jorts. And so JDD is laughing at my comments earlier about Autumn's age. No, she is 44 today. And, she looks it, man. Not me. No, I kid. But again, we're saying, I promise you, we couldn't be safer. Like, you think a UST bill is safe? This is 300% safer than that. The probability that she sees any one of my shows, and in particular this one on her birthday, it's negative 400%. There is no way. Like, unless I tell her or one of you rat me out, like, we couldn't be safer. I promise you, we couldn't be safer. But no, I mean, for the record, I couldn't possibly be more in love with my wife. She's amazing, and she's so beautiful, and she's a good sport too, which, you kind of need to be, if you're gonna roll around with me. So anyway, let's see. Andrew Cortado's in the house. What's going on there, Andrew Cortado? I appreciate you, my friend. Scram everything. Hey, Dr. Jim, welcome back. Did I leave? Did I go anywhere? I haven't been anywhere lately, and so we've been just doing what we do. And so Rex Kramer in the house says, "Hey, Doc, how do you feel about INMB? Man, look at the ES down to 91.50. I mean, this is it. Is the VIX at 30 now? Look at the VIX at 16.33. I mean, it's happening, guys. It is happening. Even S&P's 91.25. I mean, I don't know what more I can do for you guys. I mean, I'm going to try to figure it out, but I'm not sure I can find anything else. But Rex Kramer says INMB. Let's see here. Immune Bio. $6 stock. Yeah, I'm already not super interested. You guys got me on the Wolf thing. I'm not going to let you guys get me again. So you guys took me down on Wolf. I mean, we were selling 3 puts. Like, we're selling 3 puts. Like, look, like on any given day, like if you're trying to figure out, like, am I doing the right things? Am I doing the wrong things? Like, am I getting better as a trader? Or am I getting worse as a trader? These are questions we all have to ask ourselves on a very regular basis. Let me help you out. If on any given day you find yourself selling a 3 put in anything, you're getting worse. You are going in the wrong direction when it comes to what it is that we're trying to do. Whatever that might be. Make more money, lose less money, better control your risk, whatever. If at any point you're staring at the option chain and saying, man, that 3 put looks good. Things have gone very, very wrong at some point in the very, very recent past. And so there's a little tip for you. So I'm going to pass on INMB there, Rex. I appreciate you. I know you're a good sport. But all kidding aside, I typically like to stay with stocks over 10, at least 10, typically over 20, I would say. It's pretty rare that I would even mix it up with a stock under 20. But it's really hard because the premium's in there and there's no weekly options. I mean, you could go into August and I mean, wow, look at this stock. This thing's crazy. Man, look at that 5 put. That thing looks pretty good. That's how you know. Like, that's it. That's what I'm saying. And the best part is I genuinely feel this way. I'm like, man, look at that 5 put. How many of these should we sell? $2.50. I think Rex may have it right. No, this is I gotta say no, Rex. I gotta try to get better. I'm gonna try at least. I don't know that we'll be able to do it, but we gotta try. So Rex, but the premiums are actually pretty decent in there. I still probably wouldn't mess with it. Emmett Morrison, hey there, Dr. Jim. I got the will and the life insurance in order for tomorrow's PC print, man. That's how you do it. Like, that's 100% how you do it. Like, I'm telling you guys, like, for tomorrow, the will, it's got to be done and dusted. You've still got 11 hours left. Done and dusted. Life insurance, you got to get the whole, you got to get the term. I would get it all. Don't mess around. You don't want there to be any holes going into tomorrow's apocalyptic PC print, which is coming at 8:30. So, but hey, we got through, I think, maybe 3.5 comments today, so that's a little bit better. But I appreciate you guys. I appreciate you guys so much. If we have a show tomorrow, which again, the delta is only about 30 to 40, just given the apocalyptic nature of the PC print in the morning. But if we have a show, please come back. Come back tomorrow. If you have a question or comment for me, drop it early in the chat. Because as you see, I moved through them sequentially, and I forgot to surprise and delight somebody today. I'll try to remember to do that tomorrow. But guys, I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, train them heavy, and stay optimistic. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's going on, everybody? Nike has earnings tonight. What kind of quarter are they going to show us? We know a lot's been going on there. Can't wait to see. Matter of fact, if you don't remember anything I say, I'm thinking about maybe doing an earnings trade in there. The U.S. dollar has been getting rocked. Everybody's shorted. What does that mean? Does that mean at some point or another it's going to turn around? Sometimes that happens. It's just a matter of when, right? Sooner or later. And then finally, GDP came out this morning, and it seemed to shrink a little bit more than people thought in the first quarter. But doesn't even matter. Stocks are at all-time highs, and that's what we're here to talk about. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade, and I am your host, Jamal Chandler. I gotta tell you, I'm pissed off. You know why I'm pissed off? Last night, we had this little thing called the NBA draft. Okay. Cooper Flagg, who I've been talking about for a very long time. And even if you, for those who don't pay much attention to the sport, I've been telling you about him. I've been telling you about him for at least 9 months. I've known about him for maybe a couple of years, even when he was in high school. I mean, he's a phenom. He went first, and I'm not mad about that. That's the way it should be. Coop was easily one of the best players. He was the best player in college and might be almost one of the better players in the world right about now. You got to remember, this kid 2 summers ago, 2 summers, it was really last summer, played against a ton of NBA, some of the best NBA players in the world when he played against the USA team when their trials and their when they were getting ready to play in the Olympics, and he stood out. So Cooper Flagg is legit, in case you were wondering. But bigger than that, I ended up, I didn't really watch the draft, but of course I pay attention to my Chicago Bulls. And I couldn't believe what I saw. It was not so much who they picked, right? I understand that. There's been this huge sort of emphasis on a lot of the French players. And if you watch the documentary, Going for Gold, where they sort of highlighted a lot of the different countries, you could see why. France has been sort of building something for a while there, and that's kind of cool. Good on them. Obviously, there's been some high-profile younger French players that have been picked in the NBA draft over the last couple of years, and that's what Chicago picked, in case you were wondering. But here's the thing. Chicago had picked number 12, and they picked a younger French kid. I think he's 18, almost 19, small forward, 6'10". You know, that's kind of what they've been picking. I mean, like what people have been picking when they pick these young French players. 6'9", 6'10", young, give them some years. You know why I'm mad? Because the very next pick, a kid named Derek Queen was picked up. Now, for those of you who don't know who Derek Queen is, I see a lot of promise in a kid like him. I think he's left-handed, big player, can dribble the ball, lots of skills. Played for Maryland last year, helped that team go further in the tournament with a last-second shot. The confidence is booming off this kid. He also played in college with Cooper Flagg, also played with another young player that played at Connecticut. So there was like 4 of them that got drafted, actually, from the same high school, Montverde Academy in Florida, which has become known as a sort of basketball powerhouse. How do you not pick Derek Queen? How do you not pick him? How do you pick the French kid because you think he has a ton of upside? Like, come on, dude. He's right there on the page. Sometimes I wonder what the Chicago Bulls are doing. Ever since, I think it was 3 years ago. 3 years ago, maybe. Chicago Bulls. Yeah, Chicago Bulls. And this is what the Chicago Bulls when they had DeMar DeRozan and Zach LaVine, and they're, that core of players that was supposed to do something, and Lonzo Ball was actually the key to it. Once he got hurt, they were never the same. But this is when the Chicago Bulls, Indiana Pacers, and OKC Thunder, I believe, had the same record 3 years ago, like similar record, like within a couple of games. Obviously, 2 are in the finals this year, and you see where other one is. I digress. Let's move to the slides. I can't fix the organization, but what I can do is pay attention to the stock market and look what's going on today. Oh, man. Interesting day we have here. So Nike has earnings tonight. And I got to tell you, a lot of people are not expecting a whole lot from Nike. I mean, we've all seen the downfall more recently. It's been a lot of different things going on with Nike. Nike, believe it or not, Nike is still the top shoe. They're still the top seller of shoes as far as I know. And, I mean, they're the top in the field. Like, I remember looking at one point in time at Nike, and I was curious as to whether somebody might buy them out. And then I looked at their market cap valuation compared to everybody else, and nobody's even close. So Nike is still the top shoe, but they've had a rough go of it, right? And then when you figure the fact with the Trump administration has been trying to do and get a lot of companies to build in America and not overseas. Well, obviously, we all know about Nike. A lot of their services, shops, if you will, are in China, right? I mean, that's where their cheap labor is, and then they make those shoes for $20. They come over here for selling for $200. I mean, they have the greatest margins. It's incredible. But a lot of what we've seen more recently, they've been one of the stocks that struggled during the time of tariff talk, and they really haven't bounced back. And I think Wall Street is expecting a ugly quarter. As a matter of fact, you can't find anybody to say anything positive about Nike. That's why I want to get long. That's why I want to get long for a trade. And when we get to the platform, I'm going to take a look around. But you can obviously understand why. I mean, a lot of their stuff is foreign made. Tariffs would hit them hard. Obviously, tariffs, things have calmed down. But nevertheless, if you're Nike, where you do a lot of your business, not only do you make a lot of stuff abroad, but you do a lot of business abroad too. I mean, I think China is obviously one of their biggest purchasers. So people are expecting ugly things. But I like to play contrarian in these situations, and this is the perfect time to play some earnings. So we're going to look around for an earnings trade on there. Speaking of playing contrarian, the U.S. dollar obviously has been getting rocked recently. Dollar is not doing well, down to the tune of 9% and change, almost 10%, I think, to the year. And obviously, the other currencies have benefited as a result of the dollar being down. I mean, people are basically selling dollars to buy stock market, basically, it seems like right now, right? And there is this prevailing thought, and you can look at the Commitment of Traders report from the CFTC, that there's a lot of people that are short the dollar right now. And again, this is a contrarian situation, but I don't know. In this one, it's different for me. I am not necessarily looking for ways to get long the dollar. I do feel at some point there could be a nasty unwind with the dollar where it starts to make a run like we saw in 2022. I'm not sure what the catalyst is for that. And I think if you want to get long the dollar, either A, you need to have deep pockets of whatever trade you're doing. B, you need to push your duration further out. I don't know, 3 to 6 months for sure. And C, or just wait until it starts to make a move to the upside and then put your bet on then. But remember, when that move starts to happen to the upside, when it starts to turn around and it's a couple of days, don't fall into disbelief, lean into it. That's what you really need to do. GDP came out this morning. I think it was the final look at first quarter GDP, and it was actually a little bit worse than expected. GDP shrank a little bit, right? And that would have, I think, sent the market reeling a month ago. But right now, it doesn't even matter. Market hit all-time highs today, even though GDP showed a little slight worse for wear. I think this is one of those, things. I don't always pay that much attention to GDP, to be honest with you. Like, it's a data point. It's, it's whatever. But I always remember 2/3 of consumer spending is GDP. And I think consumer spending was a little bit weaker than expected. And that's the real takeaway. What you need to pay attention to is consumer spending. How much people are spending? How much are they spending in an environment where interest rates are 4.25 to 4.5? And that doesn't look to be changing anytime soon. But I got a chart on that in a little bit when we talk about rates. Leftovers. Indians use their national airline more than any other nation. That's right. As you can see here on this next slide, this is the most used airlines per country based on the share of respondents who booked a flight with them last year. So in India, Air India is the flight that is used the most, to the tune of 73%. In Japan, all Nippon Airways does, who is that? Is Nippon? This is an honest question. Is Nippon like a family that owns the airlines and the steel industry in Japan? Or is that just a company and they own both? Or is Nippon just a word that means something in Japan? I'm curious. I'm not really sure. Nevertheless, 55% of the people take all Nippon Airways. In Japan, seems to be a very popular airline. In France, Air France, 53% of the people take French airline. Air China is also 50%. That's kind of low, I thought, in China. Honestly, if you would have asked me ahead of time about this poll and what I would have thought that Air China would have probably been number one, followed by maybe India and Japan or something like that. And that, not in no particular order, but I would have thought China would have been number one. Lo and behold, not so much. Under the 50% mark lies Spain. Iberia is only 45% of the people take Iberia. And United Kingdom, British Airways, 42% of the people take that. And I think to some degree, in some of this, I would assume what you're seeing is based on where people go, right? This is total speculation, but in India, I would assume most people travel within India more than leaving out of India. And if they do, they go to the UK, which probably Air India does that too, or maybe British Airways at that point. I'm not really sure. Japan, probably most people stay within Japan. I don't know. I haven't analyzed the air travel, but that's just my guess. I think the people who are above 50%, I think the countries where it's above 50%, the most of that travel is within the country. That's my guess. Spain, maybe not so much, I would say. UK, people are traveling in and out of UK more than anything. British Airways, obviously 42%. American Airlines, of course, we know Americans are always constantly going abroad. Within the country too, but maybe not. And then in Germany, 36% take Lufthansa. It's kind of an interesting fact. Let's move to the next slide. This is your commodities 1 year in commodities. Yeah, but OKC and the Pacers are owned by Jerry Reinsdorf. Oh, you mean the Bulls are owned by Jerry Reinsdorf, Emmett. Yeah, correct. I know. But what does that have to do with picking good picks, though? At least you could do it Clippers style. You could pick good picks. You might not want to pay them when it comes time to pay them in 3 to 5 years, but pick good picks at least. God. This is 1 year changes in commodities. Coffee, the most, 45.8%. That's right. When you're paying for that coffee, you're paying for that increase in the commodity. Gold, 45.3% over the past year. Big moves, long gold right now, of course. Lumber, 34.9%. Natty gas, 29.5%. Just put on a natty gas position today. I'll show you that. Lean hogs, 26.6%. Oh, yeah, we do have lean hogs on the platform, don't we? I've never traded them. I really have no desire. I don't feel the need to trade lean hogs. But kind of fascinating. I would never trade these options. That's for damn sure. Silver, 22.5%. Also long silver at the moment in time. Live cattle, 14.3%. Copper, 9.9%. I am short copper against long silver and long gold. When I saw this chart, though, I'm not going to lie, this makes me nervous, the trades that I have on, because obviously copper is the underperformer here. What if copper all of a sudden decides to go up 20% and silver pulls back to like only up 17% and gold? That's going to suck. Hopefully it doesn't. Aluminum, 3.8%. US CPI is 2.4%, at least as of May 2025, right? That's where CPI is right now. You figure inflation's at 2.4%, while interest rates are at 4.25% to 4.5%. So we're bringing that CPI and that inflation down. Things start to get negative. Oops, cocoa, that should be red. I messed that up. Whatever, you get it. Cocoa is negative 0.3%. Corn, negative 3.8%. Wheat, negative 3.9%. Corn, wheat, and beans. I haven't traded those in quite some time. Really don't look at them as much anymore. But yeah, they're all on the negative more recently. Zinc down 5%, 5.1%. Copper down cotton, down 5.6%. Heating oil down 7%. Heating oil, crude, that whole complex, gasoline, they're all down year over year when you look at it. Soybeans down 8%. So yeah, all the softs being corn, wheat, soybeans, and obviously, you know, the crude oil complex, heating oil, gasoline down as well. So kind of interesting. Nickel down 14.1%. You would expect nickel to be a little bit more positive considering aluminum and the like are, but you know, whatever. Sugar down 15.8%. And then you can see crude and Brent crude are down the most as far as commodities over the past year. Kind of fascinating. Let's move to the next slide. Speaking of things that are up and down, Magnificent Seven, varying degrees this year, right? Like before it was like, oh, they were all up, you know, strong. This year there's been some divergence, if you will. Let's start with the S&P 500. That's up 4.2% year to date. Meta, 23.3%. Microsoft, 17.2%. Microsoft's, did it touch 500 yet? It's going to print 500 any second here. I don't think it did today, but Microsoft has been really strong more recently. High of 498.03. NVIDIA, 15.7%. NVIDIA had been really quiet until like yesterday, and then it just kind of started taking off more. You could see Amazon, though. Amazon's down 1.6%, so been very quiet recently. I mean, do you play, you know, Amazon and Google? And, well, you know, obviously Google's been kind of weighed down from antitrust stuff, right? Tesla, you know, we all know what's been going on with Tesla more recently. Tesla's down 18.7% on the year. Apple down 20.2% on the year. Apple's obviously been very weak. Tesla's been very weak. Google sort of has an overhang. I guess Tesla has a weird overhang in a way, but the robotaxi thing seems to be sort of, you know, has pushed the stock higher. There's been a lot of things about that. And Tesla is one I've been interested about. Long term, in a long term account, I am long Tesla right now. I find it interesting, and the same thing with Apple. Those are two that I'm long in a long term account. No Meta, Microsoft, or NVIDIA. Well, I still have an NVIDIA position. NVIDIA is one of those long term ones I got, and this is again a long term account. I got those. Amazon, nothing. Google, I think you should be a little nervous about the overhang in Google. I think if the antitrust thing lifts, I think you could see the stock completely take off. But again, that's your bet, right? Like if you're trying to get long Google, you got to just wait for that smoke to clear. It might be a while. Meta's just been strong. Even remember when Meta just had different issues going on and, you know, what was going to happen and, you know, the metaverse and all these other things. And it's continued to power through. But yeah, varying degrees this year in the Magnificent Seven, if you will. Only 3 are positive on the year. Let's move to the next slide. Here is the forward curve for when you're looking at Fed funds rate, basically. So let me make sure. Is this exact? This is what I want to show, right? ZQ, right? This is based off of, yeah, exactly. Yeah, Fed funds rate. So you can see we started at June. Obviously, June and July are not expected to change any. That's why that's 4.33%, right? I mean, you think about 4.25 to 4.5. That's basically 4.33%. August, obviously, there's no meeting. And then September, right now, forecasting for a cut in September, if you will, which, that's been sort of thrown around more recently, if you've noticed. There's been that idea. These are the meetings. You can see, obviously, July is the meeting. There's no expected change in July with the light blue there. Purple is September, 4.175. Again, possibly a cut coming in September. October possibly stays. It's unsure whether that stays the same or if there's, I think the cut is more, the cut is felt more than. Again, I don't think that's forecasting a cut. It's forecasting basically a cut either September or October, essentially, is what I read this as. Then November, not much of a change. And then December. So that's why you could possibly see 2 cuts, 50 basis points between now and the end of the year. That's what market is telling us. And as you can see, going and from left to right essentially is decreasing rates, as if you will, right? So as this, the way you do this is essentially you take the number of the dot plot and just subtract it from 100, and that's your effective rate for that particular time period. So forecasting 2 cuts until the end of the year, I guess, is something you can possibly hold your hat on. If we don't get those, does the market have a temper tantrum? It's a real question. Let's move to the last slide. Earnings, Nike, core PCE index on Friday. Don't expect the market to move on it at all. End of the quarter is on Monday. Yeah, and then things possibly change after that. Who knows if July comes like a lion or like a lamb. Number of S&P 500 stocks above the 50-day moving average. Over 69% of issues are above the 50-day moving average. That's a good, healthy market right there. Let's move to the platform. What has happened more recently? First of all, 6,200 in the S&P 500 futures. How about it? That's the, let's see, /ES. Yeah, I mean, that would make for 6191, definitely is all-time highs at this point. I have talked about this a lot. I made changes today. So I had been long. Is this all? And this is the anatomy of a trade, right? Like, this is how things start out. Let's see here if it shows it in my trees. I started out on May 13th, and that was the change in sentiment for me. Let's see where May 13 is. Let's see, /NQ. May 13. Yeah, it's right here. After, I think this was a CPI day, big move in the market to the upside, because up until that point, it was like, you can just forget all of this to the right. Right here, May 9th, it's like this market is bouncing back, but it's going to take some time, and it needs to take out this March 26 high in NASDAQ, in the case of that, 20,500. And we were clinging to life here, right around 20,000, 100 to 200. We were clinging to life. Really didn't know what was going to happen. And then I think this was, I don't remember what happened on this date. Some data point came out heading into, it might have been heading into a Fed meeting, I think, or something like that. And things changed, and markets bounced. We cleared out that high. We started clearing out more highs. And it was on the 13th where I think I was, sort of along this line, but during my therapy session with Chris Vecchio and Futures Power Hour, I think we both came to the decision that markets might be heading towards all-time highs, maybe by the end of the quarter. It seemed like it. And so that's where this position came into play, where now I got to go back to /NQ, where I got long a 23,500 call spread in the NASDAQ. And held that for a month, dealing with the swings, ups and downs, and decided to roll it to the July 11th expiration on June 10th. Rolled it out to July. I wanted to give it some more time. it would have been, in hindsight, that was a really good decision because, again, I would have, I don't think that same call spread would have the same value for the expiration, considering, I mean, on Monday, this is going to expire. We're up, but we're not at 23,000. So a lot of this thing is still extrinsic value. And then on, I think on the 19th, a little bit later, I decided to roll that out to the 31st because, why not give it a little bit more time? And so that has been the position. And then I think we had a down day on the 30th. So whenever May 30th was, on this particular day, I think we had dropped down here, and I decided to buy another. And so I bought another. I had the July 18, 23,000, 23,500. So if you're paying attention, I had the July 18, and I had this call spread, the 23,025, and then I had the July 31st, 23,000 and 23,500. And that's basically what I've been rocking with for a while. Held that, and I had both of those, and really benefited over the last several moves and markets here. And now we are where we are, 22, essentially 600, and the September contract of the NASDAQ. And today, I decided to close out the July 18 one. So I had, just earlier today, I had this on, right? I've been long this for a while. I had this on, close it out, and I still have this one on, right? And then I also had a short MNQ against this. When it touched 22,000, I sold a short MNQ. Just in case, there's been a lot of ebbs and flows in this market. I sold that against it. That was basically, I had that short MNQ on for free because, again, I got long 2 contracts. The system in here knows that I'm long that, and I'm essentially hedging it, right? Today, I closed out the short MNQ, and I closed out the July 18 call spread. I still have the 1 call spread on. I have no hedge against it. So now I'm just long this NQ in July 31, so the end of the month. And I parlayed that into a Russell 2000 call spread. I just feel like, Russell 2000 is, when I looked today at performance on the year, the Dow was positive, the NASDAQ's positive, S&P is positive. The only one that's not positive is the Russell. And the Russell's chart actually looks pretty decent nowadays, right? Like a lot of times this thing is really messy, really noisy. It looks like it's on the verge of a possible breakout. And at what point it could break out to 2,200 and beyond, maybe 2,300. And so I decided to get a little bullish on it, give it some time, go 64 days, and get long the 2,300, 2,400 call spread. I like that. It's less money. It's at least 3 times less money than what I was utilizing in the June 18 NASDAQ call spread more recently. So it's a lot cheaper. And I think that's kind of where it is, where I'm holding on to now. So that's the thing. I am not going to change it. Oh, okay, Nippon is the formal way of pronouncing the native name of Japan. See, I knew it was something. There you go, guys. Nippon is Japan. I thought so. I figured you guys would know. You guys did, right? So yeah, I just want to explain all that trade. Now, rolled out of NASDAQ, into Russell 2000, and that's what we're doing. I'm glad you reminded me. I almost forgot. Got all talk about trades. Nike, what's the trade in here? I'm kind of bullish in here, man. And I feel like if it's going to take off, it's going to really take off. I'll be honest with you, these calls are kind of cheap. Is this a situation where I just buy some calls? $400 worth of exposure in Nike. I feel like, I don't know. I wish it wasn't up 2% today. Like sometimes when the stock is up like 2.5% ahead of earnings, people are trying to buy it and all of a sudden it falls. It goes down to 60. I am worried. Do I want $400 of exposure? I don't know if I want 400. 300. See, this is one where I feel like it could explode so strong that I don't necessarily know if a calendar call spread does the trick. And I also don't want to be long calls and further up expiration. I tell you what I'm going to do. I think this could be a longer term play. Let's see. How does that work? Oh, God. I'm thinking a one-day $5 wide call spread. That's what you're thinking? Yeah, you're thinking of selling. I want to get long. And Max, I don't love this. This is a 50-50 shot. Essentially. You know what I want to do? I want to do a diagonal. That's what I want to do. I want to do the 60 strike diagonal. That's implying $64. And I'd like to sell this expiration. This doesn't do much, though. God, these 70s really have no value here. This is a $10 wide call spread buying for 4. Max profit here is $5.98. God, this is not a. I do want to do a. You know what? I might go out to August. $5. What can I sell July for? God, these aren't great neither. Oh, jeez. Yeah, I think the diagonal is the way to go. I wish I could get a little bit more on the upside here, but I can't get as much as I'd love. I think that's kind of what I'm going to do here, though. Long the July 1860, short this. I think this is what we're going to do. We're going to try to get that off. Because and then again, this is just playing from the bullish standpoint. I don't know anything. Nobody knows anything as far as direction. But I think Nike has been beat down. I think everybody's expecting complete carnage. And so I'm just trying to play a little contrarian here, and that's the move I'm going to make. Folks, thanks for watching the show. As always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody. Well, it's a good day, and it's a good day for one reason: Palladium. The market's up across the board, NQ, RTY, ES, all up. But I had one position that has just dwarfed any problems today, which is Palladium. The funny thing is that I'd never traded anything to do with Palladium in my entire long life until this week. And it occurred to me over the weekend that, hey, it's looking kind of interesting. And I looked at this chart and this ratio and that ratio. It's like, well, perma-bear though I am, I'm going to give this a shot. So I started buying on Monday. And yesterday morning, old paper hands kicked in. I was looking, it's like, oh, it's down. I should just stick to being a bear. Maybe I should get out. But, I looked at the charts again. It's like, you know what? Not only am I going to not sell, but I'm going to buy more because this looks really good long term. So just, toughen up, replacing the phrase I was thinking of, and just get more and stick to the basics. Nice clean stop loss, use logic and not emotion. And so far that's worked out because yesterday morning when things looked kind of grim, it started strengthening and it went up, 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 had a good day. And then over the course of last night, started weakening again somewhat. And this morning, it really got its sea legs under it, and it just been flying higher. And the cool thing is gold's actually down right now by a little bit. The gold futures are down just a touch. Palladium up almost 8% on the day. So we'll talk about that more in a bit. but that was by far my biggest position, and I've trimmed back because it was way too big. But yeah, hats off to Palladium, saved the day. So let's talk about other stuff, and we'll get back to Palladium in a bit. Here's the spider, lifetime high. That's a term I didn't think I'd have to be using anymore, but here we are. Same old, same old. So we're going to say goodbye to, actually, we won't say goodbye. We'll just change his color to like cyan or something just to mark the former prior high. But we've blown past that. We're at a lifetime high now on the spider. EEM, emerging markets, continue to strengthen. That's up as well. IWM. Now, I got to tell you, I have closed the book on this for now, and here's why. This thing just cannot seem to break down, and it's been playing hopscotch at 2150 on the fib for weeks now. It's driving me insane. And with the strength we're seeing, it is way too chancy for me to just hang on to this short position and like keep my fingers crossed. It just keeps defying gravity. 2150 again was the key level. Yesterday was a nice down day. We of course found support at 2150, and then it has been climbing ever since. And so we are a good 35 points above that now. And I've kind of had enough for the moment. So the account where I had that, all cash now, just forget it. I'm just going to sit back and wait. Because if we push above this level in IWM, that could really provide some rocket fuel to the bulls. I do not want to be on the wrong side of that. I don't be on any side of that. So I am out on that one. No small caps for me for the time being. Nothing's broken yet, but it is just too close for comfort on those levels and stops and so forth. The cubes, as with the spiders, lifetime high on this. The tech earnings of any consequence was last night was Micron, which is actually down right now. Earnings came out last night. It spiked big time higher and then started selling off, and it fell and fell and fell, and we're down 1 1/3% right now on it. So I actually went and shorted this this morning now that we were past the earnings risk, because semiconductors are very lofty now. AMD, another example, which I'm also short as of today, it's just been a straight rocket ship up, and AMD's down a little bit, even with this very green market we've got. NVIDIA, which I do not trade, I just tend to stay away from, also up. I mean, it's up, the others were down, but it's up to a lifetime high. Not exactly explosive here. It's up a fraction of a percent, just above this level. We'll see. Tomorrow, I think tomorrow we've got the PCE coming out before the open. And I don't know if this matters much, but the Russell 2000 rebalancing takes place by end of day tomorrow. So probably some sloshing around there. But just to show the strength in a different fashion, here's the leveraged long semiconductors chart. And as you can see, we've pushed well into this topping pattern. And this is up today about 2.5% on SOXL. Some of the standouts in NASDAQ land, familiar names to everybody. Mr. Softy here, Microsoft, pushing $500 a share, new lifetime high. And just to drive the point home, this has gone, April 7 was the bottom. It went from 344 to almost 500. That's about a 50% gain.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
All right, I'm back. I'm told that I went to Marcel Marceau on you about half a minute ago, so I'm going to go back. I'm not going to start at the top of the show again. We're just going to go back a couple of symbols. I want to talk about precious metals a bit. Okay, so here we go. And forgive me if there's any repetition here, but I don't know exactly when I went mute. So as I was saying, platinum, a different metal than palladium, which I was yakking about earlier, spent years just grinding around doing not much of anything. And it did so even while gold put on its superhero costume and went blasting to the heavens. And platinum and palladium, nothing, just nothing. But early this month, for whatever reason, and the reason doesn't really matter, it decided to eat its Wheaties, and it got strong in a big hurry. So it was ambling down here like sub 1,000, and then whoosh, up it went. And we have put about 40% plus, almost 50% onto this sucker over the span of about a month. Now that's platinum. Now, I did not participate in that. I sort of watched jealously from a distance as this thing released all that pent-up energy. But it made an impression. And the PPLT is a physical platinum ETF, which of course enjoyed the same explosive move after this big multi-year base. So that's platinum. So when I was thinking about palladium this weekend, it seemed to me that maybe this will mimic that behavior too, because palladium also has been a long time in the doldrums. And it looks very choppy. I'll change this to a line chart because the data is so thin. Most of these bars are just dots. But it just kind of banged around here, as with platinum, around 1,000, just not going anywhere, not really having any kind of direction, just a mess. And it was still a mess early this week. But the past couple of days have given it some real hope. And so what we have here is some acceleration, and we haven't completed the pattern yet, but it is working on this bullish base, which if it completes could really produce a nice long multi-year bull market on this, as it did here and as it did here. Looking at this chart going back for decades, I don't really see any instance of a base like this rolling over and flopping. There's only a couple of prior samples. It's not a huge sample set, but it's not bad. So far, so good on this. I like the looks of this. And so that's why I decided it was time to get into PALL. And here we have this instance of PAL basing. The data doesn't go back quite that far as the other one I showed you. And then presently we're here. Now, nice as it is, I don't tend to hold on to this forever and just keep my fingers crossed. For this particular position, I do have a target price of something like 109 to 110, something around there. This to me is kind of the limit. And the measured move on this is actually a skosh over 109. So I trimmed about 40% today, took profits on about 40%, but I'm hanging on to the rest, even if we have some diminishment here and there, and holding out for that 109-ish type target. And longer, I mean, I'd love for it to fall after that and get in again, et cetera. So anyway, good trade going well. More broadly, the precious metals miners continue to behave themselves nicely. They hit that bottom, sealed the gap up a couple of days ago, so that's held nicely. And a couple of mine, I've mentioned this miner before. It's actually down a little bit right now, but I still do like the looks of DRD as a bullish play as an individual miner. I mentioned Quantum QUBT as a kind of high risk short play. I confess I almost shorted a little bit just because, and then a warning came up, like 29% borrow rate. It's like, okay, forget it. You talked me out of it. So it's hard to borrow. But still just wanted to mention it's an interesting chart. Other items that I am short, because I'm not in Cupid, is Costco, which is slipping a little bit. Microchip, which is down about a full percent right now. Carvana, which is down over 2.5%. I think peaked a little earlier this week, like so. And even Shopify's down a little bit more than 0.5%. So I'm still, especially since I closed out the IWM, still pretty light. The only aggressive position, if you want to call it that, is the aforementioned Palladium. So just in sum, looking at roll from the Russell 2000, just to be clear, I've not completely given up on this. I have not. The analog is still intact. No core levels have been violated. It's still a perfectly good chart. But I don't want to see what happens over the next day or so. And just hope it goes better because it's just very hoofy. This 2150 that I keep mentioning, it's just acting as support or resistance, and it alternates. So one day up, one day down, one day up, one day. It's just nuts. So I just want to make sure that we do not just go ripping above the CPI high, which is that dash red line. So I'm out of that for now. Okay. Well, hopefully you heard the rest of the show, and I'm still talking now, so I will get out of here, and we'll close out the week tomorrow. But thank you as always, and I'll see you then. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap. Yeah, that's gonna... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it. Not from there, you won't.
Oh no, oh God.
Spiders don't bother me at all. Just the big ones. No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination.
I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend. Another grind fest of a session. E-mini S&P 500 futures up 45 here. I wanted to pull up the continuous chart. If you type in the $/ES, that strings all your contracts together. I've got the volume on the subgraph down here. Look at this, nothing of a bar. 750,000 contracts traded. Yesterday was a low volume day. On Tuesday was a low volume day. Today is looking like it's going to be even lower. A pretty wild low volume day here. NASDAQ up 220. You've got the Dow up 377 and the Russell up 30. The Russell actually the strongest of the group, up over almost 1.5%, just under 1.5%. Oil chopping around here, /CL 65.42 up 50 cents. If you look at oil volatility, OVX.CGI, it has just been collapsing down to 42 and change. We got as high as 75. Volatility futures, 1885. You've got the VIX in a 16 handle, 1639. Bonds actually rallying here, up 12 ticks. Gold and silver, who cares about them? Gold's basically unchanged. Silver up 47 cents. And Bitcoin has been chopping around the 107 to 108 range. Has anything stood out to you today besides just the bid higher in pretty much anything you look at?
Yeah, it's been a crazy day. We're basically 7 points from all-time highs in SPX.
Yep.
Whether we hit that or not today is anyone's guess.
You got it.
Feels like it's going to happen.
It got very close. We got to 61.44 was the high, 61.44.66. The 52-week high, the all-time high, 61.47.43. So we're just 3 ticks away from that all-time high.
Yeah.
If not today, tomorrow, no doubt, right?
It's crazy. What's crazier, I think, is the fact that Coinbase is up $100 in a week.
Yes, that is
just nutty.
Another interesting chart there.
Yeah. And then Enphase. Like, Enphase is the weirdest chart I think I've seen in quite some time.
Just gaps everywhere.
I mean, they had the 20% sell-off that climbed right back to where they sold off from. Then they had another 20% sell-off, and we've gapped higher back to almost where they sold off. It's like, what is it? Are we selling off, or are we rallying it? But I'm glad that it's recovering here. I've got a inverted strangle in Enphase, but yeah, I mean, this is a very strong market on low volume. So whatever that means to you.
Well, that's usually bullish, I would say.
Yeah.
Low volume is typically attributed to bull markets, or at least periods of time in the summer.
Yeah.
That's
clustering of low volatility.
Yes, no doubt. As Mike mentioned, Enphase, one of the biggest movers to the upside. You also have Coinbase in there. FCX, a little play on copper. SMCI is in there. Dell. It's certainly some of the higher beta names when I'm just looking at this list. It's not exactly your Nvidias, which is having a great day. Up another 90 cents. It was up about $2 at one point today. Meta, another one that's been really, really strong. Amazon kind of breaking out back to the high end of where it's been trading. On the other side, you've got like Apple that seems to be just stuck in the mud at 200. Google has been a little bit stronger, but those aren't really the names that are exploding higher. It's kind of the high beta stuff. On the downside, It's really kind of nothing all that interesting. CMG is in there. You have Micron after earnings, which basically was a nothing burger here. Walmart, down 1%. It's a pretty strong market, it seems like. But it's a lot of the high flying names, the high beta stuff. That is really the stuff moving. I see somebody mentioning Circle as well. Circle up like $20 or $30 at one point today. It's only up 12 now. Definitely some volatility underneath the surface with individual names versus the equity markets themselves.
Even Nike's rallying 2.5%.
Earnings after the close today. You got a position. You got a lean either way. I know you were kind of unsure.
Very scared.
I'll tell you what I did. You might be interested in this.
What you got?
I closed out of the naked put that I had. We sold it. Let me get my other. So we sold the naked put 2 days ago for $1.44. I think this might have been. Was it not for what's your assumption? Maybe no. That would be Tuesday.
Yeah, I think it was. I think you did this on your own.
Yeah,
if I'm not mistaken.
Well, I sold the 55 strike in August. I bought that back. I sold it at $1.44. It's trading at $1.10 right now. I closed it at $1.11. So I took a couple pennies out of that, 30, 40 cents. I didn't want the downside risk. You spooked me a little bit with your China tariff stuff, which is fair. So I rolled into a call diagonal spread. I did the 62.5 in August. And then I went to the June expiration, 184% implied volatility. Very, very high. It's obviously going to be high going into earnings, but Nike is not typically your super high volatility stock. I sold the 65 strike against it. I did it at 257, so I'm out about 3 pennies right now based on the bid-ask spread, basically. But this is a trade I think is kind of interesting to take some of that downside risk off the table and still participate in the upside.
Yeah, I mean, it's trading around multi-year lows, multi-year lows.
Yes.
Implied volatility is IV rank is 50, but that's being driven by the implied volatility in the earnings cycles. 43% implied volatility in August is really not that much, which leans me towards. I mean, I like the call diagonal or put diagonal if you want to play it directionally. I think there's enough premium to sell in the earnings cycle, and the premium in August is cheap.
Yeah.
Relative to the stock price. So, yeah, you can get into a 5-point wide or 6 or 7-point wide diagonal for less than $500. So that's probably where I'd lean. If you're bullish or bearish, just selling the expected move short option or around there, and then buying the at the money option in August.
Yeah.
But I don't know what I don't have like a lean. Usually it's pretty easy for me to pick a direction because it's almost always to the upside. But Nike, I don't know.
I feel you.
Kind of spooked.
I do feel like the bad news has been baked into a lot of stocks. Sure. I mean, you had Micron basically went nowhere. It had kind of good earnings. FedEx was to the downside, but it kind of rallied back. Nike at a near 52-week low, or $5 or $6 from the 52-week low, which is a multi-year low. I think when we looked at it going back to 2018, I feel like your asymmetry of risk is mostly to the upside, meaning that there's only so much more downside if you're going to play it for new lows, multi-year lows. That's one thing, but I feel like the bad news and the pain is already baked into it. See some sort of relief rally there.
Yeah.
So
I just pinned the link to Fast Market.
Yes.
Top of the YouTube chat, tastylive.com/fast market if you're going about it the manual way. But yeah, pitch us some trade ideas. When you click the link, you'll see Tom and Tony's face, but it is us tomorrow.
Yes.
We are still taking over for the week. So yeah, pitch us some trade ideas. I've got plenty of cash on the side.
Keep them liquid.
Yeah.
Yeah, give us some stuff that we haven't been trading, some new ideas.
Yeah. But yeah, this market has been grinding higher. I've been removing a lot of risk where I can. So just like closing small winners, closing small losers, closing scratches. So I've got plenty of capital on the sidelines and not too much risk in the active positions I have. So
Yes.
Give us some new trade ideas for tomorrow morning.
Yes, and we did do a couple trade ideas this morning as well with trades from the research team. I did and these are on the follow page if you haven't checked them out yet. I did the Shopify trade from Shark. I got the Pepsi trade from Dr. Data. I did a little bit of a different trade in First Solar from GAD. You did the Coinbase trade. You did the GDX trade that came from Julia. So got a couple good, interesting ideas from the team today. So that was a nice little addition there. But I got a lot of capital ready to rock. And if you got something with high implied volatility that I haven't found because there's slim pickings out there, please notify us.
Have you looked at the SPX guesses today? Do you have any idea?
I actually did. So we have Guess the Market, the winner, coming up on Monday. Those guesses are already in. You can't put any guesses in. We do those every December. The winner will be announced on the close on Monday. Tom and Tony will have a nice little time with that. But there are a lot. This is like the middle of our distribution, if you remember. And I'll have that slide tomorrow. We can take a look at it. I'll give it to the team so we can look at it in the morning. But our distribution is centered right around like 61 to 6,200 for pretty much the whole year. That's like the peak of our normal distribution. So we have a lot of people in the running for the money. Hopefully it's not on any of the round numbers that are close here of like, 6,100, 6,150, 6,200, because we got a lot of people there, but we got a lot of people with fun guesses close by. So it should be a really interesting one. Because the first quarter was a tail event.
Yeah.
So there was only,
handful of people.
Yeah, and between guesses, there were $10, $20, $30 of room. This one, there's going to be like dollars. So you're going to have some.
It's going to come down to the literal second.
Yeah.
Last second of the closing price.
And at the close, there is a little bit of a runoff there as everything settles. So it'll certainly be a fun one here.
Love it.
Yes.
Yeah, I mean, what a bore of a market here. 27-point expected move for tomorrow in SPX. So, I mean, they're basically writing off tomorrow in terms of volatility and trade action, but you never know. I've seen crazy things happen on days like that. But yeah, Nike earnings after the close for next week. Not anything that I'm really honed in on.
For earnings, talking?
Earnings, yeah. I mean, we're basically done.
Yeah.
With the earnings season, so.
Yeah. And next week is a short week.
Yeah. July
4th, markets closed on Friday.
Yep.
So it is another short week. I will say one thing that I was looking at today that somebody brought to my attention earlier that we talked about with Victor, the VIX one day, it is elevated now, and it does kind of go to highs at the close because of the way it's structured. So it's structured with 0 and 1 day expiration. So it includes today into tomorrow, and today as the time passes, volatility comes out of those options and those tail options. So it does get bid into the close typically in the VIX one day as the calculation starts to move down the curve. But it was a 7 earlier this morning. It was like 780, I think, was the low of the session.
It was
751. A sub 10 one day VIX.
Can't have it.
It's a pretty rare occurrence. You don't get that all the time. But that's what happens in summer markets, all-time highs, grinding.
What's crazy to me is that still Apple cannot catch a bid. Even in a week like this week, Apple has not moved. So, and we get this question all the time, like, where can I find bullish opportunities if I want to be bullish on a tech stock that hasn't already gone to the moon? There are still stocks that have not participated.
Oh, but they continue to not participate.
Yeah.
Apple has been sitting at 200 for, since the start of the sell-off.
Yeah.
They need to do like a acquisition or something. They
Yeah.
need to buy something. Just spin some positive news.
Something. I mean, even Google's rallying this week.
Yes.
It's over 10 points, almost 15 points. Microsoft's about to hit 500 for the first time ever.
There you go. Microsoft. 497.12. An IV rank of 6.
What a world. After it erased 2 years of trade action in April, it has gone up 150 points in 2 months.
The day the V bottom doesn't work is going to be,
We thought the V bottom was over, and boy, were we wrong. Maybe it'll happen. Maybe it'll come back down, but what a reversal we've seen over the last couple of months. Crazy.
Yeah.
Oil had a huge intraday range, huge volatility crush. Similar story there. We're just seeing sideways chop now. Do you think we break out in either direction, or is this it?
No, I
just
think
the fake out and then the crush.
I think that was it. I mean, anything you did in oil, if you were able to hold through the craziness, and that all comes down to position sizing. Have had a couple emails about oil specifically, but if you were able to hold through it or even add 2 positions, you have gotten paid. If not today, it came in yesterday and the day before. So I think a lot of people are probably closing out of oil positions now, just given the move that has happened. And the move in volatility is really the kicker.
Yeah.
E-mini's up 46. You think we get a 62 handle? 6,200 on the E-minis?
I don't see why not. I mean,
SPX.
We are at
10 from the highs.
We are at the 1050 or the 250 mark.
Yes.
Which could bring a little buy button action here. But yeah, we're creeping higher in SPX, 6140.
Mm-hmm.
Getting closer to 6141. There's 6141. So about 5 or 6 points away from all-time highs in SPX.
Yes.
Who would have thought?
It was easy. Just buy the dip.
We have been conditioned to do just that.
Yes.
How are your Tasty FX positions?
Oh, God, I haven't looked at them, but the dollar has been just getting myrtleized.
I know.
And continues to get killed. The dollar chart is one of the ugliest I've seen in quite a long time. Dollar index near the lows. My Tasty FX positions are not going the way I would like them to go, but they're small. You know, you can see it on the left side here. Go to the Tasty FX button here, pull up the trade page. You can do all your trading from here. Charts are really awesome. They go back a ton.
Yeah.
I think they go back like, what do
They
they have,
go
like
back.
20 years, 30 years?
Yeah, it's a big number.
It's a big number.
You can just zoom out on that chart and you can get all the way back. So yeah, the euro dollar all the way back to 1990.
Yeah, you want to see what it was doing when I was born?
I can't even see. Well, we actually are pretty close to where I was born.
In May of 90, 125 was the high. Okay, there's some room to run there to get back to that.
Unfortunately, I'm pre-chart.
Ooh.
I'm pre.
That's really telling. That is really, really telling, Mike.
I am pre-chart.
Yes.
So, yeah, but I really do like the ability to go back that far because then you can see true price extremes.
Mm-hmm.
So like one of the positions I'm in, the dollar shekel.
Yes.
Along the dollar shekel, and if you scroll all the way back to 2023, we're sitting around that level.
Mm-hmm.
But there was another one. It might have been the dollar franc that had even more of an aggressive. Yeah, there you go.
Yeah,
so the dollar franc. The dollar franc is at a 10-year price extreme. Last time we got down to this level was in 2015. So we are setting new decade lows in the dollar franc.
61.92 on the E-minis. Here we go, baby.
Yeah,
Got to have a face ripper into the close, right?
I mean, they're definitely pinning 6,200 in the E-mini.
Yeah, it's got to. I mean, I think
narrative is alive and well. Pin the round numbers.
Yes.
Push us to all-time highs, and see where we go from there.
Are we going to get to bring in the new all-time highs in SPX? 61.44.
Do we have the horn? Do we have the horn sound on the side?
I think I do, actually.
Because we got 2 points until we hit it. Maybe a celebration.
I don't know if they...
Maybe a clap.
Oh, here we go. No, that's the one.
Wrong. Right idea, wrong.
There we go. That's that. I could do that.
Yeah, that works. Yeah, we are treading water at 61.45 in SPX.
Yes.
There you go. E-minis up 50.
NASDAQ up 230. Russell catching a bid. 1.5%. NVIDIA 155. It's tough to like mess around in here just because you have no volatility. It's like you got to be pretty directional.
Yeah, these are the times where it's very hard to be patient.
Yes.
Because you want to be doing stuff. If you're bullish, you're watching positions come in nicely. But if you're looking for new positions, it's just really hard to put on new stuff, even if it's a bullish trade.
Mm-hmm.
Because like you look at some of these stocks, it's just like it's hard to buy these stocks at these crazy high levels, especially, and they might not be crazy high. You might think they're going even higher, but the rate at which they've recovered has been dramatic. So like Microsoft's chart stands out.
Yeah.
Micron's chart stands out, even though they had a non-event for earnings, the stock has doubled.
Yeah.
From April's low. So like, how do you buy it here without waiting for a sell-off? But what if you don't get the sell-off? That's why this is like a weird time. But yeah,
trading's tough sometimes.
This is true.
You know,
that's why you got to give us your trade ideas. tastylive.com/fastmarket for tomorrow, and we will hammer those trades. Those are actually, we've done well with those trades.
They've been great.
Yeah.
They've been great.
I think we're at like a 70-80% win rate with those.
Certainly a high probability.
Yeah.
No doubt. Yep.
Anywho, couple minutes left here.
E-minis up 48. You got NASDAQ up 213. Nothing going on. I see some peeps YOLOing in the IBIT 80 strike calls that we've been talking about with volatility this low.
Yeah, I mean,
I think Ryan has got basically the whole office in these. So when you see,
if you look at his portfolio, it's likely just long calls all the way through the strike plan.
Yeah, when you see the 293 contracts traded on the volume here, at least half of those are in this office. So yeah, it's an interesting play for a vol play.
But yeah, even if you're a selling premium in there, I've been selling premium there all year, and it's been a magnificent trade.
Yeah.
I've got the 60-70 strangle on in August. Total credit received through all of the rolls for the year is 1921. So I have 20 strike points beyond the 60 and 70 strikes for my break even. So I'm down at 40 and up at 90 for my break evens in August. So we're looking good there. This is going to be one of the better trades of the year that we've done. And unless something crazy happens, but even if it does, I'll still be able to move the strikes. I've collected so much right now that it's been really, really nice. So hopefully it continues.
Yeah, we're certainly not at peak froth either, because it's very mixed in the chat right now. We have some people saying we have to start buying calls for the market to go down, but then we have other people saying like, just buy a couple E-mini futures, wake up in August, take your money and run. So I think we can still continue higher here. What's this about? Option crash course. What do we got here?
It's a little thing at the Sinclair in Boston, July 13th with Dr. Jim. Catch a Red Sox game before and after. I'm sure he's going.
Yeah, we're gonna make him take 5 people.
Perfect.
Yeah, and sign them up for that.
tastylive.com/events. Go sign up for free. It's going to be a grand old time.
Yes.
And yeah,
we just got our 6,200. 6,200 on the dot is currently the high in the E-minis on the session.
Oh, get ready to hammer that horn. We're almost there.
SPX. We need another 30 cents. Come on. Think we get it?
I think we'll get it.
No, they're going to torture us here.
Do they care more about the 6,200 pin or the new high in SPX? That's the question.
Both have to happen. It's a given.
Saw a question in the YouTube chat. Last one here. Would you sell IBIT calls against the leap or just leave it? I think you leave the leap and then you wait for the rally if it happens.
Yeah.
Because then you get the increase in the price, you get increase in implied volatility if it happens dramatically, and then you can sell a far out of the money call for a lot more value than you can right now.
Mm-hmm.
Because if implied volatility is going to increase in IBIT to the upside, it's going to be from a big move to the upside. So I would wait and then sell something against it. And then if it chops around, you'll see that premium deflate. Or if it doesn't, it keeps ripping higher, it's not going to matter because you'll be in a profitable trade anyways.
Going into the close here, we got about a minute left until the close. E-minis up 51, 2 or 3 ticks off the highs now. NASDAQ up 218. You got the Dow up 430 and the Russell up 35. Oils remained steady here at 65.5-ish. Volatility futures near the lows have not really moved all that much here today, but 1890 here on the vol futures. Bonds up 17 ticks, so you got a 115 handle. Should make Tom happy. If he's not soaking his feet in the water right now. You got gold up $1, silver up 47 cents, Bitcoin basically unchanged here, $300. Upside for Nike, hopefully, for us, for me.
How could it go down?
With this market. If it goes down,
then you sell all of it.
Yeah, you sell it, never trade it again. If you got something that's not up today, get rid of it. It's over. It's done.
Yeah, Nike will be interesting. Pretty decent expected move relative to the stock price. Selling off into the close.
Damn, we're not going to get. We were. Oh wait. Oh no. We were 1 point on SPX. 1 point, just under 1 point, like 90 cents.
There's always tomorrow.
Damn, that would have been nice. That would have been nice today. It's okay. There's our bell. E-minis at 61.95. SPX 61.41. I guess we'll have to wait. About 8 more hours until we do this again, or to 10 more hours until we start this again for tomorrow.
The exact hour, it's tough to do that math, but yeah, it's somewhere north of 12 hours.
12 hours.
Yeah.
13, 14 hours, just including our wake up.
Yeah. But yeah, it's been a fun week.
It has.
We're going to do it again tomorrow morning, so join us bright and early, 7 a.m. And I've got my eye on Nike. Nothing's happening right now, but
tastylive.com fast market. Give us some trade ideas. We're going to take a 90-second break, come back with the boys for overtime. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Can we get much higher? It's Thursday, June 26th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago, taking you through the rest of this trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform on tastylive.com, welcome. Thank you for joining us. Come over to YouTube. Tell us what you think of this action, this listless melt up in markets, low volumes, low volatility to find the day. The S&P 500, does it clear 1 million contracts traded? No, sir, or ma'am, whoever's listening. But we do see a push here in the triple Qs and NDX, 2 fresh all-time highs. NASDAQ futures barely a few hundred points away. The S&P hits a fresh June high as well. We see here now it's at its highest level since that February 21st PMI growth scare, Ilya. As you make your way around the market, bonds, they are trading up, and they get a little bit of a kick in the pants today, treasuries across the curve, when the Senate parliamentarian comes out and says, you can't cut Medicaid the way that you want to. So maybe the one big, beautiful bill, as they're calling it, it's not going to move forward in this deficit form and fashion that we thought. Okay, gold's not so strong, but silver and copper explode to the upside. Oil has a strong day too here, so maybe there's a growth flavor to this market today. Currency is bad for the dollar, which admittedly, I'm out of any long dollar positions now in the euro as a result of this. But we have a lot to discuss. We have new highs here coming around the corner. We have ridiculous headlines for sentiment checks, least of which, of course, our resident bear has abandoned his bearish positions. Ilya, apparently, where I sent you the snippet earlier. We're using the blockchain to design shoes in space now. Okay, Ilya, what do we make of this, though? Volume is low. Volatility is absent. It's an 11.5 IVR on the chart right now. What's doing here?
It's very tough to fight a market like this, and I stopped 2 days ago. When we breached the swing high from earlier in June, that U.S. CPI data high, I picked up and left at that point. I mean, obviously, I've been taking on the short side with very small positions, very risk defined, only verticals and only in the ETFs to keep things nice and small and keep risk very, very, very constrained. But even so, you're not going to argue with the price action here. And when we, so certainly I'm not, when you took out that high on the closing basis there, you can see it in the chart, that gray box is at that high, and then you clear that, and so I hung it up right there. I don't think anything has changed for me from a macro perspective, but as ever, if you're right at the wrong time, you're wrong. So I'm not going to sit here and continue to have capital get tied up here. Obviously, these moves don't scream conviction because there's so little volume behind them. We're heading into the July 4th holiday. We've got the July 9th cliffhanger on tariffs that apparently the president says doesn't matter. There's another one shortly thereafter in mid-August. That's the cliffhanger with China. That one probably could matter. But all of those but qualifications don't put any money back into your account if you're short and the price is going up. So I'm not going to fight this thing. I've backed up. My song remains the same, much as it was in the second half of last year. We are operating in a global economy that is dangerously near recession because it has one and only one point of failure. In fact, we're about to get PMI data out of China next week that tell us Europe and China are at standstill, much as they've been over the past 12 months. The only growth that there is U.S. growth. It is a level step down from where it was in the second half of last year, but it is positive. And as long as that doesn't fail, fingers crossed, apparently the markets are okay with pretty much anything. And helpfully, the Fed hasn't started cutting rates. And maybe there's a degree of narrative here saying, well, they've still got all the cutting to do. So if only the economy were to take a step in the wrong direction, here they come. They want to be cutting. They'll ride to the rescue. Markets, incidentally, think that they're crazy for not cutting already. In fact, you're seeing the dovish divergence in markets building out here, as we've talked about yesterday, Thomas. So I think we're in a situation where I have not been disabused of any of my bearish thinking in sort of macro terms, but in practical terms, I'm hands off until the market tells me it's time.
Thomas, stocks are continuing to run up higher here. When you and I were speaking earlier today, you said that you weren't into chasing at these levels. Why don't you think this is a good idea to latch on and ride the bull wave right now?
Yeah, I mean, I was thinking about getting a position this morning because there's no reason in the market to keep the buying from going, right? The durable goods orders was pretty good. Initial jobless claims didn't send any warning signs. We're focusing on lower rates now, which we saw in the bond market today. Kept predicting that. It was the light volume holding me back. So it's kind of like you said, a melt up. And I just, I feel that itch when I'm trying to go long of maybe I shouldn't do something. So I'm still holding back here. Of course, in retrospect, I mean, getting long yesterday was probably a good thing, of course. But I said if I was looking at something, I was going to take that SMH position. I had a good run in it today, but I just didn't jump on it.
I think that's one of the key features of this market right now. When you look to something like SMH, the rip higher here after a few days of consolidating back at the end of May, or rather the middle of June, excuse me, now running to an all-time high. The sector performance here is really quite strong to quite strong today. Only 3 of the 25 are in the red. Real estate is down by 0.12%. IYR, that's the weakest sector ETF. That's nothing. XLP, consumer staples, that's fine, being a weak one on a day where you have SMH It's charging higher, up 0.73%. But that's not even the most impressive name on the board. I'm more interested in what's happening with the regional banks here. The regional banks are sitting at multi-week highs now. This chart's a bit of a mess. Let's just make a small adjustment and clean this up. It looks like there's somewhat of a ceiling here, right around 60 in KRE. But regional banks may be breaking their downtrend finally. And the Russell has been lagging for a long time. So if regional banks are up, semis are breaking out to new monthly, new quarterly highs, returning to the highest levels that they've seen since last summer. It's just going to be really difficult for bears to get something going in the short term, right? Ilya, if I'm thinking about this as a bear, my point of interest is not in what's happening today or tomorrow, but in the fact that volatility is getting pushed down across the curve the further you go out in time. And if I wanted to express a bearish point of view, I could do so a little bit more cheaply than I could have otherwise. And it wouldn't be through something like selling a call spread up here. Although given how the market is in a low volume, low vol float, you could try to do so if you get the timing right, where if you think it's going to go up like 0.4, 0.5, 0.6% a day, whatever, just go out deep enough. But the play may be to look for some downside protection here. There may be some complacency in this market. Mm-hmm. And before I go into this further, if only to expressly articulate the headline that I shared with you yesterday, and I shared this on Futures Power Hour today, which I don't know if people saw this, but it's worth reading in full for those that aren't the audio. They're visual. Excuse me. They're not audio. Let me read this out loud. A footwear startup is teaming up with 2 space companies to design a shoe in orbit as part of a mission to make artificial intelligence and blockchain less expensive and more eco-friendly than it is on Earth. Orbit's Edge, a company that supports AI and blockchain applications, and Copernic Space, which offers digital marketplaces for space assets, plan to send a solar and battery-powered satellite to space equipped with a computer that will use AI automation to produce a shoe design.
They have all the words in there.
Scintilla brand. The mission is expected to launch on a SpaceX Falcon 9 rocket in early 2026. I have no idea what I just said.
I mean, this is
came out of my mouth.
This is the pets.com Super Bowl ad of stories. I mean, this is the kind of thing you read and you go, wow, remember how Polaroid decided that they needed crypto in their name and their stock actually did bounce no matter how ridiculous of a thing that is? Yeah, there we go. We're designing AI and crypto shoes in space. This is ridiculous, obviously, and is emblematic of the kind of excess of risk appetite that you might be worried about in an environment where this is the year, next year, when you refi all the COVID debt that companies accumulated at basically no interest. The Fed doesn't want to cut rates. The U.S. economy has slowed meaningfully since last year and is the only one that's growing of consequence. Yes, let's design a shoe in space. This is the kind of thing that happens at sentiment tops.
It feels like it, doesn't it?
Yes.
Like Long Island Blockchain Corp.
Can we get an Economist cover? I'd like an Economist cover saying like, la-di-da, all is well. Can we do that? Somebody, should I start to do to the managing editor of The Economist what you do to the Ayatollah and just start to troll her on Twitter?
Well, which, by the way, I just have to send out like a heartfelt appreciation. I did get a direct message last night with someone sharing their trolling of the Ayatollah with me over DMs.
It's a community now.
You know, Team America. Okay. We were talking about a potential bearish position in the S&P 500 today on Futures Power Hour. There are really 2 ways to articulate this view. You could, of course, do the out of the money thing where you go to like the 20 delta. We'll look at, say, like long the 25 delta, short the 20 delta. It's about 100 points wide here. It's a 24% probability of profit, high convexity, basically 6-to-1 on the risk to reward. But what Jamal was kicking around here as just an idea is if we go over to a long put spread that's already in the money, and it gives you basically a coin flip probability of profit, even though the max profit to max loss is tilted in your favor, basically 3-2. Volatility is cheap right now, is my point. Okay, and this market does feel complacent for a variety of reasons. My own outlook here, not that it's been accurate this year, because having just seen the tastylive SPX predictions by quarter, mine was 6,300 for Q1, 6,000 for Q2, 6,300 for Q3, 6,850 or something for Q4. Although, again, I would push back and say at the start of this week, the S&P 500 was at 6,000. So with a week left in the quarter, it was pretty darn close. But I see this as a market that is going to hit that roadblock in August with those China tariffs, right? We have a White House comment today. Carolyn Levitt, the press secretary, says that the July 9th deadline is not critical. We're not looking to extend it, they also said, but it's also not critical. It's because you can't have a world in which you have lower tariff rates on China than you do on all your allies and friends. It just doesn't make any sense. It's illogical. So July 9th isn't anything, but August 12th is. And looking at some option plays with relatively cheap vol on the other side of August 9th for a brief window of market panic, perhaps, as the summer goes into its second half, when liquidity drains and more experienced traders go on vacation to Ibiza or the Hamptons or the Ozarks, wherever. Okay, the junior traders tend to panic. I think that if you're going to be bearish right now, not that I am in particular, because I want to chase this high of being a dumb bull that just buys out of money the calls and watches them print. I missed it so much, Ilya. This needs to be now like risk management, okay? Like, what are we doing to reduce our beta weighted deltas if we're running this market up higher? How can we position so that we're protected from some downside? How can I stay on the bull train with also keeping something in my pocket that if this goes sideways, I at least can get out relatively cleaner? And the cost of that insurance is pretty cheap. So I think this is the primary consideration right now. It's a bull market. We're running to the upside. I'm staying on as long as possible. I want to see 23K print. That's where my long calls are currently situated. But once we start to get up there, looking back to like 22,000, 21,500 at NQ as some safety, I don't think it can hurt us.
It doesn't look like you have a situation here that is going to look for intricate catalysts or kind of high-minded ideas. This thing is either going to hit a sentiment extreme or it isn't. And it's probably going to have to be something very obvious, or, as markets often do, nothing at all, where you just run out of reasons to go higher because everything is in the price and nothing else good is obviously in the speculative window.
Thomas, what's standing in the way of this market? Tomorrow we have PCE. Friday, tomorrow feels like a day to go golfing for most people. End of quarters Monday, non-farm payrolls next Thursday. Thomas, do you care about the non-farm payrolls report next week? Is this something the market is particularly worried about, in your view?
I do, and I think, volume is going to continue to be light tomorrow. I wouldn't expect it just to bounce back on a Friday. So I think people are going to come back next week. We got the NFP a day early for the holiday, so kind of a condensed trading week. On one hand, there's a lot of people away. On the other hand, it's condensed from 5 into 4 days. So perhaps, we could get normal volumes, or it could continue to be light. But the reason I was waiting to get long is I was waiting for some catalyst when it's really just a confluence of factors that have been holding the market back that have now cleared, right? So like Ilya said, we have to hit a sentiment extreme. And until the NFP, we really don't have anything that could come through where it's going to really unhinge this rally. So on one hand, I want to chase because the price action is telling us, we're going higher. On the other hand, I feel like I'm already a little late. And when I get in when I'm a little late and trying to chase, it's worked against me a few times. So for right now, I'm waiting. But next week, I think I'll have to pick a strategy to play this out for the NFP.
Do you think the Fed cares about next week's NFP, Ilya? I know that we've heard from Bowman, from Waller, and now today from San Francisco Fed President Mary Daly, that a rate cut may be appropriate and will be something that's discussed in July. She thinks that September is still going to be when the Fed cuts. She says in the fall. Okay, so I guess September, or was it an October 30th meeting this year? It's late October again. Whatever the timing of the cadence is, it seems like her mind is that they're getting a cut in the fall in September. But July is not going to be a meeting where they don't even entertain it. So does non-farm payrolls, could non-farm payrolls next week let me rephrase this a different way. Isn't the best outcome for bulls right now for non-farm payrolls not to matter next week? Because if it does matter, it means that the July needs to think about a July cut.
Well, so there's a couple threads at work here. First off, the markets think that the odds of a July cut are more meaningful than policymakers seem to have hinted. So we're looking at a 20.1% chance of a cut in July. That's not nothing. And it's certainly up a meaningful ways from 12.5% a week ago. And let's note, a week ago was the Fed meeting. So in the immediate aftermath, right, here we are on Thursday. Exactly 1 week ago is the Thursday after the late afternoon FOMC on the 18th on Wednesday. So the markets heard the Fed. They went, right. So you don't want to cut, and you're not sure what to do, and you think you have all the time in the world. Yeah, you're likelier to cut in July. And in that period, since they heard the Fed, they've built out all kinds more easing into 2026. The Fed said 25 basis points in their SEP. The market said, right, sure, 62 basis points.
I mean, we've added basically 40-ish basis points to the rate cuts by the end of next year in just the past 3 weeks.
Yeah.
We've almost added 2 cuts to next year's calendar in 3 weeks.
So the market, so there you go. The markets they're not just saying that, oh, you're behind the ball. They're saying, no, it's happening. And frankly, you're likely to move both sooner and later in a much more dovish way than you're suggesting. So will the markets care about NFP? Well, it probably depends on what the number gives us, but NFP has been so muddy with the revisions that unless the number is completely unmistakable, it's very difficult to hang your hat on what comes out, and you really have to focus on the jobless rate and whether you finally get north of 4.2%. Thomas was mentioning earlier, jobless claims, not terrible today, but looking at the 4-week average, this past reading is a bit of a step down, but it's within a hair of last week's result, which was a 2-year high. So it's not like the labor market isn't deteriorating. The average NFP revision so far, the running 12-month average, is down almost 17,000 on a given month. In the latest numbers, the 2-month revision was 58,000, lower 48,000 before that, and on it goes. These numbers have been routinely revised weaker, and the average for the 2-month revision has been negative going all the way back to January 2023. So let's see what these numbers give us. Last time, the expectation was 130, la-di-da. We got 139, so only a touch better, with a 58K downside revision on the preceding 2 months. Was it a good report? You tell me. It was a little bit better at the headline and much worse for overall job creation. So it's a curious thing that we're looking at here, but the markets clearly seem much more interested in what they think. Bonds are rising, dollar is getting smacked, more expectations for rate cuts are entering than what policymakers are saying. I don't think the markets care very deeply here about what the Fed is saying. I think the biggest risk for markets is if NFP is really strong and it turns out they're the ones that are off sides. The best case may be actually a relatively soggy number as long as it's not catastrophe bad, where the Fed might be shown to be very, very behind the ball. But that seems very unlikely just by the nature of kind of the spread of probabilities. A really out there tail risk result is inherently unlikely. So you're looking at probably something middling, and the markets would like something softer. Because if they get softer, they get validated. The Fed looks like it's wrong, and then maybe July really is live. Or at the very least, maybe the Fed says all the things that they need to say. So that by the time we get primed for Jackson Hole, there's a big fancy Powell speech that sets everybody up, and in September, maybe we go big again. And maybe it turns out that we get a 50 basis point cut again because the
I've been saying that
we should have got in July, baby. What were we doing? So
that's the funniest outcome. Like last year was Powell declaring inflation being dead. That's what 50 basis point meant, right?
Yeah.
Trump didn't like it because it was a sign before the election that the big story before the election was over, and obviously it wasn't. But that's how it was spun. So 50 basis points in September here, how would that be spun? Would that be...
We should have got in July.
We should have got in July, and the economy is probably weaker. So but if the data holds up, right, Thomas, isn't this kind of like the dream scenario that you're seeing for bulls here in terms of rate cut pricing? All of the fears, the bricks in the wall of worry, they haven't materialized. And so the market's like, well, they're going to materialize, so we're going to need more cuts in the future. But in the meantime, the market's like, well, we're discounting cheaper money at least, and so we can party until the damage comes. It's not that the market really loves the Fed cuts and needs them, but like, hey, we have more easing coming down the pipeline. Who cares? We can run this thing up.
Yeah, it's something to underpin the market, to underpin sentiment. So, I mean, the initial jobless claims wasn't bad, but if you look at the continuing jobless claims, those were the highest since late 2021.
Yeah.
So it's kind of a good scenario if you want more cutting, because it's saying that companies, they're laying off, but they're doing it at a very steady rate, and they're not hiring that much. So people are getting forced out of the job market. It's taking them longer to find jobs. So that's not a catastrophe. So if the numbers come in slightly weaker, those July rate cut odds all of a sudden go from perhaps 20 to up to 40, 50. And then the market is hanging its hat on getting a July rate cut and then a September rate cut. But yeah, you're right. If the September comes in 50, of course, a 50 says we made a mistake somewhere, because otherwise it's going to be a 25 like they've been projecting. So I agree with Ilya. The best case scenario is probably slightly under expectations or at expectations.
We turn to the halfway mark of the show. We've been talking about equities here. Bonds had a pretty good day too, guys. It's after hours, technically, or after the market is marked to close. But we see that ZB here is now at 115 and 2 ticks. It's currently sitting at the highest level that we've seen since the start of May when it bumped up into here. It's been a level where the market's been struggling to break through in recent months. Ilya, it feels like if you're going to be a bond bull, you kind of have everything, going for you. Oil prices have come off, so the inflation scare is gone. And also, oil being too high is disruptive to growth. So
That's right.
Right, at least we have that intact. We turn around and think about what's going on with the Fed. They're not cutting in the short term, despite a lot of pressure to do so. And two things I think actually, two ideas that we've shared here on Overtime in recent weeks. One, a Fed that's refusing to cut will help the bond market stabilize and move up because it's not reflationary. Bonds are up 4 or 5 points over the course of that idea. It's been slow and hasn't been great. Like, it's not moving fast, but it's working. And the other one was that equity traders would be forced to chase this market through the end of the quarter because of positioning at the start of April, because everyone just being off sides, people continuing to short the market on the way up. And then that's, of course, underpinned by the rationale. You can't lose money in a bull market. If someone's giving you money to trade for them and you underperform SPY, you're not justifying your job. So
it's not that you can't. You can. You're just not allowed to.
Right. Well, so bonds, though, are kind of, Tuesday you said if the bond trade's going to work, it's going to work slowly because bonds shouldn't move quickly.
You want it to work slowly.
Why is that? Can you just reiterate?
You don't want bonds to be doing crazy things. You don't want for the markets to be having volatile opinions about the long-term faith and credit of the world's largest economy. We saw what that looked like in April. Those are not happy times. You do not want, if you're any kind of optimist about anything, frankly, because the Treasury bond really is sort of the underpinning of the global economy, as is the U.S. dollar. This is the cash choice of commerce when it comes to the dollar. It's the benchmark risk-free asset for global finance writ large when it's the U.S. Treasury bond. So you don't want for there to be chaos here. And sure enough, no chaos. We're just slowly crawling higher. And I've been long the long end for a while. That's the part of my portfolio that is helping to paper over some of my sins elsewhere. Most recently, I extended duration about 10 days ago. I've still got 50 days in these TLT call spreads that I have on. So I've given myself lots and lots of duration. In fact, that's been my MO basically since the beginning of the year, to stay small with more duration than usual, to kind of dilute my exposure to directional delta and really take time with these markets because they're very choppy. The only place I haven't done that is in FX, where I've just been outright trading the micro futures and spot. And frankly, that's been my bread and butter all year. So looking at the bonds here, they're doing the thing you want them to do. If you're bullish, what you want is an orderly, steady stair step. That's exactly what you've been seeing since basically the second half of May. On we go.
Thomas, you have any strong feelings on rates right now? Notes are trading at their highest level since the start of May. We can look at this from the yield perspective. 10-year yield is now down to 4.239%. That's good news.
Yeah, I got long a call spread in ZN. I still have to get that on the follow page for the 57 days out. So I gave myself plenty of time at the 112.5, 113. But yeah, like Ilya said, nice and steady. This is definitely a bull market that we're in for the trend right now. With the time I gave myself, I'm willing to weather any pullbacks, and pretty much what I'd expect to see if we pull back is something to like the 21-day EMA 111.075, maybe somewhere around there, which you have one of your support resistance lines right there pretty much. So that's kind of what I'm thinking. I didn't want to wait for a pullback to get in here just because the time I have is, I feel fine with that. But I think, the view now is rates are going to come down. It would take something pretty big to throw off the calculus for where rates are going. And if that's going to happen, you'd see a lot of dysfunction elsewhere in the market too. So I just want to get some long exposure here. That's my only position in bonds for now.
I think I might make an adjustment to my directionally neutral positioning in notes over the coming days, if only because we're starting to get away from the midpoints of the trading range. I say I might because I still have fairly decent strikes to make this work. Given the volatility when this trade was put on, I was able to sell the guts basically at the extremes for the year, 109, 114, right? I still have that correct here. 109, 113, and buy back at 108, 114. So unless we go down to the low in February or to the high here from the start of April in the next 7 trading days, which I guess is possible, but I think that directionally neutral continues to work. The only question that I find myself asking these days, it's a 16.4 IVR. I guess that's richer than what we're seeing in ES or in Q, but there's just not a lot of vol in bonds. And I know that when vol gets this low in notes and bonds, people tend to look elsewhere. What's the trade here, though, Ilya, for the next few months? I think you and I were on board with the chop, and the chop hasn't stopped.
Mm-hmm.
But is the chop still the play if we have to start having conversations about, wouldn't it be funny if the Fed had a cut by 50 basis points because things are so crappy and they're running so far behind? Is that a good thing for the bond market?
I mean, I'm perfectly happy to stay long as this continues to kind of begrudgingly work. And if the Fed throws us a little bit of a bone here with a level change in rates, yeah, okay, if you front load a bunch of cuts, then maybe you get to a place where inside of a 2-year window, you get fewer cuts downwind because the Fed has finally jumped. You kind of saw this with what happened with the 50 basis point cut in September last year, right? The markets were yelling at the Fed from mid-April until that mid-September cut. You have to cut. You have to cut. You're going to miss the boat. You're going to miss the boat. You got to go. You got to go. And the Fed was resisting and resisting and resisting. And all through that resistance, bonds were rallying. The dollar was getting clobbered across the board because the market were saying, okay, so you're not going. That means you have to do more later. It'll be more dovish. It'll be more dovish. Then when the Fed finally goes and they go 100 basis points this year, 50 up front, 2 more meetings left. You do the math when those rate cuts are coming. We're locked in. And the market goes, whoa, hold on now. That's a little bearish. That's not what we said. This is a little too extreme. You've overshot. And then bonds sell off and the dollar rallies into the end of the year. So if the Fed does 50 basis points in September, the big question will be, do the markets think that's too much?
Mm-hmm.
What does it look like in relative terms? Right now, the Fed is baking in 50 basis points for the year. So unless that calculus changes, and I suppose we'll have to watch what they do in July and definitely watch what they say at Jackson Hole, because that'll be a kind of lens framing exercise. Then we'll see. Last year, it was very clear. The Fed came out at Jackson Hole. They gave the tip of the hat in the dovish direction, and then there they go in September. If this year they reframe the lens again at Jackson Hole, and it's dovish, we'll see. Because right now, the markets are basically in line with what the Fed forecast is, at least for this year. It's 50 basis points. So, and frankly, a little bit north of that today, it's starting to creep. It's approaching 60. So we'll see. We'll see where the market is set after Jackson Hole, when it's time to go in September. But if the market judges that a 50 basis point cut is appropriate, and they seem to be angling that way here, the ongoing disappointments in U.S. economic data over the past month, today's durable goods jump, and it was a big jump, notwithstanding, the overall sort of vibe in U.S. economic data has been generally negative for about a month. This would give you a sense that if the market thinks that 50 basis points is right, bonds keep going higher. It's contextual. It's not automatic.
Well, that puts the dollar in an odd position here, guys. I know the sentiment's cooked, and I just took off a position today. I tried to short the euro, and it had a nice few days.
I've been taking them off since the beginning of the week. This is not working.
It seems normal to me because it's okay. Sure, all of this wasn't normal when we were going through the whole tariff nonsense. But since we reset the table, the dollar has basically been following the bond market. Lower yields, weaker dollar. Lower yields, weaker dollar, right? And so I don't know if we can call that a surprise. Technically, this thick white line here is your 50 SMA. We hit it in February. We hit it here again in May. We fail up against it earlier this week. That engulfing bar brought us back down below the 1 month and the 1 week as well. So the bearish momentum is clearly here still. Although I took a small loss in the euro position, again, it was put in place with enough duration so that if we breached 117, be able to get out at a small loss, and it was like $275. We go over to 6J, and this is where I am now starting to try to lay out capital to get short the yen. This is still a currency that has a 2.93 Z-score in terms of speculative positioning over the past 20 years. It is outrageously crowded right now. And we've seen it more crowded at the start of April and May. But never before in its history has it been this long. Okay, if you were to compare positioning in the market today to literally any other period of time prior to the start of 2025, that would be the highest, biggest net long position you've seen in the yen. Period, end of story. So I want to fade this. I don't want to be involved in a long yen trade at the moment. I want to be involved in a short yen trade. So right now, I'm going to put this back on if it doesn't get filled. I'm trying to start to buy into the 68-67 put spread with 71 days to expiration, basically looking for a return down towards these range lows that we saw in April, here in May, and again, just a few days ago in June. The yen to me is cooked. It doesn't have a reason to be up here. We got the bounce that I was looking for. I wanted that bounce earlier this week. We mentioned get up to like 0070 and we could start to look bearish again. It happened today. So I'm going to poke around on long dollar in a very narrow sense because of a crowded market.
Yeah, I mean, I thought that we were starting to get a little bit crazy here in the dollar, and I actually flipped over my shorts into small long exposure Friday last week, thinking, okay, we've probably hit something here. There's a key technical level. The risk reward is good. The trade is terribly crowded. Let me take a step back. Let's turn these cards over. The Fed doesn't want to cut. They've just said so loudly. We had Powell testimony this week where he wasn't going to say anything different, and he didn't. And it hasn't worked. Probably the most dramatic places I'm looking at isn't the yen. The yen has been kind of consolidating in what's increasingly a kind of triangle-looking something. But just look at the euro. Look at the pound. They are scorching. And
yeah, that uptrend the pound was breaking a few weeks ago, it's technically back above it now.
That's the thing. So it started to maybe crack, which is what got me short. And no. That's not what's going on here. Even the Canadian dollar found a little life here against all odds. But I mean, look at the euro as your kind of benchmark for the most liquid U.S. dollar counterparty. part. I mean, the dollar index is essentially just the euro upside down. This is unmistakable. This is every opportunity for a double top and then a clear,
never happened.
Just very, very, very obvious first page of a technical analysis textbook bullish breakout. Like obvious resistance, test, hot knife through butter.
Well, I mean, that was the risk outline when we took the trade, right? It could be an ascending triangle still.
That's right.
But I guess, Thomas, given the positioning that we know, where people are far too long the yen and the sentiment on the dollar is still very bearish, would you take multiple cracks at trying to get long the dollar here, even if you have a few trades that miss out? Do you find the risk to reward appealing enough?
Well, last week I got out of my short put spread on the yen, pretty much at the bottom, and then I got into a short call spread on the euro, and so I've been burnt on both sides now. So I'm surprised the dollar's gone this low. So one of the reasons I got that trade on the yen is because you told me last week the positioning was so extreme, and I agree that that kind of trade can't last.
So we're saying
it's your fault.
Like it.
Yeah.
Well, okay.
We're saying blame Chris. Good.
Yes.
I'm on board with this.
Fair. I'll wear that.
Yeah, and then last week I tried to sell the call spread on the euro for this double top, and of course that hasn't worked out either after being long the euro all year. So I think the underlying reason is the dollar's weakened so much. I'm wondering for the euro, are growth expectations lagging what the market thinks for Europe right now with the defense spending and everything else? Is it going to be a story of Europe has better than expected economic growth over the next few years? Are we starting to price that in now? Are people trying to get ahead of that? Or is it just the dollar is, continues to weaken for, it surprised me how much it's weakened. So, it's calling, do you try to call a bottom now? And I'm not going to do that after two bad trades within the last week.
Sure.
So right now I'm going to stay, I'm going to keep my euro position on right now and hope for a pullback to take that off at either, at unsure, a small loss. But I'm going to step back and reassess the currency market with not being able to really see what the dollar is doing here.
Ilya, one thing that's really important to me is showing signs of personal growth. I don't often do it, but a year ago, you and I were trying to get long the yen because of positioning. Everyone and their mother was short the yen.
Yeah.
And it felt like every 45 in, 21 day out, I would buy some yen calls, and then I'd watch them evaporate into nothing.
Oh, we got cooked.
Well, it's very generous of you to throw yourself into the pot with me, because
I was long the yen for similar reasons, although in fairness, I didn't stick around as long.
But July comes around, and I say, I've been doing this for 6 months. Maybe the positioning argument isn't going to hold up, but of course, positioning is like a glacier. It takes time. It just doesn't happen. People don't just liquidate everything all at once. And so I stopped buying the yen. And then last July, the yen decided to do, what did the yen do last July? Oh yeah, it did this. It went straight vertical after pushing on that string. It was going down, buying calls, just like 100 pips out of the money every time.
I managed to catch a little bit of
you
it
caught
on the second leg of it.
That's why I'm saying, like, don't throw yourself in the pot with me. And the point I'm getting at is that there was a macro, a positioning, not a short-term view that was worked out. Like, this is going to break at some point. I just need to stay solvent before the market snaps to being rational. And I could have been. And I just got tired of losing little bits of money. And had I just stayed with that, okay, this positioning is going to break at some point, I just have to be patient here, and I'll catch a wave. I was right. I just fumbled the ball. And so it feels like this is the same thing, but on the other end right now for the yen, where we have this extreme positioning. It's sitting around. Being short the yen, you've been getting chopped up, you've been getting eaten up for the past 6 weeks, 2 months, right? You haven't been able to get that downside traction. And I just can't throw in the towel this time because I need to show that personal growth where I understand that if it's a good idea, I just need to stay solvent long enough and stay small enough so when it does hit, I don't, if I'm wrong, I don't get wiped out. And I didn't last year. I just got bored. That's not a good excuse. That's not staying mechanical. It's not staying within the confines of the trade idea. Thomas, I understand why you're not going to call a bottom here. But a year ago to this day, I was on overtime complaining to Ilya that I was sick and tired of trying to be long the yen, and then it spit in my face immediately the week after. I just can't do that to myself again. Mentally, it's not going to be good for my mental health. Okay, I'd rather
it's like
actually lose
Michael
money.
Burry in 2007. You're not wrong, but you're early.
Maybe I'm early. Maybe that's it.
This is the perpetual thing that I'm always talking about when I am entering these tiny little pinprick shorts against the stock market that I don't believe in. It's because if the market is telling you something, technically it had already fallen by the time I left. Technically. When I take these little stabs, it's because the price action has created some kind of risk-reward opportunity that's attractive. And maybe it's right and maybe it's wrong, but I'm going to structure it in a way where it's asymmetric enough that if I lose a little, and I'm okay losing a little multiple times. If the idea seems legit, if the price action tells you it's go time, it's why I didn't stick around in the yen as long as you did and then got back in. I was waiting for the price action to show me. And I'll take little stabs like that, and I'm okay with losing on quite a few of them, as long as one or two really pay. And that's sort of the thing you have to do, I think, if you're going to take a macro perspective on markets, because timing macro stuff is a fool's errand. You never know. If you have some kind of macro narrative and you think it's right and you see evidence to suggest it, when the price action lets you, take a stab. You're probably going to be wrong a few times.
I always go back to the baseball analogy. If you're scalping, you're a slap hitter. You're just trying to get little singles all the time. If you're a macro trader, you're the slugger, right? Like you're going to strike out a lot, but you're going to hit the home run every now and again. And like it has the net expected value is positive. Like you want the guy who strikes out a ton and hits dingers, because it's good for your lineup construction. You can't just have a guy who hits 300 and only gets singles. You're not going to get anyone around the bases. Thomas, I wanted to ask you a question before we end the show, because energy is back in focus. We called this out a few days ago after oil had its big 10% decline. Ilya, you and I were talking about exiting short deltas, flipping to directionally neutral, understanding that previous sell-offs of this nature, when you have 10% or more over the course of 2 days, you usually get a window where there's a little bit of a bounce back over the next day to week. Next day was historically right around 2%, the next week a little bit around 4%. So the fact that oil has stopped falling, so to speak, I don't think surprises anyone in this room. Thomas, you mentioned to me earlier today that you're surprised natural gas has fallen as far as it has. You and I both, I think, are in similarly structured trades where we've been selling put spreads down against like the 3.3, 3.4 level. How are you feeling about this now, given you've had a full day to digest the price action, and really what's been a week of fairly aggressive selling in natural gas?
Yeah, I was feeling worse this morning, but we trimmed a lot of losses. So the EIA numbers came out today. I think it was a 99 billion cubic feet build. The 5-year average is right around 78 for this time of year. So we're building more than expected, and we've done that for a couple weeks. So I'm still keeping my short put spread on at 3.25, 3.3. And I think that aligns with some technical levels that, are buy points in the market. And kind of right today, we saw buying when we got down near 3.4, you saw the buying start. So I'm going to stay in it. I was thinking about taking my the call spread side off because I have a short call spread on as well for 32 days out. So I'm going to take that off in the next couple days here because we're starting to run out of time. I'll leave the put spread on until around 24 days. So I'll wait until next week to take that off. And I'm expecting, of course, that 3.4 level. That's all I'm looking for it to hold. If we drop below 3.4, I'll take that short put spread off and reassess. If the 3.4 breaks 3.2, 3.0, we could drop under there because there's some room that we haven't traded at for quite a while. So 3.4 is kind of like the line in the sand right now. It's been really hot the past week. The U.S. has been in a heat wave.
Has it?
That should have, you know more than anyone. That should have, reduce the stocks more than expected, but at the same time you had wind and you had solar displacing a lot of natural gas demand. So it was sunny and windy everywhere that it was warm last week. So you kind of got a canceling out of that, the expected effect that you would see in natural gas, which is really, really hot, a lot of demand, strong inventory, or a less strong inventory build during the summer. That didn't happen. But the buying today at 3.4 is kind of encouraging. After 4 or 5 days of selling, I think if you want to get long here, I'm already long on that side. I wouldn't mind at all.
Yeah, come help us. Come help me and Thomas.
I got out of my oil short yesterday, and that's the only thing I'm doing in energy right here. This is one of the more confounding spaces. I'm not eager to jump in one way or another.
Well, with that, overtime is out of time. We'll be back in a little bit. Ilya's coming up next with Macro Money, so stick around after the break. I'll be back later today for The Price of Truth with Victor Jones, so see you in about an hour's time. Until then, though, for Thomas Westwater and Ilya Spivak, I've been Chris Vecchio. See you on the other side of a break. You're watching Tasty Live. Ilya Spivak with Macro Money up next.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out, past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Bender Nank. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Well, the markets continue to melt up, and it seems like they're doing so for no particularly good reason or with particularly strong volume. Nothing especially shocking on the calendar. No big new headlines from geopolitics or from the world of economics, at least over the past 24 hours. Nothing to really suggest that we ought to be screaming higher or not. But nevertheless, the markets take their cue, and we're approaching the year-to-date highs on the major stock indexes. The U.S. dollar is lower across the board, and the markets still seem to be building out expectations that the Fed is going to end up much more dovish than expected, even most importantly by the Fed officials themselves. So what is the backdrop for all of this, and can we sustain it? That's what we're going to task ourselves with trying to understand today on Macro Money. I'm Ilias Spivak, head of Global Macro here at Tasty Live, and we get the opportunity to get a check-in on the overall global economy here as we prepare for a update on Chinese performance early next week. We have earlier this week seen the June PMI data set for the US and the Eurozone and many of the other major economies. China is always about a week late, and next week we begin to see what they have for us for June and start to put together a more complete picture of the global growth environment. So that's exactly what we're going to do here. Look at what this data might give us and consider how it might impact the overall backdrop. Now, of course, that isn't to say that we are going to get a direct read-through from this data into the price action. It'll depend if the price action decides that it wants to care. But as ever, it is a game of relative value here and a game of watching and seeing whether assets make sense in their valuation relative to the back story and not just in isolation. So this will be a backstory shaping set of numbers and a back story shaping kind of a conversation where we'll try to figure out if the global economy really is in as good a shape as these buoyant financial markets seem to suggest. So let's begin here with what is expected. These are going to be the official PMI numbers from China. As with the U.S., there's two sets. In the U.S., we have the kind of global standard, the PMI numbers from S&P Global, and we have the Institute of Supply Management that creates a parallel survey. They poll a different set of businesses, but produce a similar thing. In China, it's somewhat similar, where you have the official numbers here from the China Federation of Logistics and Purchasing, CFLP. That's in conjunction with the National Bureau of Statistics. This is the government's PMI survey. It's tilted more so to large enterprises and state-owned enterprises, or SOEs. There's a parallel set, which we'll take a look at in just a second. That's from S&P Global in conjunction with Caixin. So we'll compare them and see what the story is. The picture here for China in these numbers clearly seems to be of ongoing standstill. So this was the reopening pop here when China finally jettisoned its zero COVID policies and reopened the economy. You can see there was a bit of a surge here. Manufacturing never really got off the ground in a meaningful way, but certainly letting people out from lockdowns was a boon for services. And so there was this services surge right here that lifted the overall economy. Since we're going to be talking about these PMIs a lot, let's just, for the uninitiated, very quickly explain how these numbers work. This is a diffusion index. And so the way that this is constructed is it's tracking the services and manufacturing sector's activity growth and the pace of that growth. 50 is neutral. That is neither growth nor contraction. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the pace of growth. The further you go below 50, the faster the pace of contraction. And so clearly here we can see, following on from the manufacturing and service sector lines here, the story is of anemic manufacturing for quite some time, but then you get that pop at the reopening in services. That fizzles relatively quickly, and you settle into this multi-year standstill where you now have a situation, looking at these forecasts again, where you're hugging that 50 line. So basically going back to mid-2023 and through to now, China's economy is going virtually nowhere. Here's a composite reading from that rival survey, the Caixin and S&P Global survey. And here you see it's been a little bit zestier a year back than were the official numbers, a little bit higher on these readings. But as you work your way through the past 12 months, The story is increasingly negative and increasingly converging on what the official numbers are showing, so much so that the May number was actually worse than the official figures and gave us a slip underneath 50. And when you look at the composite internals, these are those Caixin services and manufacturing numbers. You can see services, since that pop in early 2023, they've flatlined much as the official numbers would suggest. You saw that right here. But we can see that it's really manufacturing falling off a cliff in at least these numbers in May that really gave us that very disappointing overall reading. And so when we consider then what comes next, we sort of see both of these things pointing in this kind of stagnant direction. Now, this is not entirely new or unusual given recent months, and really sort of echoes, this is why we look at PMI numbers, incidentally, it echoes in the most sort of hard data you might imagine, GDP statistics. And this is, of course, the story now for 8 consecutive quarters, speaking to the issues in the world's second largest economy. Here's that pop at the open of 2023. Since then, we can see the economy has done virtually nothing. The pace has held relatively steady and dependably sub 3% for growth, which by China's standards, we can see here, the pre-COVID levels are meaningfully stronger. But looking at what we're seeing here, the biggest issue really is that when you compare nominal and real GDP, you find that real GDP for the past 8 quarters has been growing faster than nominal. And this is the spread. You can see that when you take the difference between nominal and real GDP, you get a negative number now. Whereas we can clearly see before that, the norm was substantially pointed in the opposite direction. So when you had Chinese growth here, and it was in real terms hovering just above 6%, you're now at very similar levels here, albeit you're hovering a little bit under 6%, but the makeup of the growth is vastly different. And what this speaks to, because of course, what is nominal GDP? It is the sum of the value of all the goods and services in a country, and it doesn't factor out the impact of inflation. When you add up these things, these are sort of nominal prices without being discounted for the prices themselves going up. And so oftentimes you can get an overstated version of demand, for example, here in nominal numbers because of inflation. So you take inflation out to get a real sense of growth. Now, if real growth, that is nominal minus inflation, is running above nominal itself, then you're discounting nominal by a negative number. And that's what you're seeing here. Economy-wide deflation for 8 consecutive quarters. Now, this is, of course, horrible news for any economy, because what it essentially suggests is vast overcapacity relative to demand. So lots and lots and lots of supply, much more than demand is able to absorb. And so the entire economy is essentially on discount. The price of things is getting marked down and in economy-wide terms falling, essentially the price of GDP falling because there's not demand to absorb all of that. And essentially what you get is an economy that for basically 2 years here has operated without demand growth. So needless to say, what we're seeing in the PMIs very much anticipates this state of affairs continuing going forward. And indeed, some of the higher frequency data we've seen recently are a case in point. At the top here, we have the latest inflation data. We can see the PPI index dependably below zero, showing us that wholesale inflation has been falling, going all the way back to COVID lockdown days here, mid-2022-ish into the second half of the year. We flip from positive to negative and stay there. Headline consumer prices hugging zero and have been hugging zero essentially since early 2023. The story on the external sector, hardly encouraging. There's been a little bit more pep on the export side, arguably around the front running of tariffs and U.S. demand being especially robust here at the start of the year as we get that rebuild of inventories that we saw with such sharp relief in first quarter U.S. GDP numbers. But domestic demand going the opposite direction. And that's not a happy thing when you consider that you've had anemic manufacturing for quite a while here. A short pop is not especially helpful. What you really need is for the service sector to come back to life, for domestic demand to start to take up some of this slack. And these fading import numbers, they don't suggest that that's the direction that we're heading. In fact, this is looking increasingly negative here. And the pop in exports, in fact, over the past 2 months, seems to be fading, where the front running is running its course and we're starting to recede back. There's still a very significant pool of capital out from China. We can see here foreign direct investment still negative to the tune of double digits, but of course it has improved significantly from being worse than a 30% drop there by mid-2024. Capital is still coming out of China in droves, but the pace has, of course, improved and was eventually going to improve even just in statistical terms as you adjust year-on-year calculations for basing them from lower levels. So eventually this pace was going to normalize, and frankly, that we're in 8 consecutive quarters and of deflation, and we're only normalized to a decline of worse than 10% year on year in the latest data, still quite discouraging. Where you do see a slight sliver of positivity is in whether China's raft of stimulus measures might finally be showing a little bit of life. So we can see here, this is the Bloomberg Credit Impulse Index for China. It measures the share of new loans in GDP. Of course, China has been attempting to lay out oodles of new money to try to incentivize demand. They've cut bank reserve ratios. They've cut economy-wide interest rates. They've announced all kinds of schemes for debt relief for municipalities, for giving money to consumers for all kinds of various things, be they lower mortgage rates or incentives to buy stock or incentives to trade in old appliances for new ones at very lucrative terms. All kinds of cheap money designed to get the economy to finally start to show some life. And now that we see for the past 2 months a slight sliver of positive year-on-year growth in this index, we get the sense that, okay, maybe finally new loans are starting to perk up. Problem is that people don't seem to be wanting to spend the money. This is a view that we've been looking at here for quite a while. This is the difference between China's value of demand deposits, that is to say, those things that are there to be used almost as a checking account, so something that's earmarked for consumption now, and the difference between that and time deposits. That is to say, those things that are looking at savings, CD equivalents, and things like this for the overall economy. And so you look here, and what you see is a very significant disparity that seems to be opening up here. And the disparity really continues to grow and grow and grow here. And for the overall kind of level here, this is as high as the data available goes back. So what is this telling us? Well, maybe, in fact, yes, there are more new loans at these more lucrative terms. Maybe people are finally starting to believe somewhat that this money is really and truly available. But what they're not doing is spending it. What they're doing is increasingly sticking it in here, in savings. And so that's how you get fading imports. That's how you get still an economy that doesn't want to do much of anything growth-wise. Because it seems like consumers are not confident that growth will come back. They're not confident that the right things are being done by officials in Beijing to really kickstart this thing. They're just stuffing money under the proverbial mattress. They're taking all of this new money and they're sticking it in savings. They're not going out and spending it. And that suggests that, yes, maybe we have a little bit of hope for stimulus starting to work a bit because there's uptake of these new loans. But if the money doesn't get spent, well, we know all about that in the U.S., where we had tremendous easing in the wake of the global financial crisis, and then consumers used the money to rebuild their balance sheets and didn't spend it. And so the recovery was very, very sluggish and prolonged from the recession in 08-09 until we started to see some green shoots a little bit going into 2014, 2015, 2016. This is not dissimilar in the sense that, yes, there is cheap money. Yes, people are taking the cheap money, but they're not doing anything with it that might generate growth. The problem, of course, is that China is the second largest of the main engines of global economic output, along with the US and the Eurozone, and the story continues to be imbalanced, where the US is the only one holding up the entire situation, not just because of its share, but because of the way that it's performed. Consider also that the 42% in the rest of world part of the pie here are mainly vendor economies that depend on buying from the large three in order to have demand of their own. Here were the numbers from the Eurozone this week. Standstill, hugging 50. As we can see, this is not unusual. They've been averaging just a hair above 50 for the past 12 months. That, of course, is in contrast with the US numbers, which are a level step lower from the very buoyant 3-year highs on growth that we saw last year, but more positive. And when we compare that with the overall picture, we can very clearly see where the imbalance lies. All of the second half of last year, it was China and the Eurozone at standstill, and the US powering ahead. The wedge has narrowed, but nevertheless, it is still the same story. Standstill in China, standstill in the Eurozone, and more modest but still positive growth in the US. That would be all well and good, except as we look at the way that US economic data is increasingly performing relative to forecasts, we can see that of the major economic engines and groupings here, it is clearly the US where data is underperforming, today's buoyant durable goods data notwithstanding. Emerging markets, relatively steady, Eurozone actually improving, the overall global economic data surprise index fading, suggesting that global data flow is cooling. That's clearly coming from the G10 space, of which the Eurozone is not the issue. Clearly, it is the US that's pulling the situation lower. And so, for the global economy as a whole, we are left with an ominous backstory. This is the only part that's working, and it's also the one that's deteriorating. This is already at standstill, and this will probably remain so when we get this PMI update next week. Now, will the markets care, and will they start to turn to a more risk-off direction on this basis? As ever, we'll have to watch the price action to see. But if something does occur to spook investors, the backdrop is certainly anything but cheery. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may follow. I'll be back with Chris for Futures Power Hour tomorrow. We'll also be covering for Tom and Tony on Last Call, so you'll see a bunch of us as a special case this week. I'm likewise on The Price of Truth with Victor Jones on Tuesdays, with him and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Happy trading.
Forbes called us best online.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple, and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May, and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Got a lot going on this week. Market's still ripping to higher highs, so we got some things to talk about. Before we do that, Gus, how we doing, bro?
Doing well, hanging in. Yeah, we just keep gradually eking towards these all-time highs, just like you said. I mentioned on Tuesday that there was a lot of similarities to the COVID recovery going on right now, and I think that certainly still holds true. I actually have some interesting numbers in that front to bring up in a little bit. But yeah, feeling good. I'm still very long Delta, and so I continue to make good money when the market goes up. So I'm happy we can spy to 700. Let's do it. Why not?
Yeah. Hey, I mean, it seems like risk is easing a little bit more. I know tensions have been easing with the Iran and Israel war and those type of things. So, I mean, the market seems like it's feeling good so far, but things still feel eerie to me. Like sometimes we'll get consolidation, we'll get some aggressive pullbacks. It starts to feel a little eerie, but we're ripping all-time highs. I don't know. It's difficult to trade these levels, but at the same time, I'm like, is something brewing here? I feel like with Israel, Iran, and just other geopolitical things going on right now, I just wouldn't be surprised if we got any type of headlines that catch us off guard and are surprising, especially when everything feels good right now because we're at all-time highs. So that's been running through my mind.
It's funny, and that's one of the things that's been crossing my mind with the COVID recovery comparison as well, because as we were, coming out of that COVID dip in mid-2020 and approaching all-time highs, it seemed so logical that we would maybe get those all-time highs again, touch them, and then consolidate for a little while and chill out, because there was still so many reasons for there to be volatility and so much uncertainty and so much fear still happening in the world. But it just that fear and uncertainty that was present in the world did not, show up in the market. The market was not reflective of it at all. The market acted like there was no fear, and we were in a greed phase. And so I think, that we could be seeing something similar to that here, where even though all of the external and, news-driven things that we would usually pay attention to are screaming that this shouldn't be happening, we just keep pushing higher. And, I become more of a buyer of this theory every passing day.
No, I hear you completely. We're very familiar with this all-time high talks. I feel like we put in so many over the last few years, especially. But I mean, VIX has been really quiet, but Dr. Jim made a really good point yesterday. Even though the market's been rallying to the upside and it's a little down on the day again because we've been putting in new levels to the upside today, honestly, it's not as low as VIX could be. Like earlier in the year from last year, we were trading at lower levels on VIX than now, and we're putting in all-time highs. So maybe we're still due for a little bit of a pop in VIX, but hopefully that pop's not just to like 18 and then back down. But we haven't gotten a pop in VIX in some time either, and we're still trading at all-time highs. So another point there.
Yeah, Dr. Data and the wonderful research team shot over something this morning that showed that put buy volume is 19% higher than call buy volume right now, which I do think is something interesting. Perhaps something brewing there. Efficient market hypothesis suggesting things are going to move down, but it creates this. I don't know. It creates a very interesting and nuanced situation with the VIX. I feel like because if we there's all this pressure coming in. I don't know. I think you hit the nail on the head saying that VIX is absolutely not as low as it could be. VIX is not, telling us the story that we are, absolutely through this and just cruising and chilling now. There is still more downside room there and some indication that we could possibly, see some volatility in the coming weeks.
Yeah, 100%. We'll see what we get. I mean, we'll dive into the platform here. I got on a few extra positions this week in line with a lot of this volatility at the highs that we've been getting. I don't know if you've been having any thoughts on crypto, but I did get some exposure over there. Crypto's been ripping all-time highs. Not as much crypto talk as I would have thought there would have been with crypto at these levels. But Bitcoin is not playing any games either, Gus. I don't know if you've been keeping an eye on crypto, but it's been booming. No doubt. It's been booming.
Yeah, that it has. Yeah, there's lots of. This is just such a pro crypto administration. We just have one, regulation stripped off after the other, it seems, and we're getting it to be a lot more of a free market, and it allows for a lot of different things. Something that I saw the other day is that the name of the company is escaping me, but somebody is offering tokenized shares of SpaceX now because that's something that's doable under these new regulations. So
Tokenized shares at SpaceX. Okay.
Yes, because SpaceX is not a publicly traded company. I don't know enough about the crypto and blockchain space to really dive into the weeds of it, but they're offering tokenized shares of SpaceX. There is an avenue now to get some actual equity, or at least synthetic equity of SpaceX going on, which I think is interesting. And crypto presents all kinds of opportunities in that regard. And events contracts also are popping off right now.
We can't just brush over that. That's a pretty big deal. I mean, I feel like that would even be a pretty big deal for other private companies in terms of letting shareholders within people that believe in the company and are help build it get access to that without being public and going public. Like, especially SpaceX being a leader in general in terms of innovation. I'm curious to see some of the logistics on that end that they apply with some of this. What was the term that you used again?
Tokenized.
Tokenized, right? Tokenized private equity, or like tokenized, not private equity, tokenized shares. So I'd be curious to see if that ends up being successful and if other companies end up doing that, because I mean, I've never heard of something like that before.
Yeah, it creates all kinds of interesting opportunities with being able to buy into whatever private company you want. I mean, you could sit here. I mean, like Chick-fil-A, for instance. What if we could do tokenized shares of Chick-fil-A? I'd be a buyer. There's all sorts of avenues.
Yeah, no, 100%. We got Beto here. Not moving too much relative to where the overall market's been with Ethereum and Bitcoin, but I did get on a few new positions this week, especially after ripping to all-time highs. I wish I would have put on some of those positions today, but we got on some Netflix. It's been a little while since we traded Netflix, but I ended up selling an out-of-the-money call spread. It was pretty close to the money. The market ripping earlier on today, touching those, and now we're sitting in the money. But Netflix has been going on an absolute tear to the upside. Because I don't know if you have any thoughts on Netflix, but Netflix is not playing games. That's a sleeper build this year.
Yeah, absolutely a sleeper build, and something that I can remember being a magnificent stock just 5 short years ago that has since been replaced by other contemporaries in the market. But it just continues to rip. Netflix is making all kinds of moves that I've been fond of. I think that their expansion into live sports and the things that they're trying to do with pay-per-view and boxing are very interesting, new forays for them, and I think that could be a very promising future moving forward, especially as they try to capture more market share in the NFL, which is something they've been pushing for. I believe they have the NFL Christmas Day games coming up again this year. I think that's the contract they have, but. Yeah, I think that Netflix, this traditional streaming service, which has really never wavered from that business model, like the way that Hulu has. Hulu moved into live TV some years ago. I think it's very wise of them to be making this move into live TV. They just keep on ripping. It's crazy, and it's insane to think that this mail order DVD company from 20 years ago is suddenly now going to become a major live sports provider.
I mean, we can learn so much from the run that Netflix has been having. I mean, I don't know what that would be in basketball terms, but I mean, Netflix is having, I'm not going to say a 97, 98 Jordan Bulls run, but I mean, Netflix, the way they've been adapting and pivoting over each decade has been phenomenal. I mean, we can only say that in hindsight as time goes on, but I mean, we grew up with Netflix. We grew up, going online, emailing or mailing those discs to your door. You go to the catalog online, you do that. And then also Netflix destroying Redbox. I thought Redbox was going to be the next thing. Redbox outside of all your grocery stores, convenience stores, very convenient, to be picking up and dropping off those movies. That was very short-lived. Netflix has stood the test of time. So, I mean, my initial thought was, man, how well are they going to be doing diving into live TV? Like, can they really, and given their history, given their track record, I'm not going to bet against Netflix here, even though I'm still curious how they're going to maintain that industry for the live TV.
Absolutely. I think that they've shown, for decades now that their greatest strength is their ability to adapt. They've never been afraid to, take a gamble and try to make sure that they get ahead of the curve. And they also really understand the value that convenience has to consumers. And I think that's something that two things that have, really, really propelled Netflix for this long. And I think will continue to propel them into the future. They seem to be in good hands.
Blockbuster. I thought we retired that word. Good old Blockbuster. Man, I mean, Blockbuster is one of those guys. Blockbuster is the what could have been of D Rose.
Yeah,
like Derrick
they
Rose,
passed on Netflix, man. They laughed Netflix out of the room.
I mean, I don't know what happened. I mean, D Rose could have been was one of the youngest MVPs in the league. And I mean, Blockbuster had it in their hands and I mean, they fumbled the bag, So I still don't know how that happened, how slow it is to adapt. I don't know. I know it's not easy, especially when you're a bigger company, to adapt and kind of shift gears. But at the same time, I'm like, man, I would have sold the company to Netflix or another streaming service because Blockbuster, I mean, the kids nowadays probably don't even know what a Blockbuster is. You ask them. So time's been flying. Other than Netflix, we got a little bit of coin, was getting some exposure to the crypto market, especially with all the volatility we've been getting. That one's been running against me a little bit more today. Sold an out of the money call spread. These ones were shorter duration. These ones were 22 days till expiration, 23 at the time that I put them on. The market's still rallying to the upside. So we're going to try and manage that one. They are smaller position size and they're defined risk. So we're going to give those some time to cook. Disney's been another one that's been running against me to the upside. Disney's been another one that just hasn't been moving as much as I thought the other underlyings would be running. And I mean, it put in a pretty decent day today. Before today, we've been trading in a pretty significant range. Other than that, again, I bought this option, so that time is cooking against me. That's the only one that I did buy within all the positions that we have on right now. And then next after Disney, we have Circle Internet Group. This was another one that we got on yesterday.
You found a trade here, man. I've been looking for a trade on this like all week. I haven't been able to find it. I'm
you haven't been able
here.
to poke in there? Yeah, and we're up a little bit on it today. So we're building ourselves a little bit of a cushion. I had to go 50 days out to get the premium that I wanted on this one. Did end up selling an out of the money put spread, $5 wide, collected about 215. 238, I'm sorry. So I collected almost half the width of the strikes. I'm comfortable with that. Sitting out of the money right now. IB rank is pretty solid. Volume is there. Markets aren't too wide. I mean, it's pretty solid. This thing was going on an absolute tear to the upside. Maybe we catch a little bit of a bounce here. So it looks like we could still have some more room to the downside on Circle Internet Group, though. This one has caught a lot of momentum over the last few days. And I happened to catch the initial bounce on the way down. So I'm comfortable there. If we make new lows, we make new lows. But we have some cushion. After that,
I was looking for some downside on that, and Disney as well. Actually, I'm happy I haven't in regards to Disney. But yeah, when Circle was getting up near 300, I was looking for any way I could get short and sell some premium without deploying like $10,000 of capital, which is what it was looking like it was going to take. And I just couldn't quite figure it out. I looked at some spreads, but the liquidity was just weird, and it was hard to fill orders there for a second when it was really going parabolic earlier this week. So I never got involved, but I am jealous of this position.
No, I hear you. I hear you on that too. I did have to squeeze into this position a little bit more. I didn't get filled where I originally wanted to get filled as. So I slipped my way through there, was able to collect a little bit more credit on the spread. So I was okay giving a little premium there when we put this trade through. Give it some time, see how we work out. Again, if the market continues to sell off, because I mean, let's go to the daily. Let's get a larger time frame perspective.
Yes, and Theta Trader, great point. This is absolutely the meme stock issue. I assume that you, Theta Trader, know more about selling premium than anybody else, given the name. So I trust your judgment on this.
Circle Internet, bouncing today, but at the same time could have some more room to the downside. So we'll manage as we need to. We had QQQ. We ended up getting long yesterday at all-time highs, which was really difficult to do. I don't know if anybody else has a difficult time trading in the direction of the trend, but especially after we get a very extended move. But we ended up pulling the trigger on that. We put that one through yesterday. The market rallied even more today, so that ended up paying itself a little bit. But what I also did was, because we ended up rallying to the upside, I ended up selling a call spread against that QQQ position at the same time. So hopefully we don't rally too high off these all-time highs. So ended up legging into that Iron Condor.
Yeah, you're really putting yourself into a box there. Huh?
I know. I had to. Look, I could barely last 24 days with going with the trend. I had to leg into the other side less than 24 hours later.
Bro's just itching to be contrarian.
I know. I'm glad we got a little bit of a pop before we did that, though. So maybe I can finagle my way back out of that. Maybe I can leg back out, but we'll see what we can get. Lulu, this one traded really well, was pretty liquid, especially for earnings not too long ago. Was able to capitalize on that one. So we're back for Lulu round 2. We ended up selling an out of the money put spread on Lulu. collected about 391. This one was $10 wide, a little bit wider. Almost 40% of the credit or 40% of the width received on that one. So comfortable there, sitting break even there. Not too much going on the last 24 hours in that position. But that's what we got going on in the portfolio. I don't know if anything else stands out to you, but I think Lulu's going to be on the mind for the rest of the week at least.
I know Coinbase. I know I get 2 Coinbase scam text messages a day, so maybe.
Really? Is that from?
I don't know if the market is pricing this in, but the scammers
What is leaking
are hunting
insider
our Coinbase
information right
accounts.
now? This man leaking real-time information. No, I mean, Coin put in another massive day today. Coin started to go ballistic June 17th, consolidated 2 days after that. We had another leg up. We tried to pause yesterday. That's where I sold the out of the money call spread. And then we had another leg up today. We rallied to another high. So it's extremely bullish. It's a little bit more volatile than these other crypto assets, it's looking like. So, I mean, Coin is definitely in play. If you want some volatility, look over in Coin.
Yeah. If you want some volatility,
go Coin. If you want some volatility. Oh yeah,
you guys. By the way, I have to circle back and acknowledge the Magnum PI commentary earlier. This is making me laugh. I'll throw on the loud Hawaiian shirt and the aviator sometimes, guys, and really get the whole flow going. And Theta Trader, in response to you, I don't have a red Corvette, but you don't know how long my shorts are right now. They could be uncomfortably short. Also, Mike, great pull with the beige wall. I've actually sold that house now, so the beige wall belongs to somebody else. But. Yeah, Coinbase, this is interesting. Coinbase, there's a lot of these crypto companies or crypto adjacent companies, and I've said this about MicroStrategy a lot, where I don't understand why you would ever buy it instead of just buying the cryptocurrency directly. Coinbase absolutely does not fall into that boat. I think that all of this regulation is really a rising tide raises all boats sort of situation with Coinbase, and that it will trigger more people to trade crypto. And as they go out to look for places to trade it, Coinbase will be one of them. So I can understand it. Nike, I was surprised by this move, and I'll tell you what, I was really close to getting a short.
Just do it, Gus. Just do it, brother. Come on.
You saying do it now?
I said, just do it. You should have done it.
That's do
the
it.
Slogan now.
Yeah, you're right. I should not. Yeah. Well, I was going to get short into earnings, which would have burned the shit out of me. Now I'm a bit more, I don't know. I'm a bit more, I want to get short still, is what I'm trying to say. I would love to.
I mean, it looks better to get short now. I mean,
yeah, definitely better to get short now, right. But I don't know. It's all kind of weird. I love to trade the post earnings moves, especially if they're as exaggerated as this one has been. But I don't know. Something's putting me off with Nike. I think maybe we're still too oversold in general, and Nike especially is just so beaten down over the last year. It's hard to imagine they could make lower lows, and that was the thought process that eventually put me off of getting short into this earnings call. But yeah, I think I'm just gonna leave it alone.
Yeah, no, 100%. We'll take a quick look at the volatility index here. Was there any other new positions that caught your mind this week that you ended up putting on there?
Yeah, let's have a look.
Vol's getting crushed right now. Bro, we really never got that pop.
I've added some long Novo Nordisk. Looks like it's going to pan out. They just took a gap down earlier this week on some bad Wegovy news. Felt like that was an over-exaggerated move, so picked up some long there. And that's really kind of the extent of new things that I've put on this week. I have a very much losing position on General Mills. Thought we were going to get more upside action on that than we did. But yeah, that's pretty much it. Still got my the ones I believe in that I've been harping on for a long time. I got my Bath and Body Works, my Rivian, my Starbucks still all hang around. Match.com, I have a very winning position on Match.com that I've had open for some time. But yeah, kind of just, I don't know. I've been hesitant this week because even though I just said I'm seeing all these similarities with the COVID recovery and how I think we absolutely could make higher highs, there is just still a lot of uncertainty with how long I already am already. I don't really want to get any longer, but I'm also not fully convinced we're going to hit all-time highs and make any downside at all. So I've kind of just been sitting on my hands and looking to make exits this week, and I'll figure out how to restructure once I have some capital right back in.
Hey, well, hopefully we have some capital soon because, I mean, look at SPY. SPY's creeping up. Man, this just looks like a March 2020 recovery, but on crack. That's what this move looks like right here.
What I alluded to earlier is that it was recently brought to my attention that both the crash that we had this year and the March 2020 crash both started on February 19th, and both lasted 53 days until and this one is pushing. This would be the 54th day, but mid 50s days until we return to all-time highs. So it really is incredibly identical recovery that we're seeing here. This V-shaped recovery. And go ahead.
March 2020.
Tell me what's funny here.
I mean, I guess it's to whoever's ears it falls on if it's funny or not. No, but I mean, the last administration, we had the same administration. We had the same type of V-shaped recovery in the same administration.
Yeah, the same administration. You have the same. And Trump was doing all the same things in his first term as well to kind of create volatility and shake things up.
So you're telling me.
It's these identical vibes where it's like, surely we can't go higher with all of this craziness going on, and we just continue to chug higher and higher. Nothing stopping the momentum just yet. Who's to say we don't just push through to 650 or something crazy before we get any sustained pullback? It's nuts.
No, make me laugh, funny man. That's funny.
I'm just saying, man. None of these things can be ruled out.
No, but I mean, same administration. Things are a little different this time around. I mean, last time the market started running after rates were so low, rates definitely aren't near where they were, back in March. So, yeah, I mean, things are a little bit different here, but, it is kind of interesting. Same exact administration. That means we had the playbook the whole time. Hey, it's too late now. If you're reading this now, it's too late. Shout out to Drake. But if now that we're scraping towards all-time highs, I mean, it just looks almost exactly in hindsight towards the March 2020 crash. And after you recognize it, it's like most of the run has already been done or has already been put in. So all-time highs looks like it's right around the corner on SPY at least. Right now we're sitting at 611.87. And I think the last high that we had was over here February 20th. Near that February 18th mark that you just brought up a couple minutes ago. February 19th. February 19th was last time we were trading at these levels. 613.
Yeah, which is pretty crazy to think that that's only just over 4 months ago, and all of the craziness that has happened in the last 4 months. And we're just about to be back at a scratch.
Yeah, I mean these 4 months flew. I mean, even again early April, whenever we were bottoming in the market, it doesn't feel like it was that long ago. Sometimes we can wait so long for the market to pull back.
That was 45 days ago.
I mean, that was one cycle that we trade sometimes. So I mean, almost identical to the March of 2020. Again, back in March of 2020, we recovered so quickly. I was telling myself, there's no way this is lasting. We're pulling back. 5 years later, here we are. So hey, I hope you're still not holding on to that. Believe. No, we're trading Lulu, not Delulu, guys.
I trade on vibes. Thank you.
I trade on vibes.
As we've established, vibes are an effective strategy for trading.
I mean, apparently. I mean, honestly, that's a valid take in 2025 from what we've seen. I was on social media the other day again. Somebody was like really driving home the point to somebody else as to the fact the economy is doing super well because the market's up. I was like, bro, that's like one of the first kind of like things we learn about the market kind of is that the market is not a direct reflection of the economy. And I just thought that was interesting too, because I'm on social media and like they're like driving this point home to this person in this comment section. And I'm just like, that's interesting.
Yeah, I mean, that's literally like economics 101.
Like
that the economy prices in past and present information, and the market does all it can to price in future information. It's just two different things. Anybody who's taken any college econ class has seen the double helix graph of the stock market and the economy.
Pretty much. Before we hop off here, let's just quickly take a quick look at how some of our
I'd love to shit on Apple real quick. Let's do it.
Oh, absolutely.
Stupid
He's
stock.
just a hater. Look, whenever the market doesn't move anywhere, Apple tends to bring along some haters. So, but I mean, I'm in the same boat. Stupid stock. What are we doing? We haven't been doing anything over here lately, but it's been quiet on the Apple side. Real quick, trading Apple, or you don't really like Apple again? I know we touched on this last Tuesday. What was the reason being for that?
Apple has just been boring me in the short term. The stagnation, if you want a broader take, Apple has been stagnant for some time. It's been a long time since Apple has really done like some huge innovative thing in the world.
Okay, so you're talking stagnant underlying wise and business innovative.
Yes,
Okay.
micro and macro context. Micro context, last 3 months, this stagnation has been annoying me. I think it's especially pronounced right now because the rest of the market is returning to all-time highs. And look at this chart. Apple is nowhere close to all-time highs. And then, in a more macro context, Apple, we're really stagnating hard here. It feels like in the early 2000s and in the 2010s, every 2 or 3 years, Apple was doing something that really shook up the entire electronics market. I mean, like even down to like AirPods or things like that.
I mean, what else can you do though?
I don't know.
I mean, what else
I've
can you
never
do? You're
known.
Steve Jobs.
That's their job. They're the ones with the creativity and the imaginations that blow me away. I can't.
I mean,
blow
that's
myself
true.
Away.
I mean,
if I could, I'd start a company.
I mean, great point. But I mean, as a consumer, what would you like to see in the space? I do know one of my biggest gripes about Apple back in the day was I'm not like, this phone is way too tiny. Maybe if one day in the future they had a larger one, then maybe. Look, I am now an Apple consumer. They will get my money in some fashion every single year. And I used to say that. Is there anything in the horizon that Apple could do that sparks your interest as a consumer?
I mean, I think, and they are working on the integration of AI, improvement of Siri. Holy cow, that's low-hanging fruit that has been low-hanging fruit for some time. They could have
taken Siri away, and I would have forgot about it. Yeah,
for real. I never use Siri because why would I ever? Siri needs a tune-up, and they are working on that. And then I think greater expansion into VR and AR is smart for them. I don't know if the Vision Pro is necessarily the best avenue, or maybe the price point was just too high relative to the rest of the market. But I do feel that Apple certainly has the power and the design prowess to really shake up that world and make a device unlike anything we've ever seen. But the problem with the Vision Pro is that it was just kind of clunky, especially relative to what was available. I mean, you had to have the big battery pack. The whole thing was just a larger apparatus than a Meta Quest. Meta is kind of winning that race right now. And I do think that will, as we've discussed before, I think as Meta starts to take that tech, put it into their smart glasses, that will be something that's integrated into everybody's day-to-day life, and that Apple is missing the boat there.
Yeah, no, I mean, when it comes down to the Vision Pro, I think that Apple had more of the intention or idea, just my own speculation, of just kind of like, it was like a test. It was like a beta, the way that I saw it. Number one, the price point, and
it's weird that they gave up on it that quick too. Apple never just. Yeah.
Right.
Yeah.
They don't. So I think it was more of like, okay, this is like $3,500. Most people at this price point would purchase one of our top line MacBooks or computers. So it's like for somebody to purchase this instead of all of these things, that might signal they might not need these things, or they might have already have these things, or they just have the disposable income to drop the extra $3,500 on something like a Vision Pro. So I think they targeted a very specific demographic, individuals that have a lot of disposable income. And I think it almost seemed like they just wanted some feedback. It's almost like they just wanted to test the waters for it, because I am kind of surprised. I didn't think they would kind of give up on that product so soon, but maybe they have more talks behind the scenes that we don't know about. But it's gotten really quiet about the Vision Pro. Nobody's talking about it. It was going viral for like the first month. But
I think I know we're kind of at time here, but I think that it's like the same issue that Google ran into with Google Glass when they tried to roll that out in 2010 or 2013 or whatever that was, where it was just this kind of clunky, overpriced, over-engineered thing that only wound up falling into the hands of the most diehard fans and tech bros, and never actually really made it to the everyday consumer. And so, I think a different rollout was something that's more accessible to someone like me, because I just straight up was priced out of that market, and I still would be if it came out again tomorrow. Something that's more accessible to an average everyday consumer could really give them a leg up in that space that I think they kind of need right now.
Lastly, how much were those glasses that Google was dropping back in the day?
Google Glass, I think it was like, $325 retail maybe in 2013.
$325?
Yeah, which I think is probably comparable price point to a smartphone at that time.
Yeah, I would say comparable price point to the Vision Pro here if you factor in inflation and you carry the one. And no, anything else to add before we hop on out of here today, Gus?
$1,500 is the answer on the Google Glass, by the way. I'm happy I fact-checked myself there.
Okay, that's okay. We
I will leave everybody with that.
We factor in inflation, brother, and we're at that $3,500 price point that the Vision Pro is at right now. So
exactly. So yeah, very, very similar situation.
Yeah, 100%. Anything else to add before we hop on out of here today, Gus?
Nope, that's it. That's all I got.
That's going to wrap it up today. Thanks for taking the time to hang out with us. We'll see what we get for the rest of the week. We will be back next Tuesday at 4:30 o'clock Central Time. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What's your take on the rally in AI stocks? Do you think it's a bubble? Do you think it's here to stay, or is it somewhere in the middle?
I think it's here to stay. I think it's sort of this century's version of an industrial revolution. It's a new thing. It's creating jobs all over the place, and I think it's going to be around for a while.
Definitely a bubble in some stocks, right? But for overall, no, I'm absolutely bullish AI sector itself. You know, I like Apple, I like Palantir, I like a lot of the semiconductor type stocks, SMH, I like that as well. So no, long term, no, it's not a bullet. It's not a bubble, I don't think.
I mean, I would have said it's dead maybe a month or two ago. NVIDIA earnings might be here to stay.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, Mike. All right, Nick. Do you remember the first trade that you ever made in your life or in your career?
I do. It was a long call on Twitter. This is when it was a publicly traded company. It was at like $50 a share. I bought a call at 50, and the next day it rallied, I think, 11%. And it was like the single largest bull rally in one day in Twitter, and I was like, this is the easiest thing I've ever done.
Oh, I know the exact trade. So it was in Costco. I don't know the exact strike, but Costco was trading about 150-ish. This is in 2015. I sold, I believe, the 165 strike call against it because I read some article online that Walmart was going to eat their lunch. Costco, I think, went from 150 to 200 within 3 weeks of that trade. It was a massive, massive losing trade. I learned a lot from that trade.
And you still came back?
I still came back. Yeah. I was not discouraged. I thought I was an idiot, but I was not discouraged.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Oh, yeah. Tasty Nation, good morning. Oh, yeah, it's Thursday, June 26th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, a show where we like to explore the incentives and much more that govern our world. More on that in just a bit. For now, let's introduce our very special guest on this Thursday evening. Is it? Thursday evening. No. We pulled the old switcheroo on you guys. We've now got Chris Vecchio with us, the one, the only, the incomparable, the big brain, Mr. Chris Vecchio. Chris, how you doing, man?
I'm doing well. I really appreciated your rendition of Stacy's mom in the green room, but you were talking about Marjorie Taylor Greene, so.
Bro, you grade on a curve. I said she's an attractive lady. She's an attractive, kind of mother. I think she's got a few kids. And I don't get what the problem is. She's got a strong jaw, I'll give you that, but what's the big deal?
I just think, Victor Jones, you're a handsome guy, and you have a beautiful wife. You should shoot higher.
I'm not shooting. She's shooting. She's got a lot of videos out there of her shooting stuff. I'm not shooting at anything. I'm just noting that, if I was going to say, if there was just, let's say it was a binary, okay? We were just doing hot or not, attractive, unattractive, I'd swipe right on MTG, I think.
Still married.
Yeah. And that's a cold open, everybody, somehow. I promise you this is a trading show. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, why not? Go make your life a lot easier and go get both of them. But if you want to be part of Bing, this chat already in the middle of your screen. Jump the gun, you guys. If you want to be part of the chat in the middle, you know my shtick. They're like, we're not playing this game anymore. I'm putting up the chat ASAP. If you want to be part of the chat in the middle of the screen, there's only one way to do it, and that's to go to evil Google YouTube. Subscribe to the Tasty Live YouTube channel and start just streaming your thoughts live in the middle of this stream. Oh, they don't like it. Emmett, Jesus, they got aggressive on that. I don't think they like. I think the chat agrees with you, Christopher.
Oh, good. Okay, it's like, oh God, do I need to pull up the chat?
No, I don't get it, man. You know what I find though? I find men on the internet.
Let's talk about men on the internet. This is a trading show.
You know what blew my mind one day? Oh God, I don't think I'm allowed to say this. I'm going to do it anyway. They blew the day I realized there was like a day when I was like, wait a minute, there's comments under these videos. Those. God. You know what I'm saying? Like there's these videos I've been watching after I reach an adolescent point in my life. I didn't realize that there was a whole comment section under that stuff until maybe like a couple years ago, bro. I was like, you guys are commenting on these videos. There are people talking on these videos.
Do you know who gets into the comments on YouTube and argues with people?
No, I'm not talking about YouTube, my guy.
No.
I'm not talking about YouTube.
Okay.
You got me?
Oh, God, Victor.
I'm talking about a different type of video. I had no idea until like 2 years ago.
But now I can't put this on him. Because Ilya
I scrolled down one day. I was like, you guys are talking on these videos? What for? What are you why are you conversing?
I'm just you know what?
Come
you
on,
got
Chris.
Me. You got me.
Come on. Come with me, bro. Take the trust fall with me, bro. Don't put up these barriers, my guy. I'm being honest and vulnerable right now. You come into these waters and you take this trust fall with me. When did you realize there was a whole comment section under these videos that there were people actually
sweaty
commenting?
Palms. These are actually sweaty palms.
Say hello to your wife. Say hi, honey. Anyways,
what creatures? What creatures?
So this is my thing. Men on the internet, bro. They talk like their standards are like 9s and 10s only. But you get them in a dive bar with a few Miller Lights, a few Miller High Lifes, bro. They're nothing like what they think they are.
I take 10% probability of profit trades all the time. That's the only way to print those out of the money calls in the NASDAQ. That's where we're going with this, right?
Best analogy.
All-time highs.
That was the best analogy. All right, somehow we're transitioning into markets. Christopher doesn't want to. They're screaming out Omaha in the chat. Omaha. I tried, Chris.
The spirit
You're
of
too
Beth
professional.
lives on. I'm crying. I'm sweating. So I don't know how professional this is.
Come on, bro. Let's go. All you're doing is you're just waiting to spew all your market analysis. But the chat wants this stuff.
They want to talk about Zoran Mamdani.
Yeah, that's what they're clamoring for. MTG, where are you? Yay or nay? Yay or nay? All right, S&P. I'm not going to get you in trouble. S&P 500 up 4/5%. Cash was at 61.41, but futures are nearing 6,200. God, I love that. I love everything about that. The Nasdaq up nearly 1%. The Dow Jones up 1%, and the Russell, they're hitting the like button like crazy right now. The Russell up. You guys are degenerates. I don't even have to. I could come in here and I could not even mention a single price for 90 minutes, and these guys would love all of it.
Should we do that Thursdays? I come on like once a month.
Mostly I do.
About markets at all.
Bro, when I'm alone, I might mention 3 prices in 90 minutes when I'm alone. When you guys aren't here, you guys are the only thing that anchors this show into the realm of trading. And then I'll come on here by myself and I'll talk about conspiracy theories for 90 minutes.
That's not on. Tom's overseas. Like
when the cat's away, the mice will play. None of them are watching my show. It's 5:00 at night. They're done. They've had a long day of work. I can talk about anything I want. I can do this. This could be like I've thought about doing like a Maury Povich show and just having a call-in and just doing like, are you the father type stuff. They would never know, bro. It would take them like a couple years to figure out what I've been doing with my 5:00 p.m. show. The Russell's up 1 2/3%. Christopher Vecchio, since you don't want to take a trust fall with me into more sensitive and vulnerable matters, I suppose we can talk about price action. 6,200 in the S&P, my friend. What say you?
I mean, I think it makes sense. Given some of the ideas that we've outlined here on this show and elsewhere on the network in recent weeks, that there is an inherent incentive structure built into the market for people to chase into the end of the quarter. This seems like it's kind of going according to that script. Just as a refresher, if that's a narrative that you haven't heard here before, I'm pretty sure I've said it a lot, but it's the idea that when you look at positioning in the market, particularly coming out of the first 2 weeks of April, the market, speculators, professionals are short. And on the way up, market's now 5% off its lows, 10% off its lows, 15% still short. And then you get through this period of wrong war in the Middle East, Iran.
It's all the same. It's all the same.
Yeah, I mean, like we're bombing people for oil again, I guess. So we find ourselves in a situation where every brick in the wall of worry has been there. We've scaled it. And if you're a trader, and this has been something you and I have talked about on camera for years, 22, 23, 24, losing money in 22, okay, everyone's struggling. It's a bear market. 23, it's a bull market. Okay, maybe you were flat-footed because of the war, Ukraine, Fed rate hikes, whatever. But in 2024, still being underinvested in stocks, it's going to lose your head. You can't underperform SPY if you're a professional trader, because then there's no reason to pay you and deal with the overhead costs and the insurance and all the other things that go into employing a person. You just buy the index otherwise. So there's been this incentive structure here built in because everyone was wrong. People kept shorting the market on its way up after the April 9th ceasefire announcement with Trump and the trade war. People had to chase. They capitulate. They close their positions. They ride long to paint the tape into the end of the quarter to say, yeah, we were underperforming, but we made it up. So am I surprised here? No. Trump today, CNBC headline, White House says that July 9th deadline is not critical. Of course it's not critical. You can't have a world. You can't have a world where China has lower tariff rates than your allies. That defeats the purpose of this whole reordering of global trade to get away from a system that has ultimately benefited China, that has allowed China to bootstrap our IP, Western Europe's IP, to build out their own competitors, to kick us out of their market, and then flood the global economy with cheap replacements overnight, right? You can't incentivize people to produce in China, so you're not going to have a window where if there are no deals done, those countries are penalized and have higher tariff rates than China. So what's to worry about in the short term right now? People need to paint the tape. We're moving up. NDX is at a high. Triple Qs are at a new high. SPY briefly touched there today. We're waiting for the futures to arrive. All of that said, and I suppose a little bit more, low volume, low volatility, positive technical drift. It's that beautiful just buy the market and go fishing kind of environment. This market is also complacent. The volatility has fallen through a floor. The August 12th deadline is real. When Trump pushed back the tariffs against China in May, he did so explicitly because implementing them in the form and fashion that he wanted to would interfere with peak consumption season here in the United States, the Christmas holidays. But if he slaps those tariffs on in August and turns the screws on the trade war again, doesn't impact the peak consumption season. It's going to suck early next year if he follows through on it and doesn't taco out, which I pray that no one brings up to him again this time around. But that's when he could do it and get away with it without severely negatively impacting people's consumption habits, right, during the most important consumption period of the year. So I think right now I'm chasing this thing to the upside. My intention is to ride this up, and NASDAQ IVR is below 10, 21,500 puts. End of August seemed cheap to me. Maybe even a long put spread that's out of the money. Take one of those 10% probability of profit trades, Victor, if you're a 9, and have some protection in your pocket if you're on the long side.
So you're saying synthetic. Basically, you're saying synthetic calls. You're long stock, and you're long downside puts. So effectively, you're synthetic long calls. Upside.
So right now in the Tasty Live account, I'm simply long call spreads in RTY and NQ. My intention is to layer longer dated, deeper out of the money puts that are relatively cheap right now on top of the shorter dated long call spreads, so that this window of, if I'm wrong on the short-term view, then because of how low volatility is and how cheap these options are priced, those will probably bump up enough to offset the losses in the long position. And if things really spill over, then those things will print. So I'm comfortable kind of talking out of both sides of my mouth here. Where I saw that headline yesterday, I brought it up twice on air today. Did you see that there's a company that's sending blockchain into space to help design AI-generated shoe designs?
Shoes? That's so embarrassing.
Yeah,
people say anything. This is like, remember when there was a period in time when all you had to do was put blockchain somewhere in your name or description, and that was good for like a lift in your stock. That's kind of where we are now. Just say something about AI in your business. Just make any nonsense claim up, and it's good for a lift.
They had AI in there.
Bump in valuation.
They had blockchain in the announcement. They had SpaceX in the announcement.
Throw it all in.
All buzzwords.
I wish I could do something for my marriage. I wish I could just talk about AI, blockchain, space. I wish that would score me any points. It doesn't, though.
No, never.
Doesn't matter. I think I agree with the sentiment. I think what's most interesting about where we are now is that you can take very cheap upside bets. So even if you don't believe in the market, even if you don't like the valuations, even if you're long, like for me, I'm long, I can take off. If I want right now, I can take off long stock delta and replace it with very, very cheap upside call delta, which means I have ultimately much less capital at risk, and I can protect against a nasty little downside move. So I think we find ourselves in a really interesting period. You don't have to believe in the market necessarily. You don't have to love it. I don't love it, but I'm just taking what the market gives me. And if you're going to keep giving me super, super cheap volatility, well, then I'm going to figure out, all right, I'm running a long stock portfolio here. I could protect the downside of my portfolio with cheap vol. That's an option. I've done some of that. Or I can sort of replace some of my upside stock delta with just cheap call delta. 1650, man, in the VIX /VX, which is a front month volatility future contract at 18 and change. That thing doesn't seem to want to come much below 19. Your thoughts on vol here? I was talking about it with Mikey and Nick earlier. The at the money vol was like 11 to start the day, and they made the point that like the 1 day volatility from now until tomorrow was like 7.5% to start the day. So I mean, these things aren't moving at all, bro.
Why would they move though? I mean, what's catalyzing this market to do anything other than
Float
drift
higher.
higher?
Mm-hmm.
Yeah, right. You know, you don't see bear markets when there's no volume and low volatility. It's so stereotypical summer trading conditions, Victor. It's like, how did we get here, right? How after all of this we end up here where there's volatility falling off the falling out of the ceiling, falling out of the sky. That's what happened in 2017 and 2018, right? We were a little ginned up after the election, and okay, what's going to happen with Trump in office? And I remember, from like a business perspective, everyone's like, oh, this is going to bring a lot of volatility into the market. This is going to be really good for business. Because if you work in trading, right, the more interesting things happening, the more people trade.
Mm-hmm.
And yet 2017
Everything
and 2018 were total busts. So we've gone from a Trump that looked like he was world breaker in February, March, and the start of April, destroying trade alliances, ripping up trade agreements, and now he kind of looks like George W. Bush. When John Bolton is the cheerleader of your foreign policy efforts, I don't know if you're heading in the right direction. So that doesn't seem very Trumpian that John Bolton is the guy cheerleading those efforts. We're not having the tariffs. The tariffs aren't being implemented. July 9th is not a critical date. They're not doing Medicaid cuts either. The Senate parliamentarian ruled against it today, and Senate Leader John Thune has said that it wouldn't be good for the bill if the Senate parliamentarian ruled against it because they want to stay within the confines of what's allowed.
Of course, though,
right?
bro. But that was always. It was always that
so
was
what's
going to
changing?
be.
So what's changing, right? It's just there's a lot of bluster. There's a lot of tweets. It's shaping into a standard Republican administration again. And that was my take on Trump 1.0, which is if you remove the rhetoric and you look at what was actually accomplished.
You think this is a standard Republican administration?
It's certainly looking more and more like it, where it's like we talk about cutting deficits and debts, and instead we just cut taxes and we talk about like no more foreign involvement, and we just bombed Iran, and maybe that was handled really well. And as time will go on, we'll see whether or not Iran can reconstitute its nuclear program. But right now, there's the bombs and missiles stop flying. Tel Aviv hasn't been hit in days, which I'm sure is delightful. Tehran hasn't been hit in several days, which I'm sure is delightful. And that's all well and good. But also Trump said NATO yesterday. He said, or actually this morning, it was a great, all caps, meeting, the best one we've ever had. So Trump's riding high right now, to be clear. Okay, the market responded positively, both in stocks and bonds after he backed off his tariff stuff. He still has people at the table negotiating with him, even if the negotiations aren't working out as fast as he wants. Japan's still at the table. India's still at the table, right? The EU today, headline floated, as was discussed at NATO, countries that spend more on defense, Trump will take a lighter approach with tariffs. Okay, so if you're him right now, why are you going to do anything other than keep along the current path? And if you're an equity market trader, I think we all agree on that. Maybe it's the taco trade all over again that Trump's going to chicken out. I don't know if it's chickening out. I don't like that. I personally actually don't like that language. On the flip side, if I'm a Democrat, like, don't all of you oppose these policies?
Yeah, exactly. It's like, what do you want?
why,
What do you actually want? Do you want us to stay in World War III? Did you want the tariffs to stay on? Do you like the reverse psychology there is so odd to me.
No, it's so dumb. And that there's like a McKinsey consultant sitting around somewhere being like, this is the play, and they spend $20 million in that survey for them to figure out what to say about this. And the reality is, if you really oppose Trump's policies, you want him to chicken out. And so chiding him for being a chicken provokes him to not chicken out and then follow through on the things that you don't like. Who's doing these things? Who's thinking? Is anyone thinking through these? Okay, so I'm just like really draw it out here for a second, folks. So, but Nasdaq up here, Trump's riding high. I'm waiting to see when he starts tweeting about the stock market. Remember in the first quarter, he was all, I don't care about the stock market. Something tells me that's going to change now that we're.
I don't know that he ever said that.
He said.
I think people
times.
around him said that. I don't remember him saying it.
No, Trump specifically said a few times, "I'm not looking at the stock market."
Maybe. I told you. I think we had a few Twitter exchanges. Like I think people convinced him to go in that direction, but you can't teach an old dog new tricks. And he can try to pretend like he doesn't care about the market. But like, let's be honest, like that was his barometer for measuring his success throughout his first administration. There's no way he's going to come in and just go, I don't care if I tank markets by 60%. It's just like, there's no way you can just like flip a switch like that in a person who's 80 years old.
Oh no.
Let me ask you this: bonds at 115. We keep floating higher. I mentioned this earlier today. I think I first caught this from a guy named Jeff Snyder, who made a really good point that like there's call skew throughout the curve, and I was like, what? And I went and checked it, and there it is: the 2s, 5s, 10s, and 30s. At least this morning, my morning when I looked, I think right before the market opened, there is call skew across the entirety of the curve. In other words, people are traders. The option markets are making tons of upside bets relative to downside bets here at these prices. To me, I think that makes a lot of sense. I'm also long. I'm also making upside bets. What say you? It's been a super boring trade. There's 100 other things, more interesting things, more higher volatility things to talk about right now. But I'm sort of obligated to give a couple of minutes to bonds here. What say you about the upside in bonds here?
I think bonds are following the path that one might expect if, again, like a thesis of ours here and elsewhere on the network has been that bonds would perform well with a recalcitrant Fed that refuses to heed Trump's calls for cuts, right? And the framework for that is simply just looking to what happened in September of last year when the Fed cut by 50. So they lower rates, and what happens? Stocks rip, bond yields churn higher, the dollar screams to the upside. It's a reflation trade. And when we say reflation, right, think of it like a fire, okay? The fire's burning, and the Fed adds cuts, fuel, to that fire. So the market says, okay, we have to price in higher growth, higher inflation again, and financial assets go up in value. The opposite side of that would be if the Fed people are thinking like, okay, should the Fed cut? We want the Fed to cut, and they don't. Well, by not cutting, they're reducing fuel. They're not adding fuel to a fire, and a fire that then diminishes. Growth expectations and inflation expectations slowly come in. And so the fact that the Fed's been holding steady here for a few weeks, we've moved away from the tariff craze. The bond market looks like it's a market that's behaving very normally again. You know, it's moving slowly because these are small adjustments. If the bond market's going to have a sustainable rally, it can't do it in leaps and bounds. It needs to kind of edge up there little by little by little. And so I think that's actually very constructive right now. I know that's a view that Ilya has as well. But to that point, I think the question is, what's the trade here with a 13.7 IVR and sitting near 115? This isn't the hottest place to get in long right now because we have bumped up against this 115 level a few times over the past 6 weeks and have failed to crack through it. You get through 115, you start to look into the 117s or so. I understand on a risk to reward basis, people say, you know what, I'm going to get short here. I'm going to do a short 115, 116 call spread. And, you know, as long as we stay close below 115, I'm going to hold it because of the risk to reward. You're up against resistance. As for me, my positions right now, I have long call spreads and short put spreads on here in ZB. They've been going on for a few weeks. The long call spreads do need to be rolled because there's 29 days to expiration. And when I have out of the money calls that aren't quite there yet, I prefer to roll at 28 days than 21. But beyond that, I'm going to remain constructive here. I think the Fed is going to hold in July as the market's price, but I don't think what these Fed speakers are saying, quite frankly, in the short term is about the actual cut. It's more about their job security and maybe seeking a promotion of Fed chair by President Trump. And so to that point, July's not happening. You know, Powell this week said the inflation comes June, July, August, which is him effectively laying out that they will have enough information by September to make a decision. So yeah, I think that we're going to get, right now as things stand, asterisk, we're going to get a September cut.
I think so
When
too. I think
say
that's-
asterisk, yeah, go ahead.
Well, I was just going to say, I think you're right too. I think we're going to have dissent in the July meeting.
Yes.
I don't know that they'll be ready to actually cut in July, though I do think the opening will be there. I think there will be dissent, to your point, and I think they ultimately do it in September. But I agree with everything you said. But what I keep looking at is this new piece of paper that the Federal Reserve put out in front of everybody the other day. At Fed funds rate at the end of 2026 at 3.6% at the end of the year. Meanwhile, the market's like, you're a big fat liar. You're going to be at 3 to 3.25 by the end of 2026. So there's this gap. There's a spread that's starting to open up between where the market is and where the Fed is. Now the market, we've done this every year for like the last 3 years. The market puts in the market puts in what it wants to see, and then ultimately is proven wrong. They're proven too dovish, too early. And I'm curious, Chris, like, how are you thinking about this spread that's opening up between a Federal Reserve that says we'll be at 3.6 at the end of 26 and a market that's going, no way, liar, liar, pants on fire, you're going to be at 3 to 3.25. What do you think about the spread that's opening up here? Is the market doing the same exact thing it's been doing with wishful thinking, or is the Fed trying to pretend like it doesn't see cracks in the housing market, like it doesn't see softening in the labor market, like it doesn't see softening in some of the economic data? Are they trying to play this Mr. Magoo as long as possible, but ultimately it's going to mean that they're going to need to play some catch up here? What would you bet?
I think the market has it right insofar as the Federal Reserve isn't an institution that likes to skate to where the puck's going to be. They're very reactionary, and they're frequently fighting the last war. And so in 2020, when they had a chance to lower interest rates, what was on their mind? What happened in the global financial crisis? The problem with the global financial crisis was that not enough help arrived soon enough. And you see this in the markets themselves, where Congress or the Fed is doing something and the markets go, well, this isn't enough. This isn't going to solve the problem, right? You're just giving us a bucket to scoop water out of the boat. Meanwhile, the holes are still letting water in. Okay, thanks for a bigger bucket, I guess. And so when the pandemic came around, the Fed said, no. We're not going to drip drab this out. We're going to let everyone know up front that we're willing to do whatever it takes, throw the kitchen sink at it. And so when inflation was coming back in post-pandemic, what were you hearing from Fed officials? Let's change average inflation targeting. We had a period before the pandemic where inflation was undershooting. And so let's make up for it. They were fighting the last battle, and they let rates stay too low for too long, which is to say now today's battle is dealing with COVID's memory. And COVID's memory was that the Fed kept rates too low for too long, and they weren't responsive enough. And so there's this inflation boogeyman that's sitting in the room, and the 800-pound gorilla in the room, that if the Fed starts to cut now and they're wrong about inflation, then they risk much bigger problems down the line. And that's to say that the market cares more about the Fed's inflation mandate than its unemployment mandate. The Fed misses on its unemployment mandate, the market's like, okay, so you're going to cut. But you miss on the inflation mandate, it means you're going to raise rates. Most likely. It means cost of capital is going up, right? Businesses don't want that. They penalize the Fed, spreads widen out. We don't know if policymakers actually have a grip or handle on the situation. So there's a game here that's being played. I personally don't think it's political, right? The tariffs are obviously adding to this. No doubt in my mind that the tariffs are preventing the Fed from cutting. But the Fed isn't not cutting because they want to make life more difficult for Trump, or don't want to give in to Trump. It's because they're legitimately worried that if they cut too soon, they're going to pour fuel onto an economy that is stronger than most people thought it would be by this point in time. How many recession calls have there been over the past few years? Okay. Right now, the Fed's best decision is to sit on its hands, because if it loses credibility, and I would know some people would argue it lost credibility by giving 50 basis points of cut in September, but if it were to lose more credibility then, because it acts too soon, then you have really bad situation in bonds, in stocks. And we don't need that kind of craziness in a bond market where we've already had these smells of fiscal irresponsibility coming through and you know, putting that kind of strain on the long end of the curve, like there's some sort of crisis going on.
I tend to agree with you. I think the way that I would explain it is just like if they cut and the long end lifts again, they're totally effed.
They're screwed. Yeah.
They're screwed because they basically, you now admit to the world you have very little tools to do anything. You are sort of held in bondage to the market, and you just have to sit there and look at everything. Your only option is to raise rates, which they clearly don't want to do. So you can move forward guidance or whatever, but you're going to lose credibility to move forward guidance once the market sees that you cut and the long end lifts again. So I think they're in this really weird spot, man, where like they have to wait until they kind of see the whites of the eyes of growth starting to deteriorate, until they see a meaningful uptick in unemployment. Unless they want, like, it's weird because I said in the middle of last year, I said cuts are the new hikes. And what I meant by that is I thought at that time if they cut, the long end would lift, and that would actually put more pressure on the housing market. It slows the economy even more so. So in a weird way, the hotter the economy is, the more you would want to cut, which would lift the long end and kill. It would dampen even more economic activity. It's sort of this inversion of what people are expecting. Like, to me, I think we're still in this world that cuts are the new hikes until you start to see growth meaningfully rolling over. But at that point, it's like, are they already too late? And I think that's what the market's starting to price in, that we're going to play this drag your feet game because they're terrified of doing the same thing that happened in last September. So they've got to see the rollover, but once they see the rollover, they have to act quick in order to make sure that growth doesn't just fall off a cliff, or unemployment doesn't fall off a cliff. And I think that's the game that we're in right now. We're just waiting for them to find that sweet spot so that they can start cutting without the long end lifting. I think that's what we're watching right now.
And you know what? The market thinks that Powell's the problem. You could see how more cuts have been added to next year, the second half of next year, more than any other time. And it's because the second half of next year is Trump's new Fed chair. And so I think there's a well understood idea that whoever Trump nominates is going to cut rates, or at least try to steer the FOMC in the direction of cutting rates. Because the FOMC itself is a board. It doesn't operate under the diction of one person, right? And so, like,
it has under Powell. Powell's had some weird voodoo where there's been very little dissent under Powell. But just because you nominate a dove to the Fed chair, to your point, it doesn't mean they have to keep moving like a fist.
They don't need to. And there's also a part of me that thinks there could be kind of like almost like how the body responds, like a white blood cell reaction, where these Fed officials see someone who is not one of them installed. And so, like, they just kind of, like, the Fed chair can say what he wants, but everyone else on the board is going to vote in solidarity in one direction. And if the Fed chair happens to be in agreement with them, fine, they're all on the same page. And if the Fed chair wants to do his own thing, he doesn't have the votes to change policy. So, I mean, there's also part of
Polymarket has Chris Waller at 36% probability of being the next Fed chair. The next closest is Hassett at 19.7, with Kevin Warsh at 19.7 as well.
Kevin Warsh and Waller, Christopher Waller, are two legitimate candidates, and the Fed would be in excellent hands with either.
Hassett would be it would be crazy.
I'm moving out of the country if Kevin Hassett's Fed chair. Okay, I can't put that on camera. I would have a dramatically different approach to how I trade and operate in markets if Kevin Hassett were Fed chair.
Yeah. What's his name? Besson only has 14% chance. How wild would that be? Hassett, he's an automatic rubber stamp, you know? He's sort of this quiet architect of sort of the whole Trump economic policy.
Is he? Every time I hear him speak, I see Trump contradict him like 5 minutes later. It's like he's watching. It's like he's watching Hassett on Fox News and be like, "No, that's wrong. Gonna have to tweet something out of." During the
When?
whole all of April, there were several headlines. I'd be more than happy to provide citations after this, but we had several Futures Power Hour episodes in early April where it's like Kevin Hassett says this, and then like under it was a Truth Social post 30 minutes later where it's like we're not backing off the tariffs. And Hassett's been on with like Maria Bartiromo being like, yeah, the tariff rates are going to come down, and Trump's all caps, they're never coming down.
I know, but that's his thing, though.
I know it is. It's just like
That's
also
his
the
thing.
bark. That's also the bark and the bite of all of this.
Yeah.
And I actually think, and I shared this with Nick Batista a few days ago, I can't get the thought out of my head that the bombing of Iran's nuclear facilities did more to push forth any potential trade deals than anything Trump has done thus far through the cycle.
Credible deterrence.
Not just credible deterrence. I think
Big
this is
stick.
big stick. Also, we've been showing the world for the last 2 years. And like as someone who is a proponent of us being involved in the war in Ukraine, send them more bombs, give them as many weapons as they need. No American boots on the ground, but this whole idea of like what we're actually doing, where we're allocating money for Ukraine, we're taking the corresponding old inventory out, shipping them all the old weapons, then we're using the money that we just allocated to replenish our stock with newer bombs, newer weapons, right? I think that's a good trade-off. We're also defanging and running down the army of Russia, which I'm always against the loss of human life, but like if Russia wants to try to invade one of its neighbors, historically speaking, we know how that works out. And so I think that we should knuckle down in the name of, decency and liberal democracy everywhere. So defanging Russia, good. Okay, they can't defeat Ukraine? Wait, it's the Russian army versus Ukraine with American and European weapons. Okay, but Iran is the big scary one. They have their tentacles through the Middle East, Hezbollah, Hamas, and yet they can't defend their homeland. American bombers can sneak in. Aren't these supposed to be like the tips of the spear for BRICS? These are supposed to be the people that are like making BRICS seem viable. There's a military alliance. Yeah, China's lurking in the corner, but China and India aren't going to get along. So now all of a sudden, after the past week, really after October 7th, okay, Russia can't topple Ukraine, okay? Iran, a country that has 92 million people, as I learned watching a Tucker Carlson interview recently, that has 10 times the population of Israel. Israel just, Khomeini's so tied up he can't respond to direct messages. BRICS are a joke. And so if you are someone who's in Italy or Latin America and you're looking at alternatives to the world, you go, I can stick with the US, or I can join this hodgepodge group of people who are trying to challenge the US. And oh, by the way, in these conflicts they just had, like they're not really doing what they say they can do. It's kind of like a running joke with some of these militaries in the Middle East. They're really good at producing videos with bombs and scary sounding music. And then like they're also really good at dying. Because when they actually
I had no idea you were a military hawk. Were you always this hawkish?
I'm pro empire.
You sound like a psychopath right now.
I'm pro empire. No, I just think that BRICS.
You sound like an absolute sociopath right now.
No, I'm very pro America, and I think the people who have been pitching this idea that there's an alternative system out there relative to the Western world got a real reality call this past week.
I don't
They've been
think
getting
so.
a reality call since February 22.
I think you're right that there wasn't this big show of force. Like
me being
this
pro-America, and you talking about MTG earlier? I'm the psycho. Go on,
bro. You think equating those is wild?
I think
equating those two things, saying MTG is mildly attractive, and you talking about bombing everybody on the planet and nobody stepping up to defend these other countries, which means we're still showing our imperialist might. Those are nowhere close to the same things.
Pro-empire, just like Teddy Roosevelt was pro-empire. I am pro-empire.
I would say I think we have a very short-term point of view on these things, and I think we're playing against opponents who are taking a long game. And if you're taking a long game, I do agree with you that there is one short-term point of view, which is, hey, look, if Russia or China is supposed to be your deterrent or your bully, your champion on your side, where are they? They're not there to step up for you. I also think we did a ton of damage to our own reputation on the world stage. And I don't think China doesn't move on hard military power. They are acquiring soft power throughout the world, and the more we impose our look, I'm pro-America just as much as the next guy. I'm just saying, if you think about this for the long game, there is a way to think about this where, yes, some other military power did not oppose us, but the question is, did we help or hurt ourselves on the world stage? On some aspects, we might have helped ourselves. In some aspects, we might have hurt ourselves.
I don't, given public polling, okay, so how do we determine how we are perceived on the world stage? I think that's an important benchmark, right? When a politician says we've never been more respected on the world stage, according to who? Okay, so according to public polling, the U.S. has never been less respected on the world stage right now, and that has nothing to do with the bombing in Iran, because polling from our allies' countries in recent days about the bombing in Iran, people support it. People around Western Europe support us bombing Iran because they're within the radius of some of these ballistic missiles. And if you attach a nuclear warhead to it, you could have an Iranian bomb land in Berlin at some point in the future. Do they like having one fewer country that could nuke them in their,
Bro,
area?
how are you falling for this stuff? Why are you falling for this? The same rhetoric in 2000. They're going to do this to you. Do you understand? They're going to do this to you until you die, bro. Until you die, they're going to tell you that there's some big scary person who's developing some big scary weapons, and we need to go in and kill everybody.
What did I say last week? I'm against the war. Okay, but when you look at polling, what I think, again, America's standing on the stage. What we just did in Iran this week and probably improved our standing on the stage with the people whose opinion we care about, right? Like, do we care if the Chinese think that this eroded our standing on the global stage? No, but in terms of our allies and partners who we're trying to strike trade deals with, and then we have a really good NATO meeting that Trump is calling great and the best ever. And yeah, you know what? We can be lenient on the tariffs if you guys bump up your military spending. This all seems very this is the most kumbaya I've seen Trump with other world leaders in either the first or second presidency so far.
I think all those things are true. I wouldn't disagree with anything you just said. I still think this is the same playbook that they ran in 2003, and I don't know. I just that scary tactic just doesn't do anything for me anymore.
No,
hey,
and
these guys,
these
guys are scary. We need to go kill them all. There's a different for me.
There's what's the common joke from people who served in the military? Well, it was the Cat Williams joke, right? Like, what's an Iraqi army uniform look like? Does anyone know? Does anyone know what like an Iranian army uniform looks like?
I remember that special.
Right? Because it's like we're not over there killing soldiers. We're just over there killing people. Okay, I get that.
We're gonna lose all of our viewers. We're gonna get canceled today. We started off the show talking about comments. We're 100% getting canceled, Christopher.
No, we.
I happen to be here. Your eyes were doing the talking. Your eyebrows were talking. My mouth was talking.
The tears coming out of my face. The sweat on my palms.
Okay.
I didn't know the nape of my neck could sweat like that.
Let's get canceled. What'd you think about New York's Democratic primary?
I'll be speaking about this in about 15 or 20 minutes time at a Democratic Party meeting. So I'll say the same thing there that I'm going to say here. I think this is...
There's no way you're going to be at a meeting in 15 minutes. The show gets over in 10. How do you get there? What do you have? Is the meeting at your house?
It's like 3 minutes away.
Fair enough.
I live in a walkable town. Regardless of the policies...
I bet when you leave your house, you kind of live in one of these communities where you don't put the G on morning. Like when you walk down the street,
I'm walking around my slippers.
Morning.
My robe on. Morning, neighbor. No, I live in like the woods up a hill. Okay.
So
my neighbors are
I guarantee you don't put the G. I guarantee you don't put the G on morning, and I guarantee, you probably get the paper. You go out, you get your mail in the morning. You probably wear a robe, some slippers.
An undercover brother. I enunciate every word and letter.
All right, what'd you think about the New York Democratic primary?
I think we talked last week, and I said that, if Cuomo lost, he probably wouldn't run again, but Mamdani, pronounced it correct this time, would continue to move forward. And Cuomo did drop out after losing the way that he did. Mm-hmm. I've seen a lot of people kick around the narrative that, it was only wealthy people that voted for Mamdani, and it was New York's working class, the working poor that supported Cuomo, and like they know better, right? That's disingenuous, okay? And I think we need to dig deeper into the actual income data. And as it turns out, when you look from post to post, the way that the New York Times and others define these things, you make more than 50K and less than 100K in New York City in any given year. That doesn't mean you're middle income, right? That's not New York City, okay? You have to go further out. And so when you look at the actual breakdown of votes by district and by income decile, Mamdani won the majority of people making more than $55,000 a year and making less than 150K a year. That is the middle class. Now, why did he win the middle class? He focused on affordability. What about affordability? Childcare, housing, transportation. Why did that work with the middle class and didn't say appeal to the wealthier voters, people who make more than $150,000 a year, and people making less than $50,000 a year? There is the idea of the dual income trap in a certain sense. And when you look at household formation in America, middle income households are more likely to have two parents working than either wealthy or poor households, which then conceptualizes and actually helps frame the affordability situation a little bit better. If you're really wealthy, you're not worried about childcare. You're not worried about public transportation, and you're certainly not worried about housing. So a candidate who runs on that platform doesn't speak to any of the things that bother you in your life. And if you're in the working poor, and not just data, but I have my own anecdata, having tutored in New York City public schools for 8 years after work for kids in kindergarten through 3rd grade, teaching them how to read. And I sat on the board of a children's charity, helping facilitate that work. There's one working parent in the household, the other parent doesn't speak English. And that's why they need the reading help. But that's the situation. It's a one single parent working household, and so they don't need the child care. And if you have a one single parent working household where you don't need that second income, you're actually not worried about your housing affordability either as much. And so you have this split in the breakdown right now where you can see middle income people, 2 income households vote for Mamdani, and everyone else is voting for Cuomo. And that brings me to my big point here, which is to say that April 14th, 1938, FDR's fireside chat, people, it's not that they don't love democracy, it's not that they don't love our economy and way of life, but if the system that we have right now, that people are buying into, that you're told if you do things the right way, you go to college, you take out the student debt, you'll be able to get a home and have a family, and you do all those things, and you don't have any savings, and you're crushed by debt, and you're not married, and you're in your 30s, and you go, this system doesn't work for me at all. I'm willing to give anything else a chance. And so when centrist Democrats run someone, a sex pest like Andrew Cuomo out there, who I have my own personal grievances with for various financial reasons, for money that was taken away explicitly because of his resignation from office, I can't help but say, like, you guys did this to yourself. You guys chose someone who is disliked, who kills grandmas during COVID, who propped up an independent caucus to prevent Democrats from having a trifecta for a number of years. If you don't want unorthodox candidates like a Trump or Mamdani or an AOC to win these elections, be effective in the center. Deliver on things. Get the trains running on time. Pick up the trash. Make sure the schools are safe. The police are well funded, that the police have good relationships with their community so there are no shootings or violence, right? Do the things necessary. And then you don't have to worry about people thinking, well, I'm willing to try government-run grocery stores, which also, Victor, how many states have government-run grocery stores in this country? 14? How many of them are states that have Republican governors and Republican majorities? 11? So why are people dunking on Mamdani? This is the president of the United States has a veto in U.S. Steel now. That's way more communist than opening up 5 grocery stores, 1 in each borough. So there's a lot of pearl clutching right now. I know the whole global intifada phrase, we discussed it last week, it gets under my skin. But this was not a policy election. This was a generation change election. 24% of people who voted in the election yesterday and early voting were newly registered voters. In the last mayor's race, that was like 4%, okay? So the idea here is if you don't like who's winning these elections, find a message that resonates with people, that speaks to the concerns in their lives, and get out there and talk and go on podcasts, do interviews. Don't just hide in your basement and pop up for a debate where then everyone realizes, oh my gosh, Joe Biden's 82. He looks it.
Let's go two different paths here. We only got a few more minutes, but let's go two different paths. Just because I'm curious. Path number one is let's go down two different paths of how effective Mamdani's policies could be. So let's go down one path where it becomes very, very difficult to deliver for the New York mayor. It becomes very difficult if, let's say, he goes on to win the actual general. The idea that he's unable to bring some of these policies to life, and that ultimately he's making a lot of promises that politically become very difficult to deliver on. So take us down that path. The likelihood that he's able to deliver on a lot of these big promises, the rent freezes, the city-run grocery stores, and the litany of other very new to NYC policy promises he's made. And let's go down a different path, the other path, which is he's able to implement all these things, and whether or not these things actually fix the core problem. Does it actually address inequality in your mind, or does it potentially exacerbate it? In other words, the argument against the rent freezes is that as soon as you minimize the profit motive, you minimize the desire to maintain properties, to continually invest in them because you've limited the upside in some of these things. So do you actually create better or worse living conditions for people? So let's go down two paths. The first path is he wins the general and he's unable, the likelihood that he's unable to implement a lot of these big promises. And the other path is let's imagine the happy path. He's able to implement these things so they actually make people's lives better at the end of his term. What do you think, man?
So yeah, the three paths in my mind are he tries all these things, they all fail. He ends up like Brian Johnson in Chicago, where he keeps pushing them on and they keep failing. There's a path where he tries to do all these things and they're super successful, but we don't really have a blueprint for that because America hasn't had a socialist mayor since Milwaukee in 1960. So it really hasn't been tried. There was a woman who won in Buffalo a few years ago, India Walton, who won the Democratic primary as a Democratic socialist. And then the mayor, Byron, I can't remember his name right now. He did a write-in campaign, even though he was the Democrat who lost, and he won re-election as the sitting mayor. So there's talk of, I know Eric Adams is here doing this, that, the other thing, but let's focus on the world where, well, this is one of the reasons why I reject this framework in my head. The one thing, I don't live in New York City, so I don't have to vote for any of these people. But the one thing that intrigues me about Mamdani's approach is that he seems pragmatic, in the sense that, having listened to his interviews recently about economic policy, and again, I'm skating past his affiliation with SJP or
yeah.
Right.
Sure.
We got to disaggregate this stuff. He was asked when talking with the Abundance guys, Derek Thompson, Ezra Klein, they have their book. He was asked, what if you do these things and they don't work? And he said, well, I'm not wedded to the idea, I'm wedded to the outcome. Right? Like I think this idea will produce the outcome that I hope it will. But ultimately the goal is to get the outcome. And so if these things don't work, I'll try something else. And quite frankly, I think that's refreshing to a lot of people. You don't hear any other candidate talk about things like that. They have their things. I got to do this because that's the special interest group that supports me. And if I don't do things that way, I'm going to lose their support, and I need their support. And we need more politicians who are like, I'm just here to solve problems, man. And if the best problem is a supply side oriented solution, let's do that. Hell, Zoran's best video from the campaign was that halal one, right? And when he got to the end of the video about why halal prices are $8 or $10 instead of $8, it's all about regulations with the city. It's all about the fact that the city doesn't issue enough licenses and has too many requirements for licensing. And a small group of private citizens charge like $20,000 for a food truck license when the city sells them for $400. But the city doesn't let these licenses out. So it's a small group of people who control them in the private sector, and they charge an arm and a leg. So how do you make up for that as a food cart vendor? You have to increase prices on your food to pay off the permitting. Okay, so if you reduce permitting costs, what happens to the food prices? They go down. So that's a supply side solution. He seems to embrace that, right? I think that's what all of us want. I personally, like, I've never called myself any ism. I want, and I think you do too, we want better outcomes in the world. And if there's a solution that gets us there, if it involves more government, involves less government, we should try it. We shouldn't be wedded to, like, government has to be involved or it can't be involved. There are places where it works and there are places where it doesn't, and there's a balance. And let's experiment and find what works. But let's stop living with these problems. And Andrew Cuomo, by the way, what could be more stereotypical of the person who helps create these problems? A former governor who did what? What did he accomplish? He helped create this. He upheld the system that is failing so many people. Why would you give that guy another chance?
What was the guy? What was the mayor's name? What was the mayor's name during COVID? What was his name?
De Blasio.
What was the guy? Yeah, De Blasio. I just every time I go back to when. You remember when he ate that Five Guys burger? I think it was Five Guys. And he tried to encourage people to get the vax, to get the jab. And you got a free like cheeseburger if you got the jab. And there's this clip of him. It still floats around the internet today. And he's just taking a bite out of this burger. He goes, "You mean to tell me if I get the jab, I get this delicious 2 beef patties?" It's like one of the most condescending things. It's like it perfectly marks that COVID era. I don't think I'm down. I don't have to live in that city. I'm down. If the people want to try new things, let's try new things.
Please don't be Brandon Johnson. Please don't be Chicago's mayor.
I don't think it's going to work. I don't think this is what you want. I think a lot of people are so disillusioned with the outcomes of the last 15 or 20 years. They believe somehow everyone has it in their mind. It is capitalism's fault. And to me, it's the opposite of capitalism. We do not have competition. We do not have a functioning government. Money after Citizens United has too big of a sway in our government. We socialize the losses and we allow private entities to privatize the gains. We're so far away from what like a real functioning capitalism looks like. And I feel because people are so angry at the idea of capitalism, which we don't have, they're willing to try quote unquote new things, which is moving in a very, very socialist direction. And look, man, I'm not going to knock it. My personal opinion is you're going to unlock a new set of problems that you don't want either. And I think by being unwilling to sit down and really think critically about these problems and think critically about what these set of solutions will then create later on, it sounds good. Sounds good to say don't move rent forever. Sounds good to say let's put the government in control of food supply.
Rent freeze is a pro-landlord policy.
Yeah, bro. I just think we don't.
I'm anti-landlord as like on the city level. Like you don't want landlords to have power. When landlords have power, they mistreat their tenants. Yeah. Okay, so you dilute the power of landlords by building more housing.
Yeah, boom, man, boom. And it's like nobody's saying that part. Somehow people keep coming in and they promise the wrong stuff.
His plan was like, well, we're going to build 200,000 units over the next decade. Everyone's like, oh. It's like, well, okay, well, how many units did you? It's like that's actually a slower run rate than what we've been doing. That's not something to cheer.
Yeah.
I gotta go, Victor. I can't. I'm gonna have an aneurysm.
All right. Good luck at your meeting, man. If the people want more from you, tell them where they can go.
At CVecchioFX on Twitter or X. How do you feel about Elon these days?
I'm kind of neutral. I think I haven't heard much about him. I don't think he's talking much crazy stuff.
Follow me on Twitter at CVecchioFX. Here on the network Monday through Friday, Futures Power Hour, 1 p.m. Eastern. Let Me Explain Tuesday mornings, 9:40 a.m. Eastern with Tom and Tony. Victor on Wednesdays, 6 p.m. Eastern. And then, of course, Overtime with Radigan and Spivak, 4 p.m. Eastern.
If you want to follow me on Twitter, you can follow me at Victor Jones, at Owen Jones, 0, because I like to be difficult. This is Synthetic Friday here. Normally, Chris, on Thursdays, I do a little lip sync at the end of the show. But because you're here, I'm going to let you take us out. What song would you like the producers to play while you lip sync?
Bye, bye, bye. Right? We're leaving.
All right, everybody. We'll see you next week. Same time, same place, same great network on Tasty Live. Thanks. Peace.